Okay, hello everyone. How are you all? Okay, so as you all know that we have already completed SRS series, right? Standards on Related Services. So I would like to post you some questions which you need to comment the answer in your comment box. Am I correct or not? And the answers for which I will give you at the end of this video. Am I correct or not? And along with that, I will also post some questions relating to other standards so that you will get an idea what kind of questions we are going to get in the examination and what is the ICAI's expectation from you when they are going to ask you these particular areas. Now see, this question is relating to SRS. Make sure that you give me the proper answer for that, and the answer for this particular question I will give you at the end. Now, let's say for example, a company asks you to carry out a process of confirmation of its accounts receivable. Are you getting the point? So there is a company of where you have been engaged for a compilation engagement, and they are asking you to do the process of confirmation account receivable having balances in excess of what 10 lakhs as per its books of accounts at the close of the year. The work to be performed only involves preparing and sending confirmation requests to such parties. It means the company is already telling you that ki boss, you have to not do anything else other than only preparing and sending the confirmation request to the account receivable. That is your limited job. So being your limited job, can I call it as it is a case of AUP? Am I correct or not? Agreed upon procedures. And please tell me quickly. Agreed upon procedures are being told where? Agreed upon procedures are being told in SRS 4400. Am I correct or not? SRS 4400. Now see, the work to be performed only involves preparing and sending the confirmation request, analysis of variation on receipt of confirmation, and submission of the report in accordance with the professional standards. So they are saying that simply you have to prepare a report, send a confirmation request, analysis of variation on such confirmation and submission in accordance with the professional standards. What points have to be kept in mind for inclusion in the report specifically for such engagement? Now they are asking you if you are going to make AUPs according to the request of intended party and the entity where you have been engaged, what should be the part of your practitioner's report? They are saying, read this point. What points have to be kept in mind for inclusion in the report specifically? Yesterday, when I was telling you SRS, you already saw that I made you see the report. If you remember, this is the report I'm talking about. Are you getting the point? This is the report I'm talking about. Now look at this report. Right or not? Now this report is, I think, relating to 4410. The 4400 report also I shown you. Now see, this is the report I'm telling you. So they are saying what things are required to be kept in mind to be given in the report. You already know that we say that it is neither an audit nor a review. So I want all of you to comment down the points, and answer for this I will show you at the end. This is a question number 1. What elements are required to be included in your practitioner's report if you are performing the agreed upon procedures? So you can see that this is the same question. We have done this in our material, declaring this, declaring that, restriction on use, time, place, date, signature, everything, right? Now let's understand the second question. What is the second question? Now see, let's understand the second question. Read the second question and let me know, is it a question of 4400 or 4410? Now look at this question, and here it is. Now see, during the course of performing a compilation engagement, they themselves have said that too in accordance with SRS 4410. They themselves have said that this question belongs to SRS 4410. It becomes known to you that the client has suffered a theft loss of 1 crore rupees of its inventory over a period of time at a storage location visited infrequently. So the client was not visiting and was not carrying out the physical verification at regular intervals. So there's a theft of 1 crore has happened. A claim was lodged by the client with the insurance company, which was repudiated due to certain technical reasons relating to the coverage of the policy. So they asked for the claim, but the insurance company has rejected the claim. The company has not preferred a complaint or an appeal against said repudiation. The amount is reflected under the head current assets in trial balance of the client. Discuss how you should proceed to deal with this matter. Sir, you are already suffering a loss of 1 CR and your claim is rejected. Just because your claim is rejected, it should be completely debited as a loss, na? but you are still showing it under the current assets. So is it a case of overinflation or window dressing of your financial statements or not? Yes. So please tell me what amendments you need to do it here. As an auditor, or sorry, as a practitioner, when they are engaging you for compilation engagement, do you have the right, in case the things are looking inaccurate to you? Do you remember that? Yes, 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 yes. If the things are looking inaccurate to you, dissatisfactory to you, right or not, incomplete to you, and if the AFRF is not looking appropriate, am I correct? And if the financial statements HFI prepared by them is looking misleading, in those cases, do you have any right to make some amendments and make some suggestions to the management or TCWG? Yes. If the management, yes, 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 you got it right. If the management is not responding, we'll go to TCWG. If TCWG also not responding, we would like to give a what? Yes, correct. We would like to give a what? Withdrawal. And if the withdrawal is not permissible by the law, then we will check out our legal and regulatory requirements. As simple as that. See, I already told you, even though these are compilation engagements, even though these are related services, related engagements, but make sure that you should still maintain the independence in that. The way you have to conduct this engagement is similar to our auditing and review engagements. In case you think that something is going off the beat or something is going beyond your expectation, you have every right to bring it to the notice of management. So they already got the loss, but they are still recording it under the current asset. Discuss how you would proceed with this matter. So as per 4410, you have to tell me the answer. So I'll be waiting for your answers at the end, and I'll be giving you the perfect answer at the end. Right? Now, let's understand the new set of series today, that is called SAEs, everyone. What is the name of the series? SAEs or SREs. All those series we have to do. So let's first complete the SAEs. SAE stands for Standards on Assurance Engagements. What is the meaning? Standards on Assurance Engagements, right? Now, let's understand that series first. Standards on Assurance Engagements. Okay. So, in the Standards on Assurance Engagements, everyone, we have in total, wait. Okay. So in the standards of assurance engagements, we have in total three standards: SAE 3400, SAE 3402, SAE 3420. Again repeating: 3400, 3402 and 3420. Now 3400 talks about what will you do if you have been hired to perform assurance engagement on prospective financial informations. So in case you have been engaged for a project report related concepts which are required to be filed with the lending institutions on the behalf of your client, it means you are not being hired for HFI, you are being hired for what? PFI. That is the first 3400. Then 3402 is nothing but the replica of our SA 402. Now look at the connection: 3402 and 402. Please quickly tell me what was 402. When the auditor of the user entity is going to use the audit or going to use a service report of the service organization. Do you remember that? 402 we have done. We have 402 in our portion. Am I correct or not? In general principles chapter, even if you have not done, you must have done at your intermediate level. This is a very simple standard you need to understand. Are you getting the point or not? So 402 ka replica is nothing but 3402. Let me tell you one thing. When the 3402 will come, I'll make you understand the total concept very clearly. Are you getting the point? So if you are good with 402, you will definitely be very good with what? 3402. Very, very simple standard. And there comes the last one, 3420. 3420 mein we are going to understand कि boss, how to deal with pro forma financial adjustments. Pro forma financial information adjustments we have to do. That I will tell you when the right time will come. What do you understand by pro forma? So there are three standards: 3400, 3402 and 3410. These are the things we need. 3420, sorry. So 3402 and 3400. So these three assurance engagements we have to understand. But before that, we need to understand, sir, what do you mean by assurance engagements? So it's a very simple thing. Try to understand. The name of the chapter is Prospective Financial Information and Other Assurance Services. Prospective financial information and other assurance services. So let's first understand what do you mean by prospective financial information. And remember, throughout the topic, we are going to use the word PFI. PFI stands for prospective financial information and HFI stands for historical financial information. Are you getting the point? This is the way we are going to deal with this standard. Now try to understand. SA 3402. What is the first standard? SA 3402. Now SA 3400. Now try to understand the examination of prospective financial information. So you have been examined or you have been engaged to do the examination of prospective financial information. Now, what do you mean by prospective financial information? Those informations which are purely based upon forecast. Informations which are purely based upon forecast, or those informations which are purely based upon projections. Right or not? First of all, though, you need to understand what do you mean by historical financial information which is based on forecast, and what do you mean by historical financial information which is based on projections. Let me tell you one thing. Forecast are those things. Forecast are those things on the basis of which, remember, forecast are those things in which assumptions look little bit more realistic. And forecasts are being used by those entities who have a past track record of proving something. Let's say, for example, if the Reliance Industries Limited will prepare its PFI, we will say that Reliance Industries Limited ka PFI is based on estimates, is based on what? Forecast. Is based on forecast. Because Reliance Industries Limited has a considerable past performance to prove कि yes, कि let's say for example, if the Reliance is saying कि this year we have achieved 73,000 crores, next year we'll definitely be able to achieve 80,000 crores of profit. Now, from 73,000 crores, reaching to 80,000 crores is looking feasible or not? Yes. So this is what do you mean by forecast, which is looking a best estimate, which is looking a which estimate, everyone? Best estimate. Now let me tell you one thing, those PFIs which are based upon projections. So most of the students don't even know the fact that what is the difference between a forecast and projection. Projection means what, everyone? Projection means those assumptions which are looking unrealistic assumptions. Which are looking what? Unrealistic assumptions. Hypothetical assumptions. And it is basically used by those entities which are startup. Are you getting the point? What do you mean by startup? They are doing or they are starting the business very new, and they do not have any back or they do not have any considerable past to prove themselves. So whenever the startup prepares its PFIs, whenever these entities prepare these PFIs, they do not have any consistent past record. So they prepare their PFIs on the basis of what? Projections. And projections are those assumptions which are hypothetical in nature, in which their own management is also unsure whether they will be achievable or not. Say for example, a company suddenly comes to a bank or a lending institution, says that, sir, in the first year only, I am expecting to make a revenue of 100 crore rupees. Now you are still at zero, and zero to directly what? 100 crores. Do you think that it is looking a best estimate, or is it looking a hypothetical assumption? Sir, hypothetical assumption. I'm not saying that it is not achievable. I'm not saying that it is not at all achievable. But here, your own management is also a little bit unsure whether these will be achievable or not. May be achievable, may not be achievable. But I'm not saying that this is wrong. See, forecast-based financial statements, forecast-based prospective financial statements, and projection-based prospective financial statement, I would say that more viability, more feasibility in those PFIs which are based on forecast as compared to those PFIs which are based on projections. In the projections, remember one thing, in the projections, you will find the hypothetical assumptions, whereas in the forecast, you will find the best estimates. What you will find? Best estimates. Is it clear to all of you? Right or not? So there are two types of PFIs we are going to understand. PFIs based on forecast and PFI based on projections. Which one is best estimate? Yes, PFIs based on forecast are the best estimates, and PFIs based on projections are hypothetical assumption. Which one is looking more feasible? Best estimates are looking more feasible, which are based on forecast, whereas hypothetical assumptions are looking less achievable because they are based on projections. Are you getting the point? So that is what is the overall idea you should have before entering into this series of standards, right? Now see, PFI stands for prospective financial information, HFI stands for historical financial information. Now this standard guides on how to examine and how to report on PFI, including your examination procedures. The very first difference which you will find is you will not call it as TOCs, you will not call it as FAPs, you will not call it as substantive procedure. We will call it as examination procedure. What is the word we'll use? We will call it as examination procedure because they are not the audit procedures. We are not going to here express a reasonable assurance. We are not going to give any reasonable assurance. We are going to give lower assurance. Are you getting the point? You can't give the assurance on something which is purely future based, forecasted based. Are you getting the point? So these are not our auditing procedures. Now remember, in the SRS, they are known as agreed upon procedures. Am I correct or not? Or specific procedures. In the SAEs, we call them as examination procedures, not the audit procedure. This is the first thing you have to remember. We call it as NTE of audit procedures generally, but here you have to use the word NTE of examination procedures. What do we call it as? Examination procedures, because we are not going to give here any reasonable assurance. And we are going to report on those PFIs which are either based on what? Best estimates or based on what? Hypothetical assumptions. Again repeating, I'm not saying that hypothetical assumption based PFIs are non-achievable, but there are less chances of achieving it. But the more chances are always there on those PFIs which are based on forecast, that is best estimates, right? Now, examination of PFI we need to be done by the statutory auditor of HIV only. Now they are saying that if you are a PFI auditor or if you are a PFI auditor, you need not be the HFI auditor. Are you getting the point? There is no necessary कि PFI auditor should be the HFI auditor. No, HFI is completely having a different perspective to be taken care of. So therefore, it is not necessary that your HFI statutory auditor only should be the PFI auditor. But remember one thing, we are calling them auditor, but we are not going to call them the same procedures. What we are going to call them, everyone? We are going to call them examination procedures. Which procedures? Examination procedures. Second thing, sir, what do you mean by PFI? It is a financial information which is based upon assumptions about the events that may occur in future. That is what I told you. They are forecast based or projection based. Those events which have not yet occurred may occur in what? Future. And possible actions which may be taken by the entity in future. It means either your assumptions will take or your possible actions will take. They both are going to occur in what? Future. Present mein kuch bhi nahi hai. Are you getting? There is nothing in happening in present. That's why we call them as PFI, prospective financial information. PFI is highly subjective in nature and needs a considerable judgment, and it ultimately results into, obviously, they're highly subjective in nature because this is something which is not a present based. This is something which is future based. The future is certain or uncertain? Uncertain. So it is not at all an objective concept. It is purely a subjective concept, and it may result into either a forecast. What do you mean by forecast? Forecast, I already told you, forecast means best estimates, short-term goals which are looking very feasible to achieve. So if your PFIs are based on forecast, it is more easier for you, it is more evident for you to do the audit on the same, to do the assurance on the same, right or not? But if it results into projection, projections are basically based on long term, and that too, they look what? Little bit certain, not as much certain as forecast look. Projections are based on hypothetical assumptions, so they are not that certain as a forecast are. Are you getting the point? Forecasts look more certain. So again repeating, forecasts are based on best estimates which look more certain. Even the management is also pretty sure they can achieve because they have a consistent past track record to prove. Projections are based on hypothetical assumptions, which is less certain and little certain, and their own management itself is not that much sure that will be able to achieve. I'm not saying it is completely unachievable, but it looks a little bit more unrealistic. It is being used by the reputed entities if it is a forecast, and it is being used by the projections are used by the startup entities. That is what the main difference. Or sometimes you will find the PFIs where the combination of both will come. Forecast also will come and the projections also will come. So PFI may either be based upon forecast, PFIs may either be based on projections, or PFI may either be based on both forecast or projection. Now, what is the difference between PFI which are based on forecast and PFIs which are based on projection? I already told you the difference, just read it out. It includes such assumptions of future events which management expects to take place. The management is more certain in case of those PFIs which are based on what? Forecast. Now, what do you mean by PFIs which are based on projections? It includes hypothetical assumptions. That's what I was using the word about the future events which management is not certain that it will take place. So, where the management is looking more confident, PFIs based on forecast instead of PFIs based on projection. Next one, generally used by those entities which are having a consistent track record of what? Stability. Like agar Reliance will post this PFI, so we will call it as a consistent track record, generally used in the case of entities which are a startup phase expecting major change in the nature of its operations. Next point. It includes the best estimate assumptions, which means such assumptions which reflect anticipated experience of management with no provision for the risk of what? Adverse decision. So when we talk about the forecast base, we know that the best management is involved and they have a good track record of achieving the things. And I think that they will not take the adverse decision if it's a PFI based on forecast. In the PFI based on projection, it's a mixture of best estimates and hypothetical assumption, which may be either too much imaginary or unexpected to achieve. So I think overall, though, you got an idea that there are two types of PFIs, one which are based on, what do you say, forecast, and one which are based on what? One which is based on projection. Okay. See, I'm not saying that projections are not, no, I'm not saying that projections look completely hypothetical. I'm saying they look less realistic as compared to forecast. Otherwise, though, if they are looking completely unachievable, there is no existence of such kind of PFI then. Try to understand. Yes, correct. Now, more achievable are looking what forecast and less achievable are looking, in simple words, are looking hypothetical assumption based projections. So, two types of PFIs are there, right? Next one. What is the scope of 3400? This standard is going to guide you how to examine and report on PFI, which are either based on best estimate, hypothetical, or both. It excludes the PFI, those PFIs which are generally expressed in narrative terms which are found in the management discussion. Now, see, those PFIs which you have made for internal purpose, those PFIs which are going to be disclosed in management discussion and analysis report. Now, let me tell you one thing. LODR, listing obligation and disclosure requirement, where every listed company has to prepare one MD, management discussion and analysis report. If your PFIs are included in this purpose, if your PFIs are for internal purpose, so this standard does not cover that. This standard covers those PFIs which are either based on best estimates or based on hypothetical assumptions, which are going to be filed with the lending institution for the purpose of raising the funds. Are you understanding my point? Yes or no? Yes. Now, the term auditor need not be necessarily mean a statutory auditor. See, in the SRS, we directly call that person as a practitioner. Are you getting the point? Because that was completely compilation engagement. But now this is also a kind of assurance engagement where your level of assurance is going to be lower because you are giving the assurance on the future events which may take place, may not take place. We will call you an auditor, but need not be, or we are not talking about the statutory auditor. Or if you want, you can here also call them as a practitioner. There is no problem. But yes, practitioner word suits more when it comes to the compilation engagements, right? Next point. Nature of, in case need arises, standards on auditing can also be incorporated. So they are saying that even though you are doing the assurance services, it doesn't mean that standards on auditing you will not be following. Say for example, WRLs we have to take. We can follow standards on auditing. Documentation may 230 will follow. If we need the external confirmation, we will follow 505. So simply understand one thing. Using SAEs doesn't mean that you can't use essays. This is a family of standards which is incorporated by ICA. So there's no problem in that. Is it clear to all of you? Yes. Now next point. Nature of assurance. It is completely different from auditing services. How? I already told you. First of all, though, we do not call it as auditing procedures. We call them as what? Examination procedures. Higher level of assurance is also going to be lower as compared to and different as compared to auditing. And here we are not calling him as a statutory auditor. We are only going to call him as an auditor. In this engagement, evidence is obtained itself are future oriented. That's what which have not occurred. Auditing may we do the audit on HFI. Right or not? We do the audit on HFI, historical financial information, where the evidences have already occurred, where the things have already done, where the events have already occurred. Here it is something which is purely future based, future oriented based. So here the evidence itself obtained are future oriented, speculative, non-occurred in nature, whereas in doing the audit of HFI, evidences obtained are certain and what? Occurred. So audit is on HFI and assurance engagement is on what? PFI. There in the audit evidences are already present, they have already occurred, events have taken place, whereas in HFI events have not yet taken place, they are going to occur, the evidences are going to be collected, right? Next one. Therefore, it is very easy to express an opinion in case of what? Audit engagement, because it is based on HFI and the things are already certain as compared to expressing the opinion on what? In the PFI. Now, responsibility of preparation and presentation of PFI is, boss, let it be HFI or let it be PFI, was, is and will be the prime responsibility of our management, and we have to take the WRL on the same. It is a management responsibility to prepare the PFI, including giving proper identification and disclosure that it is not a, it's a PFI, not a HFI. So in the opening of your heading, you have to mention that it is not an HFI, it is a PFI. Explaining the basis for the forecast. What do you mean by explaining the basis for the forecast? Anybody? Explaining the basis for the forecast, because you are taking a forecast, you are taking a assumptions, so you have to show some basis. On what basis you are saying that this forecasted figures will achieve and this projected figures will achieve. So remember one thing, you always have to make sure that basis should also become the part of your what do you say, HFI, PFI. Giving disclosures of underlying assumptions and sources of data. So always remember, whenever the forecast is included and whenever the projections are included, giving assumptions, basis of forecast and source of information is something you always have to disclose. And you already remember in the clause number 3, part 1 of schedule 2, we already said that you will be guilty of professional misconduct also if you are going to vouch the accuracy of the forecasted figures, if you remember. Are you getting the point? There also I told you, be it the entity preparing or be it the auditor doing the audit of PFI, remember one thing, you have to do and you always have to give your assumptions ka disclosure, your basis of assumptions ka disclosure and your source of information. Is it clear to all of you? Same 3 things are expected from the management. Note, a chartered accountant is not prohibited to get associated for preparation of PFI, but due to the increased reliance on his reports and work by the bankers, stakeholders, it has become necessary that he must possess a necessary skill and competence to serve the purpose. Moreover, while examining PFI, he must mention his assumptions, basis and sources so that he shall not be held guilty under 315. See, ऐसा नहीं है कि we can't be engaged for the compilation of PFI. We can be. But ultimately PFI is going to go in the hands of bankers and all. And remember, PFI ka preparation takes a lot of skill and competence. If you have an experience, if you have the competencies and capabilities to prepare PFI, then only you should get engaged in such kind of engagements. Are you getting the point or not? I'm not saying that you are prohibited from that, but generally either it is HFI or it is PFI. Primary responsibility of its preparation and presentation lies on whose shoulder? Management shoulder. Is it clear to all of you? 100% clarity? Yes. Remember those 2 questions I will ask you the answer for those two questions of SRS, and I'll post some questions of SAEs also, and I'll give you all the answers at the end, right? Next one. Duties of the member in examining the PFI. So obviously, what are our duties? We have to first check that ki assumptions are looking reasonable, reliable, relevant or not. Now see, checking management's best estimate assumptions and hypothetical assumptions they have taken in PFI. So we have to check what? We have to test the reasonability of assumptions, reliability of assumptions, relevance of assumptions, ensuring its consistency with what? Purpose. तो हमें ये चेक करना है कि whatever the assumptions they are taking, be it a PFI based on best estimates, be it a PFI based on hypothetical assumptions, are their assumptions looking reasonable? वो genuine लग रहे हैं? Are they looking reliable? वो trustworthy लग रही हैं? Are they looking relevant? Are they looking appropriate or not? And are they looking consistent with their purpose or not? So it means first duty is to test their what? Assumption. Second duty is ensuring that PFI is properly prepared on the basis of such assumptions. So whatever the assumptions we have tested in the first point, on the basis of that, whether the PFI is being prepared or not. Third, ensuring that PFI is properly presented and all material assumptions are adequately disclosed. तो हमें ये भी check करना है कि it is properly disclosing all the assumptions. What are the three things to be disclosed? Assumptions to be disclosed, basis for assumptions to be disclosed, and sources of information. Are they being adequately disclosed or not? So are the assumptions looking reasonable, relevant, and reliable or not? Are the PFIs being prepared based on such assumptions or not? And are they properly and adequately disclosed or not? Ensuring that PFI is prepared on consistent basis with what? HFI. See, try to understand those accounting policies which you have taken in HFI is expected to be same followed in what PFI. Just because you are preparing the PFI, you cannot say that HFI may we were using SLM method and PFI may we are thinking of taking the WDV method. No, there has to be a consistency between HFI and PFI unless the situation demands to be different. Are you getting the point? So we expect that the accounting policies which you have used in your HFI, historical financial information, same in consistent manner should be used in your preparation of PFI. Clear? Next one. Precautions to be taken before accepting such engagement. What is the next topic? Precautions to be taken before accepting such engagement. Identify the use of PFI and its what? User. Remember one thing, as you know that we do the same thing in special purpose financial statement. If the special purpose financial statements are requested by a person, right or not, a specific person, then we have to check that who is that user, what is the nature of the entity, and what is the purpose of using it. Same case. Who is going to be the user of this PFI and what is the purpose of behind this PFI. Next one, whether PFI information is prepared as per general purpose or special purpose. So we have to see that PFI is based on general purpose audit accounting framework or as per the special purpose accounting framework. Check whether the assumptions taken are either best estimate or hypothetical. So are they based on best estimate or based on hypothetical assumptions? What elements are to be included in PFI? What do you mean by what elements? Are the PFIs are complete set of financial statement or only single financial statement or any account related PFI or any element related PFI? You have to check it. Is it a single financial statement or is it a full set of financial statements? Next one, period of assurance to be covered. Yeah, are we giving the assurance on this PFI for the full year, for the half year, for the quarter based PFIs? That also we have to express. So these were your duties and these are your precautions. Am I correct? Next one. In case assumptions are looking unrealistic or unachievable. I already told you. See, any engagement, sir, try to understand any engagement, you have every right to withdraw. It doesn't mean that you are doing assurance review or related or auditing, you are bound by something. No, you can always be assured that you can take adequate steps to get it out of it. Then in that case, you should withdraw. If you think that assumptions are looking completely unrealistic and unreasonable and associating with such kind of engagement is looking completely dangerous to you and your profession, you better should withdraw. Is it clear or not? And in case PFI information is looking inappropriate for which users? Intended users, then also what? Withdraw. Either the assumptions are looking unrealistic or unachievable or PFI is looking inappropriate, you should better what? Withdraw. Next one, ensure to discuss all the terms and conditions at the very beginning of the engagement only. So they are saying that be precautionary base पे you should ensure that कि ये जो withdrawal वाले terms and condition है, you should better tell them in the beginning only कि boss, in future if I feel that कि your assumptions are looking unrealistic and your assumptions are looking what? Unachievable and unreasonable, I will withdraw. And if I think that ki PFI given to the intended user is also looking what? Unreasonable or inappropriate, then also I can withdraw. All these things you need to check it in the beginning only. Now let's understand what is the NTE, nature, timing and extent of our examination procedures. Repeat everyone. Examination procedures, not the auditing procedures. Right? Point number one. Make the use of the knowledge obtained during the previous engagement. What they are saying that you must have done their HFI audit also, you must have done their internal audit or any kind of engagement if you have already served. So obviously you already must have acquired the knowledge of the client's business. To make the use of that knowledge while doing the engagement on PFI. Check management's competency in preparation of PFI. You have to check. See, for our QCPPs, do we check our competency and capabilities before taking up the assignment or not? Is my team able to deliver this particular thing? Same thing you have to do it on whom? You have to do it on entity. Check the management's competency and capabilities. Are they ready or are they good enough to prepare the PFIs or not? Next one. Check the likelihood of MMs. Obviously, if it's a PFI or HFI, ROMM might be present. So, what do we do to reduce the ROMM? We always perform our RAPs. So, yes, either it is HFI or PFI, you should perform your RAPs to reduce the risk to the lowest acceptable level. But don't call it as an audit procedure, call it as an examination procedure. Examine the extent to which PFI is influenced by management judgment. Check the assumptions. Check whether they are taking care of it as a best estimate PFI or they are making it as a projection based. क्योंकि या तो hypothetical assumptions होंगी which look less realistic or best estimate assumptions होंगी which looks more realistic, right? Now, very important. Consider the source of information from which source they are preparing the PFI, its adequacy, its reliability, and check whether the data is derived from the third party. Is the data belong to the industry statistics and is it supporting the assumptions or not? भाई बहुत इंपॉर्टेंट है क्योंकि PFI is based upon the data and source, and we have to check that the data and the source both should look reliable and assumptions should look reasonable. Are you getting the point? And disclosure should be made adequately. All these put together is nothing but helpful in preparing a PFI. If these things are not properly gelled and properly made, then in that case, boss, it is not a PFI. Is it clear, everyone? Next one. Examining the stability of what? Client's business. Examining what? Stability of client's business. Now, what do you mean by stability of client's business? You have to check that if the client is stable, then he should prepare his PFI based on what? Forecast. And if the client is looking unstable or making a major change or a startup kind of client, then definitely you will see that his PFIs will be based upon hypothetical assumptions. Checking your own engagement team's experience. Are they capable and experienced in this industry and engagement or not? See, I already told you, let it be any kind of engagement, you always have to take care of your QCPPs, quality control in policies and procedures, and you have to check the competency and capability of your own team. Ki are you good enough to deliver this particular engagement or not? Is it clear, everyone? Yes? Is it clear to all of you? 100% clarity? Yes. Now, note one. If it is a best estimate assumptions, the evidences can be obtained from the entities, budgets, debt agreements, and industry publications. Obviously, अगर ये best estimate based है, what do you mean by that? If their PFIs are based on forecast, if their PFIs are based on best estimate, so we have so many places, we have so many sources from where we can obtain the information to check its reasonability, be it entity's budget, be it their debt agreements, and be it the industry publication. But if it is a hypothetical assumption based or projection based PFI, so remember one thing, your workload is going to be a little bit more difficult because all assumptions and their significant implications must be examined because such hypothetical assumptions sometimes turn into unrealistic and unachievable. Are you getting the point? Now see, let's say for example, um, suppose there is one company, right or not? Now look at this example now, how to be certain in case of hypothetical assumptions. Suppose there is one company. This company is going to the SBI bank and saying that we are looking for 10,000 crores of loan, or let's reduce it, 1,000 crores of loan. We are looking for 1,000 crore of loan. Now, bank will definitely ask you the purpose, why, on what basis, sir, we have got 15,000 crore worth of project in our pocket. 5,000 crore worth of money we are using from our own pocket, with which we have already started investing in the plant and machinery and equipments, and we have already started buying it and installing it. We are looking for the another 1,000 crores or 10,000 crore rupees of loan to make sure that our project should be completed on time. Are you getting the point? So bank will definitely ask you on what basis I should give you the 10,000 crores or of the loan. So then you have to show some papers. Okay, boss, out of we are actually looking for 15,000 crores. We need 15,000 crores to complete our project. 5,000 crores which we had in our reserves, we already started using it in enhancing our what? Plant and machinery ka capacity, because then only we will be able to convert or we'll be able to serve our purpose of that project or not. Because project is worth rupees 15,000 crore. So if you will show the evidence of 5,000 crores worth of investment in plant, machinery, location and equipments and enhancement of capacity, then only the banker will have some reliability on you and trust on you and will give you and issue you the loan of what? 10,000 crores. Are you getting the point? So इसमें you have to make sure that in case of hypothetical assumptions, your workload is going to be more. There should be some evidence. There should be some at least minimal evidence to prove that yes, whatever you are saying in hypothetical assumption is looking achievable. Else, you may end up resulting that their assumptions will look unrealistic and unachievable. Right or not? Next thing, presentation and disclosure. What to do? Presentation of PFI must be informative, must not be what? Misleading. I already told you, be it HFI or PFI, result output will remain same. It should look true and fair. Accounting policies should be clearly disclosed in the notes of PFI, and if changed as compared to HFI, must state the reason for the change and effect of such change, whether adequately disclosed or not. I already told you this point earlier, कि accounting policies which you have used in HFI and which you are using in PFI should look same. If there is any difference, must disclose the reasons for the change. Assumption must be adequately disclosed. All those management estimates and assumption based estimates which are made by the management should be clearly disclosed, कि are they based on best estimate or are they based on hypothetical assumptions. Now, special attention to those assumptions which are looking more uncertain and highly sensitive. That is what is expected from an auditor who is engaged in this engagement. Management must disclose its source and how it was collected. I already told you assumptions should be disclosed, basis should be disclosed, and sources are definitely required to be disclosed and how they obtained that information. If the management is stating or establishing any range, इसे बोलते हैं estimate uncertainty or estimate range point, then range shall not be biased by selected or misleading in PFI. अगर आप rate of deviation कुछ डाल रहे हो in your what do you say PFI, then make sure that it should not look biased and partial. It should look genuine. Rate of deviation की बात कर रहा हूँ, right? And these are the reporting requirements. Title definitely same like that. And remember one thing, I will suggest that all these the new series of standards which you have na, please look at their report at least once. I'm telling you, very much fair chances that most of the cases will come in the case of reporting, because report only is the place where make one assurance engagement different from review, different from related services. So better you should check out their what do you say reports from the icai material. Don't check it anywhere. Directly check it from icai material. They are given after every standard one format of reporting. Right? You will not find it difficult to get it from anywhere else. Right? Now let's understand. Title will be there. Addressee will be there. Title will be what? Independent Auditors Report on Prospective Financial Information. Remember, you have to identify that it's not a HFI, it's a PFI. Clear? Hai? Next point. Addressee, the intended user. Identification that it's a PFI. That's what I was telling you. Do not identify it as HFI. It is a PFI. List of assets used in examining such PFI. What list of assets you have used in examining such PFI, that also you have to give. Next one, standards on auditing. Right or not? Standards on auditing. I already told you, just because you are doing the assurance engagement doesn't mean that you are debarred from using the standards. You can use very much the standards. Management responsibility para on PFI and their assumptions. Obviously, the preparation, presentation, assumptions, policies, everything is who's the responsibility? Management, and disclosure of their assumption should be there. Restriction on its distribution and use para. This paragraph basically we use if we want to alert the readers that ki boss, this PFI is not for everyone. This is only for the intended user. So you can use this paragraph name called restriction on distribution and use. Right? And NTE of examination procedures with a declaration that evidence collected were on which basis? Test basis. Obviously, be it a HFI or PFI, we can't do the full checking. We always have to do the sampling and make it sure that you clearly mention it that okay, whatever the examination procedures you have done, that is purely based on test basis. Next one, statement of negative assurance on assumptions, if any. अगर आपको लग रहा है कि their assumptions are looking little bit unrealistic, unachievable, you can give this particular statement as well. Overall opinion which you draw on your PFI. Remember, opinion paragraph, conclusion paragraph was missing in case of related services, but not missing in case of what? PFI. Because this is assurance, this is not related services. Appropriate warnings relating to achievability of results. If you see some red flags, if you see some warning signals, so it's your responsibility that you should also disclose that, because ultimately you don't want anybody to raise a finger on your integrity. तो उसे हम लोग बोलते हैं appropriate caveats. Caveats means early signs of warnings, or you can call it as red flags, date, place, and signature. Now, additionally, what you need to disclose to draw the attention of the users if assumptions are not providing reasonable and assumptions, give the basis. What do you mean by that? If you think that key users' attention should be drawn, then in that case, and you think that some assumptions are looking unreasonable and unrealistic, you can include one particular para for the same. Expressing an opinion stating that ki PFI is made as per what? AFRF. Especially remember one thing. If it is given as per SPRF, Special Purpose Reporting Framework, the boss, you have to definitely use the restriction para. If it is as per the generally accepted financial reporting framework, then it's fine. Stating the warnings, actual results may vary from the anticipated results. Obviously, they are based on forecast, they are based on hypothetical assumptions. So there is no certainty that the results what they are showing in the PFI will definitely be same when it will be certain. So definitely the difference will come, like what you are showing today and what they will be able to achieve tomorrow. If the range is used, adequate supporting evidence is there or not. Now, I already told you if you are using any expected rate of deviation or estimate uncertainty range, you should support it that this range is looking reasonable. And declaration that readers are cautioned to use this report only for the which purpose? Intended purpose, same that point. Now, how to modify the opinion on PFI? Now, obviously, you will give the modification opinion also on PFI. When modify means what? Either qualified, adverse, or what? Disclaimer. Now, what do you mean by that? Qualified or adverse if the assumptions are looking unreasonable, presentation, disclosures are looking inadequate, sensitive assumptions are looking too many, there is no reason that it can be what achieved. If you are of this opinion, you may end up giving qualified or adverse depending upon the materiality and pervasiveness, which we have already covered in 705. Now, how you can give a disclaimer of withdrawal? If you think that management is putting too much unreasonable restrictions on you and they are not allowing you to have an access on some information, unexpected limitation on scope is being imposed, you can better give disclaimer and better think of what? Withdrawing. Right? And when it comes to your documentation as per 230, make sure that point number one, you should document as per 230 and preserved as per what? SQC1. So make sure your documentation should be as per 230 means what? Make a note of all your examination procedures, what you have done it on test basis, what evidences you have collected, what correspondences or communications have taken place between you and the management, your auditing, your assurance engagement letter, your written representations if you have taken any, all that as per SA 230 should be preserved, and make sure that even though it is an assurance engagement, you are still supposed to preserve it for at least 7 years as per SQC1 and assemble it within 60 days from the date of signing the assurance report. So that brings an end to your first assurance engagement called 3400. I hope all of you liked it, and let's understand the next one, 3402. Okay, so let's start with the next standard, everyone. SA 3402 Assurance Reports on Controls at the Service Organization. Now, let me first make you understand what this particular standard is all about. Right? Now, what is a particular meaning of this standard? Let me make you understand this first. Now, see, say for example, there is one there is one company called TCS, right? Now, this TCS has one payroll department. Which department? Payroll department. Now, this TCS have a payroll department, and this payroll department of TCS, which is taking care of all their salaries and all, TCS is not able to handle its payroll department. So, TCS has outsourced this to the, say for example, A Limited. What is the name of the company? A Limited. So, A Limited is going to take care of the payroll department of the TCS. So, what is TCS? TCS is a user entity, because obviously TCS is using the services of what? A Limited. So, we will call TCS a user entity. And the statutory auditor of TCS will be called as user auditor. What do we call it as? User auditor. The statutory auditor of TCS will be known as what? User auditor. Now, A Limited is providing the services. So, A Limited ko we will call it as service organization. What do we call it as? Service organization. Is it clear? So, TCS Limited ka one payroll department has been outsourced to whom? A Limited. A Limited is providing the services to the TCS with respect to its which department? Payroll department. So, A Limited is a service organization, TCS is the user entity, and the auditor, statutory auditor of TCS is known as user auditor. Now, this user auditor, while doing the audit of the TCS, he wanted to check the internal control systems of payroll department. Of which department? Payroll department. Obviously, he has every right to do the TOC on the payroll department of TCS as well, right or not? But when he wanted to do the TOC on the payroll department, he came to know that, ki boss, payroll department is no longer handled by the TCS now. Now it is handled by which company? A Limited. So what happened? This person wanted to go to the A Limited to do the testing of what? Control system. But A Limited does not allow, because they do not allow any outsider to come and do the testing of their controls. Now the question is, why user auditor wanted to go to the A Limited? Because user auditor has to express an opinion on overall TCS, na? And one of the department, very important department called payroll department, is no longer being handled by TCS. It is being handled by a BPO, right or not? A service organization called A Limited. So he wanted to go there and test, and his request was refused. So in that case, what he can do? See, you will be saying that, okay sir, user auditor need not go na. User auditor maximum can do what? Service agreement papers he can take. Which agreement paper? Service agreement paper, which is entered between the TCS and A Limited. But maximum he'll come to know about nature of services, tenure of services, purpose of services, significance of services. But controls of the services, the internal control system of A Limited, he wants to know. That is not available information in that service agreement. For that reason, he wanted to go to the A Limited and do the TOC over there. But A Limited refused. Now, what user auditor will do? User auditor will now request to whom? TCS. TCS will now request to whom? A Limited. And A Limited has to appoint now service auditor. And again repeating, A Limited has to appoint now a service auditor, not a statutory auditor of A Limited. Remember, I'm not talking about the statutory auditor. So why can't the user auditor use the report of the statutory auditor of the A Limited? No, we want not the report on the HFI of A Limited, na? We don't need the report on HFI of A Limited. We need the report only on internal control system. So for that, we need an independent practitioner or independent auditor to come and do the testing of controls of A Limited. And after doing the testing of controls of A Limited, that service auditor will send one report. So after doing the testing, by whom? The service auditor will do the testing of internal control system of which limited? Of SO. Are you getting the point or not? A Limited. And after that, he will send this report to user auditor. So who is making the use of whose report? User auditor is going to make the use of service auditor's report. Are you getting the point? It's like a 600 series where we use the work of others. where we use the work of internal auditors, where we use the work of auditors expert. Here, user auditor is going to make the use of what? Service auditor. Are you getting the point? Now, service auditor may send any of the two reports. That report name is known as type 1 report and type 2 report. Now, sir, what is the difference between type 1 report and type 2 report? Type 1 report only talks about the designs of ICS, descriptions of ICS. Are they looking suitable or not? Are they looking fair or not? Right. Whereas type 2 may design, description, are they looking suitable, are they looking fair, and testing report also. What is additional in type 2 report? He will do the testing of ICS and he will also give an assurance कि are the controls looking or operating effectively or not. This is the one additional main thing which makes the type 2 report different from type 1. So type 1 report or type 2 report में if I'll be the user auditor, I will definitely be preferring the type 2 report क्योंकि type 2 report is giving me the assurance on designs of ICS, descriptions, what the entity is saying is looking suitable or not, correct and fair or not, suitability, fairness, and testing of controls and giving an assurance on operational effectiveness of those control system. So this is what is the total scenario which is happening. Now understand. In SA series, we have SA 402. Now, SA 402 is talking from user auditor's point of view. SA 402 is talking from user auditor point of view. Now, please tell me what is service auditor doing? Service auditor is doing statutory audit? No, he's only doing the testing of internal control system. So can I say that we have engaged him only for giving the assurance on the control system of the A Limited or not? Yes or no? So that's why on him, SAE That's why on him, SAE, what is the SAE? SAE 3402 is applicable. On him, what is applicable? SAE 3402. So if we'll see the same scenario from user entity's point of view, so it is SA 402. But if we'll say the same scenario from service auditor's point of view, it will be SAE 3402. So we are not doing SA 402. We are seeing the same scenario from the service auditor's point of view. It means how the service auditor has been engaged to provide the assurance on service organization's internal control systems. So his only work is not to do the audit of service organization. His only work is limited to do the testing of the controls of service organization so that he can give the assurance report to the user auditor कि भैया this are they operating effectively or not. That is what this standard is all about. This is what 3402 is all about. Now read the name of 3402. Assurance report on what? Controls at which organization? Service organization. A Limited पे he went, he did the testing of controls and he is going to give that report to whom? To the auditor. Which auditor? User entities auditor. Is it clear to all of you? 100% clarity. Now see, what is the scope of this standard? This standard deals with assurance engagement taken up by the professional accountant in public practice. It means that also should be a member in practice to provide controls report to the user entity, our TCS and their auditors, our user auditor, which includes reporting on controls implemented at what? SO, service organization. This standard is conducted in, this standard complements SA 402. I already told you 402 is from user entity, user auditor's point of view, whereas 3402 is from service auditor's point of view. According to this assurance engagement, following only is required to be reported: controls which are relevant to user entity. Obviously, I don't want him to do the full testing of all the internal control system. I want him to do, I'm a user auditor, I want service auditor to do only the testing of what? Only those controls which are relevant for my purpose, which are relevant for the service agreement papers. Controls which may affect the financial reporting of the user entity. I want him to report on those controls also, those controls which may affect my user entity's financial reporting. Yeah. Next one, controls on such area of non-compliances which affects the user entity and its what? Operations. So while doing the testing of controls, if we find any non-compliances of laws and regulation by the service organization which may impact the user auditor in any way or user entity in any way, that controls also I want him to test. So I want him to test three types of controls: controls which are relevant for that service organization, which are relevant, for the user entity, relating to payroll department controls, controls which may provide me a indication that there is a non-compliance of laws and regulation and that may impact my user entity, and those controls which may affect the financial reporting of the user entity. I don't want him to do the testing on all the controls, only those controls in which my user entity is getting affected. User entity's non-compliance is getting affected. User entity is getting affected due to non-compliances by SO. User entity is getting affected due to the financial reporting areas and those controls which are useful to the user entity. So it means service auditor's work is going to be 100% according to the wishes and directions of the user auditors as well as the user entity's requirement. Right? Next one. Now, what is SO? Service organization refers to a third-party organization that provides services to a user entity whose controls are relevant to user entity as it relates to what? Financial reporting. What is user entity? Entity which is using the services of service organization like our TCS. Service auditor, Mr. PA in PP. What is Mr. PA in PP? Professional accountant in public practice who at the request of service organization provides assurance report on controls at SO. User auditor, the one who audits and reports on financial statements of what? User entity. So basically, you are an assurance auditor, service auditor, and you are being engaged to do the testing of controls of SO, and your report is going to be used by the user auditor of that user entity. Am I correct? Now, next point. Requirements of SA 3402. Only those controls of SO are relevant to the user entity which are relating to its financial reporting. Obviously, not all the controls I'm going to test as a service auditor. Only those controls I'm going to test which are going to affect the financial reporting of user entity. Right? Such controls may also affect the ABCD of user entity, which will be useful information for user auditor to perform what? Audit procedure. If the controls at SO, service organization, is impacting any account, balance, classification, disclosure of my user entity, that also I have to test. Controls at SO must achieve the control objectives like. Now, you all know that what are the control objectives? There should be a good control environment. There should be a reliable and quick information system. There should be control activities. There should be monitoring. There should be risk assessment process. So, what we expect at user entity, the same controls framework we expect at what? Service organization. There should be a control environment. There should be control activities. And there should be monitoring of controls at which intervals? Regular intervals. Are you getting the point? Understanding which controls are relevant and which controls are not is a case of professional judgment depending upon the control objectives and suitability of criteria. See, or obviously most of the things, so instructions have already been given by the user auditor to the service organization auditor, service auditor. But at the end of the day, we have to understand one fact that obviously service auditor is also a qualified practicing CA, is an independent professional accountant in public practice. So he may also use his professional judgment to understand which controls are relevant to be tested and which controls are not relevant to be tested, right? Next one. What are the objectives of the service auditor? My objective is to get the reasonable assurance on the controls which are placed at service organization. Simple objective is SO's description of its control system are fairly designed and implemented or not. Whatever they have described, if we have this internal control system, is it fairly designed? Are the internal controls are fairly designed as per their description, and are they being properly implemented or not? To get the reasonable assurance on the same, that is what the first objective of which auditor? Service auditor. Second objective is whether the control objectives is that the description of controls was suitably designed throughout the period. We don't want only the controls to be working properly during that time when the service auditor is doing the audit. We want those controls to be present and working and implemented throughout the year in such manner. See, service auditor is only for 1 month there for doing the testing of controls. We don't want that controls to be properly working during that 1 month. We want those controls to be present throughout the year in the same manner. Are you getting the point? And then only it will look justified and reasonable, na? Next thing, whether the controls are operating effectively or not throughout the period or not, depending upon the scope of engagement, if it is type 2 report. Now, obviously, I already told you the difference between type 1 report may we give the reporting on designing, description, are they suitably designed and implemented, and are they looking fair or not? And type 2 report may everything same as type 1, but additionally is we will do testing of controls and we will check are they operating effectively or not. So obviously type 2 report mein your workload will be more and your like objectives will be bigger as compared to what? Type 1 report. So it depends upon the scope of your engagement. If it's type 2 report, then only applicable to this point. So obviously we have to do the testing and are they operating effectively or not. I already told you that is a part of which report? Type 2 report only. If it is type 1 report, these two are your objectives. If you are issuing the type 3 report, type 2 report, then objective A, B and C. There is no type 3, slip of tongue, right? Next point. Once the service auditor obtains reasonable assurance on above 3 points, he shall report his finding to the user entity and its what? User auditor. Now, let me give you the difference between type 1 report and type 2. Let's understand first the type 1. Same point, same point, same point. Only this point is different. Right? Let's see. It includes the description of SO's control system. It also includes the description of SO's control system. How he describes where it is planted, how it is planted, when they installed, are they being monitored, are they being updated, upgraded or not. Total description which is given in type 1 report is equally applicable to the type 2 report. Point number 1. A written assertion by the SO. Service organization has to give it in writing that the description of controls are properly designed and what? Implemented. Same point we have to use it here. Here also service organization has to give it in writing that bhaiya, whatever the controls they are described, they are properly designed and implemented. Control objectives are suitably designed or not. Same point we have to enter it here that control objectives are suitably designed or not. But one extra point is here whether the controls are operating effectively throughout the year or not. Why this extra point is here? Because we are going to do the TOC, testing of controls. Then only we'll come to know that whether they are operating effectively or not. So 1 point extra here, only 2 points here, but there we have the 3 points. That is what the difference between type 1 report and type 2 report. I hope every one of you is getting, right everyone? Okay. Service auditor's assurance report, which includes his reasonable assurance on the matters of 2 above. So it means his report is going to include only the assurance on A and B, but here he is going to include the assurance on A, B and C. So service auditor assurance report is reasonable assurance on point number 2, on the matters in point number 2, and it also includes the description of TOCs performed and results. I already told you, see, you don't have to go by the language, simply understand. Type 1 report only talks about designing, implementation, execution, description, and assurance on these 3 areas. Whereas the type 3 report, what is one additional thing? Everything which is given in type 1 report is equally applicable to type 2 report. Only one thing extra. What is that one thing extra? We are going to do testing of controls. On the basis of that, we will see whether the controls are looking and operating effectively or not. Now, how to proceed with such engagement? Now, point number 1, ensure to comply with all the ethical requirements. Even though you are a service auditor, your integrity, objectivity, independence, professional competence, confidentiality will remain same. To get an access on information, service auditor must determine with whom to interact and communicate. So obviously, when you are going to do the testing of controls, you should know that who is going to provide you the adequate information and explanation. So you should identify, is the management the right people to whom to you would like to communicate, or the TCWG are the right people. Next point, ensure that compliance of 210 and 220. What do you mean by compliance of 210 and 220? You have to set up your terms of engagement in the beginning only. And 220 says that check your competency and capability, will you be able to serve this particular engagement or not. To ensure the compliance of 210 and 220, which means agreeing to the terms of engagement and checking your competencies and capabilities to carry out such engagement. It also includes understanding your scope of what? Engagement, and in case any changes have been demanded by SO. Let's say, for example, if SO demands any changes and you told that I will do this and that, but SO is saying, no, sir, you are only allowed this much of thing or that much of thing. So boss, make sure that you should decide those changes in the beginning only. And if you think the changes demanded by SO are looking reasonable and justified, then only accept it. Else you have every option to withdraw from this engagement, like what we can do in case of SA 3400 as well. If it looks unreasonable, if it looks unjustified, the assumptions. I already told you can go for the withdrawal. If unexpected limitation on scope is there, just how we have done. You can withdraw. Here also you can withdraw if the changes demanded by SO are not looking reasonable and justified. Assessing the suitability of criteria, which means whether the type 1 report will be enough or type 2 report will be enough, that you have to have a conversation with the user auditor what he is looking for. If he is only interested in designing and description, type 1 report is enough. But if he is interested in designing, description, testing, are they operating effectively or not, then definitely what serves the purpose better? Type 2 report serves the purpose better. Next one. Determining the materiality as per SA 320 to understand for the fair and true presentation which relevant controls to be tested and which are not to be tested. See, I already told you any control which is relevant to my user entity, be it financial reporting wise or non-compliance wise, everything is required to be tested. And obviously, to do the testing of controls as a service auditor, you better go with the planning, means better you acquire the knowledge of client's entity, their internal control system and their environment. Clear? Now, obtain the evidence relating to description, design of control, operational effectiveness of controls to assess that they were suitably designed, fairly presented, fairly implemented and fairly effective. Now, again and again, same points are getting repeated. Examine whether internal auditors' work can be used after conducting the relevant procedures of this work or not. Let's say, for example, if that service auditor or service organization already has one auditor called internal auditor, then you may definitely proceed with using his work. Right or not? And obtaining the WRL on the following concerns. What are the WRLs you have to take as a service auditor? WRL number 1, giving affirmation on description of control system. Obviously, management has to clearly give the description of their controls. Are they suitably designed and implemented or not? Take one WRL on the same. A WRL that ki relevant information and access rights provided to the service auditor. So will I be getting the access rights or not? Will I be able to have an access to this particular department or not? What are the limitation on my scope? You should get the WRL on the same as well on your access rights, and a WRL declaring the 4 things. Point number 1, declaring that all non-compliances, all frauds and all uncorrected deviation has already been intimated to the service auditor, which may affect the which entity? User entity. Second, design deficiencies in controls have already been disclosed to the service auditor. Cases and instances where the controls have not operated as designed and described has already been given to the service auditor. You need disclosure on all these 4 areas along with these 2 WRLs. So in total, you are looking for 3 WRLs. One WRL which is saying that yes, description of the control systems. Second one, you're on your access rights. Third one, is there any negatives? We have already disclosed it to the service auditor. Read this point. Declaring all the non-compliances, frauds and uncorrected deviations which may affect what? User entity. Designing deficiencies in the controls have already been disclosed to the service auditor. Cases, instances where the controls have not operated effectively, we have already disclosed to the service auditor. Information on subsequent events provided to the service auditor between SO's date and SA's audit date. What do you mean by SO? Obviously, SO's date of balance sheet will be what? Maybe 31st March of 2024, but service auditor came to do the audit of your testing of controls in the month of June. So definitely there could be between balance sheet date and his service auditor's date, there could be some subsequent events which may affect the assurance to be provided by the service auditor. So you have to declare that as well. And finally, our reporting. अब देखो अपनी रिपोर्टिंग की हेडिंग क्या होगी? Independent service auditor's assurance report. Not independent auditor's report, because he's not a statutory auditor. So that's how we differentiate him from being a statutory auditor. So what is the first one? Independent service auditor's assurance report. Second thing, who is my addressee? Addressee is only one person, user entities auditor. Right? Identification, is it a type 1 report or type 2 report? Limitations on your scope, what you have not covered and what were accepted by you. Complementary user entity controls which were audited and tested. Say for example, during the course of testing of controls, you came across some extra controls which according to your professional judgment is looking appropriate for the user entity. You can do that also. If any sub-service organization services were what? Used. Now see, let me tell you one thing. Suppose in our case, TCS has outsourced it to the A Limited. Suppose A Limited has further outsourced it to the Z Limited. So please tell me, this is user entity. this is service organization and this is sub-service organization. So in that case, if you have used any sub-service organization services, that also you have to mention in your identification para. Then you have to mention your identification of criteria and control objectives against which the internal control system has been tested. Criteria means benchmarks against which you have tested their internal control systems, right? In case of type 2 report, description of test conducted on such controls. What kind of test you have conduct? Because I already told you, type 2 report is different from type 1. Type 2 may extra is TOC, testing of controls. Which controls you have done, that description you have to disclose here. Next one, service organization's responsibility para. What is their responsibility? Description, preparation, completeness, accuracy, method of presentation. Whose responsibility? Service organization responsibility. Providing services is whose responsibility? Service organization responsibility. Then stating control objective, whose responsibility? Service organization responsibility. Controls ka design, suitably designed, implemented, maintained properly or not, whose responsibility? Service organization responsibility. And there comes service auditor's responsibility para ki boss, I did the testing, right? On the test basis, I am expressing an opinion and I have checked the design and description of the controls and implementation. A declaration that this engagement is conducted as per SAE 3402 with compliance of which ethical requirements, your integrity, objectivity, and details of his NTE of his which procedures, examination procedures. Again and again, I'm telling you, in SAEs, don't use the word auditing procedures, use the word examination procedures. Next point, a statement defining future risks which may appear due to the presence of limited controls, details of type 1 and type 2 report, date, signature, and the what? Place. Are you getting the point or not? So that brings an end to your another SAE 3402. We are only left with SAE 3420, that is on pro forma financial information which is to be included in a prospectus. Is it clear everyone? Chalo, next start karte hain. Okay, so let us start with the next standard everyone, SAE 3420. Now in the SAE 3400, what we have learned is how to do the assurance engagement on PFI, prospective financial information, which are based on best estimates or on hypothetical assumptions. 3402 taught us ki what is going to be the engagement where the service auditor is going to be engaged for testing the controls of service organization, and 3420 mein we are going to understand assurance engagements to report on compilation of pro forma financial information to be included in prospectus. So let me just make you first understand what do you mean by the term called what? Pro forma, what do you say? Pro forma financial information. So let's say for example, ध्यान से सुनना, let's say for example कि say for example there is one entity 31/3/2024 is its balance sheet date. Am I correct or not? 31/3/2024 is its balance sheet date. So suppose A Limited is there, right? Now this A Limited as on 31/3/2024 is planning to acquire B Limited. It is planning to acquire what? B Limited. So it is an acquirer and this is a target company. Am I correct or not? Now, obviously, acquisition and all those things will take a lot of time. Are you getting the point? It takes generally 4-5 months to get settled down with the terms and conditions. Now, after the acquisition, A Limited is thinking of going for a public offer. A Limited is thinking of going for a public offer after acquisition, right or not? So, say for example, the acquisition will get completed on 30th September 2024. Acquisition will get completed on 30th September 2024. Now try to understand. Now what is happening is we have the HFI. We have the historical financial information as on 31/3/2024 based. Now during these 6 months, whatever the adjustments have taken place for acquisition, merger related, acquiring target company, all those adjustments are known as pro forma financial adjustments. What do we call it as? Pro forma financial adjustments. Are you getting the point? So these pro forma financial adjustments we have to adjust it in what? HFI. We have to add it in what? HFI. So it will become pro forma financial information, and this pro forma financial information we are going to include in a document called what? Prospectus. Are you getting the point or not? So imagine and understand कि A Limited is nothing but acquiring the B Limited. Correct? Now A Limited is acquiring the B Limited, but we have the HFI as on 31/3/2024. HFI is available as on 31/3/2024. Now, as it is available on 31/3/2024, between that date to the date of public offer, so many adjustments might have taken place. We call it as pro forma adjustments. What do we call them as? Pro forma adjustments. When these pro forma adjustments will be added with HFI, when these pro forma adjustments will be added with HFI, so what it will be called? It will be called pro forma financial information. What do we call it as? Pro forma financial information. And this pro forma financial information, this company called acquirer wanted to add it in the prospectus, because people should in the prospectus understand everything in true and fair view, and that to the recent financials they want. And suppose prospectus is happening in the month of October and you are giving the financials of 31/3/2024. That doesn't look genuine. So 31/3/2024 plus pro forma adjustments which have taken place in these 6-7 months, it's like a subsequent events. And then we will add that pro forma adjustments into this HFI. And once we'll add this pro forma adjustments to the HFI, it will turn into PFFI. What is PFFI? Pro forma financial information. And that pro forma financial information, they want to add it in their prospectus for the betterment of their public offer. That's it. Now see this. What is the name? The name is what? Assurance engagement to report on compilation of what? Pro forma financial information included in what? Prospectus. So it means we have to compile the HFI with pro forma adjustments, and finally we'll get PFFI, which we are going to include it in what? Prospectus. This is what the meaning of 3420. I know that it is going to take a lot of toll on you, but let me tell you one thing, these kind of engagements are also available in the market. That's what I'm telling you. Reintroducing SAEs, SRS and SRE, you will be feeling it very blessed by the icai. Are you getting the point? Because in the last 10 years, I have seen that these were completely out of the box. They were completely eliminated from final portion. It has been reintroduced for your betterment only. At least now you will come to know that boss, these are the areas also where you can practice. Now read this point. What is the scope of this standard? This standard deals with the reasonable assurance to be given by the practitioner. Again, we are using the word practitioner. Are you getting the point? Via report to the responsible party. Who is the responsible party? Management. On compilation of pro forma financial information to be included in what? Prospectus. So we are going to tell to the management, ki boss, this is what your HFI was. This is the pro forma adjustments we have added. Now this became PFFI. Now take this information and you please add it in your prospectus. So our responsibility is to help the management in compilation of PFFI to be included in what? Financial statement. Next one. This requirement generally applied as per the security laws called SEBI ICDR regulations. So ये SEBI ICDR regulations की requirement होती है. What do you mean by ICDR? Issuance of capital and disclosure requirements. Like we have the LODR, listing obligation and disclosure requirement. We have ICDR, issuance of capital and disclosure requirement. क्योंकि SEBI wants that कि whenever the prospectus is to be issued, prospectus should be looking fair and true and should not be any misleading. Prospectus should not be misleading. That's why whatever the pro forma adjustments have taken place to be added in the HFI and then to be included in the prospectus so that people will get the fair picture. Right or not? Next point. What is pro forma financial information? Now read this point. It refers to such financial information which is required to be shown together with what? Adjustment. It refers to such financial information which is required to be shown together with what? Adjustment to show the impact of an event or a transaction on unadjusted financial information, whereas such event or transaction has already occurred or undertaken at a which date? Earlier date. Now read again. It refers to such financial information which is required to be shown together with what? adjustment to show the impact of an event or transaction or unadjusted financial information, whereas such event or the transaction has already occurred or undertaken at the which stage? Earlier date. So see, HFI में historical financial information में if we'll add pro forma adjustment, so it will become PFFI, pro forma financial information, which we have to add it in the document called what? Prospectus. That's it. Are you getting the point or not? So HFI, pro forma adjustments, we'll add this, compile it, and it will become what? PFFI. Now, this PFFI is normally used in the offer documents. What do you mean by offer documents? Called prospectus, to demonstrate the effect of transaction on financial statements of the company. Now, what is the effect of the transaction? See, I already told you merger or acquisition. A Limited was trying to acquire what? B Limited. So, see, prospectus is going to be issued in the November. But before the November, what was the impact of that transaction between A and B has happened? Do we also really need to show it to the public or not in the offer document? Yes, it will be unfair on our part if we will not show that particular transaction in the offer document. That's why we need to add this in the offer document and show it to the public. Is it clear to all of you? Yes. Now, PFFI could be P&L. It could be balance sheet, it could be both, along with significant notes giving the details of adjustment, transaction, and assumption used to prepare what? PFFI. So A Limited has acquired what? B Limited. So now they became AB Limited. So they wanted to show the impact of this transaction in their prospectus. That's why that pro forma adjustment, they added it in their HFI. Ki after that, 31st March, what has happened when we acquired this company? And this is what the true information they would like to go it in for what? For their prospectus, because it is a requirement of ICDR, issuance of capital and disclosure requirements as added by the SEBI. So it means this is something required to be done by the listed entities. Next one. The purpose of the PFFI is to get included in the prospectus for the well-informed decision of public at large. Simple. Just now I told you, public should not be in the misleading manner. They should know that where they're investing, because prospectus is always going to be a truthful and faithful document. Is it clear to all of you? Yes. Now, objective. To obtain the reasonable assurance on PFFI that is compiled in all material respects with the applicable criteria, to report the findings of practitioner accordingly. Now, how do we do the compilation of PFFI? Compilation of PFFI is the prime responsibility of what? Management. Again repeating, and again going to repeat. It should be inside your head. Be it a HFI, be it a PFI, be it a PFFI. Historical financial information, prospective financial information, pro forma financial information, everything was, is, and will be responsibility of whom? Management. We never do such things. We only help them in compilations. We do not do the things. We help them in compilation. We just assist them. We don't do. We are not the doers. We are the assistant. We have been hired to help them in doing the compilation. So either it is HFI or PFI or PFFI was, is, and will be the prime responsibility of whom? Management. Right, everyone? So compilation of PFFI is a prime responsibility of the management. Generally, it is an acquirer who is the responsible party. I already told you. Because target company is no longer going to be in existence now after acquisition. So it is who's the responsibility? Acquirer only. Responsible party has to gather, classify, summarize, and present the financial information that shows the impact of significant event or transaction on unadjusted financial information. So it is the acquirer company which will tell you everything. Now, this is what I was telling you. HFI is available on 31/3/2023. Events and transactions which are unadjusted, they are known as what? To be adjusted, and after once it will be adjusted here, it will become a PFFI, and which they are going to include it in the IPO or FPO via prospectus, which they are looking for in the future. Who will do all that compilation? Compilation will be done by the responsible party. Who is the responsible party? In our case, it is what? Acquirer, not acquiree. What is what? Acquirer. Are you getting the point? We are just assisting them. Next point. Steps involved in compilation of PFFI. First of all, to identify the source of unadjusted financial information. Ask the acquirer, how did you get to know about this unadjusted financial information? I would like to know its source. And once you will come to know about its source, do the test of reliability and reasonability on that source. Second thing, making the pro forma adjustment to the unadjusted financial information so that PFFI can be what? Presented. Now, can I say that this is unadjusted historical financial information? When we'll adjust this transaction, it will turn into a what? PFFI. So, making the pro forma adjustments to the unadjusted financial information so that PFFI can be what? Presented. Is it clear to all of you? I hope up to this point everything is clear. Yes or no? Next point. Presenting the PFFI with the adequate what? Disclosures. Presenting the PFFI with the adequate disclosures, that is also something which you have to check. तो पहले हमने उसका source check कर लिया. Then we also understood कि pro forma adjustments are properly done or not, or whether adequate disclosures are made in the PFFI or not. Next one. What is my responsibility? Now, I need to do that or I need to assist it? I need to only assist it. So what is my responsibility? This engagement is performed under an SAE. So we have to declare that in our report that this engagement was performed under SAE 3420. We are not responsible for compilation of what? PFFI. Obviously, compilation, preparation, presentation is all the responsibility of whom? Responsible party. You are there only to assist them. Are you getting the point or not? Or your boss, if it is a compilation, so definitely it is going to be SRS, not going to be SAE. So you're not getting involved. Compilation is done by acquirer company. Now adjustments are also done by acquirer company. You are just simply going to go there and test those pro forma adjustments which the entity has done. Are they looking reasonable and reliable or not? That's it. Your job ends there. You are not here for compilation, because if you are engaged in compilation, the boss, it is SRS which is going to be applicable, not the SAE. Next one, practitioner's only responsibility is to report whether the PFFI has been compiled on the basis of applicable criteria by the responsible party or not. What do you mean by applicable criteria? As suggested by benchmarks given under ICDR regulated by SEBI. So SEBI provides you the benchmarks and you have to check that whether the acquirer company has done it as per the benchmarks which are let down by the SEBI or not. That's it. You are not here for doing anything. You are not here for doing anything of thing. You just need to test their PFFI. Is it looking reasonable and reliable and source, etc. and adequate disclosures. This engagement involves performing the procedures to assess the applicable what? क्राइटेरिया. तो अपना एक ही काम है वहां पे जाके असेस करना कि एप्लीकेबल क्राइटेरिया इज दिस एंड डिड यू डू द एडजस्टमेंट्स एज पर द एप्लीकेबल क्राइटेरिया और नॉट. दैट्स इट. नथिंग मोर देन दैट. नेक्स्ट पॉइंट. Following are the steps involved in what? Engagement. What they're saying, following are the steps involved in engagement. Step number 1, engagement acceptance. What is the step number 1? Engagement acceptance. So before accepting, practitioner must consider applicable criteria used by the which party? Responsible party. Either the criteria must be established as per the recognized standard. या तो criteria must come from a recognized standard, means must be provided by the SEBI, or it should be established by the law or regulation. अगर SEBI ने provide नहीं किया तो it must have been established somewhere in the law or regulation, or if A and B does not exist, then it should be developed by the responsible party. But if it is developed by the responsible party, there could be a management bias, so you have to be more careful. Remember, applicable criteria could be of three things. Either the applicable criteria is as per the responsible standard or as per the recognized standard. Suppose it is not in existence. Applicable criteria against which you have to check your PFFI may be made by the law and regulation. Suppose that is also not available. But if the applicable criteria is developed by your client itself, that is called responsible party. So they are saying that be responsible, be more careful in that case, because there might be an involvement of management biasness in that. Okay, anything which the management will create on its own definitely will include the management bias or not. Yes, check your competency and capabilities. You have to check your 210 and 220. Is your team, is your engagement team, is your compilation team, is your what do you say, total team is capable and competent enough to deliver this engagement or not. हमेशा याद रखो QCPP is your top priority. Quality control in your policies and procedures. So 210, 220 also came in what do you say, PFI के case में भी, and also came in service auditor के case में भी. You have to first understand कि will you be able to deliver this requirement or not. Clear है? Next point. Obtain the preliminary knowledge of the engagement, have a initial meetings with the responsible party. Why do we conduct the initial meetings with the responsible party? To check their integrity, check the suitability of applicable criteria, and ensure that PFFI shall not indicate any misleading information. So you are behaving like an auditor only. See, everywhere, 100 times I told you, ki be it any kind of engagement, the moment you smell any material misstatement, then in that case, you have every right to get disengaged. Are you getting the point? Next point. Evaluate the wordings of the opinion. अब wordings of the opinion क्या होता है? If prescribed by the law, if the wordings are given by the law, कि okay, you have to use this wording, then use that wordings only. But if the wordings are not prescribed, because this is a very different kind of engagement, na? You do not have an experience of doing it earlier. So you can see that if the wordings of this particular engagement has been prescribed by the law to be given in your opinion paragraph, use those wordings. But if you think that the wordings given by law and regulation are not good enough, they are not they are not looking adequate, you can give the additional information by giving EMP or OMP paragraph also. If you think that additional information by giving EMP and OMP paragraph also is not serving the purpose, then give a disclaimer that this engagement has not been performed as per SAE 3420 because you are forced by the law and regulation to use these wordings. Now read this point. Evaluate the wordings of the opinion. If it is prescribed by the law and regulation, evaluate whether the additional information is required or not as per EMP and ORP. If the additional information is not sufficient, then what? Disengage. And if the disengagement is not allowed, then make a note that engagement was not performed as per SAE. This is what just now I told you 2 minutes back. Is it clear or not? Right? Next point. Check the sources of unadjusted financial information, and if the target acquires financial contains any modified opinion or EMP, then check whether the relevant law or regulation permits the use of such information by the practitioner or not. अब देखो, acquirer and target, two entities are going on. What they're saying, check the sources of unadjusted financial information, and if the target company, what do you mean by target company? Acquirees company contains any modified opinion or EMP and OMP, whether it is relevantly allowed by the law and regulation to use such information by the practitioner or not. So remember one thing, you may use it, you may not use it. That is dependent upon the permission given by the law and regulation. Not talking about the acquirer. Acquirer to hired you. I'm talking about the acquiree's modified opinion and acquiree's EMP and OMP information. If the acquirer's HFI has never been audited or reviewed, then auditors shall obtain sufficient understanding of the entity, its accounting and financial reporting to perform what? Engagement. अगर acquirer का HFI unaudited है, तो boss, you have to do little bit extra. You have to understand the entity, its accounting, its financial reporting. And if the acquiree's HFI has never been audited or reviewed, then obtain the sufficient understanding of the same thing of the acquiree's entity, acquiree's accounting, acquiree's financial reporting to perform the engagement. Sir, until unless you will not obtain the information on acquirer and acquiree, how you will be able to perform your engagement? And obtain the following agreements in writing from the responsible party. ये सारे WRLs पहले ही ले लो step number 1 में. So this is all happening before accepting the engagement. This is all happening at the time of, beginning of the engagement only. So what is that? They will adequately disclose and describe the applicable criteria to the intended users. They should make a promise that whatever the applicable criteria according to which they have prepared the PFFI, they will make the adequate disclosure of those applicable criteria so that informed intended user can also understand that these criteria they have used. Second thing, compilation of PFFI is on the basis of applicable criteria. Second WRL, they are claiming that PFFI what they have prepared, who responsible party is as per the applicable criteria, and they will provide practitioner all the rights. What do you mean by all the rights? They will allow him to access all the information. They will also give him the additional information if required, and they will give him the unlimited access. They will give him what? Unlimited access to all the persons of the entity, be it inside or outside. Now read this point. Access to all the information, in case additional information required, that also will be given, and complete access to everyone inside the organization or external advisors from whom practitioner wants to obtain the audit evidence, and access in appropriate individuals of the inquiry wherever the need arises. Not only I need the access at acquirer's place, I need the access at acquiree's place also. तो अपना स्टेज नंबर 1 हो गया. What was stage number 1? Step number 1 was engagement acceptance. This is what all you need to keep it in mind before accepting the engagement. Next point, planning and performing the engagement, assessing the suitability of applicable criteria. अब तो आप execution stage में हो. आप चेक करो कि applicable criteria is looking suitable or not. Considering the materiality to evaluate the applicable criteria. Applicable criteria is looking good. Is it looking material or not? Understanding how responsible party has compiled what? PFFI. उन्होंने PFFI कैसे बनाया? Obtaining evidences on appropriateness of source of unadjusted financial information. Evidence obtain करो कि from in the beginning only I told you, test the reliability and relevance of the source of the information on unadjusted financial information. Then if there is no audit or no review report on the source available, practitioner can do additional FABs to check what? Appropriateness. So point number 1, we check the suitability of criteria, we check the materiality of the criteria, we check the source of unadjusted financial information, and if you think that you are doubting the source, you can do the additional FABs in that case, and how the management responsible party has maintained or managed to prepare the PFFI, right? Next one, checking whether the responsible party has appropriately extracted the unadjusted financial information or not. हमें ये check करना है कि they took the full unadjusted financial information which is going to be adjusted in HFI, then only it will become PFFI. Practitioner shall obtain the evidence on appropriateness of pro forma adjustment. What is the first one? Whether the impact of unadjusted financial information is properly considered and whether the pro forma adjustment is carried out as per the AFRF or not. What I am trying to tell you is that कि accounting policies, देखो ये point हमने 3400 में भी अंडरस्टैंड किया था कि अकाउंटिंग पॉलिसीज ऑफ HFI एंड अकाउंटिंग पॉलिसीज ऑफ PFI शुड बी सेम. Same thing applies. Accounting policies of HFI and accounting policies of PFFI should also be same. How the hell you can change the accounting policies? You are not allowed to change the accounting policies unless the situation demands. Then evaluate the presentation of the PFFI and read other information of the prospectus. What do you mean by other information? 720. Is there any material inconsistency between the PFFI information and other information? Then you already know that if there is a material consistency, you have to use the SA 720. That was step number 2. And now step number 3, finally take the written representation declaring that while compiling the PFFI, we have identified all the applicable pro forma adjustments and also considered impact of each and every transaction. Who is giving this? Responsible party is giving this WRL, apart from those which you have already taken in the beginning. They will give you the full access. They are taking sure that the applicable criteria is genuine. This is at the end you are taking. And PFFI has been compiled in all material aspects on the basis of the applicable criteria. Like we take WRL in case of auditing, ki preparation and presentation of financial statement is whose responsibility? Management's responsibility. In the same way we are taking it here. And most importantly, step number 4, opinion. Opinion में क्या करना? आप unmodified opinion कब दोगे? When their applicable criteria is looking suitable, when their PFFI adjustments are looking suitable, when the source of unadjusted financial information is looking reliable. So if the practitioner concludes that PFFI has been compiled in all respect on the basis of applicable criteria, you will give a which opinion? Unmodified opinion. When you will give the modified opinion? If the applicable law or regulation allows modified PFFI to be included in the prospectus. If the practitioner concludes that it is not compiled properly, can express which opinion? Modified opinion. Now, what do you mean by this point? Read the point carefully. If the applicable law or regulation allows modified PFFI to be included in prospectus. Remember one thing, prospectus must be truthful and faithful document. When I'm using the word truthful and faithful document, I'm saying that it should include all the positives and negatives. If you think that modified PFFI can be included in the prospectus and it is allowed by the law and regulation, and if the practitioner also concludes that it is not compiled what properly, then he can express what? Modified opinion. He can express which opinion? Modified opinion. Right or not? Did you understand the point? And when the applicable law when the applicable law or regulation does not allow to include the modified PFFI in prospectus and practitioner has expressed a modified opinion, then he shall discuss the matter with the responsible party. If they disagree to make necessary changes, then withdraw and seek which advice? Legal advice. बहुत सिंपल सी बात है कि suppose PFFI is looking modified. Am I right? You also think that ki compilation done by the entity is also what? Modified. And they allow you to use that modified opinion. You can modify the opinion. But if the PFFI is looking modified, law and regulation is not allowing you to add that modified PFFI in the prospectus, then in that case, you want to give a modified opinion, you first have a word with the management and DCWJ. If they do not agree to make the necessary changes, then withdraw and seek a which advice? Legal advice. And in case practitioner feels that PFFI disclosures made in prospectus are not enough for the better understanding of users, he may include EMP paragraph in his assurance report declaring that it is not affecting his opinion. If he thinks that disclosures are not made adequately, not any modified opinion, if he only thinks that disclosures are not made what? Properly. Now, how your report should look like? Independent assurance report, addressee you already know, that is the responsible party, that acquirer. Introductory para, identifying that it is not a HFI, it is not a PFI, it is PFFI. Identifying their applicable criteria, identifying the period of your coverage, and identifying the source of unadjusted financial information. You have to test the reliability and reasonability of that. Responsible parties responsibility para. Who is the responsible party? Acquirers responsibility para, because they will take the full responsibility of compilation. You were just there to do the testing and checking the suitability of criteria. Practitioner responsibility, point number 1. Responsibility for expressing an opinion on PFFI is my responsibility. Not responsible for any HFI used in compilation of PFI because I have not done the audit of that HFI. He was not involved in any audit or review of the audit because neither it is audit nor it is a review of HFI. Practitioner does not provide any assurance on actual outcome of the event. हम लोग कोई इवेंट के ऊपर एश्योरेंस नहीं दे रहे. We are just going to test the reasonability of PFFI which they are adding in their prospectus. And one more declaration. Boss, this engagement is performed as per 3420. Details of NTE of his examination procedures, his professional judgments, his decision taken, declaration that he was engaged to overall presentation of PFFI and declaring that pro forma adjustments are done as per applicable criteria or not. That is basically your opinion paragraph. And following phrases can be used. PFFI has been compiled in all respects on the basis of applicable criteria, or PFFI has been compiled on basis stated above. These are the lines you can use in case you want to express an opinion, followed by your sign, date and place, and documentation is same as per 3402. So that brings an end to your which engagements? Assurance engagements. We did the all three. SAE 3400, 3402, 34, what do we say? 3420, right everyone? Now let's come back to those two questions which I asked you in the beginning of this particular lecture. Now, what is the question number 1 I asked you? Yeah, question number 1 was on AUP, if you remember, agreed upon procedures, where I asked you that what agreed upon procedures ke case mein, what are the things you need to include or keep it in mind to be included in your report specifically. I already told you I'll give you the answer for the same. Okay, let me take you to the answer and make you understand how your presentation should also what look like. Now see, test of understanding a question number 1. Now see, the described engagement is an agreed upon engagement because they were only telling you to prepare and send the confirmation letter to the accounts receivable, right or not? Next point is what? What are the 7-8 declarations you need to include it in your report? You already know that the stated procedures performed by you are the agreed upon procedures. Statement that the engagement was performed in accordance with the standards on related services, SAE, SRS 4400. Then identification of the purpose, listing of if any additional specific performance procedures you have performed. Same thing we have done it in our report. All these points you have to keep it in mind. These are, acha, please tell me, what is your responsibility to express an opinion? No, we only give the factual finding of AUPs to the whom? To the responsible party. After that, doing the assessment of that, expressing the opinion is their problem. That's what we are describing here. Right or not? Next one, statement that ki auditor had, if I could have been allowed to made any additional procedures to be applied, I would have gone for any additional information to be known to my area, and that would have become auditing or review. Then statement that report is restricted to those parties. Do you remember this paragraph? Restriction on distribution and use paragraph. A statement that report only relates to the ABCD of the financials. Am I correct or not? And in the instant case, second question mein, do you remember the second question mein ki there was 100 lakhs of a loss of the stock, right or not? The second answer was relating to the 4410, right or not? And you were there for the compilation of financial engagements, that is as per 4410, and you saw that there was a 1 crore of loss of the stock, and insurance company has also rejected their claim, but they're still showing it under the what do you say, current assets. So as per this, I already told you, as per this, you have every right to tell the management to make some necessary amendments. Go to the management if it looks inappropriate, inaccurate, dissatisfactory, or AFRF is not looking proper and HFI is giving misleading information. If they are not listening to you, better disengage. And if they are not allowing you to disengage, then take care of your legal and regulatory responsibilities, professional and legal responsibilities. Now read this point. In the instant case, amount of 100 crores is reflected under current assets. Therefore, amendments are required for the financial information to be materially misstated. If the practitioner becomes aware during the course of engagement that amendments to be made not to be materially misstated or compilation is otherwise misleading, the practitioner shall propose the appropriate amendments to the management, right? And if the management declines or does not permit the practitioner to make the proposed amendments to compile information, the practitioner shall withdraw from the engagement. And if withdrawal from the engagement is not allowed by the management or TCWG, then in that case, practitioner shall determine the professional and legal responsibilities applicable in the circumstances. The only skill what you need in to clear this examination is you have to be very good in your reading skills. Identify the question. Pro forma hai to 3420. Identify the question. If it is relating to service auditor, it is 3402. If it is relating to prospective financial information, 3400. All three are SAEs. If it is relating to agreed upon a single procedure, then it is definitely 4400. If it is relating to compilation of financial statements, HFI, then in that case, it is nothing but 4410. Both are SRS. So you need to have a good reading skills, my friend, and make sure that these standards should run in your veins like a blood. यहाँ पे कट मारे तो blood की जगह standards आने चाहिए. That is what the beauty of these standards. You have to understand the worth of these standards. Are you getting the point or not? So make sure that when you are making use of these standards, make sure you should have the good reading skills, right or not? And everything, and again requesting you, in every standard we have done, we should check the reporting criteria. We should check the detail of reporting, contents of the report. It is specifically given in all the SAE, SRS and SREs standards. Even in what do you say, SA 800 की series में भी it is being specially given. Because that is called specialized area standards. So I humbly request you, you don't only be dependent upon the contents of 700, make sure that you should check the contents of SAEs, SRS and SR. Direct question you can see na, direct question they have asked you. This question was purely based on the title. Had you been done the title, these points would have been inside your what answer. Are you getting the point? To make sure that you are not making any mistake in doing so, right? So with that, our essay series is also over. Now let's proceed with the SRE series, right everyone? Thank you so much. So hello everyone, let us understand the new topic now, that is called review of financial information, right? So we have already understood standards on related services. We have already understood standards on assurance engagements. And now we are going to understand standards on review engagement. The series is known as SRE. Again, in this series also, you will find the two standards. One is nothing but called 2400 and one is called 2410. Right or not? Now remember one thing, it was 4400 in SRS and 4410 in SRS. It was 3400 in SAEs, 3402 in SAEs and 3420 in SAEs, and now it is going to be the SRE series where we are going to do 2400 and 2410. Now the question is, sir, what is the meaning of 2400 and 2410? First of all, review engagements are very much similar to auditing engagement. They are not same like auditing, they're very similar. Like in the auditing, we give a reasonable assurance. We give a which assurance? Reasonable assurance, which is very high level of assurance. In the review, again we give the assurance only. First of all, though, in the review, we'll not call it assurance, we'll call it as conclusion. What is the main thing we have to understand now here, which makes it different, is we'll use the word called what? Conclusion. And the second thing, we are neither going to perform any examination procedures nor we are going to perform any audit procedures. We are only going to perform inquiry and analytical procedures. What are the two procedures? Inquiry and analytical procedures. Again repeating, as compared to auditing, the level of assurance, the level of conclusion, the level of opinion which you're going to get in review engagements is very less. Are you getting the point? As compared to auditing. So they're very similar like auditing, but they are not auditing. Now, sir, why you are saying they both are similar? Because both are being conducted on HFI. Are you getting the point? Both are being conducted on what? HFI. Now, in 2400 and 2410, what is the difference? In 2400 and 2410, what is the difference? Now try to understand. In 2400, HFIs are already prepared. HFIs are already prepared. You are being hired as a practitioner to review their full year historical financial information, but make sure that if you are getting engaged as per 2400, the auditor and the reviewer cannot be the same person. Auditor and reviewer cannot be the same person, because we want to get it reviewed, our HFI, by a separate qualified practicing CA or a separate PA in PP. Another professional accountant in public practice we need to do the review of our HFI before we are going to give this financial statements to the auditor. So review takes place before audit. Are you getting the point? Review takes place before audit. Now, what is the purpose of the review? So that at least we'll come to know that are there any necessary changes required to be made in our historical financial information before it is going to get in the hands of the auditor, because he is going to finally express a reasonable assurance. We want a little bit limited assurance on our HFIs, whether our HFIs are good or not. The moment audit takes place, before the audit, review takes place. What takes place? Review takes place. But remember, in 2400, now let me tell you the major difference between 2400 and 2410. In 2400, the auditor and the reviewer can't be the same person. You have to appoint a separate reviewer and you have to appoint a separate auditor. Because if the auditor and reviewer will be the same person, what will happen? The objectivity may get compromised. Are you getting the point? Obviously, auditor will not be able to understand ki shall he do the review engagement or shall he do the auditing engagement. So we want a PA in PP to do the review engagement, and we want separate PA in PP to do the auditing of that HFI. But common thing is both are being carried out on HFI. So 2400 is on full year financial statement, complete set of financial statement. Correct? Now coming to the 2410. Here also you have been hired for review engagement only. Here also, you have been hired for the review engagement only, but your review engagements are limited to, either quarterly or semi-annually. So we call it as interim financial information. What do we call it as? Interim financial information. It could be a quarterly, it could be 3 quarters, it could be 4 quarters, it could be semi-annual. Are you getting the point or not? And in the 2410 SRE 2410, the auditor and reviewer has to be the same person. Are you getting the point? Now see, in 2400, the auditor and reviewer can't be the same person. But in 2410, the auditor and the reviewer has to be the same person, because it will help the auditor in doing his audit effectively on timely basis if he will be allowed to review the interim financial information of the same entity. Are you getting the point? So 2400 mein auditor and reviewer are different. 2410 mein auditor and reviewer are same. 2400 mein you are being hired as a reviewer to do the review of total historical financial informations before the audit is being done. And 2410 mein you are being hired for the quarterly or semi-annual basis. Is it clear to all of you? Yes. So now let us proceed how review engagements are different from auditing engagement. There are so many similarities between the auditing engagement and review engagement, but at the same time there are certain differences as well as in their nature, performance, objective and reporting. So let's first understand what is the major difference between the auditing and review. Now, auditing provides you the reasonable assurance, whereas the review provides you the limited assurance. So, auditing gives us the high level of assurance, review gives us the lower level of assurance or limited assurance, you can say. But let me tell you one thing, it's kind of a double check before the financial statements are going to go in the hands of whom? Auditor, right? Second thing, it is more elaborate. It includes more extensive procedures. So in the auditing, we do RAPs, we do FAPs, we do substantive procedures, we do analytical procedures, we do testing of controls, we do the testing of details. But in the review, it is only limited to two procedures. One is called inquiry and one is called analytical procedures. Are you getting the point? Difference number two. Difference number three, it's about an expressing an opinion, but I already told you in the review engagement, it is about expressing a conclusion. Are you getting the difference or not? And fourth difference is what? Okay, the language of the opinion is positively worded, but here the language of the opinion is negatively worded. Now, this is a very, very extreme difference between the auditing and review. Now, in the auditing, what do we say? As per the information and explanation provided to us, right or not? As per the information and explanation provided to us, we say that ki financial statements are true and fair. This is called positively worded audit opinion. But in the review conclusion, what do we use the word? We have not, as per our review, as per our review, we have not come across anything which leads us to say that ki financial statements are neither true and nor fair. Did you understand the difference? Right? In the auditing, we are simply saying if financial statements are giving true and fair view in a positively worded. But in the review, we give the positive opinion in a negatively worded. We have not come across anything which makes us say that if financial statements are neither true and nor fair. Are you understanding the difference now? Am I correct or not? So, this is what the major difference between the auditing and review. Auditing may it is what? Positively worded, and review may it is what? Negatively worded. Auditing may you get the reasonable assurance, review you may get you the limited assurance. In auditing, the expression of opinion will take place. In review, the expression of conclusion will take place. Auditing may there are extensive procedures you will do. In the review, only limited procedures to the inquiry and analytical procedures. Now, this is what do you mean by the review engagement. So, what is review? It's a limited assurance engagement where the engagement risk is very low. Right here, the nature, timing, and extent of evidence gathering is as less as compared to what auditing. Only the purpose of review serve is what enhanced confidence on financial statement. I already told you it's like a double check, right or not? It's like a which check? Double check. Next point. Now let's start with the SRE 2400. After that, we'll be immediately starting with our 800 series. Right now. Engagement to review historical financial statement means what? You are being engaged to review the full set of historical financial statement, and remember, review takes place before audit. So it's a review before the what? Audit. Is it clear to all of you? 100% clarity. Now understand. Here practitioner is engaged to review HFS who is not the auditor of what? HFS. So I already told you in 2400, the auditor and reviewer has to be the two different persons, whereas in 2410, as it is interim financial information, there the auditor and reviewer can be the same person. Next one, the form and content of practitioner's report will be different as compared to audit. Obviously, in the audit, we express an opinion, here we express a conclusion. Again and again, I'm repeating, let it be specialized series of 800, let it be SREs, let it be SAEs, and let it be SRS. Again, and I am again repeating, do go for all the contents of the reports which are given at the end of each and every standard in your icai material. Nowhere you should not rely anything else other than your icai material. Are you getting the point or not? Next point, the term opinion shall be substituted with the word conclusion. We know it does not cover the compilation of what? HFI, because compilations are covered in SRS. We are doing SREs. So it is not the compilation of historical financial statement, it's a review of historical financial statement. Objective here is to obtain limited assurance. It does not give you the reasonable assurance as reasonable as we give it in auditing. Here you will get the lower level of assurance, limited level of assurance. Next one, and you already know that the only purpose of getting the review done is to get the enhanced confidence of intended user. The procedures to be applied here are inquiry and analytical procedures. Now, let's understand the objective of this standard. Obtaining the limited assurance by the inquiry and analytical procedure by expressing a conclusion that whether the financial statements are free from are prepared as per AFRF or not. So again, I'm telling you, review is very similar to what? Auditing. Only purpose is we are doing the double check before giving our historical financial statements in the hands of whom? Auditor. Next point. To report and communicate his findings as per what? SRE. Now, like we used it in SAEs, we used it in SRS. This engagement is done as per SAE, this engagement is done as per SRS. Here also we have to use this engagement has been done as per SRE. In case he wants to express a modified conclusion, in case I want to give a modified conclusion, but it is not allowed, then it is better to withdraw, because if the withdrawal is also not allowed by the law or regulation, then express that this engagement was not done as per SRE. Again and again, I am telling you, getting the withdrawal or getting disengaged is not easy. Understand what I'm saying? Once you have joined a particular engagement, withdrawing in between is not an easy thing. You have to understand one thing very carefully, that withdrawal is only allowed if the law or the regulation permits you. If the law and regulation does not permit you, withdrawal is not allowed. But in such case, as you are being forced to continue the engagement, you are very much allowed to write below what you have to write in one of the declaration in your report, saying that, boss, this engagement was not done as per SRE. This engagement was not done as per SRE, right? I hope you understood what I'm trying to tell, right? Now, again repeating, if you are not allowed to withdraw, it's better to give a declaration that this engagement is not done. Now, what are the requirements of 2400? Requirements will remain same. We have to follow our ethical requirements. What are our ethical requirements? Integrity, objectivity, confidentiality, professional competence, due diligence, right? A practitioner shall not accept the engagement if his ethical requirements are getting compromised due to the following reason. Let's say, for example, if the purpose of the engagement is not clear. Let's say, for example, the management is making you confused. Management is not letting you know the actual purpose of this engagement. They are sometimes they are asking, no, we want a certification. Sometimes they are asking, no, we want only conclusion. So purpose is getting in a guessing situation. Let's say, for example, management is putting too much limitation on the scope of the work. That limited assurance can also be not given. Suppose they are pushing you, okay, don't do this. Don't. Already we have a limited procedures, inquiry and analytical procedures. And again, they are putting a pressure saying that don't do this, don't do that, don't do this, don't do that. So in that case, what will happen? In that case, ultimately, you will feel like, boss, already it is an engagement or limited assurance. And if the limited assurance also not allowed, then what's the point? So it means the purpose of doing this assurance is not clear. Second thing, the requirements of the responsible party either similar to audit side or related services, due to which there is a need to change the engagement time. Now they are saying, no, we don't want any conclusion. We just want you to check our what HFI, are they looking good or not? Boss, if you don't need my conclusion, then it's a clear-cut case of compilation engagement. That is 4410. So it is a case of related service. Or suppose they are saying that, no, we want a reasonable assurance. We don't want a limited assurance. So it means it is a case of what? Auditing. So then you have to have a word with the responsible party. Sir, either it is looking as like an auditing, or if it is looking like a related services, it's better that we should change the type of the engagement. Because review services may we only give the limited assurance, and we have to give the assurance and we have to give the limited one. So neither it is an audit nor it is a related service. So you should be first clear with why you are hiring me. That is the second thing. Third thing, independent requirement is not getting satisfied. Suppose they are telling me that no, we will only tell you, you have to do everything as per our wishes and directions. Boss, no. Ethical requirements literally includes independence. So we can't do anything in case I feel that my independence is getting what? Compromised, right? Next one, information will be provided, but unreliable will not be provided at all. They are saying that no, you are not allowed to take the confirmation letters, right or not? And we will only provide you the information. No, you are not having an access to this information. Boss, this is ridiculous. We are not able to continue. There is a doubt on the management's integrity. Now you are getting a doubt on the management's integrity means you had an initial meeting with them before accepting the engagement and you found out that okay, they are not going to be cooperative, right or not, they are not speaking up, they are not telling me the information which I'm looking for. In the beginning only they are looking non-cooperative, so later end with definitely problem will arise. Next one, management TCWG is putting limitation in such a way that it may result into disclaimer. So suppose they are putting too much limitations on you. Too much limitation means what? If too much limitations will happen, what will happen? Ultimately, it may result into what? Disclaimer opinion. Then what will be the use of doing this particular, what do you say, engagement? Are you getting the point? So ultimately, if you know that it is going to result into disclaimer, there is no point of doing it. Next point. Preconditions to accept the review engagement. AFRF is applied in presentation of FS. Remember one thing, I already told you, audit and review are very similar. So obviously the same AFRF which we are going to expect to be there in audit is definitely going to be there in your review engagement. Management agrees that they will take the full responsibility. ये तो every time, be it a compilation, be it a prospective financial information, be it a pro forma, PFFI, everywhere you have to take a WRL saying that management is taking the full responsibility for preparation and presentation of financial information. Next point. They agreed to provide the full access to the practitioner's info and person in the entity, same as SA 3420. What they're saying, they agreed to provide full access. Do you remember in the SA 3420, we got one WRL where they will say that we will give you the full access. Are you getting the point? We will give you the additional information. We will allow you to have an access to every person inside and outside the external have. All that things I needed in review engagement also. I need unlimited access to their books, records, and statements. I need additional information whenever I'm looking for. And at the same point of time, I need to make sure that I will get the unlimited access on all the people of the entity. If the practitioner is not satisfied with any of the above matters, they are simply saying that if you think that management is not giving you any of the above conditions to get fulfilled, the boss, it's time that you should resign. And I already told you, you have to check your legal requirements, whether you are allowed to resign or not, or at least give a declaration. If the law does not permit you, then you have to give a declaration, boss, this engagement was not done as per SRE, right? Now, if it discovers that point 1, 2, 3 are not going to be complied after the acceptance of engagement, if you think that now they are saying yes, but after the acceptance of the engagement, they are not going to be cooperative with you, or they will put some unauthorized restrictions on you. So then he shall discuss the matter with TCWG and determine whether the matter can be resolved or not. And he should see, is it appropriate to still continue or not? And if continuing, how to communicate the matter in his report. So these are the things you need to consider if you think that above limitations which they are imposing on you are going to impact your review at the later stage after acceptance. Now, agreeing to the terms of engagement, obviously we have to take care of SA 210. So we have to send a letter confirming our terms and conditions to the management and DCWG, where we'll be saying that send engagement letter defining your terms and condition. If it is going to be a recurring engagement, then consider to send, not to send it unless there is any major changes appears to. If any changes are there in the engagement, then send the letter again. And if they demand any changes in your procedures, which are already limited, inquiry and analytical procedures, then ask them and see, are they looking justified in asking the same or not? If they are not looking justified, it's better to withdraw or get it resolved at least by communicating with the management or TCWG. Now, determining the materiality in the review of financial statement. Remember one thing, materiality concept will be as same as the auditor. Like how the auditor determines his materiality, the same level of materiality you have to do. So there is no change in considering the materiality when it comes to the review engagement. So there is no change in materiality consideration regarding NT of your procedures, evidence collection, irrespective of the level of assurance to be given. Sir, materiality is something which is purely based on professional judgment. Be it an auditor or be it a reviewer, your materiality concentration should remain what? Same. Obtaining the understanding of the entity, we have to do the adequate planning strategy. I have to check the CNC of my team. I have to acquire the knowledge of the client's business, its environment, its internal control system. Next one, designing and performing your procedures. So you already know that my procedures are very limited. What are my procedures? One is inquiry and one is analytical procedures. Now see, in the review engagement, practitioner shall restrict himself to the inquiry and analytical procedure to address all the material items, disclosures and material misstatement. But in case any additional procedures are required because of the presence or because you can sense that there is a higher Romum present. Again repeating, in case you think that there is a higher Romum present and you need to do some additional procedures, then you don't have to keep yourself away from that. Proceed with those additional procedures. But remember, your purpose should be giving the limited assurance only. Don't go too far. Don't treat yourself as an auditor. Now, what is the first procedure? Inquiry. Dekho, remember one thing, inquiry shall always be done from the knowledgeable person of an entity. Right or not? From the knowledgeable person of the entity. Now, what kind of inquiries you need? Inquiries on selection of accounting policies, accounting standards, accounting records, accounting estimates, GC's entities ability to continue as a going concern, internal financial control system. All those areas are nothing but you need to inquire. Like an auditor, but with a limited assurance, right? Now, see, seeking the information from the knowledgeable persons of the entity. Who are those persons who are involved in accounting estimates? Seek the information from them. Related party transaction is one of the gray area where you need to acquire the inquiry. Unusual transactions which are non-recurring in nature, suspected or alleged frauds के केस में inquiry करो. Going concern issues में if you think that ability to continue as a going concern is in danger. Material contracts and commitments, if they have entered, will they be able to complete it on time or not? And the contractual obligations and contingencies. So for them, the respective person should be inquired. Let's say, for example, management is involved for accounting estimates. Do the inquiry from management. Who does the monitoring of related parties? Nothing but called TCWG audit committee. Am I correct? Now, unusual transactions के case में again you have to check that. Then you have to check that going concern के case में भी again you have to talk to the management and TCWG. And contingent liabilities and commitments के case में if you think that something is included in the pending litigations, better to have a communication with the legal experts. But make sure that if you are doing the inquiry should be done from a knowledgeable person's point of view. Is it 100% clear? Yes, sir. Next point. The inquiry which you are doing could be financial inquiry or a non-financial inquiry information as well. So you have to see that what kind of inquiry you are doing. Next one, information can be obtained through minutes. Now, let's say, for example, they are not talking to you. They are not providing the information. Like, do we do that in 501 or not? In case someone is not giving the information about the pending litigations, what do? We obtain the minutes. Am I correct or not? We can, minutes of board meeting, TCWG, audit committee meeting. And information obtained should be accurate, reasonable and consistent. Just because you got the information doesn't mean that your inquiry procedure ends. Information provided to you must look accurate, reliable. Right or not? Next point, analytical procedure. Analytical procedures are nothing but like doing the trend analysis, comparisons. But the very important thing about the analytic procedure is data availability. They should be ready to provide you the data, and not only the data which they are ready to provide should be reliable data. Check its source, comparability. Is it looking reliable or not? Then only analytical procedures can be applied, because you have to do the ratio analysis, you need a data. You need to do trend analysis, you need a data. You need to do structural modeling, you need a data. You need to do reasonable test, you need a data. All these are the 4 techniques of your analytical procedures. So while designing your analytical procedures, check out the availability of information and reliability of information. So what are the 2 things you have to check? Availability of information and reliability of information. It means practitioner must consider the effectiveness of their accounting system and accounting records and internal control system from where you're going to get the data, and make sure that data ka source should be tested, reliability should be tested, and comparability should also be tested. Are you getting the point? And maintain your professional skepticism like an auditor throughout the review period. Are you getting the point? While obtaining the evidences, don't just obtain it blindly. If you think that some doubt is arising, even though you are restricted to inquiry and analytical procedure, but there's no problem if you want to do additional procedures as well. Is it clear, everyone? Yes. Now, note no. एनालिटिकल प्रोसीजर जनरली हेल्प्स इन आइडेंटिफाइंग सी एनालिटिकल प्रोसीजर में सबसे बड़ा एडवांटेज क्या है एनालिटिकल प्रोसीजर में यू विल फाइंड आउट इनकंसिस्टेंसीज फ्लक्चुएशंस डेविएशंस variations, and if they look too significant, then immediately you should change your focus to TOD. If the deviations, inconsistencies, fluctuations are coming within your range, it means what you are expecting, that is only is coming. Then in that case, there is no need to extend your procedure. But if you think that they are coming onto your way and you are getting compromised and you think that higher ROMM is present, then there is no harm in case you want to go for a higher one. Is it clear, everyone? Next one. If it leads to greater MM, then there is no harm in planning the additional procedure, just now I told you. Now, what are the important areas to be covered in review? Remember one thing, whenever you are doing the review, the major gray areas are related parties. So, related parties are to follow 550, as simple as that. Identify the related party transactions, related party relationship, assess the likelihood of ROMM in them, right? Check them, make sure that key transactions are done at arm's length price. They should be looking within the normal course of business. Same thing, committee ka omnibus approval obtained or not. All those things you have to check in the related party. Second thing is non-compliances of laws and regulations. Mein make sure that you should follow 250. Check the cases of non-compliances. How you will check it? Check any adverse comments in the media are coming. They're making unnecessary payments. Indicators you will get to know. Like say for example, making the purchases at reasonable, unreasonable cost. Are you getting the point? And there will be two types of non-compliances. Maybe the non-compliances relating to those laws and regulations which are directly impacting your financial statement. You have to be too much good in that. And if if the non-compliances of such is indirectly impacting the financial statement. But make sure that if the non-compliances are touching the what do you say safety and health of the public at large or touching the NOCLAR provisions, NOCLAR, right? Then in that case, you have to dump your confidentiality requirement and then spit out and directly report it to the regulatory authorities. So that is what is expected from you, 250 plus NOCLAR here, right? Next point, going concern related issue may you have to check. You have to check that whether the entity's ability to continue as a going concern is looking fair and true or not. Then check their future projects, check their future plans, check their cash forecast, check their summary reports of cash inflows, check their cash outflows, check their borrowing capacity, talk to their legal expert. You will automatically come to know that is their going concern is in danger or not, right? To make a compliance of 570. Then using the work performed by others. If you are using the work performed by others, then in that case, make sure that if you are hiring, say for example, if you are hiring an expert should be from the field other than your auditing and accounting. Enter a written agreement with the expert he will maintain the confidentiality. If you are making the use of internal auditors work, then make sure that you should do some adequate procedures before using his work or his direct assistance. All that things which we do in 600 series has to be taken care of. If you're using the work of another auditor, all those things 600, 610 and 620. Additional procedures are only and only required if you'll see that higher presence of ROMM in the financial statement. Otherwise, restrict yourself only to the inquiry plus analytical procedures. If you see any subsequent events, so definitely you have to take care of 560. Subsequent events में problem क्या होती है? Some events you may come across after the balance sheet date but before signing, after the balance sheet date and after signing but before circulation, after signing and after circulation. So you know that how to deal those areas at the rate of 560 you have to comply with. Are you getting the point or not? Check that whether the management is ready to revise their financial statement due to those subsequent events or not. If it is adjusting event, do the adjustment quickly. If it is non-adjusting event, at least adequate disclosure is required. All those things which we follow in 560. So overall, what I'm trying to tell, 520 we are following, 560 we are following, 570 we are following, 580 we are following, 600 series we are following. So almost everything like 210 we are following, 220 we are following, 230 we are following. Most of the things which we do in auditing are very much common in review. Only and only major differences are reasonable assurance, limited assurance, expression of opinion, expression of conclusion, limited assurance, high level of assurance, positively worded opinion, negatively worded conclusion, and extensive use of procedures and very limited use of procedure unless the situation demands. And obviously 580, take the written representation कि भैया preparation and presentation of historical financial statement is the prime responsibility of the management. Adequacy of ICS is also prime responsibility of the management. AFRF is adequate or not, that is also selection and prime responsibility of the management. Am I correct or not? Non-relevant information and access to the people, all that things which are applicable to 580, we have to take it here as well. And obviously you will take the some extra supporting corroborative WRLs also relating to your related party transaction, that they have disclosed everything to me. WRL on disclosures of frauds and suspected frauds to me. WRL on disclosure of actual and suspected non-compliances to me. So basically take the WRL ki whatever you knew as a management, you have disclosed it to me as a reviewer. Going concern assumption is certain and looking good, give a WRL to me. Subsequent events have been disclosed to me, give a WRL to me. Material commitments and contractual obligations you will be able to fulfill in a very apt manner, give WRL to me. Right? Information on non-monetary and non-cash transactions, give WRL to me. Note, if the above requested WRLs are not provided, then discuss it with the management and TCWG to resolve the matter. And you know that reevaluate the integrity of home management, check the reliability of the WRLs obtained earlier, and take the appropriate action accordingly. Try to withdraw from the engagement, but if the withdrawal is not allowed by the laws and regulation, then in that case, you know that you have to give a declaration that this engagement, repeat, this engagement was not done as per laws and regulations, and not this engagement is done as per the laws and regulation but not as per SRE 2400, right or not? When a matter to be considered as a limitation on scope, so let's say for example they're putting the um you know unexpected limitation on scope on you, they are not giving the access to anything. Now when the practitioner is unable to perform his specific procedures, unable to obtain evidences through alternative procedures, then see, try to understand one thing point. See, when a practitioner wants to discontinue the engagement, are you getting the point? Now, let's say for example, they're putting some limitations on you. Try to understand. If they're putting some limitations on you and you are still able to get the evidences, again repeating, if they're putting the limitations on you and you are still able to get the evidences by performing alternative procedures, then in that case, don't consider it as a limitation on your scope. Continue. क्योंकि हो सकता है in one procedure you may not get the evidence, but at least you got the evidence by applying the subsequent or alternate procedures or not. Yes. But in case, say for example, your normal procedures are not giving the evidence, your alternate procedures are also not giving the evidence, they are pushing you, they have made such kind of restriction on your scope that it is pushing you to disclaim an opinion or withdraw from the engagement, then you should consider it as a limitation on your scope. Are you getting the one? This is what the meaning of these 2 points. Now, forming a practitioner conclusion on financial statement. Main consideration whenever you are making your conclusion is 7 areas, always remember. How many? 7. Accounting records are proper. Accounting estimates are proper. Accounting um system is appropriate, accounting standards are appropriate, accounting policies are appropriate, going concern is looking appropriate, internal financial control system is looking appropriate, and laws and regulations are fully complied with. These are the various things you have to consider while forming as a conclusion as a practitioner. Always remember. Only and only difference is that you are not an auditor. Little bit limited assurance, lower than auditing, but the procedure 100% will remain same. Are you getting the point? Except you are not going to do too much extensive as compared to our audit. Your procedures are limited to inquiry and analytical procedure. Now, Let's understand that I want to give an unmodified opinion. I want to give a which opinion? Unmodified opinion. So this is the wording you have to choose. Based on our, I told you, no, wording is always in a negative worded. Now, based on our review, nothing has come to our attention that shows that the financial statement do not give any true and fair view. So what does that mean? We are actually saying positive only, but in a negative worded. Based on our review, nothing has come to our attention that shows that they do not represent fairly as per AFRF. It means we didn't come across anything which is telling us that financial statements are looking unfair and untrue. It means everything is true and fair. Suppose I want to give a modified opinion. I want to give a modified opinion. Let's say, for example, I want to give a qualified opinion or adverse opinion. The qualified opinion में आप क्या लिखोगे? Suppose sometimes you give the qualified opinion on the basis of evidence. Sometimes you give the qualified opinion when you do not have an evidence. So what are the phrases to be used? Let's say, for example, I have an evidence. Based on our review, except, again repeating, based on our review, except for the effect of matters which are specified in the basis paragraph of qualified opinion, nothing has come to our attention which says that financial statement is looking untrue and unfair. Same like that. And if in case you are giving the adverse opinion, what your phrases are going to be? Based on our review, due to the significance of the matters which are disclosed in the basis of yes, adverse situation may your language should not be negatively worded because it itself is a negative opinion. Are you getting the point? So based on our review, due to the significance of matters which are described in basis for adverse conclusion para, financial statements do not give true and fair view or do not present fairly as per its AFRF. And in case you want to give a disclaimer opinion, which opinion? Disclaimer opinion. तो आप क्या लिखोगे? When do you give the disclaimer opinion? Either too much limitations on your scope, you are not allowed to have an access to some things, and maybe say for example you are not allowed to withdraw the engagement. These could be the reason that you would like to give a disclaimer opinion. So in case you want to give a disclaimer in qualified manner, suppose कि things are material but not pervasive, so you will write based on our review except for the possible effects. Now, why we are using the possible effects? Because disclaimer means you don't have an evidence, so you can't be certain that there is an MM. Except for the possible effects of matters described in the basis for qualified opinion, nothing has come to our attention which says that financial statements are not looking true and fair. And if you really want to give a disclaimer opinion, then based on our review, due to the possible effects of material misstatements which are given in the basis of disclaimer para, we do not express any conclusion due to the non-availability of what? Sufficient and appropriate audit evidences. Only in the adverse conclusion you saw that we simply said very directly. Whereas if you are giving modified, if you are giving both the qualifieds with evidence, without evidence or disclaimer, you are always going to use the negatively worded. Are you getting the which worded? Negatively worded. Are you getting the one? Now let's understand the content of the practitioner's report. First one is title. Independent Practitioner's Report on Review Engagement. This is going to be your title. Again, I'm telling you, read all the contents of the report from the icai material. Addressee, introductory paragraph, we have not audited, we have reviewed. Identify that it was a review engagement. And name the financial statement covered. Did you do the review of the full set of financial statement or a single financial statement? What is the management responsibility? Preparation and presentation of historical financial statement is management responsibility. AFRF is acceptable or not, that is also checking, and adequacy is management responsibility. Internal control system is whose responsibility? Management responsibility. If the financial statements are for SPF, then identify that these are special purpose financial statement, and identify that FRF used by the management is looking adequate, and also include one paragraph if you think that these specially purpose financial statements are not going to be used by everyone. If you think that you want to restrict it and alert the readers, you can use the paragraph restriction on distribution and its use. Practitioner responsibility para, my responsibility is only to give a limited assurance. It was neither an audit nor a related services, and I have done the engagement in accordance with SRE 2400, right? Next one, description of review engagement and its limitation. It was a limited assurance engagement. Procedures were only limited to inquiry and analytical procedure. S is complied but not what? substantially. Fully to nahi, because we have to give the less assurance. And finally, the very important paragraph called my conclusion para. Which para? Conclusion para. Right or not? And conclusion mein either you are going to give a unmodified, modified, or modified ke andar qualified, adverse or disclaimer. And reasons for that, obviously, in the normal company ke case mein, after opinion paragraph, what do we give? Basis, na? So here after conclusion paragraph, basis for conclusion para. Do we write that except for the significance of those matters specified? Same thing. We have to give the basis for conclusion and reference that engagement was as per SRE and I have followed my ethical requirements, followed by date and shall not be earlier than evidence is obtained. Obviously, your review report shall be obviously once the evidences has been given to you, then only you sign your review report, na? So review report ka date shall not be earlier than the evidence is obtained, place and signature. And obviously, in case you want, like in auditing, we want to give additional understanding to the users, we can use the EMP and OMP paragraph. I want to give any other expressions of opinion as per 143 subsection 3, like say for example, books of accounts are looking adequate, financial statements are in agreement with books of accounts, pending litigation, all those things, we can also include the OLR paragraph if it is required. And documentation should be as per SAE 3402. Same procedures what you have followed, everything is required to document it and to be preserved for at least 7 years as per your SQC1. Now, what are the additional documentations you can have as per 2400 is, in case of 2400, in case you want to know that whether your documentations are good or not, your procedures were adequate or not, you can get it reviewed by the EQCR, Engagement Quality Control Reviewer. Are you getting the point? And what are the significant discussions you held with the management? Uska additional documentation kar lo. Additional documentation may who perform the work on which date it can be what? Completed. Like if you have made the use of the work of anybody else and how inconsistencies between his findings and the evidences were addressed by the management. These are the additional documentations which you need to maintain other than 230. So that brings an end to your concept of SRE 2400. And now we are left with SRE 2410. Let's do it, right? Okay, everyone. So let's understand the second SRE, that is called SRE 2410. That is nothing but called review of interim financial information performed by the independent auditor of the entity. The very first name itself suggests that, boss, the review of your interim financial information can only and only be done by the independent auditor of the same entity. It means here the reviewer and the auditor has to be the same person. Look at the name again. Review of interim financial information provided by the independent auditor of the entity. Which auditor? Independent auditor of the entity. Is it clear now? So this standard deals with the auditor's responsibility to undertake interim financial information of a client for whom he is already appointed as an auditor. So 2410 covers this word, engagement. So first of all, so you understood the difference or not? So there it was HFI, here it is IFI, right? There the reviewer and auditor can't be the same person. Here the auditor and reviewer has to be the same person. Are you getting the point? Now let's understand what do you mean by interim financial information. I already told you interim financial informations are those informations like, say for example, yeah, interim financial informations are those financial informations which are nothing but the either quarterly or semi-annually based. Now see, such financial information which is prepared and presented as per AFRF, which either includes the complete set of financial statement or condensed form of financial statement for a period shorter than what? Financial year. Are you getting the point? Exactly. Example could be quarterly or semi-annual IFI. Now objective. Objective is to draw the conclusion on IFI whether it is prepared in accordance with the AFRF or not. So basically, what is the advantage? Let me tell you the advantage which you will get in this particular standard. Advantage number one, you will get the early access to the information which you were supposed to get at the year end. You will get the early access to the information. Advantage number one. See, as an auditor, when do you get the access of HFI? Only once the financial year is over. But here, though, you are going there for interim period. So you will get the access of the information as soon as possible, as early as possible or not. Advantage number one. Advantage number two, while doing the review, if you come across that ki ROMAM is getting higher or there are some areas where you need to do your auditing procedures other than inquiry and analytical procedures. Now see, here also your review procedures are limited to inquiry and analytical procedure. But in case you feel that ki inquiry and analytical procedures are not enough in that situation, so yes, you are allowed to perform your auditing procedures along with your review procedures. It is nothing but going to help you in early detection and prevention of frauds and errors. This is the advantage ki why the auditor and the reviewer in case of IFI is same. And anyways, it's not that you have a choice. You don't have a choice. It has to be done by your independent auditor of the entity only. Outsider to allowed ही नहीं है. Right? Now see, to draw the conclusion on IFI whether it is prepared in accordance with AFRF or not, that is objective number one. Objective number two, to carry out again what? Inquiries, analytical procedures and other review procedures. That's what I just now told you. In case the need arises, you may proceed with the others as well. Now what is other? Auditing procedures. Now to draw a limited assurance, boss, either it is being done by your auditor, but again, he is not going to express any reasonable assurance. He is only going to give a limited assurance on IFI and the compliance of SS, but not what? Substantially. Is it clear? Now, in case the need arises, carrying out additional procedures to obtain SAAE is also allowed. Now, note, reviewer of IFI and auditor of AFI are same. What is AFI? Audited financial information and interim financial information or analyzed financial information. Agreeing to the engagement term, obviously, we have to send them a letter of 210 where I have to tell my nature of the engagement, what is my objective and scope of the engagement, what is the management responsibility. My very simple question to you all, why do we need to mention the management's responsibility in my engagement letter? What is the reason? Anybody in the class? See, try to understand one thing. I know that ki management knows their responsibility, but I need a written में confirmation that ki they know their responsibility. So always remember in audit engagement letter, you write management responsibility. After that, you write your auditor's responsibility. It means management will give me the full access. They will take the full responsibility of preparation and presentation, AFRF. All that is also required to be mentioned in your review engagement letter. Assurances to be obtained. What are the assurances? Limited assurances to be obtained. That also you need to mention. And nature and form of your report. Obviously, you're not here working as an auditor right now. You're working as a reviewer, even though both the people are same. Now, understanding the entity and its environment, obviously it will be helpful for you while doing the audit as well. So even though he's an auditor of the AFI, having an experience of the past auditors, but he still needs to obtain sufficient understanding of the environment and its ICAs. They are saying that formality wise, still you should obtain the information on the entity, even though you were the past auditor of the same entity. Because controls relating to AFI and controls relating to IFI are what? Different. What they are saying, controls relating to AFI and controls relating to IFI are different. Moreover, MM's identification, assessment and likelihood of occurrence in review of IFI is going to be different from audit of what? AFI. See, understand one thing. IFI is basically going to give you the better picture because it is like, carrying out a surprise check on the entity. So there may be a possibility that those MMs which were carried out in a very planned manner because they know that auditor is going to come at the year end, at least we can put a full stop to those MMs. So that's why they are saying that even though it is a review engagement, replica of your auditing, but make sure that you should have some additional knowledge to be gathered. Procedures are also limited, that is inquiry, analytical procedures and other review procedures. Sources from where the better understanding can be obtained is last year's audit documentation if you have, your last year's, earlier year's IFI results of the same year or results of the IFI corresponding to the which year? Previous year. Are you getting the point or not? Like quarter 1, quarter 2 results you have, you can do the quarter 3 very well by comparing the current year IFI with the other IFIs of the another quarters, or the same year ka same IFI quarter of this year to be compared with the IFI quarter of the previous year, or you can have your own last year documentation. These are the best sources from where you can obtain a better understanding about what IFI. Is it clear? Next one, knowledge of significant risk relating to FFR, fraudulent financial reporting, in the previous year audit. So if you have come across any FFRs or MOAs in the previous year, that will also help you in doing the IFI audit very properly. The most recent annual reports will give you the better information about what IFI. Considering the materiality of IFI, I already told you, be it review or be it auditing, your materiality means there won't be any change. Nature of corrected and uncorrected material misstatements of previous year. So obviously, if you think that key material misstatements of the previous year are not yet resolved, and they will definitely have an impact on the current year, so it will also be a better source by which you can obtain the understanding of the entity very well. Consideration of material weaknesses in ICAs from the letter of weaknesses. So last year ka letter of weakness is either it is given by you or by another statutory auditor or by the internal auditor. You will get to know what the SWOT of the entity, in which controls the entity is weaker and where are the threats posed. Next point, audit procedures performed which year? Last year will help you. Results of the internal audit team if they have already done the audit of that particular quarter. Effects of changes in the business activities. If your client has undergone through a changes in its line of activity, that also is one of the biggest source from where you will get to know about the IFI. Any significant changes they have made in their internal control system as compared to last year, and inquiries made from the management. So these are the various set of sources by which you can obtain the better understanding of their IFI. Note, it becomes highly important for recently appointed auditor who has not yet done the audit of financial statement. Obviously, if last year you were not the auditor, so obviously your workload on becoming an IFI for this year is definitely going to be higher. Are you getting the point? There's no choice. Are you getting the point? Because last year somebody else was the auditor, so you cannot appoint the last year ka auditor as a current year ka reviewer. Because reviewer and auditor has to be the same person. So if your auditor has changed, definitely your reviewer is also going to be changed, especially for the IFI. So make sure that if you're a current year IFI, do not have any experience for the last year, so it becomes highly important for you to gather this knowledge. It will become highly important for you to gather this particular knowledge. Clear? Next point. Inquiries, analytical procedure and review procedures, same as what we have done in the full FI. Inquiries, generally inquiries are to be made for the people who are connected with the financial and accounting department, and following are the list of procedures to be performed. Obtain the minutes of the board and TCWG meeting held during the interim period. Maybe some major decisions might have been taken on the quarterly base, so better you to take the minutes of the board meetings or audit committee meetings which have taken place. Next, consider the impact of uncorrected MMs of the last year. If the last year ke material misstatements are still present in the current year, at least you will get to know as early as possible ki whether those material misstatements are present or not. Communicate with the other auditors of the component during the same review. Inquiries from the financial and accounting department, and check whether the IFI, like from these departmental, what inquiries you will make, whether the IFI is as per AFRF or not. Are there any changes in the accounting policies? So who will provide you this information? The knowledgeable people of financial as well as accounting department. Whether any new material transactions have been occurred or not, and are there any unusual or complex situations like mergers or acquisitions have occurred. Now these are the various sources by which you can acquire the better knowledge on the IFI. So this is what do you mean by inquiry procedures you have to do when you have been appointed as an auditor for IFI. Any significant management accounting estimates made in the recent past, any significant related party transactions have occurred, any major contracts and commitments have taken place, any major developments happened in the contingent liabilities. See, all that have happened in the subsequent events are going to be the part of your IFI, because IFI is relating to quarter 1, quarter 2, quarter 3, quarter 4 of the current year, and HFIs are audited only up to the previous year. So say for example 31/3 2024 का audit is over, right or not? You are, say for example, sitting in the December month. So December month में 3 quarters of 24-25 financial year is happening. So from this date to this 3 quarters, whatever the significant events or subsequent events have taken place, they are nothing but posing a good knowledge to you relating to IFI. Is it clear to all of you? Now, Major developments in your contingent liabilities, significant things occurred in the past few days, any major financial shocks or major financial frauds have taken place, any knowledge of fraud or suspected frauds, any MOAs or FFRs you have seen in the recent past, any cases of actual or suspected non-compliances. And remember one thing, whatever you are asking this from the accounting and financial department, don't forget to take WRL on the same. Let them say they have seen, not seen, take WRL on the spot, and any unusual material inconsistencies or deviations found. In case any major incident has happened before the auditor comes for review, he is allowed to have an early access on such information. Advantage number one, which I already told you at the beginning, that the good advantage of this particular assignment is what? You will have an early access over the information. You need not wait. And as an auditor, it will give you the better picture as soon as possible rather than waiting at the accounting year to get ended. Right. Second thing, I already told you, while doing the review, if you will come across that there is some high chances of ROMM and you would like to do more additional procedures, audit procedures, so yes, with the knowledge of TCWG and having a conversation with the management first, you can apply your audit procedures there itself along with your review procedures. Now see this. If any event is too much important for the audit of financial statement purpose and comes to the knowledge while doing review, it is allowed to do audit procedures on the same along with your what? Review procedures. This is what the advantage I was telling about, कि you will gain it. Second thing, for every small incidents, no need to take confirmation from what? Legal experts unless it is material in nature. देखो, small things will take place until unless you don't come across any major inconsistency or major deviation or major development in the contingent liabilities. There is no requirement of taking any information or confirmation from the legal expert. In case the need arises and significant doubt is arising on entity's continuity as a which concern, going concern, the better you have a word with the management and TCWG about that. Check their future plans, check their risk management policy, check their forecasted cash flows, everything which we generally take care in 570. That is what you have to do. Next point, in case feasibility of their future action plan is looking sound, then let the audit engagement take care of it. Are you getting the point? So in case their future feasibility of their plans are looking very sound, let the audit engagement take care of it, because right now so you are in the review engagement now. See, ultimately so you have to express a reasonable assurance being an auditor, not being a what? Reviewer. So if you think that everything is looking good, IFIs are looking good, then don't do any extraordinary things. I'm again telling you, restrict yourself only to the inquiry and analytical position, except in a very significant circumstances where the need arises. Clear? Next point. Evaluation of misstatements. If you come across any misstatement, you have to check compliance of SA 450. What do you mean by 450? Evaluation of material misstatements and its what? Sources. So simply make sure that whatever the 11 steps you have been told under SA 450, same 11 steps you have to follow. You have to see and accumulate all the MMs, go to the management, check any revision is required. Each and every step which has been told to in 450, everything is required to be used here as it is. So let me tell you one thing, SA 450, you will find it in the general auditing principles and audit responsibilities chapter mein, right. Next point, management representations. I already told you, whatever you are asking from the accounting and finance department people, be it on contingent liabilities, be it on suspected non-compliances and actual non-compliances, be it on frauds and suspected frauds, on every area, RPTs, RPRs, going concern, on every area, take what? WRL. Now see, WRL, they have disclosed everything to us. Designing and implementation of ICS is a management responsibility. Preparation and presentation of IFI as per AFRF is management responsibility. On immateriality of the uncorrected MMs, if they think that some of the MMs they are not correcting because according to their opinion it looks immaterial, take WRL from them. Disclosures on related party relationships and related party transactions, disclosures on frauds and suspected frauds, right? Disclosures on actual non-compliances and suspected non-compliances, right? Disclosure on significant ROMMs, disclosure on all significant subsequent events, disclosure on material inconsistencies in the GC assumption. Do not leave any stone unturned. take as many WRLs you want. And yes, they have to give you all the WRLs according to your requirement. You don't have to feel shy while asking for the WRLs. As many you want, you can get it, because that is full-fledged responsibility of home management. Is it clear? Next thing, auditor's responsibility relating to other information. If you'll find out that there is a material inconsistency between the FI and OI, then you definitely have to do the compliance of SS 720. But if the other information is inconsistent materially and comes to the auditor's attention as some impact on IFI, then request the management to get it rectified with the third party. And if they do not respond appropriately, seek the what? Legal advice. That we have already understood. In case after signing the review report you get it, right? Then communication of material inconsistencies relating to review of IFI. Now, in case you found any material inconsistencies, major deviations, major fluctuations while doing the review of IFI, it's better to communicate it with the management as soon as practical. If they do not respond within a reasonable time, then communicate it with the TCWG in writing and orally in case the need arises. But even though you are communicating orally, I will suggest that immediately at the later stage, you should convert your oral communication into the written communication. And looking at the sensitivity, that's what I'm telling you. If it is a case of emergency sensitivity, then you can communicate orally, but later on change it into what? Written communication. If the TCWG is also not responding within the reasonable time, then modify your review report. Possibility about withdrawing from the engagement. And remember, if in the IFI you're finding that management is not responding, TCWG is not responding, in your reviewing engagement only they are showing the true colors. So I will suggest that you should also look for an opportunity to withdraw from your auditing engagement also. क्यों? क्योंकि in the review engagement only they are showing these colors, so definitely they will show their colors while doing the auditing engagement. So it's better that you should also look for the possibility of resigning from your audit of financial statements as well, and ensure that TCWG must observe the responsibility of checking or overseeing the IFI. Because remember one thing, preparation and presentation is the responsibility of the management, but overseeing is the responsibility of TCWG. Without getting oversaw by them or overseen by them, this is not going to be given to the auditor. Now, what are your contents of report? Title, addressee, an introductory paragraph that identifying that we have done the review of IFI. Next one, management responsibility para. Next one, identify the name of IFIs you have covered. Did you cover the complete set of IFIs or only single set of IFIs, single financial statement like balance sheet or P&L alone? Auditor's responsibility para, basically practitioners, reviewers responsibility para for expressing not opinion, expressing conclusion. Next one, declaring that compliance of SRE 2410 along with the ethical requirements. Next one, limitation on scope, limited assurance and use of SS but not substantially. These three declarations also you have to give. Then drawing the conclusion if it is a general purpose financial framework, financial IFIs, and drawing the conclusion if it is a special purpose financial framework IFIs, right? Date, place, signature with membership number, and definitely your form registration number and UDIN. Remember, even though it was not written in 2400, but ICI has made it mandatory whether you are doing the assignment under 2400 or you are doing the assignment under 2410. In both the cases, your FRN number and UDIN especially have to be mentioned, even though it was a review engagement. Is it clear to all of you? Yes. Now, what are the additional considerations? In the first, if there is departure from the AFRF while preparing the IFI, then management does not correct the IFI. So you saw that there is a huge departure from their AFRF, but the management is not ready to rectify it. Modify your review report. One thing, when the departure is material but not pervasive, auditor added explanatory paragraph, then qualify the report. Obviously, when the things are material but not pervasive, we never give adverse or disclaimer. We simply would like to qualify our conclusion. Next one, but if the departure is material and pervasive, leading to the misleading IFIs, then and if you have an evidence, then give the adverse. If you don't have an evidence, then give the disclaimer. Limitation. If there is a limitation on the scope by management after accepting the engagement, management refuses to lift that limitation, communicate with the TCWG. If they also not respond properly, then modify your review report. Obviously, now this is a clear-cut case of what? Disclaimer. And if the withdrawal from the engagement is not possible due to the prohibition done by the law and regulation, then definitely you have to give a declaration that this engagement is not proceeded with or conducted as per SRE 2410. If it is a limitation on the scope due to other reasons, that looking at materiality and pervasiveness of the issue, act accordingly and make disclosure that it is conducted as per SRE. Now, what is the difference between this and this? See, if you are thinking of possibly withdrawing because you saw that limitations were with respect to your disengagement, then in that case, so definitely you have to give this engagement was not performed as per SRE. But when the withdrawal was not prohibited by law and regulation and you wanted to withdraw and withdrawal is allowed, then to in that case you cannot say na ki this engagement is not performed as per SRE. You can write that this engagement was performed as per SRE. And anyways, when you will withdraw it, there is no requirement of sending a report by you, right? They are saying that when to use this line, you have to be very careful. Only if the law prohibits you to get disengaged, then only this line is required to be appearing in your report. 100% clarity, yes. And if the limitation is from the past year audit and still unresolved, then also modify the review report. That we have already understood in 710. Last year reports were modified and the such modifications were not resolved and they are still present in current year. In such cases, you have to modify your opinion. And if there is a material uncertainty in relating to GC assumption, but management has corrected it, now carried forward from the previous year audit, but if still uncorrected, then modify your what? Report. They are saying that if the modifications relating to GC assumption, which assumption? GC assumption, are carried forward in the current year and they are still unresolved, you have the every right to modify your review report, but came across during the review of IFI and the management made adequate disclosures. Remember one thing. Whenever the GC assumption comes, it is purely the responsibility of whom? Management to take care of the GC assumption related. If the management has made the adequate disclosures, then simply don't modify your review report. Simply give a EMP paragraph to draw the attention of the users. But if the management did not make any disclosures and they do not agree with you, yes, there is an inability on the entities to continue as a going concern. So, boss, that is a clear-cut disagreement between you and the management, then in that case also you can modify it. So what under two circumstances you can modify it relating to GC assumption? If the GC assumptions were unresolved in the last year and they are still unresolved in current year, obviously the problems which were in the last year ka closing balances are appearing in the current year ka opening balances, then so definitely you have to do what? Modification. And the next one is what? If the GC was relating to current year only, but management has not ready to agree with you and they're not ready to make any disclosures, then modify your report accordingly. Is it clear to all of you? 100% clarity. Next point is what? If IFI is going to be published in a document, but auditor's review report is not included. Now, let's say, for example, you did the audit of IFI, you did the, review of IFI. And they are publishing the IFI, but they're not publishing your review report. Then tell the management to rectify it and publish your review report also. Now read this point. If the IFI is going to be published, but the auditor's review report is not included, request the management to include it. If the management refuses to do so, then take a legal advice for the same. And if the management not including the review report in a document because it is modified in nature, then to consider to take the legal advice and take the appropriate action also. Maybe you have modified your review report, but they don't want to add this modified review report into their document of public offer document. Then in that case, better you take a legal advice and take an appropriate action. This is basically again the concept of SA 560, where we see that legal action means what? Give a public notice declaring that don't rely on this review examination. This is completely not made as per our perspective, right? And documentation as per same as per SA 34 202. So that brings an end to your another concept of SREs, everyone. 100%, right? So see you guys for the next chapter, right? Okay, everyone. So now let us start with the new series that is called Specialized Areas, that is SA 800 series. See, up to so far, you have done 200 series. Are you getting the point? You have done the 200 series to 700 series, right or not? Where the 200 series gives you the basic concepts, then 300 series makes you understand the conceptual framework, and then 400 series में 450 evaluation of material misstatement. In the 500 series, everything is about audit evidence, right? In the 600 series, using the work of others, and 700 series, which we have already done, was relating to expression of opinion. Now let's understand the 800 series, everyone. Understand why do we call it as a specialized area? Now remember one thing. In this, there are three standards: 800, 805, and 810. So total three standards are there. 800 talks about if you are going to do the audit of special purpose financial statements. You are going to do the audit of what? Special purpose financial statement. It means the financial statement which you are going to do the audit for has been made as per special purpose framework. That is 800. Then 805 mein, you are going to do the audit of single financial statement. You're going to do the audit of single financial statement. Single financial statement means it could be a single balance sheet, it could be a single P&L, it could be a single account, it could be a single single element of the financial statement. It could be only receivables audit. Like we used to have one topic called audit of different items of financial statement, that one. So it could be a single cash flow statement, single balance sheet, single account, single element of the balance sheet. So that is SA 805. 810 is going to talk about the audit of summary financial statements. Now you will see I used three places per SFS. Single financial statement. Maybe I use SFS 805, right? Summary financial statements, maybe SFS 810, right? And special purpose financial statement, maybe SFS, that is 800. But you have to be very careful. Don't use these abbreviations in the examinations. Otherwise, you will pay heavy price for the same, right? In the 800, use doing the audit of special purpose financial statements. In the 805, you are doing the single financial statements, right or not? And 810, you are doing the audit of summary financial statement. So let's start with the 800 first. So what is the 800? Special consideration, that is the auditor. Now you might have realized why the name of the standard is known as what? Specialized areas, right or not? Here also we'll try to do some questions to make you understand how the questions can be drafted from specialized areas. So special consideration audit of financial statement in accordance with special purpose framework. It means you are going to do an audit of financial statement which are made as per special purpose framework. So first of all, we need to understand what do you mean by general purpose framework and what do you mean by special purpose framework. See, general purpose framework financial statements are those financial statements which are prepared for the covering the large intended users of the financial statement, which can be easily used by anyone. Whereas the special purpose financial framework statements are those financial statements which are only and only used for the specific purpose. What do you mean by specific purpose? Specific purpose means what? It could be used for the specific purpose of a particular investor. It can be used for the specific purpose of an intended user. It can be used for the specific purpose of a particular on the request of a particular authority. So there the intended user is very limited. The person who is going to make the use of special purpose financial statement, the audited financial statements, his user is going to be very much limited. That is what the difference between general purpose framework financial statements and special purpose financial statement. Now see, general purpose, it is as per the requirement of the law in India. Like say for example, if you are preparing the Schedule 3 financial statements, that is also general purpose. If you are preparing the Schedule 3 financial statements as per Banking Regulation Act, that is also general purpose. If you are preparing the 3CA and 3CB, the tax audit report, that is also as per the general purpose framework only. Are you hitting the point or not? So remember one thing, any law and regulation which is accepted in India, be it the Schedule 3 of Banking Regulation Act, be it the Schedule 3 of Companies Act, or be it under the Income Tax Act. All these are known as general purpose financial statement because they are easily acceptable and easily used and recognized by number of users at large. Whereas the special purpose financial statement is something where the financial statements have been prepared as per the request of an intended particular single user only. So format of special purpose financial statement is as per the request of an investor, or as per the request of a creditor, or as per the request of a certain specific requirement. Example, a foreign investor who has a large stake in Indian operation of the company would like to have financial statement as per his requirement. So special purpose financial statements are going to be used by the very limited user. Now, it is designed to meet the financial requirements of a specific user who could be based on requirements of a contract or a loan agreement. Say, for example, a particular lending institution is putting a restriction on you, boss, we don't need your financial statement in the normal format which you are providing to everyone. We want your financial statement to be in this manner. So that is called special purpose financial statement, right? Now, what is the effective date? Actually, the whole effective date of this particular series is 1st April 2011. Be it 800, be it 805, and be it 810. The date of coming into existence is 1st April 2011. It means during our time, during my time when I was getting graduated from icai, when I was getting qualified from CA course, that point of time, it was a very brand new series. It came at that point of time, and immediately after 2 to 3 years, like in 2013 and 14, it was eliminated from the portion of the final. Right or not? Again, it has been reintroduced because you should know that key why this is known as a specialized area. Now, in every standard, let it be 800, let it be 805, let it be 810, you will always face these three concerns. Concern number one, acceptance of the audit engagement. First of all, so you have to check कि are you competent and capable enough to do this specialized audit or not, because this is not a normal audit. Understand my point. This is not a normal audit. This is going to be the audit of a single financial statement. This is going to be the audit of a summarized financial statement. This is going to be the audit of special purpose made financial statement. So this is not a normal audit. This is a specialized audit. So first of all, though, you have to check your competency and capability. Ki will you be able to accept this audit engagement or not? Second major area is how you are going to plan and how you're going to perform your engagement. Let me tell you one thing. In all the three standards, these are the major three concerns you will find. Third concern number, how to form an opinion on these financial statement, but not on the effectiveness of entities internal control system. Whenever you are giving the report on, be it a summarized, be it a specific, be it a special one, be it about single financial statement, you have to give a declaration that I'm here to express an opinion on financial statement, not on the internal control system effectiveness, because expressing the opinion on internal control system effectiveness is a work of internal auditor. You are not the internal auditor, you are a statutory auditor for 800 में for a special purpose financial statement, 805 में for the single financial statement, and 810 में for the, what do you say, summary financial statement. So let's understand what are the things you need to understand while doing this particular standard. So in the 800, what are the considerations you need to keep it in mind while accepting such engagement? Point number one, first of all, auditor shall first know, directly go to the management and know ki why do you need this special purpose financial statement, who is going to be the user of this special purpose financial statement, what is the nature of the entity, and for what purpose he is going to use this special purpose financial statement. The moment you will understand this, then you will get a direction to move forward. Obviously, you need to know who is the user, what is the purpose, and for to what extent he is going to make a use of it. Once you will get the clarity on that, you will be able to proceed doing the audit of a special purpose financial statement. Now see, auditor shall first know the purpose for which SPF are required to be prepared, who is the intended user, steps taken by the management to determine whether the AFRF they are following is acceptable or not. So obviously, if it could have been the general purpose financial statement, I could have gone easy. Reason being very simple, because it is universally accepted framework. Be it a Reliance or be it a Infosys, everyone will use a general purpose. But when it comes to the special purpose financial framework, we have to check that whether that special purpose financial reporting framework is looking adequate or not, is looking acceptable or not, and is the management is capable enough to prepare the and present the financial statement as per the special purpose framework or not. Are you getting the point? First thing. Second thing, as per SA 210, obviously we have to send the audit engagement letter. But in the audit engagement letter, you have to send some specific points. What they are saying, it is the duty of the auditor to determine any conflict exists between the financial reporting standards and additional requirements. तो आपको देखना पड़ेगा कि what you are supposed to do as a general purpose framework financial statement auditor and what you are going to do as per the additional communications which are required to be made, additional requirements which are required to be made as per the special purpose financial statement. You have to say, is there any conflict between generally accepted and special purpose based financial statement or not? And yes, if there is any conflict, then required actions to be taken by the auditor by informing the responsible party who are responsible for preparation of SPFs. So remember one thing, if you think that what you actually do and what they are telling you to do additionally in case of special purpose framework, so better you bring it to the notice of the management ki boss, I am getting a conflict, what is acceptable financial reporting process and what is your additional requirement when there is a conflict coming, and I would like to bring it to your notice. There shall be clear and correct understanding of the terms and condition between the auditor of SPF and the responsible party to avoid the future misunderstanding. Definitely, until and unless that confusion is not getting resolved, don't say yes to that engagement. First, resolve the confusion ki why generally financial reporting standards and the additional requirements what they are requesting you, why there is a difference coming. Because we do not want any future misunderstandings between the auditor of special purpose financial statement and the management, that is a responsible party. Next point, let's say for example, suppose the particular person is saying that I want bad debts not to be deducted from the debtors. Suppose the requirement of the intended user is what? Okay, I don't want the bad debts to be deducted from the debtors. Generally, what do we do in the bad debts? Do we create a provision and deduct that provision for the bad trade receivables or not? Yes. But he's saying that no, I want the gross debtor. I don't want the net debtors, right or not? Then in that case, bring it to the notice of the management. Ki bhai, generally, to we deduct the provision and the bad debts from the debtors, but this particular person is saying that he does not want it to be deducted. Then in that case, try to resolve the issue first with the management, except because we don't want any future misunderstanding to come between you and the management. Let's say for example, he is saying that our management accounting estimates will be made by the management looking at their own assumptions only, right or not? Or let's say for example, they are saying that while calculating the net worth, while calculating the net worth, we are not going to deduct any miscellaneous expenditures not written off. We are not going to deduct any impairment loss and all those things, but generally we do it. So remember one thing, generally accepted financial reporting standards and additional requirements where conflict is coming, get it resolved immediately with that management so that future misunderstanding should not come. Next thing, consideration when planning and performing such audit. Suppose even if you are doing the 800 series ka specialized audit, your ethical requirements as per 200 will remain same. But in case you are going for any departure from the ethical requirement, that also you have to put it in writing with the justified reasons ki why you are departing from a particular requirement of ethics, why you are departing from a particular requirement of code of ethics. So generally, here auditor shall comply with all the ethical requirements, especially with respect to independence. He shall also comply with all the other essays which are relevant to the audit. But in case of exceptional circumstances, if the auditor does any departure from a particular relevant ethical requirement by performing alternative audit procedures, he must disclose the same with the reasons in writing. Say for example, I'm not using the SA 505. What SA 505 is saying, I'm going like in a different alternate procedure instead of following the SA 505. So now you are doing the departure from the various acceptable standards. So you should record your reasons in writing and it should be in a justified manner. Ki what made you do so? Ki you simply have to justify ki why your departure or why your alternate procedure is far more justified as compared to SA 505. So simple one thing. Okay, this is a specialized area. You may have to go for a different type of approach, but make sure that you should be ready with the reasons in writing. Ki why did you go for a different approach? As simple as that. Right? Next point. Now, as per SA 320, remember one thing, materiality mein you have to not compromise. if there is a problem coming between what is the requirement of the intended user and what is the materiality as per your professional judgment, keep your professional judgment materiality over the requirement. In this case, you have to do as per your professional judgment only. You don't have to give any importance to the requirement placed by the intended user or the responsible party. So simply say one thing, ki boss, let's say for example, let me give a very simple example. Suppose that person is saying that ki I'm disinterested in any kind of material misstatement which is less than 50 lakhs. He's saying I'm disinterested in any kind of material misstatement which is less than 50 lakhs. But your professional judgment says that there are so many material misstatements have happened which are less than 50 lakhs and aggregately the impact is too much material. So your professional judgment says that yes, even though the material misstatements are less than what 50 lakhs, you would like to tell it to the particular intended user and responsible party, then go ahead. Give importance to your professional judgment, especially in case of materiality, over what is asked by the intended user or responsible party. Here, no compromise you have to do. You have to give the importance to your professional judgment. That is what is written. But if sometimes the auditor determines his materiality the basis of his professional judgment and comes to the conclusion that the benchmarks of materiality misstatement agreed between the auditee and the intended user is not appropriate, then he may proceed as per his word professional judgment. So if you think that okay, what are their special requirements and your professional judgment are intersecting with each other, then give more importance to your professional judgment rather than giving the importance to their requirement, right? Next point. As per SA 315, you always have to identify, assess the ROMM by understanding the entity, its environment, and its internal control system. Same rule applies, especially when for the purpose of SPF. But remember one thing, major concentration in case of special purpose financial statement as per SA 315 should be on selection of accounting policies. There may be a case that for the general purpose framework, they might be using the different accounting policies, but for the special purpose framework, they are using the different accounting policies. Better you concentrate on this area and ask them what is the reason they have changed the accounting policies. Next one, as per SA 260 revise. What is 260 revise? Communicating with the TCWG. बहुत सिंपल सी बात है. It requires auditor to determine appropriate person within the entity's governance structure with whom he has to communicate. So remember, when you are doing the audit of special purpose financial statements which are prepared as per the special purpose framework, you have to make sure that you have to identify the right person to whom you can communicate in case any need arises, like what we do in SA 260. In case the preparers of SPF are different from GPF, then this need will arise. Because remember one thing, suppose जनरल पर्पस फाइनेंशियल रिपोर्टिंग फ्रेमवर्क में ऑडिट कमेटी इज टेकिंग द फुल रिस्पॉन्सिबिलिटी सेइंग दैट कि वी आल्सो टेक फुल अकाउंटेबिलिटी एंड रिस्पॉन्सिबिलिटी फॉर द फाइनेंशियल स्टेटमेंट व्हिच इज प्रिपेयर्ड एज पर जनरल पर्पस फाइनेंशियल रिपोर्टिंग फ्रेमवर्क. But they are saying that we are not responsible for the special purpose financial statements. We are not going to oversee the financial statement which is prepared by the board. So don't come to us if anything is there. Then in that case, whom to contact then? So this problem arises when the general purpose financial statement framework wale people who are taking the responsibility for GPFS are not taking the responsibility for special purpose financial statement. That's the reason you have to identify the reasonable governance person in the entity with whom you can go and talk. Now see, in case TCWG specifically declared that they have no responsible for oversight of special purpose financial statement, auditor shall clearly mention in his report also that SPFs are to be used for the management purpose only. But if in the beginning the TCWG has also agreed that yes, Rohit, we will take the full responsibility and accountability for the special purpose financial statement ka presentation and preparation along with the management, then in that case you cannot allow the TCWG to escape from this responsibility at the later stage. Are you getting the point or not? So this is what is written in this particular point. Right? Now, as per SS 700, we need to report it as per the same requirements which we have done in as per 700. But the only difference is what? There it was applicable financial reporting framework contents, and here are going to be special purpose financial requirements. In case he wants, he can make additional disclosures like what is the purpose. Like I already told you, special purpose financial statement में 3 disclosures additionally will definitely come. who is the intended user, what is the purpose of this special purpose financial statement, and whether the management is looking competent and capable enough to prepare this special purpose financial statements or not. You have to make these three disclosures additionally, where in the audit report. Otherwise, your audit report will look same like a general purpose financial audit report, right or not? Next one, and any other additional communication, if you want, you can add it in your audit report on special purpose financial statement. Now, alerting the readers, I already told you so many times while doing SAs, SREs and SRS, in case you think that this purpose, special purpose financial statements which are prepared as per special purpose framework are not going to be used by a particular intended user, or should not be used by the all readers, then better you give a disclaimer. What is a disclaimer? Better you give one paragraph restriction on distribution and its use, and alert the readers that ki boss, this is a special purpose financial statement, this is not meant for you. For you there is a general purpose financial statement given above or given below, you should only refer that, and these special purpose financial statements are only required to be taken care of by the intended user, not by anybody else. Is it clear to all of you? 100% clear, right? Next. But remember one thing, you can only give this paragraph if the management is interested in distributing it to the normal users also. You can't do anything. That is purely the responsibility of the management. Your responsibility ends when you have given the disclosure of this paragraph. Is it clear? Now, now what should be your report look like? Title will be Independent Auditors Report on Special Purpose Financial Statement. Independent Auditors Report on Special Purpose Financial Statement. Let me show you one. Let me show you one. Now see, independent auditors report on special purpose financial information. Are you getting the point or not? And you can see that we are giving it to the particular LLP, and you can see that there is a difference in the responsibility paragraph, all those things. This is as per the old provisions, but I just wanted to show you the title to make you understand that this is how it is differentiated. This is how it is differentiated. So, independent auditors report on special purpose financial information. Is it clear to all of you? This is just for your understanding I'm showing you. Don't take it as otherwise. Like, you should better follow the same format. I already told you 10 times, whichever is given in the icai material. Now, first one is title followed by addressee. Addressee is going to be that intended user for the purpose of whom this special purpose financial statement has been produced. Opening introduction paragraph. Here we are introducing ourselves. We have done the audit of special purpose. Identify that we have done the audit of not the financial statement, special purpose financial statement for the purpose of this and year ending periodicity. Remaining 5 types will remain same. Name the financial statement we have audited and period of the audit, and you also have to specify what do you say, name of the entity as well, right or not? Same points which you have, that relate, yes, explanatory information, everything will remain same, but make sure that it should come in your opinion paragraph, not here. Introductory paragraph may give your details. We are the auditors, we have been hired for the statutory audit or audit of a special purpose financial statement. Again, same management responsibility para followed by auditor responsibility para. Now you can see it here as well. What I was showing you, now you can see that opinion paragraph. We have audited the accompanying special purpose financial statement of Rote Meal Malta Limited and all. In our opinion, special purpose financial information is for the period ending 31st March. Then you have the basis in case you are giving any what do you say, reasons for that. And do you remember we always write in the basis the 4 declarations. What are the 4 declarations? We have followed the what do you say, standards on auditing, and we have followed the code of ethics as issued by the thing and all. Now this is the international company and this is the international related particular framework which I got it downloaded from the Google. That's why you will find we are done the audit as per the international standards on auditing, and co-auditor's responsibility paragraph is separate below, and we think that evidence we have obtained is sufficient and appropriate. Everything will remain same, but here it is as per the IESBA, International Ethical Standard Board of Accounting, something like that is there. But as per our cases, we'll write we have done it as per SAs, SAAE, Code of Ethics and Ethical Requirements issued by ICAI, right or not? all that things will remain same. And this is what I was telling you. To alert the readers, you can use this paragraph called basis of accounting and restriction on use and distribution paragraph, and followed by responsibilities of the management, then auditor's responsibility, because ultimately the preparation responsibility shall be taken by the management, and expression of opinion and reasonable assurance the responsibility is home auditors, and followed by in the last way you can see that all these signatures, UDIN forms, name, form, registration number, everything will remain same. Am I correct or not? This is just for the purpose of making you understand कि boss, special purpose financial reporting framework, financial statements also going to be audited in the same manner. Additional things are what? Ki who is the user, why we prepared it, all those things. Now see, you can see that opinion paragraph is there, basis of accounting and restriction on distribution paragraph, who prepared it, why it has been prepared, how it has been prepared, who is our intended user. These are the additional things you can give, and date, place, and signature. So that brings an end to your understanding of SA 800. The only difference is that we are doing here the audit of special purpose financial statement, not the general purpose financial statement. Is it clear to all of you, right? So now we are going to proceed with 810, where we are going to understand how to do the audit of single financial statement. Are you getting the point? Now, whenever we do the audit of single financial statement, we have to understand the applicable criteria is the major point of concern, right? So let us start with that one. Okay, everyone, let us understand the another standard called SA 805, that is called audit of single financial statement, account specific element or items of what? Financial statement. Now see, understand this thing very, very carefully. Please understand. Now see, things to be kept in mind as an what? Auditor. Now what do you mean by things to be kept in mind as an auditor? See, now you are no longer the auditor of the complete set of financial statements. You are going to be the auditor of what? Single set of financial statements. So there will be so many challenges you are going to face. Point number one, you will not be having the complete picture of the going concern of the entity, because you are going to have an access over the single financial statement. Point number one. Second thing, you have to understand one fact that the same sufficiency and appropriateness of audit evidence which we generally consider at the time of doing the audit of complete set of financial statement will not be available if you are doing the audit of a single set of financial statement. Problem number two. Problem number three, first you have to ask yourself, are you capable and competent enough to accomplish this particular engagement or not? Do you have an experience of doing the audit of single financial statement, single account balance, or single element of financial statement audit or not? So these are the various challenges you will face it while doing the audit of what? Single financial statement. Are you getting the point? Now see, things to be kept in mind, whether it is possible to do such assessment, because our unawareness of SA 800 series leads to the confusing mind, and if it is possible, then which standard is to be applied? That is the main problem. Try to understand. That's now I told you that for the last 8 to 10 years, there was no visibility of these standards in our portion. So most of the generation which got cleared from 2013-14 to 2023 even are not even aware of these standard series and all those things. They are not even aware of the fact that there is a series called 800 series in your portion. Now today also, if you look at the intermediate student and ask him what series of standards on auditing you have, they will only say 200 to 700. Nobody knows about the 800. Nobody knows about SAEs, SREs. In the new portion only at the intermediate level, they are trying to understand that assurance engagements are different, review engagements are different, and related services engagements are different. In intermediate level, so they are not even aware of the fact that there is a series called 800. So due to this non-awareness about this 800 series, it becomes very much a self-questioning doubt. Self-doubt will arise, will I be able to conduct this particular assignment or not? Because you don't have an experience of doing that. Our generation was the luckiest one that we got to know these about of standards, and suddenly it was vanished for the next 8 to 10 years, and again it is reappearing. So it feels, I think that it was a very biggest revolutionary step taken by the icai in bringing in the new changes. It's something which was required to be told to the last few generation of chartered accountants in the last 10 to 15 attempts that CAs who have got cleared. They are not even aware of this thing, and after getting qualified, you don't get the enough time to get involved into this as well. So this is the reason you have to understand one fact very carefully. Is it clear or not? So understand that the first thing was, it will lead to you the confusing mind. And is it possible then in which standard to apply? You will not be able to understand 800 to be applied, Now, तो I made you clear कि if it is a special purpose 800, if it is a single financial statement then 810, 805, and if it is a what do you say summary financial statement then 810. But nobody knew this earlier, na? That is a challenge number one. Challenge number two: what will be the differentiations in the engagement team? Obviously, your engagement terms will be different because you are no longer an auditor of a complete set of financial statement. Your wraps will be different, your planning will be different, your procedures will be different, your precautions will be different, your reporting responsibilities are going to be different. क्योंकि having the reporting responsibilities on complete set of financial statement is not going to be same in the responsibilities when you are having in with respect to single financial statement. And more important thing, the biggest confusion will come if the single financial statement is prepared as per the special purpose framework. You have to check that also. Okay, is it a special purpose framework or general purpose framework? Are you getting the point? Because remember one thing, the accounting policies must match as well. Now see, ensure that the results of complete set of financial statement must match with a single financial statement. Because single financial statement is nothing but the part of the complete set of financial statement. So suppose complete set of financial statement means there is different result, and special this single financial statement means there is a different result, then to itself it is mismatching. So these are the various challenges you face before starting this. And I already told you the whole 800 series ka single effective date is 1st April 2011, right? Now, what is the scope of this standard? This standard deals with special consideration in application of 100 to 700 series. Mostly such relevant standards will also be applied in the same manner, except in few circumstances where the departure would be needed. They are saying the same thing only ki even though you are doing 805, the compliance of all the standards on auditing right from 200 series to 700 series which we have done, that will be equally applicable except in few circumstances where we need to go for the departure. And I already told you, if you are departing from any particular standard ranging from 200 to 700, you have to justify your departure by recording the reasons in writing, right? Next point: this standard does not override the other standards on auditing. The purpose of this standard is not to bring a conflict between 800 series and other series of standards. No. 800 series and other series 200 to 700 are in harmony and are in peace with what? This particular standard, that there is no conflict. The purpose is not to override them. This standard does not apply to the report of component auditor. Obviously, we are doing the audit of single financial statements. Maybe the component auditor is not the auditor of single financial statement. So you can only use the work of that component auditor if that component auditor is also the auditor of single financial statement. But in most of the cases, it is 99.99% of the cases may it would be irrelevant to say that ki component auditor is also the auditor of single financial statement. So 600 ka coverage is not there in 805. Objective: special consideration in relation to acceptance. Same three areas I told you. Problem will come in acceptance of engagement, problem will come in planning and performance, and problem will come in what? This particular attesting, whether it is SPF or SFS, whether it is single financial statement or reporting case. And especially while reporting, you have to give a declaration कि yes, I am here to express an opinion, but not to express an opinion on effectiveness of ICS, right or not? Now, now let me tell you one thing. In this particular standard 805 mein, this is the major problem. If you will cross this stage, acceptance of engagement, doing planning and performance and reporting would be too easy for you. Main is whether you will be able to cross this acceptance of engagement or not. Understand the point? Now, next thing, key matters. What is the first thing? Key matters. Key matters mean you have to understand कि first of all the definition हमें पता होना चाहिए कि what do you mean by elements, what do you mean by SPF, single financial statement, and what do you mean by financial reporting standard. Now see, elements of financial statement, it means an element, account, and item of financial statement. You can be hired as an auditor only for the debtors, only for the provision for doubtful debt, only for the cash or inventory. If you are being hired for a particular item audit, the boss, you are nothing but doing the audit of elements of financial statement. If you are doing the audit of a P&L, balance sheet, cash flow statement, or notes to accounts, or statement of changes in your audit, statement of changes in equity, then you are an auditor of single financial statement. So if you are coming for item, you are the auditor of elements of financial statement. And if you are doing the audit of a financial statement single-handedly, you are the auditor of single financial statement. Now, what do you mean by financial reporting standards? Financial reporting standards are nothing but financial statement must be prepared either as per AS or Ind AS. That is called financial reporting standards, which are notified by ICI. right or not? So you have to understand that ki either you have been hired for EFS or you have been hired for SFS. Now EFS stands for elements of financial statement or SFS stands for single financial statement. So these are the two abbreviations we are going to use now. Note 1. There could be any possibility of an item to be audited, but an auditor shall always be clear in his mind whether he can proceed or not before accepting the engagement. Suppose आपने कभी ऐसा audit किया ही नहीं है. You have never have an experience of doing the audit of any particular element of financial statement, and suddenly this kind of assignment comes to you. But remember one thing, we are chartered accountants, we should always be answerable, we should always be ready to answer the queries of our client. But you have to understand that ki self doubt should be removed first. You ask yourself ki will you be able to deliver this, will you be capable enough to do this audit in a proper manner or not. Do you think that you are capable and competent enough to deliver this particular engagement or not? This is what is expected from you, right or not? See, every audit, whether you do it now or later, has to be done at least once. For you, every assignment is going to be the first assignment at any point of stage of your lifetime. So you just can't ignore the fact that ki every audit comes with a different perspective, right? Next thing. Considerations when accepting the such engagement. Now, what are your considerations when you are accepting the such engagement? First one is application of relevant standard is possible or not. What do you mean by this? Now, you have to understand one fact very carefully कि some standards like documentation and risk assessment are not being talked specifically in 805. In such case, we shall follow these standards as it is. मैंने आपको पहले बताया था कि this standard is not having any perspective of overriding the other standards. It is nothing but falling in line with the other standards only. Whether that particular engagement is acceptable as per the FRF or not, you have to question yourself कि will you be able to handle this engagement? Auditor needs to check the coverage of EFRF to ensure whether he can accept such engagement or not. Next, what shall be the form and content of your opinion and report? Ensure that independence and other ethical requirements must be met. ये तो अपने को पता ही है, be it you are doing SREs, SRS, SAEs or SAs. Always remember your ethical requirement should always be intact. Even though in SRS also I told you, even if the word independence was not written, still you have to consider the independence. If the auditor of single financial statement or elements of financial statement happen to be the auditor of complete set of financial statement, then it becomes more practicable. Obviously, if you are the auditor of complete set of financial statements and if you are also being appointed as an auditor of single financial statement or single element of the financial statement, then it will be highly practicable for you to do the audit in a proper manner, because being the auditor of complete set of financial statement, you already acquired the requisite knowledge on the entity, its environment and its internal control system, which you can very well use while doing the audit of single financial statement or element of a financial statement. But it would become highly impracticable if the auditor of the complete set of financial statement is different and the auditor of the single set of financial statement is different, right or not? Now, it would be very much easier if the single financial statement or element of financial statement is prepared as per GPF. Obviously, problem arises when you're doing the single financial statement or element of financial statement ka audit as per the special purpose framework. It becomes more easier when it is a general purpose framework. Make sure to evaluate the intention of the auditee, whether he is asking you for the reasonable assurance or absolute assurance. Now, what do you mean by that? Now, try to understand. Auditing is all about reasonable assurance, but be clarified in this case. Be clarified in this case. If you think that management's talks are giving the indication, management's having the initial meeting with the management, why do we do? To understand the integrity of the management. Let's say, for example, you are talking to a management about this assignment, and over the period of communication, you came across a fact that management is slowly taking you towards absolute assurance. They're not looking for reasonable, they're looking for highest level of assurance. Means they expect you to do the full checking, all those things. So better tell them that ki boss, it is a 800 series and it is a audit engagement, and audit engagement mein only reasonable assurance is required, not the assurance, absolute assurance. If you want an absolute assurance, let us discuss on changing the nature of this engagement first. And if you think that none of the nature of the engagement is fitting inside, better to withdraw in that case. Are you getting the point or not? Same thing we also understood while doing the review. Are they asking you to, suppose they are very much unclear about you on is it a review engagement or auditing engagement, discuss with the nature of an engagement to be changed. Same thing is absolutely going to be applicable here. So if you think that they're looking for absolute assurance, so boss, this is not a case of audit then. This is a case of certification then. So think for changing the nature of engagement, but if the nature of engagement is not like possible to be changed, then in that case, at least think of withdrawing from the engagement. Now, following factors will happen auditor in deciding whether this engagement is going to be true and fair or true and correct. Now, see, if whether AFRF has been exclusively restricted to the preparation of complete set of financial statements. Suppose they are saying that when it is complete set of financial statement, we will prepare it as per the general purpose framework, but when it is single financial statement, we will go it for the what do you say, special purpose financial statement. So these are the factors you need to consider before saying yes for the engagement, right or not? Then if the special purpose, if the single financial statement or element of financial statement are completely matching with the requirements of AFRF of complete set of financial statements or not, and if you think that a what do you say, single financial statement and element of financial statement which they are asking you to do the audit for is matching with the complete set of financial statement with the respect to accounting policies, accounting standards, framework, then in that case there's no problem. Then in that case you can simply say yes, because anyways those are the nothing but the same applicable financial reporting framework within which your complete set of financial statements have been prepared. Next point. If necessary to achieve the fair presentation, auditor has departed from the applicable framework, then he must provide the adequate disclosure for the same. That I already told you, if you are going for any alternate course of action or alternate standards on auditing, make sure that you make the record of reasons in writing. Why sometimes now essay 200 same as written in essay 800, what I'm trying to tell that same ethical requirements to be followed, but if you're going away from any particular standard, record the reasons in writing for your deviation. That is what the meaning of same as what we have done in 800 earlier. Why sometimes it looks impracticable to do the audit of SFS or EFS as per the requirement of essay? Reason being very simple, your GC picture will not be clear. You will get a very limited access over the information. Your audit evidences will not look sufficient and appropriate. Are you getting the point or not? So these are the various reasons. Had it been you are the auditor of the complete set of financial statement, it would have been very easy for you to do the audit of single financial statement or element of financial statement as well. Now see, what is the problem number one? When such audit was engaged for audit of complete, when such auditor was not engaged for the audit of complete set of financial statement. So auditor of complete set of financial statement is different and auditor of the single set of financial statement is different. Obviously problem will arise. Second problem, being an auditor of single financial statement or element of financial statement, it is difficult to gain understanding on the entity, environment and its ICS in detail. Obviously, in detail information will be there with the one who is the auditor of complete set of financial statement. You will be having a information but not in detail as compared to what complete set of financial statement auditor. Your information will be quite limited in nature. Problem number two. Problem number three, you may not be able to achieve the sufficiency and appropriateness of audit evidences. I already told you the same sufficiency and appropriateness of audit evidence can be achieved if you would have been the auditor of complete set of financial statement, but you will not be able to achieve if you are the auditor of single set of financial statement or element of set of financial statement, and you will not get, you will get a very limited access to the evidences. You will get very limited evidences to support your what opinion, and most importantly you will not get a complete picture of the going concern of the entity boss, because as compared to complete set of financial statement audit, you get the complete picture whether the entity is having an ability to continue as a going concern assumption or not. But here you will not get anything, because you will get the very limited picture of GC because you are being told to only look at the P&L. What about the balance sheet? What about the cash flow statement? You will not get the full overview of the GC assumption. You will get only the limited overview of the GC assumption. Is it clear to all of you? 100% clarity. Now, sixth reason is what? If it looks impracticable, auditor may consider to discuss it, because I already told you, if the fight is going on between whether the management is looking for reasonable assurance or the management is looking for what? Absolute assurance. Is it a case of report or is it a case of certification? Then better and have a discussion with whom? Management. And ask them, boss, let us change the type of engagement. And if that type of engagement is not getting suitable, not getting changed, the boss, it's better to withdraw in this engagement. This is what the major things you need to consider before saying yes to this kind of engagement. Now, As per SA 210, same as what we have written in SA 800. 210 means what? Let's say, for example, in the beginning only you tell them, okay, boss, what are your additional requirements and financial reporting standards? May if any deviation is there, bring it to the notice of the management and get it resolved, because I don't want any future misunderstanding. Right? Now, considerations while planning and performing the audit. Careful application of the relevant standards on auditing. So obviously, if you are the auditor of single financial statement or elements of financial statement, the application of standards on auditing will remain same, but to a limited approach, not substantially. So you have to be careful while applying the standards while doing the audit of single financial statement or elements of financial statement. Check whether the AFRF of complete set of financial statement is equally adopted for audit of what? SFS and EFS. So obviously, it will be highly achievable results if the AFRF, which is adopted in the complete set of financial statement, is equally adopted for what do you say, SFS as well, a single financial statement or elements of financial statement. Even though the audit evidence is obtained during the audit of complete set of financial statement can be used here as well. However, still auditor has to plan and perform his audit procedures of single financial statement and elements to obtain more SAE to justify his particular assignment. They are saying that obviously you can use the evidences which you have obtained. अब ध्यान से सुनना what I'm saying. When you're doing the audit of complete set of financial statement, boss, you are doing the sample checking. Try to understand. When you're doing the audit of complete set of financial statement, you have so many areas to cover. That's why you can't do the full checking. You do the sample checking. But now you're doing the audit of an element of a financial statement or a single financial statement. Obviously, your extent of sample size will grow bigger, will be higher. Are you getting it? Your extent of checking, or maybe you may go for a full checking because your horizon of the checking is very less. Your areas to be checked is very small. Therefore, instead of going for a sample checking, you may go for a full checking. So reconsider your sample size when you're doing the audit of single financial statement or elements of financial statement as compared to the sample size which you examined and thought appropriate when you were doing the audit of complete set of financial statement. That's what they're trying to tell. Try to understand. Suppose you are doing the only audit of debtors now. There too, you must have done the sample testing on some of the debtors to find who is material, who is immaterial. But here you have to test the every debtor. Why? Because the area is not the FS now what you're doing the audit. You are doing an element of one FS. So obviously your sample size will grow bigger. You will do more exhaustive checking. That is what the point, main point. Very interesting point. Next point. In case a particular element of single financial statement is not interrelated with other item of financial statement, in such case, audit of such interrelated item shall also be performed to justify the assignment. Let's say, for example, you are doing the audit of only debtors. But obviously, while doing the audit of debtors, definitely you will be needing the GST return access. You will be needing the turnover access. You will be needing the cash collected from debtors access, which is not a part of your portion. But if you think that without doing the audit of those areas, you can't express a opinion on the single financial statement or element of financial statement, then better go for doing the audit of those interrelated areas as well. That's what they're trying to tell. And last and the most important thing, NTE of the audit procedures, evaluation of uncorrected material misstatements, materiality is going to differing as compared to doing the audit of complete set of financial statement. Obviously, your audit procedures will be more substantive in nature because now you are doing a single financial statement, right? Obviously, your what do you say, evaluation of uncorrected material misstatement will be different as compared to the complete set of financial statement. Obviously, your materiality concept consideration will be different as compared to the complete set of financial statement. Now you may go for a higher sample size, you may go for a lower benchmarking, everything will be different as compared to the complete set of financial statement. I hope you are able to understand what I'm saying. बहुत ही सिंपल स्टैंडर्ड्स है यार. यू जस्ट हैव टू कॉन्सेंट्रेट कि what is required in the first one and what is required in the second standard. Now let's understand forming an opinion and reporting considerations. Now see what they are saying. There are following things auditor need to consider and look before giving an opinion. Now read this point. Whether the auditor needs to express separate opinion for complete set of financial statement as well as the audit of single financial statement or elements of financial statement. पहले तो आपको ये चेक करना पड़ेगा कि whether separate opinion is required or complete set of financial statement is only going to include the opinion for the single set of financial statement or element of financial statement. If separate opinion is going to be there, obviously you will issue a separate report, one on a complete and one on the single financial statement. Are the audited single financial statement or elements of financial statement are going to be published together with the entity's complete set of financial statement? These are the various inquiries you need to do it with the management. Do you need a separate opinion? Are they going to be published together? And remember one thing, if they are going to be published together, there's a lot of things are coming on to your way. Try to understand. If the auditor concludes that now, see, let's say for example, single financial statement and elements of financial statement and complete set of financial statement are going to be published together. Obviously, it is the management responsibility to at least make a differentiation between the two. People should understand at least, boss, this is complete set of financial statement, this is single set of financial statement, and this is an element of financial statement. If the auditor is not happy with the presentation and the disclosure of the single financial statement and element of financial statement made by the management, then the auditor must ask the management to rectify the situation. If the auditor is not satisfied with the differentiation and presentation, then report shall not be issued till it is rectified completely. Try to understand, if they are getting published together, even though they are getting published together, there has to be a demarcation between ki boss, this is complete set of financial statement, this is single set of financial statement, this is elements of financial statement. Got it? But management is mixing it in such a way that you are not happy with their presentation and the differentiation what they have made. Tell them to rectify it first, and if they will not rectify, I will not issue the report till then. Are you getting the point? Next point. If there is a modified opinion on complete set of financial statement, any EMP or OMP is presented in the complete set of financial statement auditor's report, auditor must determine its impact of his report on single financial statement and elements of financial statement. If it deems appropriate, then he shall also modify the opinion accordingly. Now, यहाँ पे lot of discussion is required. Understand it very carefully. Complete set of financial statements are modified. Most of us will think that okay sir, if the complete set of financial statements are modified, the single set of financial statement also should be modified, element of the financial statement also should be modified. No, sometimes there could be different opinion. Try to understand, single financial statement is a narrow version of your audit, elements of financial statement is a narrow version of your audit. But whereas you are expressing the opinion on complete set of financial statement, your expression of opinion could be different. There may be a chance that that was different because at that point of time, you did a sample checking. You are giving the overall opinion on financial statements. Maybe balance sheet mein problem was there. Maybe balance sheet was looking modified. That's why you said that ki complete set of financial statements are modified. But suppose you are an auditor of P&L, only the auditor of P&L, single financial statement, and you didn't find any modification in P&L, then correct hai nahi hai? See, complete set of financial statement may give a different opinion because he is giving the overall opinion on all complete set of financial statement. But you are giving an opinion on single set of financial statement or a single element of financial statement. So definitely there is a possibility that if the complete set of financial statements are modified, check its impact on your single financial statement and elements of financial statement. If you think that the impact is also going to the impact of complete set of financial statement is also going to impact your what single financial statement or elements of financial statement, definitely you should modify. I'm not saying that don't modify, but there may be a bleak chances that this could be unmodified. Act accordingly. That's what they're saying. Auditor must determine its impact on his report on SFS or EFS, and if it deems appropriate, then shall modify the opinion accordingly. अगर आपको नहीं लगता कि that is impacting your single financial statement or element of financial statement, don't modify it. Just because the complete set of financial statement are modified, it is not necessary that a single set of financial statement or element of financial statement should also be modified. It is purely based on auditor's judgment, everyone. That is what they're trying to tell. But especially in case of adverse and disclaimer opinion, on the complete set of financial statement. What they are saying, especially in case of adverse and disclaimer, matlab materiality and pervasiveness is too high, then auditor shall not express unmodified opinion, else it will be contradictory in nature. It means indirectly what they are saying, if it is a qualified opinion on complete set of financial statements, then there may be a possibility that you may give unmodified opinion or single financial statement or unmodified opinion on elements of financial statement. This possibility is there. But if it is adverse or disclaimer opinion on complete set of financial statements, then you also have to give adverse or disclaimer on single financial statement as well as element of financial statement. Otherwise it will look contradictory कि ऊपर तो आप complete में adverse और disclaimer दे रहे हो, यहां पे आप unmodified दे रहे हो. See, qualified के केस में no problem. Qualified के केस में you can give unmodified on single financial statement and unmodified on element financial statement if the qualified is on complete set of financial statement, no problem. But in case of adverse and disclaimer के केस में they are saying that कि don't change the opinion, give the same opinion on the single set of financial statement and element of financial statement, otherwise it will look mandatory. But here also there is one loophole, exceptional cases where you can give here also differently, in case it is not prohibited by the law and regulation. If the law and regulation is not prohibiting you, go ahead with the unmodified opinion on single financial statement and elements of financial statement as well, even if there is an adverse or disclaimer opinion on complete set of financial statement. But there are three exceptional cases where you can go separately, even in case of adverse and disclaimer on complete set. First one, it is not prohibited by law and regulation. Second thing, the single set of financial statement and element of financial statement are not going to be published together with complete set of financial statements. That is the second one. Auditor's report on SFS and AFS is not going to be published together with what? Complete set of financial statement. Then also you can go for separate, because that is going to be not issued separately. This is going to be issued separately. You can go for unmodified opinion, no problem. Very, very important point. This may come in the examination. I'm telling you, highly important. Mark it as highly important. Second thing, such a specific element does not constitute a major or substantial portion. Suppose the debtors ka audit you were doing, right or not? Now debtors are 0.001% of the total balance sheet ka total. Is it substantial or non-substantial? Non-substantial. So then in that case, you can go for the unmodified opinion on that element and modified opinion of adverse and disclaimer on the complete set of financial statement. No problem. So what are the three circumstances under which you can give an unmodified opinion, even though generally adverse or disclaimer or complete set of financial statement, you should not give separate opinion. You should not give different opinion on single financial statement and element of financial statement. But in case, there are three exceptional situations under which you may go for the different opinion, unmodified one. It may not look contradictory if they are not going to be published together, if it is not prohibited by law and regulation, and if that particular element is very non-substantial part of your total balance sheet. In these three cases, you can go for a different opinion other than what is given on the complete set of opinion. I hope I made it justified to you. 100% correct. Now let's understand elements of audit report as per SA 805. After that, we will be left with 810, and with that, our new series, all the series, specialized, review, assurance, related, everything will be completed. Now, title, Independent Auditor's Report, right? Second, appropriate addresses, intended user, introduction para, management responsibility para, auditor's responsibility para, opinion para, place date, signature. That's it. And note, if it is an audit of specific element of financial statement, then two additional paragraphs may be added. Point number 1, basis of accounting, and point number 2, restriction on its distribution and use. If it is a elements of financial statement audit. Clear? That brings an end to your another very important standard called SA 805. I hope you understood the difference between 800 and 805. So 800 was talking on what? 800 was talking on कि boss, you are an auditor of specialized or specific purpose financial statement, special purpose financial statement or special financial statement. And 805 you were talking about कि you are the auditor of single financial statement or element of financial statement. Did you all understand? I hope it made you understand. I made you understand completely. Major point is engagement ka acceptance, and second point is what? Reporting. Very beautifully crafted. I'm telling you na sir, you just follow the icai material, best language, and word to word, the whatever the material you are getting in front of you, word to word you will find it in 100% consistent with the ICA's language. I have not compromised even a single ICA language. Yes, I have reduced the vagueness of what is given in the material, but let me tell you one thing. What you are getting in this material, you won't get it anywhere else. That is guarantee I'm telling you. If I will make the print of these notes now, they will go like sold like anything throughout the India. And anyways, they are being circulated already. Are you getting the boss? Just before 1.5 days before the examination, proceed with these notes. Just understand these notes and proceed for the examination. I will guarantee you absolute assurance 60 plus. आप क्या आ जाएंगे? 100% guarantee. So let's start with the third standard. What we are left with? The third standard, SA 810, everyone, right? Okay, so let us understand the last standard, everyone. That is SA 810. That is called engagement to report on summary financial statements. Now, what do you mean by summary? The summary which has been taken from the audited financial statements. Are you getting the point? So you have one audited financial statement, and from that audited financial statement, we are going to have a summarized financial statement. It's like a abridged prospectus, which is a summary prospectus of a normal one. Are you getting the point? So this is what do you mean by summary financial statement. So again repeating, 800 was on, tell me, special purpose financial statement. 805 was on single financial statement or elements of financial statement, and 810 is on summarized financial statements. Are you getting the point? So here in the whole standard, SFS will stand for summary financial statement and AFS will stand from the audited financial statement. Now remember one thing, when it comes to the summary financial statements, the major concentration should be on applicable criteria. Are you getting the point? The summary financial statement should be as per the applicable criteria. Criteria should be either as per given by the reportable standards or recognized standards, or if it is not, should be prescribed by law and regulation. And if it is not, and if the applicable criteria, applied criteria is going to be made by the entity itself only to prepare the summarized financial statement, then we have to be more careful. Same rule will apply over here. But make sure that obviously summary financial statement should be the summary picture of what? Audited financial statement. Here also some things you will come across which you have never gone through anywhere in any other standard. So let us start with this standard as say 810, engagement to report on summary financial statements. Right now, see. Scope of this standard. This deals with the auditor's responsibility when he undertakes to perform summary financial statements in accordance with what? Audit of summary financial statements in accordance with SS. Ensure that he shall be the same auditor who did the AFS auditor. Obviously, the one who has done the audited financial statement audit will definitely be the same who would like to do the summary financial statement, because then only it will be better, right? And the effective date of this will be also same, 1st April 2011. Now, objective. Checking the appropriateness of accepting the engagement to report on what? Summary financial statement. Remember one thing. Now, there is a very simple thing you have to understand. Summary financial statement auditor and the audited financial statement auditor has to be same. But they are giving you the right to say a no. It means if you will say no, even if you will say no, they cannot hire anybody else, because what is written in the standard is summary financial statement auditor has to be the same auditor who has done the audited financial statement. But in case you think that you are not competent enough, you are not capable enough to handle this assignment, you have every right to say no. Are you getting the point? Yes. Forming an opinion on summarized financial statement on the basis of what? Evidence is obtained. Right? and expressing an opinion on summarized financial statement through again a which report, written report that also describes the basis for that opinion. Remember one thing, only one additional thing you are doing it in the summarized financial statement is applied criteria or applicable criteria. That's it. If you think that their applicable criteria is looking good, then in that case, go ahead with that summary financial statement audit. Requirements of this standard. Meaning of summary financial statement, nothing but which are being copied from the audited financial statement. So summary financial statement reflects the same historical financial statement that is derived from the audited financial statement but contains less details obviously than your normal financial statement as a whole. Cannot be taken as substitute for what? Full-fledged financial statement. Remember one thing, you should also declare that in your report as well, audit report as well, कि boss summarized financial statement shall not be taken as a substitute for the audited financial statement. Understood the point? It shall not be taken as a substitute, because if someone, even though having a summarized financial statement, is also looking forward the historical financial statement in full, then there is no problem, you can give it, right? Next point. Engagement acceptance. Auditor shall agree to do the audit of summarized financial statement if it is as per the compliance of SS. If you think that your SS compliance is going to be same, ethical requirements are going to be same, independence requirements are going to be same, there is no objection of saying any no. Right or not? There is no problem of saying any no. There is no requirement of saying any no. Why? Because if it is as per the compliance of the standards on auditing and ethical requirements, you do not have any reason to say the no in that case. If he was not the auditor of financial statement, auditor shall not accept the engagement. Boss, what they are saying that क्या है कि summary financial statement का auditor and audited financial statement का auditor has to be same. Even if I said no to do the audit of summarized financial statement, the another person who is going to be hired should also say no. Why? Because he should know the requirement of 800 कि I and only I can do the audit of summarized financial statement, because I am also the auditor of what? Audited financial statement. It means the other person also shall not accept it, because if the other person will accept it to do the audit of summarized financial statement, the boss, it means he does not know the requirement of SA 810. Is it clear, everyone? Now, before accepting the engagement, the auditor shall determine whether the applied criteria are acceptable or not. What do you mean by that? Now see, it's a very simple thing. Applied criteria means the standards which are applied by the management in preparation of summarized financial statement, because it is responsible for the preparation of and presentation of summarized financial statement. I already told you that applied criteria is the only place where you need to focus when it comes to the summarized financial statement. Because let it be single financial statement, let it be summarized financial statement, let it be special purpose financial statement, let it be historical financial statement, let it be interim financial statement, let it be pro forma financial information, let it be prospective financial information, everything, a compilation is the responsibility of the management. So you have to check that applied criteria means those standards which are applied by the management in preparation of CFS. Are the applied criteria which are adopted by the management are looking reasonable or not, because they have to take the full responsibility for the same. Applied criteria means summarized financial statement should also represent fair summary of audited financial statement, because if it does not represent a fair summary, it leads to increased risk that his summarized financial statement may be misleading. If your applied criteria is not meeting the satisfaction of audited financial statement, so it means your summarized financial statement are definitely misleading. And who has to take the full responsibility for the same? Management has to take the full responsibility for the same. Next point. But following are the factors which auditor shall determine for the acceptability of applied criteria. What is the factor number one? Understand the nature of the entity. If you think that the applied criteria what they are following is as per the nature of the entity, means other entities in the same industry are also following the same applied criteria, go ahead with that, then it's okay. Or understand the purpose of summarized financial statement. You should understand for what purpose you are creating the summarized financial statement. Then also you will understand what are the factors, understand the nature of the entity, whether in such kind of entities applied criteria is followed or not. And what is the second one? Understand the purpose of the summarized financial statement, for what purpose they are going to be made. Understand the information needs of intended user of summarized financial statement. Suppose a regulator requested you to make a summarized financial statement, understand the needs of that regulator, why there was a need of preparing the summarized financial statement. If you think that the need was genuine, If you think that the nature of the entity is also like looking genuine, if you think that key purpose of creating a summarized financial statement is reasonable, and the fourth one, check whether the applied criteria is resulting into any misleading information or not. If it is not resulting into any misleading information, the boss, yes, 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 applied criteria is looking reasonable. If you think that the nature of the entity, such kind of entities do not use such applied criteria, red flag. If you think that the purpose of summarized financial statement is not looking genuine, red flag. If you think that the information requirement of the particular intended user to prepare that summarized financial statement is not looking genuine, red flag. If you think that this applied criteria which the management is using resulting into the preparation of summarized financial statement is not looking reasonable and leading to misleading information, red flag. So this is how you determine whether the applied criteria is looking genuine or not. So what are the four things? Understand the nature of the entity, understand the purpose of CFS, SFS, understand the intended user's need of SFS, and understand whether the applied criteria is resulting into any misleading information or not, right? Next one, generally applied criteria is established on the basis of recognized standards. So if you think that there is an industry and industry may some recognized standards are there, then it's okay. The same what do you say, applied criteria you may use, but in case any recognized standard does not exist, it can be on the basis of general practices of the industry. If you think that the recognized standards are there, then go as per the recognized standard. If you think that recognized standard is not there, industry practices are there, then also it is genuine. But if you think that neither there is any recognized standard nor there is any general practices, it is a self-created applied criteria. मतलब management is creating that applied criteria on self basis on their own. So boss, it is a red flag. If the auditor concludes that the applied criteria is unacceptable, does not agree with the management, then he shall not accept the engagement of the SFS audit. So boss, something is misleading. Better to get yourself away from such engagement. Is it clear, everyone? Now, if the law, if any law or regulation prohibits to disengage, suppose you want to give a withdrawal, but the law prohibits you to disengage. You already know the formula. What is the formula? Same thing we have done it in SRE, essays. Please tell me. Yes, when the law prohibits you, what is the regulation? What is the undertaking we give? You boss, this engagement is not done as per the standards on auditing. Are you getting the point or not? This engagement is not done as per the standards on auditing as per SA 810. Simply write it. Engagement was not conducted as per the standards on auditing. Is it clear, everyone? Now, obtain the agreement of the management that it acknowledges and understands its responsibility. Now it's time to take WRL. Now, in case it is a recognized standard, there is no problem. In case it is a industrial practices, no problem. But in case the management is preparing the applied criteria on their own and they do not allow you to get disengaged also, the boss, it's highly recommended to take the WRL stating that management takes the full responsibility of preparation and presentation of summarized financial statement in accordance with the specified criteria. Second thing, also declaring the management will provide the audited financial statements to the intended user without any undue difficulty. Very, very highly important point here. Those who are going to get summarized financial statement, the audited one along with my audit report, also deserve to get audited financial statements which are the full-fledged one. And management will provide such audited financial statement, the full-fledged one, the complete one, without any undue difficulty to the intended users. So if the intended user also want the audited financial statement along with the summarized financial statement, management has to provide. This also they have to write it on a written representation letter and give it to me. Are you getting the point? And what do you mean by that? Without any undue difficulty. In case they are creating any undue difficulty, then I will definitely talk about that in my report. But let me tell you one thing. What do you mean by not having any undue difficulty to the users of summarized financial statement? Point number one. In the summarized financial statement, they should clearly describe from here, where and from whom they can obtain the audited financial, full-fledged financial statement. In the summarized financial statement, they should clearly indicate that by which they should give the link. Are you getting the point? they must have made the arrangement for intended users by which they can obtain the access of what? AFS. Suppose you can put a hyperlink in the summarized financial statement, click on that, and that will redirect you to the total financial statement. That is also the one hour arrangement. And one more thing, if the audited financial statements are already available on the public domain, at least tell them that, sir, we are not providing you because it is already available on the public domain. Go there and check that. You will find the summarized audited financial statement. As simple as that. So what is the point number one? Management must have made the arrangement for the intended, or they should write from whom and where they can get it, or it should be available on the public domain. Go there and download it. This is what do you mean by not providing any difficulty to the users. If any of the three things are not available, that will be treated as you are providing any difficulty to the users. So any person who is taking care of summarized financial statement also have the right to ask for the audited financial statement, and it is a responsibility of the management to provide it without any undue, difficulty. Agreement with the management on the form of opinion on summarized financial statement. Remember one thing, at the time of beginning only you tell them, boss, even though I'm going to do the audit of your summarized financial statement, these are going to be my procedures which I'm going to apply. Have a full clarity on the same. These are the procedures which I'm going to apply. Make sure that evaluate that summarized financial statement adequately discloses its summarized nature and must identify that it is not AFS. Remember one thing, जब हम लोग इसकी report देंगे, we will identify that कि summarized financial statements are these are the summarized financial statements. These are not the audited financial statement, and summarized financial statements are not the substitute of what? Audited financial statement. Like we identify it is PFI, like we identify it is IFI, like we identify that it is PFFI. Like here also we have to identify, like we identify it is a special purpose framework, like we identify this is a single statement, single financial statement. Here also we have to identify ki boss, this is a summarized financial statement and it is not a substitute of audited financial statement. Ensure that the audited financial statement are not accompanied with the, if audited financial statement are not accompanied with the summarized financial statement, that should be available to the intended users without any undue difficulty. How do you remember that there is undue difficulty? Either it should be available on a public domain, or they should be told from where and whom they can obtain it. Or third point, they should make the proper arrangement so that intended users can have an access over the audited financial statement. Ensure that summarized financial statement adequately discloses the applied criteria. हमें एक specific paragraph देना है in our audit report which says that कि yes boss, I will give a paragraph in my report कि this is what the applied criteria, and you are going to take the full responsibility कि this applied criteria according to the management is suitable for preparation and presentation of summarized financial statement and has been prepared in accordance with the applied criteria. And compare the summarized financial statement with the audited financial statement to determine that there should be an agreement between both of them. Obviously, there has to be an agreement between both of them, or is there any requirement of recalculation required? Because summarized financial statement is the fair summary of what? Audited financial statement. Both should agree with each other. That is what you have to check and evaluate that summarized financial statement is in agreement with what? Audited financial statement is not giving any misleading information. Obviously, if the SFS is not meeting with the AFS, so definitely there is a clear-cut case of what? Misleading information. Evaluate that. It shall not be indicative substitute of AFS. ये तो अपन अपनी report में देंगे कि boss कि audited financial statement are separate, summarized financial statement are separate. You can't substitute summarized financial statement for the requirement of your audited. Do not use summarize in case you want to go for a exhaustive checking or exhaustive decision making. Go for the audited financial statement, and that should be provided to the intended user without any undue difficulty. Is it clear? Now, form of the opinion. If it is unmodified opinion on SFS, auditor can use the following phrases. Now, law is telling us, कि boss, these are the phrases you can use. Generally, we can use these phrases. What are the phrases? SFS are looking consistent with AFS in all material respects and are prepared according to the applied criteria. This is a wording we can use. Right or not? If the law and regulation has not put up their own wording, this is a simple two wordings you can use. What is the wording number one? SFS are consistent with what? AFS in all material respects and are prepared according to the applied criteria, or SFS are the fair summary of what? AFS and are prepared in according to the applied criteria. But if the law prohibits you to use this language, if the law and regulation says that we have a separate language for the same, then in that case you have to use the law language. But if you think that the law language is not adequate enough, you can use the additional communication. If you think that your additional communication is also not satisfied or enough to remove the doubts of the users of financial statement, then boss, simply write one paragraph that this engagement is not done as per SS. If the law prohibits using such wordings and prescribes its own wording, then auditor shall apply either the discussed procedures and shall do FABs to express the prescribed opinion as according to the law. Auditor shall evaluate whether the users of financial statement might misunderstand his opinion. If you think that law language is not good enough to be understood properly by the users, then go for the additional explanation in his report to mitigate the possible misunderstanding. But if he thinks that his additional communication is also going to not mitigate the possible misunderstanding, then he shall withdraw from the engagement. But if he is not allowed to withdraw from the engagement, story will remain same. You have to give a declaration that this engagement is not done as per SA 810. As simple as that. I mean, this is in case you are giving the unmodified opinion. ये तो unmodified opinion की problem चल रही है अभी. What if you want to give a modified opinion? In case you want to give a modified opinion, EMP and OMP, very, very important point. If you are giving disqualified opinion, EMP or OMP, why qualified is connected with EMP and OMP? Be it a qualified EMP and OMP, our actual opinion will remain same. Ki summarized financial statements are looking true and fair. In such cases, they are saying determine the impact. Describe the basis of qualified opinion. Obviously, we give the reasons in the basis paragraph. You can use a EMP and OMP if deems appropriate, then act accordingly. But if it is a adverse or disclaimer opinion in AFS report, what do you mean by that? If the audited financial statement are giving adverse or disclaimer, same thing we have done in the previous one. State that the audit report on AFS contains adverse or disclaimer. Describe the basis of such adverse or disclaimer opinion. State that as it is adverse or disclaimer opinion in the audited financial statement, therefore it is inappropriate for him to express an opinion on summarized financial statement. The boss, I am departing myself away from expressing an opinion, because obviously if the audited financial statements are nothing but modified in the terms of adverse or disclaimer, then there is no requirement of expressing an opinion on summarize, because definitely it should be implied that it is going to be adverse or disclaimer. There is no such thing called single financial statement or elements of financial statement as per 805 we have done. You can't give two separate opinion, because summarized financial statement should be the exact summary of what? Audited financial statement. So there is no scope of giving extra one. Now, under what circumstances SFS auditor may modify his opinion? आप कब adverse दे सकते हो? Suppose SFS is inconsistent with AFS. Your summarized financial statement are looking inconsistent with AFS. Your applied criteria is not, you have not prepared your summarized financial statement as per your applied criteria. It is your SFS is looking inconsistent in all the material respects. Right? Not at all looking like a fair summary of your audited financial statement. Same point, looking inconsistent. And management disagrees to make any what changes. Management completely disagree kar rahi hai. Do whatever you want to do, auditor. We are not going to change. So then what is this attitude? Again repeating, if it is looking inconsistent, if it is not looking as a fair summary, if your financial statement, summarized financial statement are not prepared as per the applied criteria, if the management completely disagrees with you, and if it is looking inconsistent in all material respects, then in all these cases, obviously nothing else other than what? Adverse, because you have an evidence of all these 5 cases. Are you getting the point? Now, what are the miscellaneous notes? If the SFS is prepared in accordance with special purpose framework, auditor may indicate additional paragraph, obviously alerting the readers that, ki boss, this is a special purpose based, what do you say, summarized financial statement. This is only for the limited purpose of the use of some intended uses. For you, it is not there. For your general purpose, summarized financial statements are applicable, which is given separately somewhere. So alerting the readers, you can use one paragraph basis of accounting and restriction on its distribution and use. Generally, summarized financial statement must contain comparatives as it is derived from audited financial statement. Obviously, they are trying to tell you to go for 710. But if there is a reasonable omission by the management, obviously, agar AFS mein there are 2 years they are mentioning, so in the SFS also they have to mention both the years, na? But if there is a reasonable omission by the management, it is completely agreeable. Then, but if the omission turns out to be unreasonable, if the omission turns out to be reasonable, then it's okay. But if the omission turns out to be relating to any fraud or error or intention of the management is involved here, then in that case, auditor shall determine its impact on summarized financial statement. And if the last year figures audited by what? Another auditor, then compliance of SS 710 is required. Same 710 ka problem will come. Right? But if there is inconsistency between other information and the information contained in summarized financial statement, go for 720. Simple. Next one, summarized financial audit report date cannot be earlier than audited financial audit report date, because first audited financial statements will be audited, first annual financial statements will be audited, then only summarized financial statements will be audited. So obviously summarized financial statement का audit report का date shall not be earlier than AFS का date. And auditor is under no obligation to obtain any additional essays on subsequent events, if any, because we are nothing but doing the audit of summarized financial statements, and summarized financial statement ka ending period and the audited financial statement ka ending period should be same. We are not doing it on any other date. So if we could have been doing it on any other date, we could have considered any subsequent events. So no requirement of considering any subsequent events, because your AFS ka date and CFS ka date of financial statement, not the audit report, financial statement ka date should be same. Audit report ka date, obviously AFS will be earlier than what? SFS. Auditors Association. Auditor did audit of summarized financial statement, but audit report is not to be included. Very, very simple. Now see, you gave me an assignment of summarized financial statement on which I did the audit. So boss, if I did the audit and you are printing, you are including summarized financial statement, you are including summarized financial statement, but you are not including my audit report, is it justified or unjustified? Unjustified. If the management plans to do above, then request the management to include the summarized financial statement audit report in the document. Management disagrees to do that, auditor shall take appropriate action to provide a management to prevent the management from doing it in inappropriate association of auditor with the summarized financial statement. Boss, I did the summarized financial statement audit, I deserve this audit report to be added along with your audited financial statement. Only including the summarized financial statement by not including my audit report on summarized financial statement, you are doing wrong. Either you include both summarized financial statement and my audit report, or you don't include both. Including only the summarized financial statement but not including my summarized financial statement audit report, I will not ask her. I will definitely take an appropriate action. But in case, listen to this point. You were not hired for auditing the summarized financial statement, and they are adding summarized financial statement only without adding your audit report. Obviously, there's no audit report. So you should not have the objection in that case. When you did not do the audit of summarized financial statement, there is no requirement of publishing your summarized financial statement audit report, because that audit report is not in existence. Audit report of only annualized financial statement is in existence, and summarized financial statement they are printing. But they are giving the impression by writing and making some disclosures that this is audited by the same auditor. Then you have a right to raise a objection. Sir, when I did not do the audit, why are you giving this impression that it is also audited by our auditor? If you are giving this impression, first of all, तो don't do it. If you're going to do it, again, I'll take the appropriate action. Now, see, if the SFS audit is not done, management still plans to include SFS. Auditor shall request the management either to refer auditor's name in the SFS, and management must not give any impression that the audit has been conducted on what? SFS. जब ऑडिट हुआ ही नहीं तो why are you giving the impression that कि audit has been conducted on SFS? You should not give this impression. Na? If you are giving this impression, what does that mean? Yes, you are telling to the outside world, ki, yes, boss, audit has been conducted as per what? SFS. If you are giving this impression, then if you tell the management not to give that impression, but if they are still not responding you appropriately, then he must take the appropriate action from doing the same. Now, see, two possibilities. You did the audit, but your audit report is not getting published along with the SFS. You have the every right to raise the objection. If the management is not doing appropriate action, then you take the appropriate action. You have not done the audit, generally you should not raise any objection. But problem is that they are giving the impression that our AFS auditor has also done the audit of what? SFS. But anyways, so you were not hired for doing the SFS audit. Then in that case, what? In that case, let the management, you warn the management, don't give any impression that I have done the audit of SFS, because giving the impression is misleading the users. Are you getting the point? I can't associate my name on that particular financial statement whose audit I have not done. It's a very simple logic, na? Then in that case, take the appropriate action if the management is not responding appropriately. Finally, we are going to be on the title. Title is going to be Independent Auditor's Report on Summarized Financial Statement. On which financial statement? Summarized financial statement. Going ahead with whom? Addressee. Going ahead with whom? Addressee. If the addressee is different, then understand the terms of engagement, nature of the entity, purpose of SFS. We already did those four things. Next one, introductory para. Identify that this report is on summarized financial statement. Identify that this summarized financial statement is a fair summary of audited financial statement. Audited financial statement shall only be identified if it was unmodified opinion on AFS. Indicate that no subsequent events have been taken care, because both the dates of AFS and SFS are going to be same. Indicate that SFS is not a substitute of AFS, because SFS only gives a limited understanding of the disclosure, whereas AFS will give you the full understanding. Management responsibility paragraph followed by auditor's responsibility paragraph and followed by the main paragraph called opinion para. And one very important thing, if you want that this should not be distributed to every user, you can include this paragraph, restriction on its distribution and use, and especially when it is SFS, special purpose framework related summarized financial statement, date, place and signature. Clear? Now, miscellaneous topics में unaudited supplementary information presented by SFS. What do you mean by that? कि you came across an unaudited supplementary information, make sure that management should not include it in the audited SFS, because you came across this unaudited, so you should ensure that management should disclose it separately and present it separately. At the time of doing SFS audit, if auditor comes across any unaudited supplementary information, ensure the following: information must be differentiated from summarized financial statement. If it is not differentiated, ask the management to change the presentation. And if the management refuses, declare that such supplementary information, you in your report declare that such supplementary information has not been covered in my summarized financial statement audit. So that brings an end to your series called SAs, which are specialized cases. So हमने 800, 805, 810, SAE 3400, 3402, 3420, SRE 2400 and 2410, SRS 4400, 4410, all these standards along with 700 series, all the standards we have covered. I hope you are finding this particular marathon very useful to you, right? See you guys for the next topic. Until that time, take a little bit of break, right? Now let's understand some questions relating to 800 series, everyone. Now look at this question. CA Lalita is an auditor of the company. And she's also offered a professional work of audit of financial statement prepared specifically for meeting the requirements of the loan agreement of the same period. She chooses to accept the work and has made up her mind to disclose this fact in the other matter paragraph in audit report to be issued by her for a specific engagement. Is her approach regular or not? Now see, understand one thing. First of all, though, it is a clear-cut case of special purpose framework financial statement because she is the auditor of the company. She is also offered a professional work for audit of financial statement prepared specifically for meeting the requirements of a what? Loan agreement. So it is a special purpose framework, and yes, she can choose to do it, but make sure that all the requirements of SA 800 she has to follow. And yes, there is no problem if she will use the other matter paragraph. Are you getting the point or not? But other matter paragraph mein she should specifically mention that these are special purpose framework related financial statement, and that's why she should also alert the users that boss, there is a restriction on its distribution and use, right? Second question. CA Lakshmi has prepared a draft audit report for the financial statement prepared in accordance with FRA provisions of contract with the Y Limited. She has drafted an unmodified opinion to be given in the audit report. Besides, she has also drawn attention in the draft audit report to note A that the financial statement which describes the basis of accounting and how she should ensure that the report should be not be misused, draft a suitable paragraph. So here you have been asked to draft a basis of accounting. That's what I was telling you, basis of accounting and restriction on distribution and use para. So let's see how this paragraph looks like. Let's understand that from the below answers, right? Now let's see, understand. Um, now see, this is how it should look like. Now see, without modifying our opinion, we draw your attention to note A of financial statement, which describes the basis of accounting. Financial statements are prepared to assist the company to comply with financial reporting provisions of a contract referred to above. As a result, these financial statements may not be suitable for any other purpose. Our report is intended solely for X Limited and Y Limited and should not be distributed to or used by any parties other than X Limited and Y Limited. This is how we alert the readers ki boss, this is only meant to be used by the X Limited and Y Limited. Don't, anybody else should not use this financial statements or use this auditor's report, right? This is what the answer to the question number 2, right? Now there are, I think, 5-6 questions. We can read it out and we can understand that. Now see, now what is the next one? CA M. Surya is the auditor of financial statements of the entity prepared in accordance with financial reporting provisions of a contract. He is also offered the audit of trade receivables. Now, he is being offered the audit of trade receivables. It means it is one of the element of financial statement. So, definitely 805 will come, right? In above financial statement, can he accept such engagement? Yes. Discuss briefly outline of his audit approach in this situation. Now, first of all, understand there are two things you will find it in this question. M. Surya is the auditor of financial statement of the entity prepared in accordance with financial reporting provisions of a contract. He is also offered an audit of trade receivables appearing in the above financial statements. First of all, these financial statements were prepared in accordance with financial reporting provisions of a contract. So they were not the general purpose framework related financial statements. The question itself says that it is already a special purpose framework financial statement. Point number 1. Second thing, you are being also offered a job of doing the audit of trade receivable. So it means you are being asked as per 805. So in this particular question, she can't accept such engagement, but she has to consider the application of both 800 as well as 805. Both standards should come here, right or not? Next thing, CAG is offered an appointment for audit of trade payables of the financial statement of the company. However, the financial statement prepared under the Companies Act are audited by CA Jignesh. Right or not? Discuss why it would be practically difficult for the CAG to perform such audit. Now you already know that once you are being auditor of a single financial statement, and if you are not the auditor of complete set of financial statement, there are so many difficulties you will find. First of all, it would look very much impracticable. You will not get the complete picture of the going concern. Do you remember we have discussed the point? The sufficiency and appropriateness of evidence will not be good. Am I correct or not? And remember one thing, you will not get the clear understanding of the entity. There will be so many restrictions. You will get the limited access to the evidences. So there are so many barriers you need to cross if you want to become an auditor of what? These particular types of engagement. So remember one thing, you will always face these kind of issues whenever you are going to, if you are not the auditor of the complete set of engagements and you are only the auditor of a single set of financial statement, whereas the complete set is done by somebody else. So you can see that CAG is offered appointment for audit of trade performance, whereas the complete set of financial statement are audited by CA Jignesh. So both are different. That's why you will find it difficult. Now let's do one more question so that you will get an idea ki what kind of questions they may ask you. And okay. Yeah. CA Madhur is an auditor of the company and has issued a report dated 15 June of particular year. The audit report on summarized financial statement derived from such. So it is basically a question of 810. So normal audit report ka date is 15 June and summary financial statement ka date is 15 July. Discuss whether there exists any additional reporting responsibility for the auditor in such situation in respect of audit report on summary financial statement. First of all, it is very correct to say that कि summarized financial statement का audit report का date should be later than odd year audited financial statement का reporting date. So you can see that summarized financial statement का date is coming 15 July. Am I correct or not? And normal audited financial statement ka date is 15 June. So this is correct. But there is a gap of 1 month between them. So you may think of subsequent event. But remember, I already told you, summarized financial statement is the clear summary of what? Audited financial statement. That's why there is no requirement to do any additional reporting on subsequent events. Are you getting the point? No requirement of doing the additional reporting on subsequent events. 100% clarity? Yes. Now question number 6. Consider that audit report on financial statement issued by CA Madhur for the above said company contains a qualified opinion. Can he issue an unmodified opinion on the summary financial statement derived? Yes, you can still issue the unmodified opinion, but there are some disclosures you have to make. Disclosure number 1, you have to tell that the audited financial statement have been given the qualified opinion. Second thing, what is the impact of such qualification on your summarized financial statement and whether it changes your opinion in case of summarized financial statement or not. If you have made these disclosures, that will be more than enough for the CA Madhur to consider for this particular engagement. So let's proceed with the next chapter. I hope these question discussions are also helping you out, right? Thank you so much. See you guys in the next lecture. Okay, so let's understand a new chapter, everyone. The name of the chapter is Digital Auditing and Assurance. First of all, let me give you the brief introduction of this particular chapter. Now, you know that ki digital auditing and assurance, mein most of the students have a misconception thinking that ki it is the advanced version of your old syllabus ka chapter, which was called Audit of Automated Environment. But let me tell you one thing, it is not at all same. It is completely different. Like in the CA final, you had the audit in automated environment. What was their general controls, application control, and basically the international frameworks and all, right or not? So it was not that much deeper. But this digital auditing and insurance chapter, which you have now recently got added, first of all, it is not at all similar to your previous topic. And one more important thing you need to understand, in this particular chapter, you will not find any similarity between your old syllabus topic and the new syllabus topic. Now, what we are going to understand blockchain, we are going to understand NFTs, we are going to understand data analytics, we are going to understand robotic process automation, we are going to understand cyber attacks, we are going to understand phishing mails. Different new things are what you are going to understand. So before starting the chapter, I would like to give you the brief that ki boss, don't be under the impression that this chapter is like your old one. This is completely different from your older one. You can say that rather this is a very like good initiative taken by the institute to bring this kind of chapter into your curriculum. Are you getting the point? So let's understand this chapter. Now, first of all, before starting the chapter, we have to understand ki what do you mean by digital audit and what do you mean by auditing digitally. See, what do you mean by digital audit and what do you mean by auditing digitally? Are you getting my point or not? Both are two different concepts. Again, repeating, what do you mean by digital audit and what do you mean by auditing digitally. Now remember one thing, when we talk about the digital audit means when your client is making the extensive use of information technology in his systems and procedures and in his operations, and you are doing the audit of such kind of client who is making the full 100% use of information technology, that is called digital audit. It means you are doing an audit of an entity which is purely based on IT infrastructure, information technology, system controls, everything is IT based. So it means that is called digital audit. Now question is, sir, what do you mean by auditing digitally? Auditing digitally means when you incorporate the set of IT professionals, when you incorporate the set of IT experts, when you incorporate the upskill the IT knowledge of your audit engagement team to do the audit of an entity which is fully automated, that is called auditing digitally. It means digital audit may more focus is on client. Client is fully digital. Client is fully IT based and you are doing the audit of such client, that is called digital audit. And auditing digitally may, in your audit engagement team, you are hiring IT experts, you are hiring ITK professionals, you are upskilling the IT infrastructure knowledge of your engagement team members, that is called auditing digitally. That is what the major difference you have to understand. Are you getting the point? So there's a lot of difference between digital audit and auditing digitally. Digital audit is from the entity's point of view, auditee's point of view. Auditing digitally is from auditor's point of view. And as you all know that today every entity is fully automated based, so definitely there is a need arises that we should learn what do you mean by digital audit and what are the new tools available in the market. Now, let's understand what do you mean by digital audit. Placing assurance on the IT effectiveness and implemented in an entity. So when you make a use of their IT systems, or which are either they are running effectively or not, are they implemented properly or not on your auditee's place, that is called digital audit. Today, technology is becoming integral part of every business. Therefore, it is very essential that key entities must review their tech-related controls to identify the gaps and risks for the continuous operations. So, obviously, being a digital audit, obviously, like we say that key there are internal control systems are weak, inherent risk, digital risk. So, yes, when you get fully automated, when you are completely dependent on IT environment, so yes, you come along with the lapses and those kind of gaps which you get it in IT infrastructure also. So remember one thing, even if your entity, your client is fully automated, it doesn't mean that there are no lapses, there are no risks, there are cyber risks, there are cyber attacks within which he has to go through. Now, what are the features of a digital audit? Try to understand. What are the features of the digital audit? It pushes the auditee to go for the latest advancements and also provide confidence to stay updated always. Now, features of the digital audit is once your entity has started running its operations on the basis of IT infrastructure, I would say that yes, your entity will keep on enhancing, upgrading and updating your IT, because you know that the moment you have come to the IT based infrastructure in your entities, processes and operations, you can't go back. You have to upgrade and upgrade your infrastructure. Second thing, it leads to better quality of opinion. Obviously, what evidences, what a manual intervention will give me and what evidences which I'll get from the automated controls, definitely automated control based generated evidences are going to be more reliable than what given by the human intervention. So my confidence of opinion will also be higher in this case. It saves the time, effort, energy. Obviously, volumes of transactions, difficult processings, everything will be done automatically. It will save my time, effort and energy. It standardizes a process and helps in mitigating the risk. Obviously, the biggest advantage of the digital audit is what? No customization. Everything is standardized because it is fully automated. Your software, your accounting software knows that they will do each and everything in a standardized manner only. There will be very bleak chances of customization. So it will definitely give us a better assurance. It creates a future for the digital strategies, adoption of AIs and robotics. Obviously, if you will be slowly getting digital, so in the future, there may be a case that you may incorporate the artificial intelligence, robotic process automations also, and better informed decisions by the auditee. Definitely, possibility of human judgment and human error will be less. So you will be able to get the better judgment. You will be able to take the better decisions with the involvement of more IT, information technology, in your entity, and more comprehensive over the controls. Means what? I may go through walk to walk. Are you getting the point? In the human intervention के case में, most of the biggest of the problem is what? Collusion among the employees, manipulation by the management. But the chances of collusion among the employees and manipulation by the management reduces to zero when it comes to what? Digital audit. Are you getting the point? Because everything is now digitally done, everything is automatically done, everything is done as per the information technology infrastructure. So that's why now we also have the tools by which we can do the walkthrough test from your P2P operations. Right or not? Next point. What are the advantages of digital audit? Better audit quality. Obviously, massive amount of calculations can be done easily. It saves my time, effort, and energy. And reliability will be more on the evidences which are produced by the IT-based infrastructure rather than human intervention. So it will better my audit quality. Enhancement of effectiveness and efficiency. Entities' operations will be more effective and efficient. A human may fall for the fatigueness. A human may go for the idleness, but the machines will not go for idleness. Machines will not get fatigued. So your operations will be more effective and your operations will be more standardized and your efficiency will be achieved. And you will be able to make the maximum utilization of the resources. Your triple E will be achieved. Economy in your operations, efficiency in your operations, and effectiveness in your operations. That is the second advantage of digital audit. Third advantage, lower cost. It helps in lowering cost of auditing as lower human resource will be required. Obviously, if my client is like digitally acclaimed and digitally formulated, then I also have to do the audit in a digital manner. That is called auditing digitally. Am I correct or not? So I also have to make the more use of CART techniques, computer aided audit techniques, computer assisted audit softwares. Am I correct or not? So less human intervention will be there. So less human intervention, I also need the less resources. In the entity also, if it is fully automated, the job which is can be carried out by the 10 people can be carried out by the single software only. Am I correct or not? So less human resources required. It will lower your overall cost. Next one, better analytics. Now, if your automation will be added with AI, artificial intelligences, trends, patterns, analysis, ratio analysis, trend analysis, right? Reasonableness test will become more evident. Why? Because your artificial intelligence, you just simply give a command, I need all those data which are pending for more than 180 days. On a blink of a second, the report will be generated. Am I correct or not? So it will give you the better analytics also. And remember one thing, AI can detect your frauds also very easily. So that is why better analytics, improved risk assessment. Obviously, with the standardization of automation in your processes and operations, the chances of inherent risk and control risk will be very much lowered, and you will be getting the lower you will be able to reduce your risk to the lowest acceptable level. So these are the various advantages of having a which audit? Digital audit. Now, but what are the challenges and considerations of digital audit? Remember, first of all, the first biggest challenge which you have to understand is that entity must know the business benefit they want to achieve with it. If you do not know why do you need the automation in your entity, then in that case, there is no point of doing it automated. Are you getting the point? See, if I want, what is my requirement? What is my necessity? What is my need? I should have the 100% knowledge of the same. If I don't know my need, I don't know my requirement, what is the point of installing the automation in my processes and operations? That is the first challenge you will suffer. So, because it takes a lot of, it's a very costly affair to go for automation. And once you've gone for the automation, reversal is very much difficult. So you have to be too much 100% clear on your usage of automation. Do you really need automation in your processes and operations or not? Second thing, automation shall not be the only solution, rather it should be a part of broader digitalized strategy. Automation should not be only in your processes and your what? Operations. Now future may business strategies, corporate strategies, top level strategies, lower level strategies, functional level strategies, maybe digitalization should be used. Are you getting the point or not? So that is another challenge you have to get. Not only you are going to use it for your processes and operations, you are also going to use it for your future developed strategies. Ensure first works processes should be standardized before application of automation. You have to give the adequate training to your staff before going for an automation. First, make sure that are your processes and operations standardized or not. Then only applying the digitalization on those processes and operations will give you the fruitful results. Don't forget to consider the governance rules. Remember one thing, when you go for digitalization, when you go for automation, when you go for IT infrastructure, so many requirements of the governance rules will be applicable to you. So many risks will be applicable, like reputational risk will be there. Are you getting the point? Regulatory cost will be there. Are you getting the point? So many types of governance rules will be there. Like say, for example, you have to maintain your IT infrastructure updated and upgraded. So you always have to keep on incurring the lot and lot of cost on updating and upgrading it, right or not? Yeah. And the biggest challenge is nothing but data integrity, data security, data protection. You have to maintain the highest level of antiviruses. You have to maintain your protection in such a way that you will be able to defy any kind of malware, any kind of Trojan, any kind of phishing. Everything is totally dependent upon your digitization. So along with the digitization, so many governance rules and so many risks relating to data integrity will also come. Think about the people first, because reversal is not possible. That's what I told you in the beginning. Once you have gone for the digitalization, reversal will not be possible. That's why you should know your need first. Do you need fully automated processes and operations or not? And key for the successful automation is to target the right processes wherever it is needed. Maybe in some processes you need the digitalization, but in the other processes you don't need the digitalization. You should know that where the right amount of digitization or automation is required, in which process or which operation. These are the various challenges you will face while going for a digital audit. Now, areas of focus for the auditor to obtain better understanding of management's new technology: check whether the new activities has been automated and changes have been brought to the existing process. First of all, though, when the client goes for digitization or when the client goes for automation, then in that case, we have to check that whether new processes have been added which are fully automated, or they have made their existing processes in automated. Means we have to check that did they go for any invention or did they go for any innovation. Second thing, if any new changes have been brought to the entity system, then check whether any new risk also appear. Obviously, whenever the new changes will be brought, definitely a certain amount of the new risk will be there. And if the new risk will be there, did you apply the new controls to mitigate those risks or not? See, it's a very simple chain. New updations brings the new risk. New risk brings the demand for the new controls, because if the risks are going to appear, you definitely have to have the installation of those controls also to mitigate those risks which came along with the digitization. Check the impact of new technology on the functioning of ICS. Is your ICS is getting better with the new technology or not? These are the three additional things which the auditor need to understand before going for your digitalization. So this is what do you mean by digital audit so far. Now let's understand auditing digitally. Now this is from whose point of view? Auditor's point of view. Speak up everyone. From whose point of view? Auditor's point of view. So do I need to hire some IT experts, IT professional? Do I need to upskill my team to be relevant enough, to be capable enough, to be competent enough to do the digital audit or not? This is what do you mean by auditing digitally. Now this is completely on me. It is about using the advancements of technology for conducting an audit effectively and efficiently, because I also want to achieve triple economy of my resources, efficiency of my work and effectiveness of my work. That's why today's auditing practices need adaptability towards growing IT environment and technology. Boss, today, one thing I'm telling you very frankly, after getting qualified, the very first thing you should do is a post-qualification course called DISA, Diploma in Information System Audit. Telling you guys, if you're not doing this course now, you're posing a threat to your own existence. You will not be existing in the market any longer. Remember one thing, very much, highly much recommended for those. Either you are in service or you are in, either you are in service or you are in practice, you definitely need what? DISA. After that, you will be able to call yourself as an information system auditor. You need to really, it's high time that audit shall be delivered through what? Automation and innovation. Boss, every business is going automated and innovated. You are lagging behind in the market if you're not doing accordingly. Are you getting the point? New technologies helped in capturing data, automating procedures, analyzing information, helps in focusing on real risk of the client. And remember one thing, a secret to the quality technology audit is doing the investment in digitally upskilling your team members. आपको बहुत ज्यादा इन्वेस्टमेंट करना पड़ेगा फ्यूचर में, क्योंकि रिमेंबर वन थिंग, नॉट ओनली यू शुड बी अपस्किल्ड, योर होल टीम आल्सो शुड बी अपस्किल्ड. दे शुड नो हाउ टू रन दोस card software. They should know how to run those computer assisted audit softwares on the client's automated infrastructure. Are you getting the point? So you have to make a lot of investment on upskilling the people in your team with the technology, like make them understand what do you mean by robotic process automation, make them understand what do you mean by artificial intelligence, make them understand what do you mean by blockchain, make them understand what do you mean by data analytics, what do you mean by data minings, what do you mean by IPA, intelligence process automation, where the robotic and artificial intelligence come together. Due to upskilling, there will be an enhancement of existing process and evolvement of the scope of audit. Obviously, the doors of so many software automated based entities will be open for the chartered accountants. Try to understand. The moment they will come to know that, ki, boss, you are an information system auditor and your team is completely upskilled, your horizon of doing the audit will increase like anything. You being a employee, you will be getting so many opportunities of employment, and being a practicing chartered accountant, so many entities would like you to appoint as their statutory auditor. That is what the benefit of auditing digitally. Next one, today's audit teams need to involve experts on different software applications and technologies. हमें बहुत सारे, see, it's not always correct to say that कि I can do it alone. If you think that the client is so highly intellectually based, IT infrastructure is installed over the client's place, so you need a help of an IT expert. Don't think twice before hiring the IT experts and before hiring the IT professionals. Because today, if you are not doing the same, you are already lacking in the market. You will be faded away in the market. Next important thing, more bots intervention leads to more accurate results. Saving of time, exceptions will be highlighted more. So go for BPA, business process automation. Go for RPA, robotic process automation. It will save your time, effort, energy. And remember one thing, you will be able to get less exceptions because less human intervention is there. So what are the features of auditing digitally? Obviously, same feature which we have understood in digital audit. It will improve your quality. It will save your time. It will make you a better understanding of the audit, and it will give you the better results. With the better value, you will get it in doing the digital audit. Decreasing human intervention, boss, less manual people are required, less intervention, less possibility of errors, less judgments will be there. Right or not? The smoothness will be more because you are doing calculations in an automated manner. Reduction of errors will be there due to less human judgments. Increases transparency, obviously. Anything which you do automatically, people think that it is invisible. But let me tell you one thing, the better transparency you get in auditing digitally. Means what? New feature of audit trail. I already told you, audit trail is something which is going to lead you to the digital footprint of audit logs. Who has done the what modification, what insertion, what deletion, and what point of time, you will get it because every set of audit log will be there in their accounting software to whom you will have an access. So for you, something which was invisible will become more visible. That is called increases your transparency. Automation and ease means what? You will be able to do the voluminous transactions. You will be able to use intelligence. You will be able to do sampling, sample size, selection of sample size. Everything will be automated and it will be easy for you to select the better sample size. Your workload will be taken care of properly. Improved efficiency. You will be able to make the best use of your resources. Are you getting on? Because technology will never go fatigue and technology will never go impatient. Rather, humans can go. It will help you in simple training and digital upskilling. Upskill your total team. It will improve their efficiency. They will also know that 2 hours of work can be done in 2 minutes. Right? And also results in improved retention of talent and what? Confidence. Better risk assessment. What do you mean by that? Your RAPs will go better. Are you getting the point? Where you were doing inspection, observation in a manual manner, you will be able to do it in what? Automated manner. Visual presentations will be there. Tools like dashboard, tools like, macros, tools like spreadsheet you will use. And automatically your workload will be reduced to the zero extent. So better risk assessment will be there. You will be able to face the challenges in a better manner. You will be able to face the challenges in a more transparent manner. Now, like client has to go through some challenges, we also have to go through challenges. Challenge number one, what problems auditor is trying to solve? First of all, though, you should be too much like client must need its requirement. You also should know your need. What kind of client base you have. According to the client base, you should buy a software. As simple as that. If you think that that particular software you're buying is not going to be used recurringly, what's the point of buying that card technique? So you should know that what benefit you are looking for, what benefit you are deriving, what problem you are going to solve. That is the first thing you should talk about. Are you getting the point? Will it make your work easier? Will you be able to get the return on your investment or not? That is something which you need to think about first. Second point, what technologies can help you? You have to understand that what kind of softwares are going to be there. Suppose you are looking for data acquisition software, computation software, consolidation software, for visualization tools, for the different topics, for detection tools, manipulation tools, for the different requirement, different types of tools are available. So you need to understand what technology will help you in the best possible manner. Are you looking for any red flags or not? Then data mining is a better one. How your people or team shall get upskilled to make the best use of the technology. Technology you bought, but if you have not upskilled your team, then there is no use of that technology. Technology is only to be used, technology is the best only when it is used by the human. Always remember, read this point. Technology is good and useful only when it is used by the humans. Train your staff, invest on their upskilling. Right or not? These are the various challenges you will face. Availability of the range of automated tools, you name it, tools are available in the market. You name it. You want a consolidation tool? Available. You want a automation tool? Available. You want a RPA, robotic process automation tool? Available. You want a BPA, business process automation tool? Available. You want a mining tool? Data analytics is available. You want the extraction tool? IDA is available. You want to know, you want to have a intelligence process automation where the robotic process automation and artificial intelligence will be combined together. You name the requirement, tools are available in the market. But you should know your requirement first, why you are looking for this particular tool. 100% clarity. Are you getting my point? What I'm saying? Yes. Next point. Now, understanding the IT environment. Obviously, आपको client का IT environment समझना पड़ेगा before starting your digital audit. Understanding means what, on which IT he relies upon, how such IT support the business, and what are the possible risks relating to IT. So whenever you are understanding the IT environment, first of all, identify such controls over the entity's IT processes. हम लोग क्या करते हैं 3-5 में? Identifying the environment, identifying the risk, and identifying the ROMM and assessing the ROMM. Now our identification and assessment of ROMM is associated with the infrastructure of IT. IT environment के ROMM, IT environment के complexities, IT environment के areas we have to check. Now, assessing complexity of IT environment, considering the need of specialist and expert, do you need the expert or specialist or not? And including specialist in the complex assessment. Are you getting the point or not? So always remember, whenever you do the digital audit, make a documentation of these following things. First of all, always make a documentation of these following things. इसको clearly documented form में लिखो कि what is the application your client is using, what is the details of his IT structure. Next one, what are the details of governance over these IT controls? What are the policies, procedures, and processes followed? Right or not? Whether it is in-house software, did they create it on their own, or are they handling it, getting it by outsourced? Like I told you, SA 3402 mein payroll department is getting handled by another company. So is it in-house team they have, or they have a outsourced to somebody? Right? What is the purpose of their application use? What IT risk and what IT controls they have installed? Right or not? Database services what they are using, operating system they are using, network they are using. Are you getting the point? Server and storage facilities they are using. Who is their CISO, Chief Information System Auditor? And who is their CIO, Chief Information Officer? Who is their CTO, Chief Technology Officer? ये सबकी डिटेल आप डॉक्यूमेंट करके रखो. दिस इज व्हाट यू नीड टू डॉक्यूमेंट फॉर एप्लीकेशन क्या यूज हो रही है, ऑपरेटिंग सिस्टम क्या यूज हो रहा है, वर्जन क्या यूज हो रहा है, अपडेशन क्या यूज हो रहा है, हु इज हैविंग द एक्सेस राइट्स टू दैट, व्हाट आर द आईटी रिस्क, व्हाट आर द आईटी कंट्रोल्स. आर यू गेटिंग द पॉइंट और नॉट? Whether it is in-house team or it is what outsourced, is it the generalized software or is it a specialized software? Everything is required to be documented. Then only you can start understanding the environment. First requirement is document all those things. Second thing, understanding the flow of transaction. What do you mean by flow of transaction? How one operation starts and how it ends. Do the walkthrough test. Understanding identification of significant systems. Now you have to understand whether their IT structure and IT applications are directly connected with the ABCD level or not. Are they connected with accounts, balances, classification and disclosures or not? Now identification of manual and automated. Are they fully automated? Are they fully manual? Or what is the striking balance they are having between the manual controls and automated controls? That also you should know. Are they too much dependent on IT or they are less dependent on IT? What is the identification of their manual and automated controls? Identification of technologies used, because until and unless you don't know what technologies they are using, you don't know what softwares we have to use to test those technologies. ये तो वही बात हुई ना, until unless you will not acquire the knowledge of the client's business, how you will come to know that what you have to audit? So you have to first identify the technologies used, first hand the need of such technology and role it plays in the information processing. Consider the risk arising from such technology. And most importantly, determine whether an expert or a professional is required to test that technology. Suppose that technology is going bouncer off your head. You are not aware of that technology. You have never come across that technology. It's better to hire an IT expert and professional to resolve the issue. Once you will identify their IT environment, now you can assess the complexity of their IT environment. And remember one thing, complexity is not same from every technology the client use. Complexity differs from application to application. One application, one software used by the client might be very simple. Another software used by the client might be very difficult. So you have to see that complexity of the IT infrastructure differs from application to application. Complexity is based on automation use. If it is fully automated, complexity will be high because less visibility will be there. Next one, if it is customization done, then to definitely complexity will be very high. Why? Because it is not a standardized software, it is a customized software. Business model of the entity. It means complexity is also dependent on the factor what is the business model of the entity. Suppose this entity like Amazon. Ab Amazon may right from placing the order till the refund of the order, everything is what automated. Same thing you have to understand here. Is this client purely automated based or not? Next point, significant changes done during the year. If they have gone for any significant updation and upgradation of IT, then obviously what information or what understanding you had last year will not be the same this year. So your complexity increases. And most importantly, implementation of emerging technologies. If they are using and updating and upgrading the new technologies, the boss, if your client is getting updated, auditor also has to be updated. So your complexity level increases without any doubt. I hope you are understanding what I'm trying to deliver you here. Right? Next one. Identifying the risk from the usage of IT. Obviously, IT के सबसे बड़े risk है. सबसे बड़ा IT का risk क्या है कि make sure that कि unauthorized access should not be given to anyone. Otherwise, data intervention may take place. Data integrity may be compromised. Data security may be compromised. Now see, how to identify the IT risk? Make a list of identified IT applications used and its nature. उनके पूरे IT applications का list बनाओ. Make a full list of their IT application. Consider the cyber security risks which are associated with that. What do you mean by cyber security risk? Ki access right should be given as per the rank only. No one should be having the unauthorized access to someone's system. Otherwise, master files can be what? Modified. Right or not? Now, do not ignore the red flags like too much excessive reliance on IT controls. That is also a red flag. Because if you are too much dependent on IT controls, then the hacker just needs a small intervention in your IT controls and your whole data will be compromised. Companies like Facebook, companies like Instagram, companies like Amazon, you look at that. Remember one thing, your credit cards and debit card details are already planted on the Amazon because you have made the payments out of it. You just need to put a CVV into it. Are you getting the point? 3-digit CVV. But have you ever come across that your data has been misused? This is the level of IT controls they need in that entity. You have to understand that. It's okay to be fully dependent on IT, but are they able to handle their IT infrastructure properly or not? It's completely a red flag if there will be excessive reliance on IT controls unless they have the excessive IT controls to reduce those risks. Next one, too much usage of what? Automated application is also one of the risks. Types of risks which are arising from the IT usages, unauthorized access leads to. अगर हम किसी को unauthorized access दे देंगे, this thing will happen. Data destruction, improper changes, unauthorized recording, inaccurate recording. Over access and privileges to the IT personnel, gaining the access beyond its rank. अगर उसको उसके रैंक से ज्यादा एक्सेस मिल गया तो डेफिनेटली दैट इज नथिंग बट गोइंग टू बी वेरी मच गोइंग टू बी misused by that person. Next one, unauthorized changes in the master files and IT applications will take place. Failure to make the necessary updates from the reliable sources will take place. Inappropriate manual intervention will take place. Data corruption will take place. Theft of sensitive information will take place. ये होते हैं IT risk. These are known as cyber risk associated with IT infrastructure. You should have the knowledge of that. Risk of system downtime due to hardware failure or cyber attack or faulty configuration or power outages. आपके पास बैकअप होना चाहिए. Every day, whether your entity is taking daily on-site and off-site backup or not. Then usage of more than one IT systems and more in there is one IT system on the basis of which other IT systems are very much dependent upon. और एक IT system अगर आपका खराब हुआ तो remaining 10 which are dependent on this IT system will also suffer. Too much integration is also very difficult. And it is also one of the cyber risks. If one control will be compromised, the remaining other related controls also will be compromised. And risk of regulatory compliances. What do you mean by regulatory compliances? अगर आपके यहाँ पे डेटा थेफ्ट हो गया तो बॉस रेगुलेटर आपके ऊपर इन्वेस्टिगेशन करेगा, आपके ऊपर इंक्वायरी बिठाएगा. So that cost also you have to bear. That is called investment cost and updation cost. Are you getting the point or not? So many investigations will take place. And mostly when you go for the infrastructure, it does need the cost at the very beginning, but also at the regular intervals. Right or not? Too much IT dependence and its impact on audit. See, remember one thing. Too much IT dependence is definitely not a good idea. But even if your entity is too much dependent on IT and if they have these three types of controls in their entity, then there is no problem. Suppose they have access security controls. What do you mean by access control security controls? Suppose someone wants an access on a particular area in which he is restricted. So make sure that he should make an request first. The request should go to the appropriate authority first. Appropriate authority will look for the genuineness of what? That access application. And then the yes or the no, acceptance or rejection should come from that appropriate authority. Those persons who have retired from your entity, whose services have been terminated from their entity, immediately their access right should be disabled so that no one will make the misuse of it. That is called access security controls. And especially access to those areas where the sensitive information is being laid down, you should be too much strict on giving the access to that area. This is called access security controls. Second one is about program change controls. Program change control means what? Policy for that particular program change must be there. If anybody is making the changes, there should be three different departments. Testing department should be there, development department should be there, and implementation department should be there. Am I correct or not? Changes shall not be implemented directly before being tested. These kind of policies we need in the IT infrastructure. That is called program change control. Then data recovery and backup control. Okay, cyber attack has happened. Somebody has stolen your data. You should have a cyber forensic team in that case. You should have taken the on-site and off-site backup of your data so that even if your data is lost, you should be able to recover it. How quickly you can reoperate, how quickly you can rerun your business. Business should not shut down. As and when you came to know that cyber attack has happened, even though your data is lost, you should be able to recover it as soon as possible. That is called data recovery and backup controls. How easily or how quickly you can resume your operation, that is also something required to be taken care of. Right or not? Data must be recoverable, restoration testing must be done. If there are two controls are outsourced, check the service level agreement, avoid batch jobs. Now, assessing the cyber risk. What do you mean by cyber risk? Now, see, cyber risk can nothing but the cyber attacks. Cyber attacks may take many shapes. It can be a phishing cyber attacks. It can be DOT, denial of DOS, denial of your service. it can be what do you say, malware. So let's understand the first cyber risk. First one is called malware. Malware का मतलब क्या होता है? A malicious software which will be entered in your entered into your computer so that the other person will have an access to your sensitive information. Now see, a malicious software or code which is created with an intention to harm your computer network and server. Now, what are the different types of malwares we have? Ransomware, where the victim data will be attacked and decryption key will be offered in exchange of a payment. Now, name itself says that it's a ransomware. Let's suppose your data has been stolen by me. I will encrypt that data, and now you can't, even though the data is there in your system, but you can't have an access of that data because decryption key is with me. And if you want to have a decryption key, you have to pay me a ransom. That is called ransomware. Fileless malware means what? The what do you say? The cyber attacker need not do anything. He will, in your system, he will make some necessary changes by which itself your system will be created into a malware. The moment you will just click that file, automatically your system will be hacked. Now see, a type of malicious activity which is created built into the system to execute a cyber attack, it does not even require an attacker to install any code. What do you mean by Trojan? Trojan is basically a malware which is sent to your system and installed through the social engineering techniques like phishing and bait websites. Now, suppose you wanted to download the better version of your iOS or better version of your Android, but instead of doing it from the system, you did it from Google. Google may bait websites were there. Bait means hooking websites, and you downloaded the version from there, and you later on realized, ki boss, that was a cyber attack. The moment you download it, your whole system, your whole computer, your whole laptop will be compromised. That is called what? Trojan. It is based on the social engineering techniques. Right or not? Mobile malware is what? Basically this malware is attacked and to be included into your mobile through your phishing mails, and unsecured Wi-Fi downloads. Like in the railway stations and airports, sometimes we find na ki free Wi-Fi is there and something is that you should never ever go for those Wi-Fi. Next one, denial of service attacks. What do you mean by denial of service attacks? Here the cyber attacker will enter into your own system and unnecessary so many windows will start opening. You will not be able to access your emails, account and your sensitive information. There will be no data theft lost. There will be no data lost or data theft, but it will consume your time, effort and energy. Something which you can do it in seconds will take hours. Thousands and lakhs of windows will start opening. You will keep on crossing them, you will keep on closing them, but again it will keep on coming, and you will not be able to access your own what do you say, you will not be able to access your own data itself. No data theft, but you are denied from your own services only. That is why it is known as denial of service attack. Then next, what do you mean by phishing? Phishing means what? It takes many shapes. Phishing means a cyber attack by which a particular email or an SMS or a video or a link will be sent to you, by which the moment you will click it, the other person will be able to access your what? Sensitive data. Like this types of phishing means what? Spear phishing, where a particular person will be targeted to obtain his sensitive information. A specific individual organization via emails to steal sensitive information such as his login details. Then we got whaling. Whaling means what? When a big entity personnel like CEO, CFO's computer will be targeted because they are the big people having the big sensitive information. So that is called, it is represented by the word called whaling. Whale badi hoti hai na, whale big hoti hai. So that's why it is represented as a whaling. Then you have smishing by sending you an SMS to attack your sensitive information. Are you getting the one? Then you have wishing by sending you a video clip or by sending you any kind of what do you say, a phone call coming from a very reputed organization where you will fall into the trap and give you sensitive information like your credit card information and all those things, and they will convince you in such a manner that you will keep on delivering your sensitive information to them. That is called wishing. फिर होता है spoofing. Spoofing में दो तरह की spoofing होती है, website spoofing, email spoofing. Website spoofing क्या होती है? Domain spoofing. Means what? You will be seeing that the website which you have opened is 100% lookalike the genuine website, but actually it is a fake one, fictitious one. Until and unless you do the careful analysis, you will never be able to find the difference between the two. And ultimately, the change will be the domain name. Domain name is www.mca.gov.in. That is the genuine website. www.mca.gov.inn. Instead of in, it is inn, and you clicked on that website. There you go. You will be end up becoming a fool. Are you getting the point? Second one is email spoofing. Like you will not be able to see the end part of the email. Like say for example, every email from the ICA comes from @ICA.org. But suppose it came from @ICA.in, ICA.edu, ICA.com. We'd never realize that is called email spoofing. Exactly same logo, same content they will copy and it will look like this is called spoofing. This is what do we call spoofing. Are you getting the point? Then cyber attacks can be identity based attacks. What do you mean by identity based attacks? And see, where the valid user's credentials have been compromised and attacker is pretending to be that user. What do you mean by that? Your user ID password has been compromised. And he is going to the bank, he is using the online transfer, pretending that he is you. So he has basically not only got your information, he has stolen your identity as well. That is what do you mean by identity based attacks. Then we have the insider threats. What do you mean by insider threats? Your ex-employees and employees who have left and they were dissatisfied with their termination. So they have an access to some sensitive information and they are going to leak it. They have a sensitive information on your intellectual properties, networks and all, and they're going to leak it. That is why it is known as insider threats. Then we have domain name system tunneling. Means what? The person here, the cyber attack is so good that he will not do anything like a normal hacker. He will create a tunnel below your antivirus. That is why it is called domain name system. Because when you directly attack the domain name, there will be so many firewalls, so many problems, so many questions you have to, so many queries you have to, what do you say, go through with. He's just going to bypass everything. So suppose this is your domain, this is your domain. He's going to create a tunnel below your what? Domain, and he'll be able to extract your data with it means he is successful in bypassing your total queries and your total firewalls, and without making you understand and without letting you know कि boss your data is already getting compromised, and bit by bit he will keep on getting your data. That is called DNS tunneling, right or not? Then IoT attacks. IoT attacks means what? Suppose IoT का मतलब होता है Internet of Things. Means what? Your home appliances, your fan, your AC, your computer, your TV, everything is connected with Wi-Fi. Imagine just a single compromise on your network. He got the access of your device, where your all the other electronic devices, be it your computer, be it your laptop, be it your washing machine, be it your AC, be it your alarm system, be it your cameras, everything is attached to that network and he has an access of that network. उसे बोलता है IoT, Internet of Things. So boss, you will not be compromised on one area, you will be compromised on both. Suppose he changed the main door lock system only. He changed the main door lock password only. You will be thrown out of your own houses only. That is the kind of attack that is called a IoT attack. Now, what are the stages of cyber attack? Assessing the cyber risk. First of all, you have to understand whether the cyber attack is relating to ransomware, phishing attack or insider threats. That is how you can assess the cyber attack. The impact of such cyber attack, is it, now impact of cyber attacks is too big. You think that okay, maximum kya ho, data recovery. Na. You will be going for the fines, penalties imposed by regulator. You will be having a reputational risk. आपके ऊपर news आएगी and you will be having the adverse comments in the media. Right or not? On you, investigation will be taking place, inquiries will be taking place, customers will sue you, litigations will be there, reputational risk will be there, goodwill damage, everything. Now see, fines and penalties, regulatory cost, business interruption and operational cost हो जाएगी. Second thing, data loss and reputational loss, litigation costs. So many people will file the case against you because their sensitive data got lost because of your entity. Suppose SBI ke through all the account holders and nominee and login credentials will get lost or will get compromised. Everyone will be suing SBI because lakhs and crores of money is on the brisk now. Next, intellectual property theft loss हो जाएगा, ransomware data theft loss हो जाएगा, incident response cost, investigations and remediations will take place. Breach of privacy, आपका personal data of the consumer will be hijacked, that can be misused. So first you have to assess the cyber risk and then you have to understand the impact of cyber risk. Once you understand the impact of cyber risk, then you have to start managing the cyber risk. कैसे मैनेज करना है? साइबर सिक्योरिटी प्रोग्राम, साइबर फोरेंसिक प्रोग्राम्स को टाइट करो. Ensure that you should educate your staff about that, obtain the understanding on them, right or not? Make sure that you question whether your capabilities are good enough to attack or to prevent these cyber attacks or not. Align your cyber security controls with your goals and objectives. Understand the accepted risk and document compensating controls. This is how you manage your digital environment. I hope you are getting everything. Next one, cyber security framework. अब cyber security framework क्या होता है? It is divided into what? 5 topics. What are the 5 topics? Topic number 1, identify your cyber frame, identify the risk. Second one, protect the risk, detect the risk, respond to the risk, and recover from the risk. Now, say for example, cyber attack has taken place. So first of all, identify the risk. Check whether the entity's existing reps are good or not, whether the management strategies were developed or not, whether periodically risk assessments have taken place or not, whether the results of that risk assessments has been intimated to TCWG or not. This is called identifying the risk. Second thing is known as what? Protect the risk. Protect the risk means what? Educate your staff, give them the adequate training. Ki boss, the moment this kind of cyber attack you will get hinted upon, the moment you see red flags, you immediately shut down the computers. Give them the education and training to do all those necessary things which they should do when the moment they see such kind of attacks. Am I correct or not? Whether effective data control system has been implemented or not. Next point is what? Detect the risk. What do you mean by detect the risk? Whether the controls have been installed to detect any cyber stack. Like say for example, if someone will try to go and log into my computer or log into my what do you say mobile, I have a software installed in my mobile and laptop. Automatically their photographs will be taken without making them realize that they have been snapped or they have been imaged. So the moment I'll open, there will be somebody try to have an access on your computer, and I'll click the button, and automatically the person's photograph will come into the picture. Who tried to access my computer, who tried to access my mobile without making me know aware of the fact. That is called detection of the risk. Whether the timely disclosures have been made to the authorities or not. Did you check the impact of business? Impact of such risk on the business has been analyzed or not. Whether necessary updates, patch management has been done or not to defend those vulnerabilities. चलो ठीक है, detect कर लिया. Now it's time to respond. When you know that cyber attacks are happening, you should immediately respond to them. How quickly you responded to those things? How the incident have happened? Who has happened? Where it has happened? Where was the leakage? Immediately response team should be established. Whether it is immediately communicated to TCWG or not. Whether the severity of the attacks was checked and responded accordingly or not. Whether assessing the cost associated with it. Just now I told you, reputational cost, litigation cost, what do you say, vulnerabilities, so many investigation costs. Are you getting the point? Fines and penalties, so many costs will be associated. And चलो ठीक है, हमने recover कर लिया, respond कर लिया. Now it's time to recover from the risk. How quickly you can ensure that your business is up and what? Running. Right or not? You have to have a good recovery and restoration backups systems. Right or not? Whether the recovery plans have been implemented to overcome the impact or not. Whether the necessary improvements like patch upgrades, better controls, improved technology, antiviruses, etc. has been implemented or not. This is what you really need in your entity. Right or not? Next thing, control considerations for the cyber risk. Now, what do you mean by that? Now, always remember one thing. The biggest of the biggest risk comes when you outsource your cyber security. When you outsource your cyber security, you have to check various things at the vendor setup. What are the things to be checked? Who is responsible for making the changes in the master file? Whether the authority is still there with the user entity or authority is with the SO. What is SO? Service organization. Right? Is the process centralized or decentralized? Is the terms and conditions good or not? Is the level of internal control system which are imposed by the vendor are looking good or not? Whether the outsourcing was the right decision or a wrong decision? Should you have developed your own in-house team to take care of such security risk or not? All that comes under the vendor agreement. Second thing, controls around electronic fund transfer. Educate your staff. Be aware of phishing mails, be aware of wishing, be aware of whaling mails. Do not do the electronic transfer unless it has been authorized by the person. So what is to be checked? Proper training and education should be given to the staff who are responsible for the wire transfer, electronic bank transfer. Do they know about such threats and smishing scams or not? Whether authentication protocols were planted or not. Double approvals dal do. Suppose if you want to withdraw, if you want to transfer some amount, you are allowed to do the authorization. Take the double approval from the higher authority. These are nothing but called control activities only, na, by which you ensure your more protection. What systems and technologies are you using? That should be taken care of. Then controls around the patch management. What do you mean by patch management? Suppose your softwares needed a patch upgrades or software needed the leakages or updates and all. Whether does entity have any patch management program or not? Whether the unapplied patches or unapplied upgrades have been taken care of now, whether the vulnerability test runs were taken place before applying the patch management, whether the missing patches or unapplied patches were identified periodically or not, how entity was notified about such patches by the external vendors. Just say, let's say for example, what is the benefit of buying a genuine Windows? The benefit is what? Microsoft will keep on sending you the mails. These are the leakages in your software. And they will also send you the patch updates. And until unless you don't do the updates, now they will not allow you to run your computer. They will shut down your computer. They tell you, forcefully tell you, first do this patch management because we don't want your data be on the vulnerability risk. That is what the benefit of buying the genuine Microsoft software. But if you will find out or download the crack version from the internet, or somebody who made a computer for you, you got it assembled and he installed it, you will never get the patch manager because they only send those emails to those genuine buyers who have genuinely bought the. हार्डली कितना डिफरेंस आता है 8 9 10,000 में मैक्सिमम आपका जेन्युइन माइक्रोसॉफ्ट का ऑपरेटिंग सिस्टम आ जाता है और आप नॉर्मली अब वहां पे आप 1 लाख रुपीज सिस्टम में इफ यू आर इंकरिंग definitely you can incur the another 7 8,000 to at least get your vulnerability reduced to the lowest acceptable level. This is called patch management system. Periodically check होना चाहिए कि whether the leakages and lapses, unapplied patches and unapplied updates have been properly taken care of not. Now next important topic is remote audit. This is became very popular due to the what this particular our coronavirus के time पे. Now, what do you mean by remote audit? Remote audit means somebody from, what do you say, the client is sitting somewhere else and the auditor is sitting somewhere else, right or not? But the biggest advantage of this remote audit is it increases the scope of hiring the auditors from the different parts of the country. Because when it was a fiscal audit, you were only restricted to the auditors of your nearby areas. But due to the remote audit, what is the advantage? Due to the remote audit, the advantage is that now you can hire the auditor of any particular city who is very popular or particular state who is very popular to get it done. तो इसके advantages भी है, इसके disadvantages भी है. So remote audit, also known as virtual audit, where the auditor uses online or electronic means to conduct the audit. जैसे Zoom पे audit करना या Google Meet पे audit करना, could be partially or completely virtual. Auditor engages technology to obtain SAE, also to perform the documentation with the auditee's participation. Pandemic situation like COVID-19 has changed the entire process, due to which the new set of audits like remote audit have been appreciated by the clients as well. Now, next thing, considerations for the remote audit. First one is what? Feasibility and planning. Have a good discussion between both of you. Are you getting the point? Have a good discussion between client and you. Is it feasible, and make a proper planning. What do you mean by that? What could be the arrangements between us? Which platform we are going to use? Is it going to be a video conferencing or not? What controls we have to maintain? Are you getting the point? Data change mechanisms, data exchange mechanism, access authorization requests, how we are going to deal with the exchange of information. All that comes under what? Feasibility and planning. This is what the auditor and auditee should do with each other. Second thing, confidentiality on security and data protection. Like, say, for example, no screenshots are allowed. Are you getting the point? The moment you have evaluated the audit evidence, it should be deleted from the platform. And if you are sharing the data, should be shared on the encrypted form. No one will do the voice recording. No one will do the screenshot unless permitted by the client or permitted by the auditor. I'm not saying it is only from the client's point of view. It should be from the both point of view. That is called confidentiality and security data protection. Then risk assessment. Clear, consistent communication should be there between both the parties. Assess whether the remote audit would be sufficient. Obviously, remote audit would not be sufficient where the physical verification is definitely required. Check whether your objective has been served or not with the remote audit. Is the documentation of both the parties representative shall be what? Included. अब इसके advantage क्या है? What are the advantage of remote audit? Advantage number, no travel time and travel cost is involved. Work from home opportunities there, more comfortable and flexibility, better collection of audit evidence over the more period of time. First hand evidence will be available because you have an access to the direct IT system. It widens the scope of selecting the auditor globally. That's what I was telling you. Okay, now I no more restricted to hire an auditor from my city only. I can go for the higher one also. Not disadvantages. Network issues may interrupt your interviews or meeting. Suppose suddenly current chala gaya. Right or not? Non-visibility of audit is body language. Right or not? Second thing is what time zone differences may affect the efficiency. वो वहाँ पे morning में है, मैं यहाँ पे evening में हूँ. So time zone differences may be there. Additional planning and procedures may be required. Yes, confidentiality and security may get compromised. Suppose अगर मैं उसके बिना पूछे video recording if I am doing and any snapshot or any kind of screenshots I am taking, audio recording I am doing, compromise हो सकता है. Access to IT sensitive information may not be allowed. So he may say that, sir, please come physically, but on the remote audit, I will not allow you to have an access on that. Then cultural challenges like no knowledge of local regulation laws could impact the audit. Suppose you don't have the knowledge about the local laws which are applicable in that particular area, so that will definitely impact the effectiveness of your audit. Then no physical verification of inventories and asset. That too very much tangible that this is not going to take place. So this is what do you mean by the term called what? Remote audit. Sir, chapter में कुछ भी difficult नहीं है. Lengthy है बस. Everything is very important. Everything is very important. I would say that if I would have been your examiner, I minimum will ask 8 marks from this chapter. Minimum 8 marks from this chapter. Are you getting the point? Now we are left with, I think, 2 topics: emerging technologies in auditing, where we'll do data analytics, blockchain, and everything. And finally, we'll understand new generation audit. What we'll understand? Yeah, new generation audit. And then our topic called digital audit will be over. Right, everyone? So let us understand. Let us take a break of 2 minutes and let's get back to the completion of this chapter. Then we'll start with the ESG audit once we are done with this particular chapter. Clear? Now, okay, so everyone, let us understand the next topic in the digital audit. The digital audit means the next topic which we are going to start is known as emerging technologies in audit. Now, these are the various technologies which all we should be aware of. At today's chartered accountant in practice, if they really want to make a big name in the market, they should know all these technologies. Now, there are few technologies like blockchain, non-fungitive tokens, right? Robotic process automation, and digital analytics, digital mining, various kinds of software which are available in the market, how we can use these card technique softwares to make the best utilization of our what? Auditing practices. So all those new emerging technologies we should be in touch with. Like the first emerging technology which we are going to start is known as data analytics, which is also known as data mining. So basically data mining hota kya hai? Data mining is nothing but mining the meaningful information, extracting the meaningful information out of the raw data system is known as what? Data mining. Now see, generating or preparing the meaningful information from a raw data system using processes, tools, and various techniques. It involves analysis of large set of data, finding out the actionable trends and insights and drawing conclusions so that informed decision making can be taken. See, try to understand. Today's entities are becoming so huge that it will be very difficult for you to understand that data is going to be in huge volume. And as their data is going to be in huge volume, but we are only looking for the meaningful information. So for that, it's like a mining, like we do the coal mining, we'll do the gold mining. We are now doing the data mining. We are going to get the extract. Now in the gold mining, what do? We extract the gold. Out of the total mining, what we do is nothing but the main meaningful thing for us is gold. Same is the case here. The meaningful thing has for us here is what? That information which we are looking for out of the total raw data system. Now, it enhances greater efficiencies and more accurate findings from the review process, right? It helps in discovering and analyzing the patterns, right? So we can do the trend analysis, we can do the ratio analysis. It gives us a pattern, and it also identifies in anomalies. Anomalies means very small representative of a projected material misstatements in the population. Extract other useful information, right? Now, in audit, it is also known as CART. What do you mean by CART? Computer aided or computer assisted audit techniques. We also call it as a CART, which minimizes the scope of missing out a highly risky area. Now, we have the various data analytics tools which are available in the market. First one is known as ACL. ACL stands for Audit Command Language. Now, it is a data extraction analysis software useful for the fraud detection, prevention, and risk management. So, what is the work of this particular software? Fraud detection, fraud prevention, and risk management. So, what is the name? Audit Command Language, right? Next one helps in finding irregularities that indicates the material weaknesses and material frauds. X is mostly used in the logistic departments. Logistic means basically inbound logistic and outbound logistic. It provides a fully transparent audit trail of every action, makes it easier for the user to learn. And remember one thing, these softwares are not that much technical in nature that you can't learn them to run. Right now, they're very easy. Just an adequate, a simple training or a simple education you need to learn how to run these softwares. And there you go, you will be able to complete, or you will be able to make the exhaustive use of these softwares. They give you the transparency, makes it very easier to learn because no expertise required in the learning it, right? Useful for automation of, if you want to do the automation of reconciliations, automation of consolidations, automation of system irregularities, automation of continuous audit. So daily kind of works you want to, daily vouching related works you want to do the in an automated manner, so that you can save your time and put that time in some more meaningful area. Utilize that time in some more meaningful area. For that, we have the X. Next, we have the Power BI. Power BI stands for Power Business Intelligence. This is basically used for the apparel industry to check the trends of the sales. Now, see, you all know that in the apparel industry, in the fashion industry, the trend changes as per the customer likes and dislikes. There are preferences and no preferences, right? And it keeps on changing, right or not? To understand ki what is the trend going on, is the revenue matching with the trend or not, all those things we need to analyze as an auditor. If your other company in the same industry is having this much of revenue, why the reason you are not able to get it? So all these kind of analysis we can do it with this Power BI, Power Business Intelligence, right? Provides non-technical business user with a tool for aggregating, analyzing, visualizing, and sharing of data. Basically, presentations will become more easier. We'll be able to understand and analyze the patterns more easier. So what is the name of the software? Power BI. So remember one thing. First one is ACL, Audit Command Language. Second one is X, which is basically used for the logistic departments. And third one is basically Power BI, which is basically used in the apparel industry. Then we have the caseware used by the accounting firms, basically government entities and government organizations, where the accounting is one of the biggest issue. For in those kind of entities, we can use the caseware. Caseware is used by the accounting firms, government corporations for accounting solutions, helping conducting auditing and assurance engagements more quickly, more accurately, and more consistently, and also helps in the better informed decision making. Are you getting the point? That is what the reason behind. What is the reason behind caseware? So these are the various automated tools which are available and digital, like under the concept of data mining and data analytics. Now, automated tools in auditing, IoT. IoT, I already told you, Internet of Things hota hai, where your all the home appliances, your security system, your mobile phone, your laptops, every electronic appliances in your house is going to get connected to the same Wi-Fi. But the biggest issue with this IoT is if someone will have an unauthorized access to your Wi-Fi system and to your device, then your all the things will be compromised. So IoT is all about connecting any device to the internet, like cell phones, air conditioners, coffee machines, etc. What are the components of IoT? Matlab, what do you need for the purpose of IoT? You need data collection, you need data analytics, you need connectivity, you need a people, and you need a process, right or not? If all these five things are available, these are the five components of running a Internet of Things, right? Data collection, it will keep on collecting your data. Say, for example, you do not want your AC to go beyond 25. So it will catch your data, analyze your data, and will keep it in you. Keep it in the device. Like as and when the temperature goes less than 24, it will 25, it will automatically switch on your AC. Like say for example, for how long you watch the TV, for 2 hours, automatically the TV will be switched off. This is called Internet of Things, everyone, right or not? It will collect your data, it will analyze your sleeping pattern, it will analyze your data in every manner, and we need a good connectivity of Wi-Fi if you want these things to be taken care of. And people we need obviously to interact with this particular software, and then we need a processing. Right now, There is a profile of entity changes to the exposure of new laws and regulations in relation to IoTs. IoT risk are device hijacking. That's what I told you. If your simple device will be hijacked, you will be denied of your own services only. So it may result into data theft, it may result into device theft, it may result into data breaches, it may result into denial of services. Are you getting the point? These are the various problems you will face in the IoT Internet of Things में. Example, smart home security system including doorbell cameras and viewing feeds when they are away from the home. इससे फायदा क्या होता है? Let's say for example you have kept a maid at your home or servant at your home, and you would like to see are they doing their work properly or not. So you can keep the camera installed at your home, and your phone is also connected with the internet. So with the integration of those cameras on your phone, you can simply see the feed of your house, like being away from your home, what is exactly happening at your home place, right? Now data from machines can be used to understand when the equipment will break down, to give the advanced warnings to the manufacturers to reduce the miss time. Now see, it can also be used, like if you use the IoTs in the software. So like say for example AquaGuard, like say for example water purify system, washing machines, when nowadays they are coming with the AI, and they will simply tell you like if it is overused or some basic part is required to be changed. So it will give you the red warning saying that okay, service is due, or okay, part is required to be replaced, or TDS in the water has been reduced, or minerals water has been reduced, and this major part of the AquaGuard is required to be changed. So all that is possible with the help of IoTs, Internet of Things, everyone, right? Next one, artificial intelligence. What do you mean by artificial intelligence? You already know that artificial intelligence is something which can extract, analyze, and think and learn. If a particular software can do these four things, it can extract the data, it can analyze the data, it can think the data, and it can learn the patterns out of it. That is called artificial intelligence. Understanding your needs is nothing but called artificial intelligence. Like our mothers know, like what do you need in the breakfast, what do you need in the lunch, and what do you need in that what do you say, basically the dinner and all. Same way, if the computers will come to know, if the software will come to know about your needs and requirements, that is nothing but called the artificial intelligence. Is it clear, everyone? So this is what you mean by artificial intelligence, something which can extract the data, analyze the data, think and learn your patterns. Now it refers to machine or a system that can think and learn using data analysis and algorithms to make decision based on your predictive methods. Like Instagram does that for us. Facebook does that for us. The moment you will like a particular post, you will find that automatically the same category of the reels and the same category of the post will start coming in front of you, because they will understand your liking pattern, disliking pattern, right or not? So all these are known as algorithms by which they can think and learn what are the basic requirements of this particular user. Now it is about learning the patterns, behaviors over the time by developing a complex algorithms, right? Example, Siri, Alexa for the home management is AI. Self-driving cars for the construction of maps. You know that Google Maps are nothing but drawn by the self-driving cars with having 360-degree cameras, so that they will keep on catching the areas nearby. They will keep on taking the pics nearby. That's how they create a satellite map for us to use it for the future purposes. Virtual travel booking agent, like say for example, right from the, a bot will be installed in the booking system, right from the query till the booking confirmation, everything will be done by the virtually by your bot, and they will keep your patterns ready, and they will keep your algorithms ready. Like say for example, on which destinations you would like to go for a holiday, so they will keep it ready, all those things. Next one, chat GPT and marketing chat box. Chat GPT तो आपको पता ही है कि nowadays you just name the thing, it will be available on the chat GPT. You want a 10,000 words of essay on something, you want a 20,000 words on particular area, then automatically chat GPT will make it according to the requirement. This is nothing but called the use of artificial intelligence in the day-to-day activities. Manufacturing robots are there, like painting and mantling and dismantling of the equipments will be done by the robot. Nowadays you can see that in the automobile industry, robotics are being used to make the manufacturing of the cars and all. Self-deployed robots like vacuum cleaners. Yes, this is the recent development. Vacuum cleaners are now going to be planted at the home. They will first go and stuck to the areas. They will now, if you switch on a automated vacuum cleaner, it will take the area of your house. It will go to the each and every corner, and now once the map will be installed, or once a map will be created inside the brain of that vacuum cleaner. So every day you just set up the setting over there. Every day morning 7 o'clock it will wake up. The vacuum cleaner will wake up on its own and will get it out of its charging station. It will do the needful cleaning and sweeping and all those things. And finally, once your everything is over, it will go there and set up to its charging station again. This is nothing but called artificial intelligence being used in the day-to-day electronic devices only. The next point, recommendation of flights based on your browsing history. We already know that once we browse a particular flight, then it will start recommending you the flights at the various places also. Now, what are the auditor's implications and considerations relating to AI? Reviewing AI to understand whether any intended bias is present or not. Auditor must assess the effectiveness of what algorithms. So, if any entity is using its business process automation with the intelligence, that makes it IPA, intelligence process automation. So, we have to check that these algorithms should not be including the management bias, or they should be looking genuine. Next one, auditor must assess the effectiveness of what algorithms. Auditors should confirm his understanding of how the use of AI affects the entity's flow of what transaction and analytics used by the whom management. Then understanding the risk of artificial intelligence to make the necessary changes in audit approach. Right now, following up the AI risk. What is the first AI risk? Main issue is security, because AI makes more usage of data from sources with more entry points, which poses a great potential risk. What do you mean by that? See, AI is going to use your information from so many sources like internet, from the Google, from here and there. So due to so many entry gates, the threat of having the more cyber attacks will always be there, because it will keep on fetching your information from your LinkedIn profile, from your Instagrams, from your Facebook. So entry points are so many, so obviously it will become more prone to the cyber risk. Next one, if it is badly configured or malfunction, it could be harm the people before the problem is what spotted, and data privacy may get what compromised. So this is what do you mean by all data analytics and data mining you should have known. Second point, highly important, that is known as blockchain. Blockchain is nothing but it's a digital ledger that records the transaction across the network of what computers. Are you getting the point? You all know that basically when we use this word called blockchain, the very first thing comes to our mind is cryptocurrency, right? Now it stores the data in the blocks, which is linked in a chain. That's why it is called blockchain. It stores a data in a block. It stores the data in a block which is linked in a chain. That is why it is known as what? Blockchain, making it secure and what? Making it secure and transparent. Now, oftenly associated with the cryptocurrencies. It is oftenly associated with what? Cryptocurrencies, but nowadays broadly being used in the supply chain management and voting systems as well. There are various concerns like confidentiality. Yes, obviously, there will be so many concerns like confidentiality. But let me tell you one thing, blockchain is nowadays the most secured, I'm telling you, the most secured encrypted data-based chain which is available in the market right now. It is very difficult to intrude into the blockchain until unless you are too much smart. Are you getting the point? You have to be too much smart to go and have an access of the data of someone in the blockchain, because your cryptocurrencies in the blockchain, your so many businesses are in the blockchain. So blockchain is basically being treated as the most safest version of keeping your data protected. But yes, even though it is the safest one, there will be always a loophole. So there are various concerns like data confidentiality, privacy, which cannot be ignored, and weak blockchain application is what auditors shall not overlook. Ensuring the data of the entity available on the blockchain shall not be lead to any kind of what non-compliances. So many regulatory and governance compliances are also going to be there along with the blockchain. Now, blockchain ka risk kya hai? The biggest risk of the blockchain is reversal is not possible. Too much of the usage of blockchain. Let's say, for example, you forgot your own login credentials. You forgot your own, login ID and password. You will be thrown out of your own structure only. Are you getting the point? You will be thrown out of your own structure only. So what I was saying that in the blockchain, the biggest problem is that if you will be using it too much, if you will be forgetting your own login ID and login ID credentials, you will be thrown out of your own particular access only. Now see, as it is operating through nodes, it may expose the entity to cyber attacks and data hacks. Obviously, blockchain is nothing but which is available in the cloud computing kind of thing. So definitely cyber attack to everywhere will come, be it a data analytics, be it a blockchain, be it anything, right or not? Its inability to reverse the transaction and restricted access are the strengths of the blockchain. I just not told you ki going into and inside the blockchain is very difficult, but if you are able to use the blockchain in a proper manner and by chance you forgot, now see, but at the same time there is a possibility that entity may get logged out of their own data, therefore it requires a what? Contingency plans. So I'm telling you, it's too hard to break that key, even though you are a genuine owner of that particular particular encrypted data, but if you will forget your own credentials, you may get out of your own access itself only. You may not be allowed to have an access on your own. Now, what do you mean by NFTs? NFTs, we know that NFTs are non-fungible tokens. Nowadays, you might have seen that people are creating the art, people are creating the useless things, and they are just putting it online on the blockchain purpose and selling it. Like say for example, if I'll create this art now, right? I created this art. I will take the screenshot of that. Like that exactly. I will take the screenshot of this particular thing and I'll put it as an NFT, non-fungible token in my name. And I'll put the rate as $1. Are you getting now? People will start buying it. As and when the people will buy $1, the money will be credited to my wallet. Are you getting the point or not? Anything on the internet is now saleable. Anything. People are selling their hair, people are selling their earwax. I've seen people doing these kind of nonsense things on the internet. People are selling, I mean, you can't even imagine what they are selling. Selling their helmets, right or not? Autographed helmets. People are selling their nails, cut down nails and all. Anything online with the form of what? NFTs, non-fungible tokens. Now see, NFT represents ownership of a digital asset which is unique like an art. It could be an art, it could be music, anything. It could be collectibles, it could be even a virtual real estate on the blockchain. NFTs are indivisible and cannot be exchanged. Each NFT has a distinct value which cannot be replicated and makes them unique and proves your ownership of digital asset. तो हर एक एनएफटी का एक अपना यूनिकनेस होता है. यू कैनॉट से दैट यू कांट कॉपी इट. बेसिकली इन्फ्रिंजमेंट ऑफ एनएफटी इज नॉट पॉसिबल. It contains a digital signature which cannot be forged. That's what just now I told you, and also contains the official owner's name on it, which can be used only at a time, right? Now, what are the risks associated with NFT? Challenges with respect to ownership and copyright. See, US country like developed nations में it is still working very well, but India में अभी भी acceptability is required. Governance rules and regulatory rules are required, right or not? And obviously copyright infringement. So far, तो intellectual property rights में NFT has not been included. Security risk and online frauds may take place. Market is not wider. It does not have an acceptability at a huge. Now, we need time to get adaptive to these things, right? So that's the reason the market relating to the concepts like blockchain and NFTs in India especially is still very limited, right? And auditors need to check comprehensive code review verifying the safety of a word token. We have to check that if any entity is using the NFT technology, then we have to check that whether the token is properly secured or not. There should be a valid contract, data privacy, and what potential cyber threats relating to NFT. Now, if in case you are using the technology of blockchain or NFT, how to do the audit of an entity which is using the blockchain or NFT as a technology. Now understand, an entity whose operations are integrated with the blockchain technology following shall be the checklist of an auditor. Point number one, understand their blockchain technology first. Like what do we do in normal audit? Obtaining the knowledge of client's business. So obtaining the knowledge on blockchain technology, including its scope, objective, and key process. What is the parameter within which he is using the blockchain technology, what is the actual purpose of using the blockchain technology, and how many processes are involved. Reviewing partnership agreements, if you have taken it on like a tender basis, or if you have taken it on service level agreement basis, then in that case you have to check their legal agreements, you have to check their lawful documentations, contract papers to understand the relationship between the parties, like a relationship between a user entity and service level agreements. Identify the specific blockchain technology used and its functionality. There are thousands of blockchain technologies available in the market. What your client is using, that you have to understand. So basically the step number one is acquiring the knowledge on the blockchain technology, understanding its scope, objective, and key processes. Next, assessing the internal control system. Check that whether the internal control system is capable enough to use that blockchain technology perfectly or not. That is what you have to check. Now see, Review their policies and procedure, assess their risk management practices, responsible authorities. Are they being educated enough? Are the internal control systems are operating effectively enough to handle the blockchain technology? Are the control systems are aligned with the blockchain technology or not? That we have to check. Next point, review security measures, testing transactions validity and accuracy. Like we do the TOCs, TOD, TOAs, TOTs and TOBs in our normal audit. Here also we have to test the blockchain technology. Are the risks being properly mitigated or not? Do they have the risk management policy or not? Are the controls effective enough to reduce the blockchain technology risk related to the lowest acceptable level? Check the validity of the transaction recorded, checking the completeness of the transaction, checking the accuracy of the transaction. All that things which we used to do in testing of details, same thing we have to do it when we are checking the client's business being based on blockchain technology, right? Checking the cyber threats, unauthorized access, potential vulnerabilities of the blockchain. Next one, evaluate the compliance and regulatory requirements. You have to check that is it properly reporting obligations, then reviewing their documentation, reviewing the procedures, ensure that the blockchain technology what they're using should be industry specific, right? For the leather industry, there might be separate technology of blockchain. For the garment industry, there should be a separate kind of blockchain technology. The blockchain technology should be industry specific. That we have to check. Business continuity and disaster recovery. Is their blockchain technology is good enough? Like in case any data theft has taken place, data integrity or protection has been compromised, data has been lost, will you be able to recover from that financial shock or not? Will you be able to up and run your business in a very shortest period of time or not? Do you have the recovery and restoration plans or not? All that things we have to check. Evaluate the backup recovery procedures, testing the effectiveness of recovery plans and response procedures, report the findings and recommendations. Finally, we have to collect the findings, means our evidences relating to the blockchain technology, and we have to report it in the obviously in the form of written report along with our recommendations, and do the follow up if you think that there are various flaws you found in the blockchain technology. Are they taking the proper careful action on the same or not? This is what do you mean by doing the audit in a blockchain. See, auditing procedures and auditing concept will remain same irrespective of the fact you are talking on what. Are you getting the point? Or be it a blockchain technology or be it any other technology, the processes of audit will remain same. Knowing the client, testing the effectiveness of controls, understanding the threats. Are you getting the point? Checking whether they are having the recovery and restoration plans or not. Evaluating the complications involved, and finally reporting the findings. Like what we do in a normal audit, right? Now, RPA stands for robotic process automation. I already told you, robotic process automation means when making the use of the bots, making the use of the bots for the daily work like processing, calculations or consolidations, reconciliation, like day-to-day functionalities you can do, give it to the bot system, and you will be saving a lot of time, effort and energy. That saved time, effort and energy, you can use it for the better areas. You can effectively use it for the more riskier areas where your more attention is required. So you can give more time to the those particular areas where it is required, right? Now see, it is an automation of repetitive processes with the use of what software technology, having integration of human actions, digital system and digital software. It makes the application system much faster with 100% reliability and precision. Are you getting the point? If the bots will do the calculations, if you calculate, now simple सी बात है, human calculation and the calculators based calculations, which one will be better? Tell me, which one will be better? Obviously, calculator-based calculations only will be better. So these kind of general things like reconciliations, calculations, additions, subtractions, consolidations, that we can leave it on the RPA. And it will definitely produce you the 100% accurate result. Am I correct or not? So that whatever the time we are saving, we can use that time for the more attentive areas, right? Now, RPA risk, what are the RPA risks? First of all, the biggest risk of RPA is buying a wrong tool. If you will end up buying a wrong tool of risk process, robot process automation, then in that case, your total money will be wasted. Making wrong assumptions is one of the risks. Taking shortcuts, compliance framework. If you are not able to understand what rules and regulations you have to follow if you are using the RPA, then chain management risk are the, see, you are RPA, your entity is RPA, but is your distributors and is your suppliers are also RPA or not? It's a value chain now. There's no point of becoming an RPA on your own if your value chain people are also not the RPA based. Then improper selection of what key performance indicators, setting wrong expectation, unrealistic goals. If you'll set up ki RPA will do this much and that much, and obviously cyber security threats which you have. So these are the various robotic process automation risks which are involved in the RPA, right? Now, RPA may, let me give you the example like passenger ticket booking, right from your query till your booking confirmation. Now, see, there will be a user interaction which will be asking the details of the passenger. What are you looking for? Second thing, natural language processing. Even if you are writing your query in your own language, there will be some little bit of AI based technology which will understand your words and they will understand your requirement. That is called natural language processing. Queries handling, yeah, you are making the queries like relating to fares, relating to date of journey, relating to, seat preferences, queries and all. I'm telling the ticket based RPA automation. Booking process, collecting your data like your name, your age, and your other credential, KYC documents and passenger information. Payment processing, like taking you to the area where the debit card, credit card option will be given. Everything nowadays, you don't need a human intervention. You go to make my trip now. Go to make my trip right from the inquiry till everything is fully automated. Are you getting the point? They will take your query and all, providing you and taking you to the areas where the payments will be done. And after the payment, ticket confirmation will be there. There will be a bot who will be processing the whole ticket confirmation for you. This is what is happening nowadays. This is what do you mean by robotic process automation. Right from your inquiry till your ticket confirmation, everything is automated. And I'm not saying that that is wrong. See, these kind of minimal kind of processes where the human intervention is required very less, you can go for the robotic process automation, but keeping the RPA risk in mind. That is what you have to see. Next one, what are the objectives of auditing digitally and control considerations? See, it's very simple understanding. Digital auditing digitally is nothing but the replacement of the traditional approach of doing the audit. So you have to understand that do you really need in that or not? Gain an understanding on how we can evolve ourselves, how we can you make the betterment of the use of the card techniques in doing the audit in a better manner. Now see, gaining the holistic understanding of changes in the industry. If you will not understand what is the industry's requirement today from you as an auditor, you will not be able to adapt the new technologies and IT environment to evaluate the design of his audit procedures. You have to make sure that you have to upskill your team and all those things. Unless and until you will not upskill your team relating to IT infrastructure, you will not invest a good amount of money in IT. I don't think so that you will be able to survive in the environment of digitally auditing digitally. Must consider the risk resulting from implementation of new technology and how they different from traditional system. Obviously, we have already understood in the beginning of this chapter कि various challenges you will face while what benefit you are looking for, what is the use of that, right or not. And remember one thing, reversal is very difficult. And having a technology but not using it is going to be the waste of money. So you have to understand so many implications of changing yourself from the orthodox approach of auditing to the new approach of auditing. Right or not? Next point, must consider whether the digital upskilling specialists are required and understanding the impact of such new technologies on operational effectiveness of carrying out the audit. आपको देखना पड़ेगा कि do you have such kind of clients where necessary upskilling of the digitalization of your staff is required or not. Suppose your client base itself is very much manual, so you can postpone the upskilling of your staff. But if you think that your clients are also now becoming more like robotic RPAs and BPAs and IPAs, then that's a high time that you have to understand one fact, that you have to make sure that your team engagement team, you should start hiring the specialists and expert from the IT industry, because to achieve the economy, efficiency, and effectiveness of audit, these are the necessary changes we have to make. Right? Next point, considering the IT risk. Obviously, IT risks are nothing but unauthorized access, unnecessary changes to master file. All those things you have to keep it in mind. Data theft may take place, data integrity may get compromised. All those things you have to keep it in mind. Key steps for auditor in changing technology environment. What you need to do in the emerging technologies, in the emerging changing environment, maintain professional skepticism while reviewing the management risk assessment. Now you are being allowed to, you see, professional skepticism is something, be it a manual audit or be it an automated audit. Professional skepticism means having a questioning mind, alert throughout the audit. So be it a digital audit or be it a what? Manual audit, this is something which is expected from you always. Understand the direct and indirect impact of new technologies and how clients' usage is going to affect auditors' overall risk assessment. If the client is too much dependent, the boss, it's high time that you also have to go for too much of updation. If the client is not that much dependent, then you have to check that a little bit of upskilling of your staff is required for that particular situation or not. Understand the impact of new technology on the flow of transaction and design sufficient and appropriate response to the same. Right? And finally, assess the management's process to select and develop and maintain controls and extent of its use. These are the various things you need to keep it in mind if you want to evolve in the changing environment of the audit. Now, the last topic which we are left with is known as next generation audit. What is the name of the audit? Next generation audit. Obviously, next generation audit means what? The today's auditing approaches, including the AI technology, including power based, including data driven based, analytics based, with human touch. Are you getting human led technologies with the power based and all this? So it's a mix of three people. Human led, it should be technology powered, it should be data driven audit. Use of new technology tools in a new generation audit are drone technology. Nowadays, you don't have to go to and visit any particular place to do the inventory checking. You can get the drone technology. इसे बोलते हैं unarmed technology also. We also call it as unarmed technology. Suppose the stock and inventory is lying in a very remote location where you are not able to go and access. Send a drone. You know, not drone nowadays. Send a drone over there and get the coverage done, get the counting done with the help of drone. That is called drone technology. Augmented reality, nothing but, seeing getting into a world which is actually a virtual world, but you will feel like you are making a use of you will feel like you are in reality. But actually, it is not a actual reality, it is a virtual reality. Now, see, allowing user to view the real world with the help of what? Digital devices, right or not? Then virtual reality means better version of the augmented reality where the real world will be replaced by what? Simulated environment, like metaverse is there, right or not? Like Facebook has created a metaverse. People are buying the real estate on metaverse also, right or not? These are the things you need to understand. Example, like going to a 4D theater. Like I know that PVR mein there is one 4D theater. Like if you'll watch the movie now, first of all, though, you have to put the those goggles by which you can manage and understand and feel that particular what do you say that particular visualization along with the sound, along with the smoke, along with the if the rain is happening and they will make sure that clouds bursting, striking of sound will come and they will start pinting some little bit amount of drops of water on your face, feeling that yes, you are actually inside that reality. That is called augmented virtual reality, right? And on making sounds, images, even touch and what smell. If someone is smoking, they will try to create an artificial smoke for the particular concept of smoking, all these things. And obviously, I told you metaverse is now today. Metaverse is a mix of VR and AR, virtual reality and augmented reality, advanced internet technology to allow people to have a lifelike experiences. Now, you see that nowadays pollution, things are becoming congested. It's very difficult to be staying in a city and you want a very calm place, but that is not possible in reality. Now you can only go and access these areas with the help of what? Things like metaverse, where you will create your own world. You want a beach over there, beach will be there. You want a hills on the right side, hills will be there. You want greenery in front of you, greenery will be. Anything you want, that will be created virtually. That is called metaverse, right? What is the usage of metaverse in financial sector? Obviously, nowadays, virtual banking transactions are nothing but the use of virtual metaverse. Now, digital asset management is taking place. What do you mean by digital asset management? Like with the help of blockchains and NFTs, right or not? You can sell your art, collectibles, sounds, pictures, anything, music, right or not? With the help of blockchain and NFT technology, that is called digital asset management. Virtual financial and education training. Now on the Zoom, on virtually only we are training the people by enhancing the conferences, virtual classroom, virtual trading sessions, and virtual financial challenges. And virtual meetings and conferences are taking place. Data visualization and analytics. These are all the examples of what? Metaverse. Then we have the biotechnology. We are integrating the things, right? And now we are trying to develop the mixed breeds and all. We are trying to ensure that things should not get extincted. For that, we are using the biotechnology, quantum technology, traveling the time, right now from one place to another place, trying to reduce the gap, trying to reduce the aging. All these are nothing but the technologies relating to quantum technology. 3D printing, you know that there's a machine which will be, you just set up a thing and put a particular chemical in that. They will develop the 3D shoes for you, 3D goggles for you, 3D bag for you. Anything you can imagine can be printed in a 3D format. But what are the challenges you will face in the new generation audit? Obviously, public safety. See, too much use of AI is definitely going to ruin your privacy. You know that nowadays we can see some incidents which are already available on the internet, like somebody made the use of AI and copied your sound and made the use of that to mint the money, to extort the money from someone, or using your artificial face, right or not, on somebody's body and making the unauthorized things to blackmail you, all those things. Now, see, public safety will be compromised. Obviously, it has to be taken care of challenges. Second thing, cyber security, data privacy, data protection. Your lot of data is lying on the internet. It can be misutilized. Like lack of standardization, right or not, because we need a regulatory authority like blockchain and all. Still, they do not have any regulator. Like for the listed companies, we have SEBI, but for the blockchain and NFTs, we do not have still any regulator. Then technical changes which you will face. So these are the various challenges you'll face in the next generation audit, right or not? So that brings an end to your digital audit. I hope I um, made you understand what was the idea behind this particular chapter. And I already told you it's not a version of your better version of your automated environment. It's completely a different chapter. Very cool and chillaxed and relaxed chapter where you will come to know about those things which we nowadays are listening very oftenly on our like uh, like devices and all those things, right? So that's it for digital audit. Let's start with the next chapter called ESG audit, right? Okay, everyone. So let us start with the Sustainable Development Goals and ESG assurance. So, like digital assurance and auditing, this is also the new topic which has been added in your portion. That is called ESG audit, where the E stands for environmental, S stands for social, and G stands for governance audit. And along with the SDGs, which are nothing but all known as Sustainable Development Goals. But let me tell you one thing: Sustainable Development Goals ka only numbering and naming is there in your portion. Rather, you have the 9 principles to take care of that we need to understand basically here. Now, basically, what is the idea behind this particular topic? The idea behind with this particular topic is to let you know that, boss, it's high time that now these kind of concepts like environmental protection and doing the corporate social responsibility and taking care of your stakeholders, taking care of the human rights, like taking care of the workers in your entity, workmen compensation fund, now they are becoming the very hot topics right now for the corporate culture. So it is high time that corporate culture should stop behaving like a master and servant. They should start giving the equal respect to their employees. They should start behaving good with their workers. They should start paying them the adequate amount of compensations. They should start protecting the environment. They should start doing something back for the society. Because if these body corporates, these manufacturers, these businessmen, right or not, will not understand the need of environmental protection, will not understand the need of social responsibility, then the day is not far we will be like left with no natural resources in our hand. So basically, what do you mean by the term called sustainable development? Is nothing but making the use of the natural resources by the present generation in such a way so that future generation shall not be deprived of these kind of natural resources. We have to make the use of the natural resources today in such a way that future generation shall not be deprived of making the use of these natural resources. So we have to take care of the future generation also as well. As you all know that climatic changes are coming. That is one of the biggest concern in the ESG audit which has been taken for. We have the task force being made for that as well. CSR, corporate social responsibility. We are only creating the nuisance in the society. We are only, doing the deforestation for the development purposes. See, I completely agree that ki economic development definitely comes on some cost, definitely some biodiversity, eco-diversity, ecosystem will be definitely what? Disturbed. But at the end of the day, you have to understand one fact very clearly ki boss, environmental protection, social responsibilities, and doing the responsibly behaving and responsibly accountable and towards your stakeholders is the only three things which can save you from being a wound up or save you from being liquidated. Today's society will not accept those kind of body corporates which are not going to give any kind of benefit to the society. Society is giving the land, society is giving the acceptance, so it is our responsibility. I'm just making you go through what we are going to learn in this particular chapter so that you can understand and you will enter into the zone of this particular chapter. We have to understand one fact very clearly ki today environment is one of the prime concern which everyone has to see, because so many of climatic conditions are happening, like air pollution is increasing day by day, water pollution is increasing day by day, land pollution is increasing day by day, right? And greenhouse gases production is increasing day by day. That's why you might have seen that in India also now majority of the things are now being focused towards the EV, electronic vehicles, right? Electrical vehicles. Like you have seen that Tata Motors is now holding almost in the 80% share in the EVs, and they are promising that by 2030, 60 to 70% of the vehicles which will be plying on the road will be nothing but called electronic vehicles only, right or not? People are also slowly, customer preferences are also changing, because today's customer is educated, is literate. He knows that what are the pros and cons of using a diesel made or petrol made vehicles and all those things. So slowly, customer shift is also taking place. Solar panels are being installed to protect the environment. That is one side of E. Second side of S, social. You have to make sure that boss, society has taken a lot. If today, if we'll talk about the big top 10, 100 or 1,000 companies of the company, like say for example, Reliance, Tata's, Godrej, Aditya Birla Group, all those is Adani, all they became big player. Why? Because society has given them the acceptance, right? And it's an iron law of responsibility that when you become a big in the market, it is your responsibility to return back the favor. That is what is expected from you. Are you getting the point? Then we see that key governance related, boss. You have to maintain the good quality towards your customer. That is called governance. You have to make sure that taxes should be paid on time. You have to make sure that what do you say? Because if you will not give the good quality to your customer, today's customer is your potential investor of tomorrow. Are you getting the point? The one who buys a product from you today could be the potential investor of tomorrow if you maintain your quality. You have to pay the equitable amount of compensation to the workers. You have to respect the human rights, right or not? You have to make sure that stakeholders like shareholders will get the good profitability. You have to make them provide with the dividend provisions, right? You have to take care of your creditors by making the payment on time. So boss, this is completely an ecosystem, ESG, environmentally good, socially good, and governance wise good. So that is what the basic idea behind that. On that, 17 SDGs, 17 sustainable development goals have been made, and total 9 principles have been made. And remember one thing, ESG audit is now made compulsory. ESG is an audit right now. It has been now, like CSR audit, social audit takes place. ESG audit has now been made compulsory in India on the top 1,000 listed entities according to their market capitalization. If you are under the top 1,000 listed entities, the boss, ESG audit is mandatory from you from 22-23 financial year. It means last year itself only has been mandatory. This is a second year we are going to see the ESG audits. And if you'll carefully open the audit report of the Reliance Industries Limited of the last year, you will find the BRSR report. What do you mean by BRSR report? Business Responsibility and Sustainability Report. Seriously, this is the name of the report, BRSR, Business Responsibility and Sustainability Report. So this is what you need to understand. That is what the total content of this chapter which you are going to consume, right? Let's understand what do you mean by sustainable development. I already told you, taking care of today's natural resources by the present generation in such a manner so that we can protect some natural resources to be used by the future generation. It means present generation has to ensure that they should not unauthorizedly or blindly make the use of natural resources. We have to make sure that our future generation should also will get an access to those natural resources. Now see, it means meeting the present needs without compromising the needs of what? Future generation. It's all about ending poverty, protecting the planet, and improving the lives and protects prospects of everyone and everywhere. ESG reporting is broadly classified in three areas: environment, social, and governance. There are total 9 principles. I told you this is there in your portion, 9 principles, but these sustainable goals, sustainable development goals, are 17 in number. So far, the only numbering has been given in your ICA material. There is one full chart is given. I have also given the numbering here. So make sure that you should learn those numbering at least. I'm not expecting you to have a full-fledged knowledge on these 17 sustainable goals, but make sure that 9 principles which you have in your portion, that should be fully inside you, right? And that should be fully on your fingertips, like standards, right? Now, top 1000 listed entities in India as per their market capitalization are mandatorily required to get ESG reporting under the form of BRSR. Just now I told you their audit report is known as BRSR. That is basically not an audit, that is an assurance, and we do have the standards on that. Remember, they are not yet notified to be included in your portion so far. But we do have a standard. If I'm not wrong, I think 3410 is there and 3000 is also there. These are the two basically SAEs which have been recently added to take care of ESG audit, but so far it has not been notified properly. Right on, BRSS stands for Business Responsibility and Sustainability Report. Business Responsibility and Sustainability Report. It's an assurance report. It's not an audit report. Next one. Sustainability is a concept which includes development of present needs without compromising the future, and at the same time, usage of environmental and natural resources rationally and responsibility. Now, ESG assurance includes the first area which includes is environment. Environment में अपने को क्या include करना है? Corporate climate policies. We have to take care of the climatic changes very properly. Energy use policies. We have to look for the renewable energy sources. We have to look for the alternate sources of energy like solar panels and all those things. You have to ensure that our inputs, like instead of petrol and diesel to be run on the generator system, we should go for a corn fuel, ethanol oil, on which the recent development says that yes, these things are possible so that we can protect the natural resources for our future generation. Waste and pollution management policies we have to take. I already told you, air pollution, water pollution, land pollution, everything is required to be managed properly, and natural resource conservations, right? These all comes under the first area of ESG called environment. Second area of ESG, nothing but talks about the social. Obviously environment में treatment of animals also will come. Social के case में you have to understand कि entities relationship, goodwill and reputation with the society completely based upon how good you are towards the society. If you are doing good for the people, for the community, you're creating a less pollution, you're doing some developments, you're making some charities, donations. Are you getting the point? So definitely society will be accepting you with the open arms, giving the more value to the human, having a labor relationships, human rights, all those things comes under what? Social aspect. Now, third aspect is known as governance. Governance means what? Taking care of your practices, behaving in a responsible way, paying the taxes on time, taking care of your stakeholders' expectations, being accountable and responsible even if you have taken the wrong actions. All that comes under governance, making compliance of laws and regulations, right or not? So these are the various ESG, environment, social and governance aspect has been included. So that's why it is known as ESG audit and assurance and sustainable development goals. Now, what do you mean by ESG reporting? It is all about disclosure of the information and data that explains the added value of these three areas in quantitative and qualitative aspects. So basically BRSR report में क्या होता है कि what necessary changes you have made in your business, what you are doing it for the society, what you have done for the betterment of the environment. That data we need to collect and we have to check that कि qualitatively and quantitatively how good you are becoming ESG compliance. Now see, quantitative may includes your key performance indicators, goals and achievement of objectives. Qualitative may how much contribution they have made towards the betterment of the society and environment. What donations you have you opened any new schools or colleges for the betterment of the society or not? Now, what do you mean by SDG goals? I already told you SDG stands for Sustainable Development Goals. There are total 17 in number. Basically, all the goals are going to like ending poverty, removing hunger, ending inequalities. All these goals are nothing but concentrated on again three areas: environment, society, and governance. Now see, adopted by the United Nations in 2015, giving its first blueprint. Total there are 17 in number. The urgent call for the developing nations and developed nations. Because remember one thing, until and unless we will not remove the poverty in our own country, we can't expect our country to be a developed nation. So all the developing and developed nations have to come together and go for this thing, ending poverty, improving health and education. Very important and extreme area of concentration, promoting economic growth, right or not, preserving forests and oceans. You know that icebergs and glaciers are melting because ozone layer is getting depleted. Am I correct or not? We have to stop making the use of greenhouse gases like air conditioners and refrigerators may microwaves may the gases which fumes the which will go, they will go and stuck with the environment and put the holes in the ozone layer, due to which global warming is increasing. All those things are interconnected. We have to make sure that we should make some changes in our business practices so that we can end up achieving all these four objectives. And not only it's a responsibility of developed nation as well as what, developing nations, both have to come together to go for this kind of purpose, right? Under United Nations Department of Economic and Social Affairs, there is a separate division for SDGs, and there are total 17 SDGs. Now see, first SDG talks about no poverty, second one zero hunger, third one talks about good health and well-being, fourth one talks about quality education. The fifth one talks about gender equality. Sixth one talks about clean air and clean water and sanitation. Then affordable and clean energy is talked in the seventh one. Eighth one, decent work and economic growth. These all you need to remember. Just at least the list you have to remember. Next one, industry, innovation and infrastructure. Reduced inequalities. Then we have 11th one, sustainable cities and communities. Right or not? 12th one talks about responsible consumption and what? Production. Consumption of what? Inputs, natural resources. Production. I have to make sure that our product should be eco-friendly, right or not? Climate action. If you think that drastic changes are coming, right? Recently, so many events we are seeing it on the daily basis, like in the deserted area, rains are coming, and snowfall is happening on the area where there it has not taken place in the last 50-60 years. All these are nothing but early warnings of climatic changes. Next one, life below the water. We have to take care of the our oceans and all those things, and the life which is below the water, like all the fishes, mammals, all those people, right? Life on the land, obviously we have to take care of the forestation. We have to take care of like species, that they should not get extincted. Then 16.1 talks about peace, justice and strong institutions and partnership for the goals. So these are the total 17 SDGs which you have to understand. So basically, moral of the story is, and eco-friendly, social friendly and governance friendly you have to be. Now, what are the global trends in sustainable reporting? Now, what do you mean by global trend? Global mean there are total 3 trends which are becoming very much popular. One is called GRI, right, on a global reporting initiative. Second one is called CDP, carbon disclosure projects, and third one is known as IIRFR, International Integrated Reporting Framework. Now, this is the most acceptable throughout the developing and developed nation. Let me tell you one thing. What is Global Reporting Initiative? Reporting on economic and environment and social impacts and address to the stakeholders of an entity. Now, this particular initiative says that, boss, in your audit report, you have to tell that what impact your entity is having on social, what impact your entity is having on environment, what impact your entity is having on economic development. And it should be reported along with your financials to your stakeholders. That is called GRI, Global Reporting Initiative. Second one is CDP, how much greenhouse gases you are emitting to the environment. What is your water pollution content? What is your air pollutants you are emitting? How much? Like, say, for example, if you are establishing a factory in a city, the height of the chimney should be what? 80 meters. And if your same factory is established in the outskirts, the height of the chimney should be what? 50 meters. All these kind of areas are being touched in the carbon disclosure project, CDPs, right or not? How much forestation you have done? Did you take care of the climatic changes or not? What contributions you are making towards your water security? It is to be also addressed to your stakeholders. So various initiatives globally are coming by which they are making aware to the stakeholders that, boss, profit is not the only thing which we should work for. At the end of the day, what will we be doing with that lot of money if we'll not be living enough to enjoy that money? So we have to take care of our environment, society, and we have to behave in a responsible way. So everything is recorded. Financials definitely should be shown to the stakeholders, but along with that, how much impact your entities and manufacturing activities having on climate, water security, emission of air pollution, emission of water pollution, you have it on the people that we have to send. Then IIRF, International Integrated Reporting Framework. This is the most acceptable one, which takes care of the five things. Point number one, organization overview. Definitely will give the details of the entity via this report so that people will come to know that what this governance structure, what are the laws and regulation applicable to that business model, is it a profit motive or is it a social motive, risk and opportunities attached with this entity, and performance outlook and strategies. So this is the most important one which is being recently in India. Also we are following the IRF guidelines only, integrated reporting framework guidelines only. Now what is the evolution of global framework? Now how this particular ESG got evaluated? Now September 2020 में they went ahead with a saying that ki boss, individually a single nation can't achieve ESG or SDGs. It's all the developing and developed nation who has to come together and do the joint efforts. So they concentrate on joint efforts, like joint market guidance we will provide, joint vision towards financial gaps will provide, joint commitment towards its goal fulfillment should be there. So it means it is not possible for a single entity or a single country to come and make the changes in ESG. All the countries put together have to come. Like United Nations also has interfered in making sure that your ESG audit should be implemented as soon as possible. And पते की बात बताओ, India में it already started in the year 2009. First time when the volunteer CSR guidelines were issued by the MCA, Ministry of Corporate Affairs. Slowly, people started accepting it, and now today you see that section number 135, corporate social responsibility, one of the biggest section in your Companies Act. You have to understand that ki until unless we will not educate the people, people will never be able to understand ki why there is a requirement of this particular change in our governance structure. Next point is what? November 2021 में क्या हुआ कि IFRS International Financial Reporting Standard, they proposed ISSB. Again repeating, IFRS International Financial Reporting Standard, they proposed ISSB, International Sustainable Standard Board. International Sustainability Standard Board. So it means they created a special board, and finally it was created on 3rd November 2021. Remember these dates, you have to remember. So November 2021 में proposal was given by IFRS committee saying that okay, let's create ISSB, so International Sustainability Standard Board. It was finally launched on 3rd November 2021, and major two universal standards were launched, which time पे March 2022 में launched. What's first standard was on climatic related disclosure, and the second standard was on general sustainability related disclosures. Right or not? So ISSB was the first major initiative which was taken towards the sustainable development. फिर क्या हुआ कि ISSB, the intention of the ISSB was to provide the investors and stakeholders with a better informed decision कि not only the profitability we should check before investing in a company, we should also check कि how compliance this entity is towards environment, society and governance. So profit is not the only yardstick you have to check. There are so many other parameters also you have to check to take the informed decision making. That was what the idea behind this particular initiative of creating the ISSB. Now, then what happened? SASB was also created. What do you mean by SASB? Sustainability Accounting Standard Board was created, and it got integrated with IIRF, International Integrated Reporting Framework, and they made a joint venture called VRF. What is VRF? Value Reporting Foundation, which is a non-profit organization, again working for the ESG purpose. Then ISSB, which is already created in November 2021, and IASB, International Accounting Standard Board, also merged together to work towards the same thing. So these are the various facts you need to understand. So we have to understand that these are the various, international global initiatives which were taken towards establishing the fact that boss, ESG audit shall be made compulsorily. Then we made a TCFD. This is what I was telling you about the task force, right or not? TCFD. Task Force on Climatic Changes related to financial disclosures. It means now it's high time that whenever you are disclosing your financial results via your annual report or via your audit report, it is highly recommended that now climatic changes, what is your impact your entity is having on the environment, that also should be shown to the people. And especially this was made mandatory for the entities like banking firms and insurance firms. Remember one thing, whenever any natural disaster comes, that to understand, whenever any natural disaster comes, the biggest industries which will get impacted is known as banking and insurance. People will start claiming their insurance. Suppose earthquake came, their house got collapsed, house insurance was there, they will go for the insurance, right or not? Now let's say for example, war has taken place, they are falling short of the money, and lockdown has come, pandemic situation has come, they will start going to bank and withdrawing their savings. So banking and insurance entities are the biggest entities which will get impacted if the climatic changes come. That's why TCFD was made, now task force on climatic changes in the financial disclosure. Then there are total 6 Cs. I already told you IIRF was the common one. So they said that every entity has to deploy 6 types of capital. Capital number 1, financial capital. That is nothing but the pool of the funds which you need to buy the plant and machinery, equipment, establish your business entity and all those things. Grants in the form of debt, in the form of grant, in the form of subsidy taken from the institutions. Second capital you need is manufactured capital. That capital which you invest in buying the plant, property and equipment. That investment you invest in buying the infrastructure equipments, and that investment you invest in putting the input so that output can be generated in buying your buildings, in buying your equipments and building your infrastructure. Manufactured capital is required. What is the third capital? Natural capital. It is an input of the natural resources which are going to be treated as your input for the goods and services, like water we need, natural resources, land, minerals, forest, ecosystem, biodiversity, all that comes under what? Natural capital. So a business does not run only with one capital. It runs with the 6 capitals. First one is financial capital. Second one is manufactured capital. Third one is natural capital. Right or not? See, when you use the natural capital, either your entity will give a positive impact or negative impact. Like say for example, Bisleri water. For a 1 liter of Bisleri water which we consume, almost 7 to 8 liters of the normal water will be wasted. So you can understand that we are wasting a 7 to 8 liters of water just to produce 1 mineral. I'm not saying that is wrong. That is a requirement of the industry. Yes, they have to call it as a mineral water. But at the end of the day, we are creating a lot of water pollution. So either your production activity may have a positive impact or negative impact. Human capital we need. Human capital means what? We need skill, we need competence, we need abilities, we need capacity, we need motivation to innovate. Right or not? Human resource is a backbone of every entity, right? Their ability to understand and implement the strategies, helping the company in governance and compliances. You need to educate them, because at the end of the day, if they will not be following the compliances, ultimately will end up paying the taxes and penalties. Bringing loyalties and motivation for improving process, goods and services. Then we need a social capital. How much society is going to give us common values of the society, right, and a common behavior of the society. We have to take care of the community. We have to take care of the group of stakeholders. We have to take care of the collective well-being of the society. We have to make some donations and charities, right or not? So much of social capital is required. We have to take care of the, loyalties of the customers. Because today's customer is a tomorrow's potential investors. Right or not? And biggest thing is what? In case you want to operate in the society for a longer period of time, the boss, you have to consider the society like it is a license. It's a social license which will be given to you by the society. That is called social capital. And most importantly, you need intellectual capital. What do you mean by intellectual capital? Like talent retention, patents, copyrights. You need the people to be more innovative. You need the lot of investment in R&D, innovation, human resource, talent retention, and global relationship. So these are the various 6 Cs of IIRF, International Integrated Reporting Framework. Now let's understand the global scenarios, and then we'll understand the Indian scenario. Now global scenarios में US में क्या किया गया? US में भी Security Exchange Commission is there. They made it mandatory for the listed entities कि boss, ESG reporting is mandatory for you. Are you getting the point? Friends, the year March 22. I told you that 22-23 was a revolutionary year. US maybe it was made mandatory by the Security Exchange Commission that ki, boss, all of you have to make sure that you make the disclosure of climatic risk disclosure requirements for the which entities? Listed entities. In their filings with the Security Exchange Commission, like we have LODR, US may we have Sarbanes-Oxley Act. So whatever the filings you are going to do with the their recognized stock exchange like New York Stock Exchange, Luxembourg Stock Exchange, and any kind of stock exchange, NASDAQ and all. So boss, along with your financial disclosure, you have to make disclosures relating to your climatic risk disclosure requirements along with the climatic relating risks as per TCFD. TCFD, we have just not done task force on the climatic changes in the financial disclosure. This is what the recent development took place in US, and the above reporting also includes entities RAP like companies climate risk management process. Now we call it as RAP risk assessment procedure. Now here we have a special RAP relating to climatic changes, how they identified the climatic change risk, impact of such risks on the entity's feasibility, how these risks have been managed and been taken care of or reduced, are they having any transition plans or scenario analysis. What do you mean by that? Say for example your entity is creating a lot of pollution, so do you have any future projection or future forecasted plan that you are going to shift from this particular manufacturing activity to another manufacturing activity so then you can contribute it to the society. All these initiatives have been taken in UK, US, and same initiatives have been taken in UK. UK made 2-3 years earlier it was taken, 2019 onwards. They made sure that all the listed entities in India, all the listed entities in UK, the law was passed that every listed entity in UK or every big entity in UK, large entities in UK have to emit the zero greenhouse gases. मतलब they have to make the electronic appliances in such a manner कि no emission of greenhouse gases by 2050. They made the target. Either by hook or crook, you have to do it. So now the burden is on the entities definitely to shift over from non-eco-friendly raw material to the eco-friendly raw material. Disclosures on ESG in their annual report as per the Companies Act 2006 was required. All the made applicable to all the listed entities whose turnover is greater than 500 millions or where more than 500 workers are working. ये मैंडेटरी कर दिया. तो if your turnover is greater than equals to 500 million pounds, or in case your entity is having more than 500 employees, it is made mandatory that boss by 2050 you have to be a zero GHG greenhouse gases emission. Right or not? In 2022, they added TCFD recommendations on the following. Same thing which the US adopted, same thing adopted in UK. Environmental impacted by the company, details of the company's employees, social matters they have taken, respect for the human rights, anti-corruption, anti-bribery. These all are known as basically the principles of sustainable development goals. I told you now there are total 17 SDGs and 9 principles. These are the few of the principles which in the next few minutes we are going to come across. Right? In 2023, ESG reporting was formalized through introduction of sustainability disclosure requirements. Now let's understand what ESG initiatives we have taken in India. I already told you, India mein, I'm not saying full ESG, but ESG mein S initiative. Social initiatives we already started taking in the year 2009. In the year 2009, MCA made it voluntary that every company has to make a CSR contribution. In 2009, MCA initiated to guide corporate entities towards adoption of sustainability future by issuing CSR voluntary guidelines. With 2011 में what happened? MCA issued further national voluntary guidelines on social, economic, environment responsibility of the business. So developments were taking place. 2009 में first it was made mandatory and then it voluntary, and then 2011 में it was made mandatory guidelines. Now, the purpose of the above two guidelines was to add value to the operations and long-term sustainability. Remember one thing, short run mein any company can survive, but if you really want to survive in a long term, you have to go for a betterment of the society. If you're not contributing good enough to the society, the day is not far, then the society will retaliate and your total business operations will be shut down. The ethical functioning you should do, taking care of the rights and welfare of the workers you should do, giving importance to the human rights you have to take care, social initiatives and environmental development. With 2012 में SEBI made it mandatory for the top 100 listed entities. Remember one thing, it was started with 100, later on it was increased to 500, then finally now it is made to top 1000 listed entities. So earlier in 2012, it was made mandatory for the top 1000 listed entities to file the BRR. So right now the report name is known as BRSR, which is known as Business Reporting Sustainability Report. But earlier it used to be known as BRR, Business Responsibility Report, incorporating the ESG principle. Total 9. फिर 2015 में BRR was made a part of SEBI LODR. उन्होंने LODR में कंपल्सरी कर दिया कि बॉस, इफ यू आर अ लिस्टेड एंटिटी, Not only for now top 1000, top 100, they made it compulsory. If you're a listed entity, the boss, BRR reporting आपको करनी पड़ेगी. For the top 500, BRR was made compulsory. I told you now, first it was made 100 and then it was made to top 500 in the year 2015. So 2012 it was made compulsory for the 100. Now it was made compulsory for the 500. Then SEBI advising the top 500 listed entities to file a report on BRR and to adopt the IIRF, International Integrated Reporting Framework. I told you now, globally everyone is following either TCFD or IIRF. These are the two major initiatives which have been accepted by most of the countries. Are you getting from the financial year 17-18 onwards, along with your BRR report, you have to also adopt the initiatives taken under the integrated reporting framework. Right. Then 2019 में National Volunteer Guidelines was replaced by NGRBC. जो volunteer guidelines थी, NGRBC was replaced National Guidelines on Responsible Business Conduct and made BRR compulsory on the top 1000 listed entities. Are you getting the point? Remember one thing. BRR was made compulsory. ESG audit got compulsory in 22-23 only. Reporting in BRR was made compulsory on 1000. So 2015 में it was 100, 17 में it was made 500 and 2019 में I think. No, 2012 में it was 100, 15 में it was made 500 and 2019 में it was made 1000 to make the BRR reporting. Then in 2021 BRR was replaced by BRSR, called Business Reporting Sustainability Reporting, and demanding disclosure on 9 principles and reporting on leadership indicators. ये 2021 में हुआ. फिर 2021 में 2022 में उन्होंने मैंडेटरी कर दिया कि भैया BRSR reporting by the top 1000 listed entities along with their annual report. It means from 22-23 financial year it was made what? Mandatory. Now what are the initiatives taken by the ICA relating to the BRSR? Now this is the initiative taken by the government, Ministry of Corporate Affairs and the SEBI. But now we are going to understand the initiative taken by the ICA. ICA also brought February 2020 mein ICA ne they launched one course on business responsibility and sustainability initiatives. They launched one course. Now if you'll go to the ICA website www.ica.org, member section mein jaake post qualification courses mein you click, you will find one course over there. Are you getting the point? You will find the course over there. ICA ने launch कर दिया 2020 में. Board was constituted. Now we already have ISSB, International Sustainability Standard Board. India में we created our own board, SRSB, Sustainability Reporting Standard Board. And they to increase the awareness towards the business conduct, to implement the measures toward developing audit guidelines for integrated reporting. So ICA also was following the IFR, Integrated Financial Reporting Framework. Are you getting the point? Next one, certificate code was introduced in SDGs, Sustainable Development Goals, business reporting, business responsibility reporting and integrated reporting के ऊपर उन्होंने certificate course. Just now I told you कि certificate course also has been introduced by ICA now. In the last 2 years, ICA has issued BRSR background material, business reporting, sustainability reporting का background material भी launch हो गया. And SAE 3410. See, we have done SAE 3400, 3402 and 3420 and 3410 and 3000. These two are waiting for you to come in the future. Right now you have only 3. Now SAE, Standard on Assurance Engagement on 3410 is on declaration on your GHG statement, greenhouse gases का statement के ऊपर, assurance engagement on GHG statement. What is 3400? Tell me. 3400 was assurance on PFI. What was 3402? Assurance engagement for the service organization. What was 3420? Pro forma financial information. This is 3410. Assurance report on GHG statement, greenhouse gases. These are the various initiatives which are taken by whom? ICA. Right? FAQs on sustainability reporting was issued. SRMM was made, sustainability reporting metrics model. वो भी बना दिया. Maturity model. BRSR is broadly classified into 3 reporting questionnaires. Section A, which talks about general disclosures of the entity, listed entity, its products. Like this is basically a general information on the entity, employee related details and details of its components. I will show you one BRSR report if possible at the end. सेक्शन 2 में बना दिया व्हाट आर द मैनेजमेंट प्रोसेस एंड डिस्क्लोजर्स, क्वेश्चन रिलेटिंग टू पॉलिसीज, मैनेजमेंट प्रोसेसेस, गवर्नेंस, लीडरशिप एंड ओवरसाइट, हु इज टेकिंग केयर ऑफ ऑल these ESG related issues. C was made principal wise performance disclosures. What are your KPIs, key performance indicators? What major changes you have brought in your technology? What major things you have brought in your technology? Oh, what are your leadership indicators? And what are your essential indicators? Right now, all that is made mandatory in the section 3. So, BRSR reporting actually, see, so far we were following SISAE 3000. We were following the International Standard on Assurance Engagement 3000. But now India mein we have our own now SAE 3000 and SSAE 3410. Actually, it is not SAE, it is SSAE, Sustainability Standard on Assurance Engagement. Are you getting that? Sustainability Standard on Assurance Engagement. So this is the new series which might be introduced in the future. Right or not? Or along with the SAEs, they may ensure to add it because it is also a assurance based engagement only. Now, let's understand the 9 basic principles of BRSR so that we can wind up this chapter properly. Very simple chapter, very easy chapter. There are few global scenarios you need to understand, few abbreviations you need to understand. You have to understand the development of BRSR in India, both by the government as well as the icai, and these 9 principles. Principle number 1, ethics, transparency and accounting. What the principle is saying, the essence of this principle, it says that ethics on your policies, practices, factories, offices, etc. shall not be what? Compromised. Right or no? You should behave in an ethical way. You should behave in a lawful manner. Information on above areas along with the performance shall be made available to whom? Stakeholders. How you behaved in a responsible manner. What do you mean by accountability? If you have done anything wrong, suppose you have created a lot of pollution, take the responsibility for those pollution emission. Don't shirk from your responsibility. Don't escape from your responsibility. That was the idea behind ethics, transparency and accountability. First principle. Right or not? Then in case of adverse situations, unethical practices found, more care to be taken. Right? Must encourage their value chain partners. Value chain means you should also encourage your suppliers and distributors also to follow the same. So if you are following these particular ethics and loyalties and these things called accountability, you also expect your value chain partners also to follow and shall be actively responding on such violations done by their suppliers and distributors. This was principle number 1. Principle number 2 was on safe, sustainable goals and services. So this principle ensures that goods and services of the entity shall result into better lifestyle for the consumers and end users. The essence of this principle was minimum usage of resources by betterment of production activities and technologies. मतलब natural resources को कम करो and give the better quality to the customer. Then education and awareness to the customer and client about their rights. Make them understand about their consumer rights. Make them educate them by by giving the contents which is included in that product. Like we see it on the pack, ingredients are given or not. That is what expected. Reducing over exploitation of natural resources with the principle of reduce, reuse, recycle and recover. By recycling karo. Are you getting the one? Reuse karo, reduce karo. The moment you will start reusing your things, you will start demanding it less. When you will start demanding it less, people will start producing it less. When they will start producing it less, the natural resources will also be consumed less. To go on the idea of reduce, reuse, recycle and recover. This is what they are expecting from you. This was principle number 2. Safe and sustainable goals. Principle number 3, promoting well-being of all the employees, including those in the value chain. Now, this principle is completely dedicated to your employee side. What this says, employees regulatory framework shall be complied with. आप उनके वर्कमैन कॉम्पनसेशन फंड अच्छे से पे करो, एंजॉय और लेट देम एंजॉय द डिग्निटी और द रिस्पेक्ट विच दे डिजर्व. You should not ill-treat them. Treat them as a human being, not like an animals. Then giving freedom to associate with the unions, give them a freedom to get associated with the union, because if they will not be the part of the union, they will not be having a collective bargaining. Now, how a single employee will come and say that, sir, I want a promotion. But if you think that the whole union deserves the promotion, let him be the part of union and let them come and to you and do the collective bargaining. So that will be the better initiative. Now, you can't stop them from being a participation from having a participation in the trade unions and labor unions. That means you are snatching away their rights of being a part of those unions. Preventing child labor, bonded labor, involuntary labor, forceful labor should not be there. Work-life balance should be promoted. At least let them take the rest on Sundays. Right or not? Let's have their professional and personal life being balanced. 7 days a week, if you will ask them to come over to the factory and work on T2 shifts, then how they will be able to strike balance between their professional and work and what do you say, personal life? Right? Timely payment of the workman compensation fund. Don't delay unnecessary. Someone is retiring, pay them the PF, pay them the pension, their gratuity on time, ESI, bonuses should be paid annually. So why there is unnecessary delay required? This is all basically relating to your employees. This principle is completely dedicated for the betterment of your employees, paying their salaries and wages enough to meet their basic needs. By obviously, आज के time पे inflation is so much. You have to make sure that you are paying adequate salary to at least they can maintain their subsistence level. Creating safe, hygienic, and comfortable work environment. You should have the good washing areas. You should have the good washrooms. You should have the good, what do you say, very cleanliness should be maintained. Right or not? Food serving area should be there. Canteen should be there. Cafeteria should be there. Proper cleanliness, sanitation should be maintained. Skill development and career development. Educate them. If they are unskilled, convert them from unskilled to skilled, semi-skilled to skilled. Are you getting the point? Skill to upskill their digital. That just now we have done in digital audit. It's mandatory to upskill your people. Same is the case with the entities. If you think that in the future they want to sustain in the market, it is your responsibility to upskill and train your staff. Right or not? Workplace shall be free from harassment and violations. Discrimination should not be there. Unnecessary harassment should not be there. Violations should not be there. Strict action should be taken if someone is caught doing all those nonsense things. This is what is expected from you in this principle number 3. Principle number 4, respect for the stakeholders' interest and responsiveness. Boss, you have to make sure that taxes should be paid on time. Take care of your stakeholders. This principle is completely dedicated to your stakeholders. Check out, identify your interested parties. जैसे shareholders को dividend time पे दो, अच्छे से दो. Customer को quality दो. Creditors को you have to pay the payment on time. So that next time he will not think twice before lending or giving the raw material on credit. Pay taxes to the government. Provide good quality to the customer. Pay monies to your employees. Take care of your stakeholders' interest. Basically, transfer communication between your stakeholders about their business operations and business decisions. In which direction the entity is going on. Write down that in your annual report so that they will take a better informed decision whether to continue with your entity or not. There's no point of hiding anything. Next thing what they're expecting is respect and promote human rights. What do you mean by respect and promote human rights? Obviously, you have to stop ill-treating them like an animal. See, don't confuse it with the workers. That was completely dedicated to your employees. This is in common we are talking about human rights. Like it covers action against violences, abuses which are faced by the people during the business operations. Essence of this principle, clear understanding of what human rights, ill-treat should not be there. Knowledge of constitutional, notional laws and national laws and international laws of what? It's not laws, it's laws. National laws and international laws of what? Human rights. Are you getting the point or not? आपको पता होना चाहिए कि if you are working in India, what human rights laws are applicable, and if you are having a cross-border business transaction, उस country में what kind of human right laws are there. Next point is what? Integrating human rights into their practices, policies, and procedures. Educate the people. Like how we should give and take respect from each other, recognizing and respecting the human rights for all the relevant stakeholders. This is a principle number 5 on human rights. Like principle number 3 was on stakeholder, on employee, 4 was on stakeholder, and 5 is on what? Human rights. 2 was on safe and sustainability. 1 was on ethics, law, and transparency. Then protection and restoration of what? Environment. This principle is completely dedicated to what? Environmental changes. Entity must assess and rectify the impacts to the environment and should cover the whole life cycle of the product. Are you getting the point? Making the substitute of the raw materials, inputs, reducing less wastages, right? Reducing your abnormal losses, idlenesses, making use of natural and man-made resources in optimum manner to ensure sustainability. Same, present generation should not consume that much that ki future generation will be deprived of using it. Taking feedbacks from the stakeholders. Are they liking the product? What inputs you can see? Sometimes you do not have an idea what betterment you can do. Take the feedbacks, take the complaints from them. What wrong they are finding in our products, how we can improvise better next time. Having performance measurement relating to prevention of pollution, how much pollution you have reduced, waste generation management should be there, energy use, go for the alternate source of energy, land use should be there. Land use should be there. Am I correct or not? Then destruction of forest should be there. Destruction of forest should be reduced. Sorry, are you getting the point? See, I'm not saying that ki ecological balance will be maintained. See, whenever there is economic development, biodiversity has to suffer, ecosystem has to suffer. But try to reduce the suffering of the ecosystem. That's what alternatives should be taken care of. That's what they're trying to tell. Contribution towards the climatic changes. Be a part of international conferences like Paris Agreement, Vienna Convention, national action plans for the climatic changes. Promoting reduce, reuse, recycle, recover practices. All that is nothing but relating to environmental protection you can do. Now, seventh principle, influence on public and regulatory policies. Make sure that you should go for a fair competition, transparent competition, healthy competition, preventing human rights abuses, all that you can cover under public and regulatory policies, making sure that your statutory and legislative framework should be properly taken care of. Because if you will take care of your regulatory and statutory requirements, there will be less penalties and punishments on you. Why the government interface? Please tell me. Why do the government interface? Government interface only when you are not taking care of your things properly. Am I correct or not? Promoting inclusive growth and equitable development. What do you mean by that? You make sure that there should be a close participation and collaboration among the entities. See, doing all these things is not a part of single entity. You have to come together and do a joint effort towards it. You have to assist each other. You have to help each other in doing that. What is the essence of this principle? Identifying and assessing the impact of your business on activities on social, cultural, economic aspects of the people, like land acquisition and construction activities. Compulsory land acquisition hota hai. Are you getting the point or not? Now, in the developed nations, so much of infrastructure is happening that, especially if I have to share the example of China with you, world's 90% of the infrastructural equipments like cranes and all are deployed in China. So much of pollution they have created by digging the sand and everything. Now the air is completely polluted. People are wearing the mask on daily basis, not because of corona disease, because they are not getting the fresh air. There are some cities in China which are completely suffering from the air pollution. You have to respect the human values. That much of infrastructure on whose cost? Human value. That is something which should be ignored. Next one, which should be completely removed from your perspective. Entities should measure the adverse impact of their activities on society, environment, and shall what? Mitigate them, reduce them. Do the analysis ki are your activities going great with the expectation of the society or not? Bringing up creative products, technology, business to help the marginalized communities to have well-being and what? Better quality of life. Marginalized community means which are very less, say for example, जैसे handlooms वाली होती हैं. Make sure that ki you should promote their products in the international market. Let them have some better profits. Marginalized communities like Kashmiri, these carpets and all, handlooms, handicrafts, Magam works. Promote these kind of. Protecting your artistic jewelry is something called what? Marginalized community. Make sure that your art, your culture, your tradition of handicraft should be promoted. Right or not? Designing CSR activities, but first considering the local and what? Regional development. Develop your nearby areas. If you think that your nearby area deserves some cleanliness, go for that. In case of displacements or relocation, there shall be mutual agreement, participation enforced, negotiation, and must provide for what? Compensation. अब जैसे दिल्ली में metro was constructed by by demolishing so many societies. And the government gave them the adequate compensation to have their flats on the other side of the corner of the Delhi. Even though it was a compulsory acquisition, even though it was a mandatory acquisition, I already told you economic development will come on the cost of ecosystem. But at least when you're compensating the people to shift their base from one place to another place, when you demolish their houses, you are giving them the new flats, at least adequate compensation should be given. Education should be given to them. Right or not? properly. You should make sure that they should not feel like cheated or backstabbed by the government. That is what we are trying to tell. Right? Next one. All types of intellectual properties, traditional knowledge shall get deserved respect and must share benefits when with them equally. अभी मैंने आपको मार्जिनलाइज कम्युनिटी का बताया, हैंडीक्राफ्ट्स, हैंडलूम्स, कारपेट्स, एनीथिंग विच इज आर्टिस्टिक इन नेचर शैल बी प्रोमोटेड. Don't loot them and sell it outside and make the full profit. Divide your profit with them so that they can also have a better standard of living. Those poor people do not have an access to the outside world. You have it. Become a medium to make them earn equally more like you are earning. Buying it here from cheaper price, selling at higher price, you are only making the profit. This is called not even selfishness. Selfless, okay, why don't you share the profits with them? That is what the principle is talking about. Providing value to the consumers in a which way? Responsible way. To create a useful products and services to customer in exchange of what? Reasonable profits. Essence of this principle is what? Now providing value to the consumers to reduce the negative impacts of their products and services on consumer, environment and society. Freedom of choice and fair competition should be given. Why are you having monopolies? Let the like abhi Vodafone Idea. Only two players are there in the market in the telecom industry, and they are doing whatever they want. Until unless we will not put the trust on the third player like Vodafone and Idea. I know that the company is on the edge of being insolvent and bankrupt, but recently they have gone for the FPO, 18,000 crore. And 5 times it has been oversubscribed, 5 to 6 times. 1 lakh crore has been already been applied in that FPO Vodafone Idea, which few months back we were thinking that it is going to get insolvent. Are you getting the point? You have to understand. Yeah, until unless there will be no fair competition, the consumer will not get the benefits what they deserve. Then should transparently and accurately disclose all the adverse impacts to their user and society on biodiversity. We should tell them, boss, we are producing this product and this is how we are harming the environment, so that they will stop demanding those products. And if they will stop demanding those products, you will stop manufacturing them. Educate them how their demand is affecting the biodiversity. Safe and responsible ways of usage, recycle, disposable to reduce our consumption of natural resources. We have to promote recycle, reuse, recover, reduce. No misleading and confusing information while advertising their products or its usage. ये Fair and Lovely की ad आती है. From this to this within 7 days. कैसे? You can't. Why are you misleading the people? The one who is having the black skin like me will never be able to achieve that color which you want. But at least don't give them the imaginary thoughts that, okay, I'll use a Fair and Lovely. From this to this, I will reach it in 7 days. How it is possible? अब शाहरुख खान सर अपना एडवर्टाइजमेंट करते हैं निविया मेंस क्रीम का, फेयर एंड लवली का आता है, वो एक स्केल्स आता है, 7 डिफरेंट कलर्स विल फ्रॉम हियर यू स्टार्ट विद इन 7 days फ्रॉम दिस कलर यू विल रीच टू दिस. हाउ इट इज पॉसिबल? टेम्परेरीली यू कैन पुट द face mask and temporarily it may glow, but never permanently. Why unnecessarily you are misleading the people by giving them the wrong information? Transparent and quick accessible complaint resolution feedback management system should be there. Now, what are the assurances we need in BRSR reporting? Now, these were the 9 principles which we have done. Very important topic. Must assure that these 9 principles should be on your fingertips. Very simple hai. Generalized topic hai, sir. No technical thing you have to cover. Now, currently applicable to the top 1000 listed entities, but very soon it will be applicable to all the listed entities. Soon it will become a main document for the industry analysis by the stakeholders and investors. Hence, ESG audit process would help the companies to evaluate their social, environmental risk in their services and operations. ESG audit also helps in identifying the supply chain risk management capabilities and transparent with their shareholders. ICAI is issued. Just now I told you कि SSAE 3410 and SSAE 3000 is already getting ready. इसे हम लोग बोलते हैं SSAE 3000 Standard on Sustainability Assurance Engagement or Sustainability Standard on Assurance Engagement. It deals with entity sustainability. Intended users are what information via this standard will, like SSAE 3410 was giving the assurance report on GHG statements, greenhouse gases statement. Now, this will give you the assurance on, assurance providers, like entities seeking to engage professional auditors, regulators, investors, other users of sustainability data. Now, what is the effective date of standard? Voluntarily for those entities whose period ending on 31/3/2023. So it means SSAE 3410 will be voluntarily. Remember, I'm not talking about ESG audit. I'm talking about the application of this standard. So this standard is applicable on those entities voluntarily till 31/3/2023. It was voluntary, but from 31/3/2024, it means from this financial year onwards, from 1st April 2024 onwards, this SAE 3410 has become what? Mandatory. Right on greenhouse gas statements. SSAE and SSAE 3000. So 3000 is on what? It is on deals with entity sustainability information, and SSAE 3410 talks about reporting on greenhouse statement. So this is what you needed to know everything about the which audit, everyone? ESG audit. Remember one thing, ESG audit में the major things which you need to understand, evolution of ESG in India, both by the government MCA and both by the ICA. फिर आपको BRSR की रिक्वायरमेंट पढ़नी है कि इट इज डिवाइडेड इनटू 3 पार्ट्स. फिर आपको 9 प्रिंसिपल्स पढ़ने हैं. 17 SDGs का नेम्स ओनली यू हैव टू रिमेंबर. Write on, make sure that list should be remembered, and you need to understand some abbreviation जैसे IAS भी था, International Sustainability Standard Board, and SAS भी था, Sustainability Accounting Standard Board. Are you getting the point? Sustainability Auditing Standard Board, whatever the case may be. IARF था, Integrated International Integrated Reporting Framework. फिर GRI था, Global Reporting Initiative. फिर CDB था, Carbon Disclosure Impacts और Carbon Disclosure Projects. Right or not? And फिर अपना TCFD था, Task Force on Climatic Changes to be made in the financial disclosures. Right or not? So these are the various abbreviations you have to consider while proceeding with this chapter. Make sure that this chapter should be on your fingertips. So far, I have made you understand everything which is newly incorporated in your portion, right from SAEs, SREs, SRS, Specialized Series, Digital Audit, ESG, Professional Ethics, Liabilities on an Auditor, and Audit Reporting. Are you getting the point? So these are the areas we have already covered, everyone. So remember one thing, do be good with these particular areas and make sure that you are doing these particular chapters on your fingertips. And let me know, did you like our marathon session or not? And I hope I have covered each and every aspect which you needed to know to proceed for the examination with the proper clarification I have given. So right, so let's move to the next topic. Now, next topic we are going to start with, I think we'll start with the internal audit chapter, right? So let's start with that chapter, right? Okay, everyone. So let us start with the new topic. The name of the topic is known as internal audit. Now, how we are going to proceed with this topic is I will make you understand the concept of internal audit. Along with that, we will be also finishing our 600 series of standards. So 600, 610, 620, all the 3 standards plus this chapter, we are going to do it in this particular collaborated video, right? Now, first of all, let me make you understand how internal auditor works and what this chapter is going to give you. First of all, what is the difference between the old syllabus and the new syllabus in this particular topic? In the old syllabus, there used to be 2 additional topics. One was management audit and one was operational audit. That particular topics have been eliminated from your new topic. So in the new topic, neither you have any concept of operational audit, nor you have any concept of management audit. Only and only internal audit concept is there in your portion. I hope you all understood. So only which concept is there? Internal audit concept is there. But yes, so many changes have been brought. So much of introduction of SIAs has been introduced in your topic, that is called standards on internal audit, right or not? I'm not saying full standards, but hint of standards on auditing, internal audit has been given. In total, there are 18 standards on internal audit, out of which few have been used here and there. We will come to know, and we will also understand what internal auditors functionalities are there. Now, basic misconception which we have about this person is internal auditor, we think that he is a person who is going to do the audit on the wishes and directions of the management. To an extent it is fine, but yes, it is also an independent appraisal function. We do have the section number 138 also, which is completely dedicated to the internal audit, where we understand that internal audit is applicable to the listed entities, who can be the internal auditor, what functions he can provide, right? So let's understand the internal audit part. Now see, मीनिंग एंड डेफिनेशन ऑफ द इंटरनल ऑडिट। तो ऑब्वियसली इंटरनल ऑडिटर मेजर 3 फंक्शन क्या होते हैं? इंटरनल ऑडिटर के मेजर 3 फंक्शंस आर checking the effectiveness of the internal control system, checking the effectiveness of the risk management process of the entity, checking the effectiveness of their governance, and making sure that the entity is able to achieve its goals and objectives. Remember one thing, internal auditor function is very much wider as compared to external auditor. External auditor is only coming for the few limited number of days where his concentration will be on financial areas only. But internal auditor may both financial as well as non-financial aspects like reviewing the operational effectiveness of internal control system, checking out their laws and compliances, checking out it directly their organizational structure, checking out their policies, procedures, do they need any review and revision or not. So that is the huge functionality what an internal auditor serves. Major 4 concentrated areas of the internal auditor is to check that and do the evaluation of internal control system so that management can come to know whether their internal control system is operating effectively or not. That is the first thing. Second thing, checking whether the entity is having its own risk management policy by which they are able to mitigate their business risk or not, and is it operating effectively or not. Third one, is the entity doing the governance properly or not, like pinching on the cut-off dates to the entity कि boss GST return का date has come, advanced tax का date has come. So this is also the functionality what the internal auditor provides, and moreover helping the entity in achievement of its goals and objectives, right? So this is what checking effectiveness of ICAs, risk management, ensuring corporate governance, and helping the entity in its goal. Now remember one thing, there are total 18 SIAs in our portion. Not in our portion, matlab there are total 18 SIAs ka framework. We have SIA stands for Standards on Internal Auditing, in which out of 370, 380 and 390 is something which you are going to make the maximum use of it. 370, 380 and 390, and others like 5, 6 and 310, 320 will have the hint of all those things, but majorly we have to concentrate on 380, 370 and 390, right? Reporting the findings, follow-up audit and major reporting requirements, right or not? These 3 standards we have to understand. So total there are 18 SIAs. Next point. One unique quality of being an internal audit is while performing above function, he shall not compromise his independence. Yes, internal auditor also has to follow his ethical requirements like integrity, objectivity, everything equally applies to whom? Internal auditor. And especially, we think that he is a puppet of management. To an extent, it is fine. But if the internal auditor also will find out that he is not being respected, his what do you say, recommendations and remedial actions which is providing suggestions, advices are not being properly taken care of, so he will also not think twice before resigning from that particular area. Are you getting the point? That is what you have to understand about the internal auditor. It is not limited to financial transaction because his scope is wider. He not only takes care of your financial area, he takes care of review of your operational activities, review of your policies and procedures, evaluation of your internal control system, corporate governance, risk management policies. Am I correct or not? Whether you are complying with the laws and regulations properly or not. So these are the various areas. Monitoring of your controls. Do they need any update and upgradation or not? Compliance with the laws and regulations to make you understand the recent developments which took place in laws and regulations so that you will not end up paying the penalties and punishment. Risk management, helping you in identifying your business risk, helping you in mitigating them to the lowest acceptable level, examining your financial and operational performance to let you know that where you are lacking, and governance, making you understand the ethical behavior and culture, what the environment you are being surrounded with, and review of your operational activities to help you in achieving the triple E. What is triple E? Economy, efficiency, and effectiveness in your operation. That is what the major function of the internal auditor. Now, next, section number 138 तो we already know. Section number 138 is divided into 4 parts. Part number 1 किसके बारे में बोलता है? Applicability. तो if you are a listed company, तो then तो internal audit is compulsory. But if you are an unlisted public company, any of the 4 conditions are required to be satisfied. Condition number 1, either your public deposits are greater than equals to 25 crores, or your paid up share capital is greater than equals to 50 crores, or your outstanding borrowings are greater than equals to 100 crores, or your turnover is greater than equals to 200 crores. Any of the 4 conditions are satisfied as a what? Unlisted public company, the boss internal audit system is also becoming compulsory to be installed in your entity, especially when it comes to outstanding borrowing condition. We have to check it at any point of time during the financial year. If you are a private company, condition number 1, public deposit wali is not applicable. Condition number 2, paid up share capital wala is not applicable. Only two conditions are applicable. Either your outstanding borrowings are 100 crores or more, or your turnover is 200 crores or more. Then in that case, in the private limited company also, hiring and establishing an internal audit system becomes compulsory. So for the listed, always any of the four conditions in case of unlisted public company, any of the two conditions in case of private company. Now the question arises, sir, who can be the internal auditor? Internal auditor can be a CA or CMA, either in practice or not. It means, be it you a member in service or member in practice, be it you a CA or CMA, you can become the which auditor? Internal auditor. But if you can't afford the internal auditor, then you can hire any other professional from the other recognized professional body. Or if you can't afford that recognized professional also, you can hire your own employee and officer from your own entity, who should be a minimum PG, postgraduate, like an MBA kind of person, or your own employee or your own CFO. Anything can become an internal auditor, but they should be minimum PG. Next point, appointment of internal auditor. Remember one thing, in your entity, if the audit committee is constituted, the boss, recommendation of internal auditor will be given by the audit committee, but the appointment will be made by the board of directors. Again repeating, recommendation will be made by the audit committee, appointment will be made by the board of directors. But in case in your entity audit committee is not constituted under section 177, the recommendation and appointment both will be done by the board of directors. But either you have an audit committee or you don't have an audit committee, in both of the cases he will be appointed by the board of directors. And one important thing you have to understand, that once you have appointed your internal auditor, you need to intimate it to the RSC within 30 days of his appointment, within the form called MGT 14. What is the form number? MGT 14, 14. With the MGT 14, you have to intimate to the ROC that we have appointed our which auditor? Internal auditor. Now, these are the total 9 areas which you should avoid your internal auditor to get involved into. He should not be your tax auditor. He should not be your statutory auditor. He should not be your cost auditor. He should not be your GST auditor. Anyways, GST audit has been abolished from 1/4/2022 onwards. But remember one thing, even though it is abolished, he can take care of your GST attestations and all. So you should not allow him to get involved in GST areas. So neither he should be a statutory audit, not tax auditor, not GST, nor anything relating to your cost audit. He should not be allowed to be involved in bookkeeping system. She should not be allowed to be involved in accounting system, financial information system, and executive functions, and your managerial decision making. See, his name is internal auditor. He should be the examiner, not the doer. Don't involve him in the accounting system and bookkeeping system, because his work is to evaluate whether your accounting system and bookkeeping system is working properly or not. That is what the work of which auditor? Internal auditor. Are you understanding the point or not? So no need to involve him in these areas. You just need to help in as an internal auditor. He helps in examining these areas. So these 9 are known as disqualifications of a which auditor? Internal auditor. Now, as per SIA 210, अपना SIA 210 क्या बोलता है? Agreeing to the engagement terms. ये SIA 210 talks about management function or managing of internal audit function. अब internal auditor and external auditor में there is no that much of difference. He also have his own team. He also has to educate his own team. He also has to maintain QCPPs. So whatever the implications we have on external auditor, same implications we have on what? Internal auditor. Like we as an external auditor, can we take the help of the auditor expert or not? In case internal auditor needs the help, he can also take the help of outside consultations and experts. Like we have a team, audit engagement team, internal auditor also will be having the audit engagement team. Like we maintain our ethical requirements, QCPPs, internal auditor also will maintain his ethical requirements and QCPPs. Same thing. Following the set of critical activities expected from internal auditor, he has to define his scope, objective, methodologies, on which basis? Periodic basis, like an external auditor does. Second thing, overseeing, monitoring various audit assignments involving planning, execution, reporting, finding and issuing a report. Like how we plan our audit, we report our audit, we report our findings. Same thing internal auditor also has to do. He also has to train and develop his team of professional staff and reviewing their performance over a period of time. We do the post assessment of our staff. We check there, we take the declaration from them, ki did you maintain the independence or not, like as an external auditor as per SQC1. Same thing is applicable to the internal auditor also. He also has to educate his staff. He has to make sure that he should evaluate the performance of his staff over a period of time. Like we can take the outside consultation, external consultation, and external help. He is also allowed to take. In case the need arises, he can secure the help of our external technical experts and outside consultation. The only difference is he's working for the management, and with us, we are working it for the intended users. He also has to communicate with the stakeholders. We communicate it via our report, he communicate via his report to understand the progress and achievement of his objectives. So that is what is 210 of internal auditor is trying to tell you. The same things which are applicable to external auditor, same set of obligations are there on the shoulders of which auditor? Internal auditor as well. And next, developing an improvement plan by maintaining the quality evaluation at which intervals? Regular intervals. Now, there are total 7 functions which are required to be performed by the which auditor? Internal auditor. Total how many functions? 7 functions. Function number 1, reviewing the effectiveness of internal control. Function number 2, reviewing the custodianship and safeguarding of assets. Function number 3, reviewing the policies and procedures of the entity. Function number 4, reviewing the relevance and reliability of the information system. Function number 5, review of your organization structures. Function number 6, review of your utilization of resources. And function number 7, review of your goals and objective. That is a major function which is required to be delivered by the which auditor? Internal auditor. Now let me tell you the meaning of each and every function right now. Now first one, review the effectiveness of internal control system. Basically, he has to check that whether the internal control system is economically working properly, effectively working properly, efficiently working properly or not, suggesting the improvements in the internal control system, identifying the lapses and gaps in the internal control system, bringing it to the notice of the management so that patch management can be done. All these are the functions of covered under review of effectiveness of which system? Internal control system. But whenever you do this function of review of internal control system, make sure that you should always keep it in mind that there are inherent limitations of internal control system. Even if you will be too good in your work as an internal auditor, but there will be always a chances of collusion of employees. There will be always a chances of management manipulation. There will be always a chances that management might not be able to understand why do they need that internal control system. So job of the internal auditor, evaluating the effectiveness of internal control system, reviewing the effectiveness of internal control system is very big job. It is you who has to make sure that management should understand what you are trying to tell them. You have to make the management understand why these gaps are required to be fulfilled, why these lapses are required to be patched up, why updates are required in your IT policy. All are the various functions which are required to be done by the internal auditor while doing the review of what? Internal functions. Clear? What, sir? So that's what I was telling you, right? Second thing, review of custodianship and safeguarding of assets. What is the second thing? He has to make sure that company's assets are adequately safeguarded or not, and make sure that the person who is handling the custody of the asset should not be involved in the accounting of the same. Make sure that there should be proper accounting of the assets takes place or not. Make sure that there should be proper SODs. SODs means segregation of duties. Like just now I told you, the one who is handling the physical custody of the asset should not be handling the accounting system. Suppose if I'm handling the cash payments and cash receipts, I should not be involved in preparing the books of accounts. Otherwise, chances of frauds and errors will be higher. We have to check that whether our softwares, whether our EDP softwares, whether our EDP equipments, whether our intangible assets have been properly secured and being adequately secured at the regular intervals or not. We have to check the insurance policies, are they being enough to cover our safeguarding of assets or not. All that comes under what? Second area called what? Review of custodianship and safeguarding of assets. Third में आता है review of plans, policies, procedures and regulations. What is the third comes? Review of plan, policies, procedures and regulations. Now see, every company has its own plans and policies and procedures and regulations. You just need to understand are they fitting according to the environment of the entity or not. Understand do they need any updation and upgradation in the plans or not. And if there are any requirement of updations, do not step back. you should give the remedial actions. You should make them understand कि boss, these are the various things we can do to upgrade our policies, plans, procedures and regulations. So make sure that you should do the periodical review of the entities, plans and programs and policies and procedures and regulations so that necessary updates can be provided. Then you have the fourth function, review of checking the relevance and reliability of information system. Make sure that there should be a good, quick, reliable and action oriented information system available in the entity. All the departments should be able to have a communication with each other. There should not be the gaps in the communication. Examine the accuracy and reliability of the records, right or not. You have to make sure that all the how entities communicating with the outside government bodies, investors, stakeholders, that is also one of the major core area. Like how do you communicate your results to the stakeholders, how do you communicate while making the replies to the government authorities, how do you communicate to your investors. All that comes under the information and communication system. We also have to understand that if your communication system is automated in nature, ensure that information generated from the computer system should be reliable and full of what? Integrity. It means basically we are checking about your MIS, Management Information System, and EAS, Enterprise Information System. There should be reliability, there should be accuracy, the information should be complete. Don't put the other party on the guessing side. That is what the review of relevance and reliability of information. So what are the four functions? Review of your effectiveness of controls, review of your custodianship and safeguarding of assets, review of your policies, procedures and regulations, review of your relevant and reliable information system, then review of your organization structure. There should be proper SOPs, standard operating procedures. There should be proper segregation of duties. Your organizational structure should match with your objectives and goals. It should not go different in the direction. Your organization structure and your goals and objectives should have a peace and harmony with each other. Am I correct enough? There should not be any duplication or overlapping of duties. Identifying the cases of shortages, losses, idleness, bringing it to the notice of the management. If any patches are there, make sure that there should be proper education and training should be given to your staff so that they will become more relevant to the industry objectives. All that comes under review of your what? Organization structure, right or not? And make sure that one department should not be allowed to dominate what? Another department. There should be equal respect among the people of one department and another department. That is called review of organization structure. Then we have the review of utilization of resources. Basically achieving triple E is the idea here. Are your resources being acquired at economical cost or not? Are you making a full utilization and maximum utilization of your resources or not? Are you able to deliver your projects on time or not with the budgeted cost and budgeted time or not? It's all about checking the efficiency, effectiveness, and economy of your resources, doing the performance evaluation of your human resources. Are they good enough? Is there any need of giving adequate training or extra training to them? Ensure that standard operating procedures and norms shall be what? Equally followed. Variances should be calculated along with the reasons to be intimated to the management. Okay, suppose you compared their actual performance with the budgeted performance. If anything variances you will find, you should make sure that it should be reported to the management with the proper reasoning. That is called review of utilization of what? Resources. For review of seventh, review of goals and objective. Make sure that your goals and objectives should look measurable, should be achievable, right? And it should not be too much hypothetical in nature. Make sure that your working of the entity should be falling in line with your goals and objective. Now, what is the difference between goals and objective? Anybody in the class can tell me? See, goals are all about short term. Objectives are all about long term. Sorry, my bad. Goals are long term and objectives are what? Short term. Make sure that the vision and mission statement should be revised at the regular intervals. Are you getting the point? And make sure that it should be communicated to everyone in the entity, because unless it will not be communicated to everyone in the entity, how the employees of your own company will come to know that what are our goals and objectives? All those things are required to be taken care of. Your goals and objectives should be flexible. That's what I'm telling you. If necessary revisions and reviews are required, make sure that your goals and objectives should look what? Flexible enough. In case any need of revision is there, you should be in a position to do the needful revisions. Right or not? All that comes under review of goals and objectives. So what are the major 7 management functions internal auditor has to provide? Review of effectiveness of ICS, custodianship and safeguarding of assets, policies, procedures, process and regulations. Then information system should be relevant and reliable. Then organization structure. Then review of utilization of resources and review of your goals and objective. These are known as 7 management functions of which auditor? Internal auditor. Now, what kind of qualities we can expect from the internal auditor? Obviously, one are called personal quality, one are called professional qualities. Right or not? What are the personal quality? Point number 1, he should be having the quality of integrity. He should be fair. He should be sincere. He should be honest towards discharging of his duties. He should not make any misuse of the acquired information against the entity. He should avoid taking undue advantages and illegal advantages by compromising the sensitive information of the entity. That is called what? Integrity is expected from him. Second thing, objectivity. He should remain impartial and unbiased throughout the audit. Are you getting the point? He should not think that he is being employed or he's being engaged, and he should not feel like he's a puppet of management. If he thinks that there are genuine issues which are required to be brought to the notice of the management, he should do it impartially and in an unbiased approach. He should carry this attitude throughout the audit. Professionally skeptical hona chahiye. Next point, independence. Even though, see, it is very unethical on our part if we'll say that the internal auditor is not independent. He is independent, but he is less independent as compared to what? External auditor. But understand one thing, internal auditor can be a practicing CA also. So practicing CA means what? Is he employed or engaged? Engaged. So when he is engaged, what does that mean? It means he will definitely have to maintain independence, because independence is a basic requirement of our QCPP. Na? Ethical requirements, so you have to follow in every engagement, be it review engagement, internal engagement, assurance engagement, attestation, accounting engagement, compilation, any kind of services you provide, you always have to maintain independence. Sir, confidentiality nahi dikh raha. We are not able to see confidentiality. Confidentiality, we are going to put it in his professional quality. So in his personal qualities, 3 are expected from him. What are the 3 expected? First one is what? We expect him to have integrity, objectivity, and independence. Now, what are his professional qualities? He should have an expertise knowledge of the management's internal control system, especially its financial and accounting controls. See, understand one thing. If you want to be a good internal auditor, you have to have the knowledge of the client's integrity. You have to have the knowledge of the client's internal control system. You have to have the knowledge of the client's automated environment, software environment. That is the first profession. And definitely you should be good in accounting and financial expertise. Obviously, we are the financial experts. Even though the majority of the functions to be delivered by the internal auditor are not financial in nature, but you are expected to have a good financial and accounting expertise, right? Must possess the knowledge of operations of your client, technology used by the client, commercial trade practices as well. Are you getting the point? This is also expected from you. You must have the knowledge of the various disciplines like law, finance, administration, secretarial practices, cost accounting, taxation, accounting. All those things are expected from you. EDP system, statistics, effective knowledge of accounting software, what software your client is using. You should have the knowledge of the various EDP softwares, SAP softwares which are available in the market, management information system, enterprise information system, financial information system of the client. That is also expected from you. Must know how to maintain the what? Confidentiality, and must be possessing a great knowledge of behavioral sciences, because internal auditor deals with human more than figures. His majority of the time will be spent by dealing it with the humans, and that makes his job very tough, because he is dealing with the human more than the financial figures. So that is what you need to understand about the various professional and personal qualities of an internal auditor, right or not? Next point, performing the internal audit engagement. There are total 5 steps we need to take care of, and after that, remaining miscellaneous topics, and then after that, our 600 series of standard will be starting. Now, see how to perform an internal audit. Obviously, you need to obtain the knowledge of the client's business. Prepare a plan, go and talk to the key stakeholders, go and talk to the TCWG, go and talk to the audit committee, go and meet with the board of directors, acquire the knowledge of the client's business, its environment, its internal control system, like we do as an external auditor. Should have no entity from inside and outside. You should understand their objectives, strategies, investment patterns, regulatory framework, industry operations, who are the major suppliers, who are the major customers, right or not? from where we procure the raw material, who are our distributors. Everything should be known to you from inside and outside. Like we call it as a AQOCB, acquiring the knowledge of client's business internally as well as externally. You should know having the knowledge of IT controls of MIS system, FIS system, AIS system of your client. Because without having the knowledge of these things, you can't proceed as a which auditor? Internal auditor. So step number one is understanding the client's business and its environment. Step number two, अब अपन performing the audit planning. अब आपको planning करनी पड़ेगी. What do you mean by planning? Planning means what? As per SA 310, I told you so many hints will come. As per SA 310, his planning initiates with the scope and determined by the audit committee and board of directors. Get your planning done and get it approved by the audit committee and the board of directors of the entity. Sir, this is my plan within this much of time period. This is my coverage. Please get it approved by the audit committee and board of directors until and unless it is not. See, in case of external audit, you don't need anybody's approval. That is your sole planning and that is your sole strategy which you make. But here, you need to get it approved by the board of directors and audit committee. Once his plan is approved, must communicate his detailed plan with his team members, right or not, and must also communicate his plan with the board of directors and audit committee so that they can make him available with the information whenever he'll be looking for. Because suddenly if you will have the information in a surprising manner, they will not be able to provide you the information. Must acquire information access right to perform his what? Audit. आपको access rights मिलने चाहिए. Right or not? You should ask the management that I need unlimited access on the books, like what we call in the case of WRL, what we take. I need access to the people inside and outside. In case the need arises, I should also be allowed to take the external help. Get it approved by the chief internal auditor. Your plan should also be approved by the chief internal auditor, CIA. Next one, work plan must be prepared to understand, control environment risk to mitigate for the management. So step number one was what? Acquiring the knowledge of the client's business. Step number two is performing the planning. But make sure that here your planning must be approved by the board of directors and audit committee. Main point. Gather the required information. अब अपन execution कर रहे हैं. Means what? We need a SAAE, sufficient and appropriate. Audit evidences must obtain the required information to test, check and find out its integrity, source and correctness. अब obviously आपको information will be provided by the management and anything provided by the management is persuasive in nature. What in nature? Persuasive. तो हमें उसका क्या check करना है? Integrity of the information. We have to check source of the information. We have to check completeness of the correctness of the information. We have to check like what we do in external audit, TOD, checking the various assertions basically. Next one, try to obtain most of the information directly from the what source. Like we use 505 external confirmation letters, right or not? Take the confirmation from the confirming parties. Talk to the legal expert directly with the source. If you want to have a knowledge on the pending litigation, better to talk with the legal expert panel. Try to obtain the information directly from the source means what? It will be more reliable. If you'll directly take it from the person who is required to give you the information via any, instead of via any channel. Give advance intimation. Why advance intimation is required? So that information you are looking for will be provided to you and assisted to you on time. Right? Then step number 4, perform audit checks. अब हमने एविडेंस कलेक्ट कर लिया. सी स्टेप नंबर 1 में वी एक्वायर्ड द नॉलेज, स्टेप नंबर 2 में वी डिड द प्लानिंग, स्टेप नंबर 3 में वी आर गैदरिंग द इंफॉर्मेशन, स्टेप नंबर 4 में वी हैव टू डू द टेस्ट चेक, सैंपल चेक. For that analytical procedures, we have to do TODs, TOCs, all that, and different hint of standards will be there. Like see, SIA 6 analytical procedures you have to perform, SIA 5 sampling you have to do, right or not? SIA 320 internal audit evidences. We have now, that's what I'm telling you. Make a list of these SIAs. Like SIA 210, managing the internal audit function was there. Right or not? Just now we have done SIA 5 talks about sampling, 6 talks about analytical procedure, 320 talks about internal audit evidences. Are you getting the point? 350 talks about reviewing and supervision of your audit assignment. Make sure that you should do the proper DRS on your team, direction, review and supervision, before taking their work. You should make sure that the right person should be allotted with the right time. And you also have to prepare your own documentation. That is 330, SIA 330 internal audit documentation. So 5 is talking about sampling, 6 is talking about analytical procedure. आपको trend analysis, ratio analysis करने पड़ेंगे, sampling, statistical, non-statistical करनी पड़ेगी. Right or not? 350 as you have to produce your review and supervision of your audit assignment करना पड़ेगा. 330 you have to maintain your own internal audit documentation. 320 you have to maintain your own internal audit evidences.
Only these hints you have to remember. Make a list of these standards and prepare a list. And then finally, you have to report your internal audit issues to the requisite management. That is called 370. 370 के थ्रू आप रिपोर्ट करते हो. 380 आपकी रिपोर्टिंग का फॉर्मेट बताता है, एंड 390 इज कॉल्ड फॉलो अप ऑडिट. नाउ एज पर SIA 370 रिपोर्टिंग द रिजल्ट्स, IA shall prepare first the draft report. हम लोग हमेशा ऐसे ही करते हैं. We first prepare the draft report and get it approved by the TCWG. कि boss, if there are any minor changes you want me to do before finalizing it, we'll do the needful. Right or not? Then in this report, there should be so many paragraphs you have to put, like what is your scope of audit, what was the coverage of your internal audit, what exclusions, what were the limitations on your scope, what is the period of your audit, you did it quarterly, semi-annual or annually, summary, gaps discovered, and recommendations. That is all as per SIA 370. This is called your structure of audit report. Once the draft is finalized, it should be properly formatted as per SIA 380. So 370 के through, SIA 370 के through, you are reporting your findings. And once your reporting draft findings have been finalized, then you have to put it in a proper format of SIA 380, issuing the assurance report. So 380 talks about a report. It shall be issued to the audit committee along with recommendation. Because remember one thing, as per LODR requirements and as per most of the bigger companies, audit committee directly comes in touch with the chief internal auditor as well as the internal auditor. And finally, we are going to use the SIA 390. Now let me tell you one thing, how in this point the external auditor is different from internal. अब यहाँ पे क्या होता है कि एक्सटर्नल ऑडिटर क्या करता है? एक्सटर्नल ऑडिटर्स जॉब एंड्स व्हेन ही हैज गिवन द रिकमेंडेशंस. Am I correct or not? Internal auditor's job does not end on only giving the recommendations. He also has to make sure that along with the recommendations, he should do the follow-up audit. What do you mean by follow-up audit? Pinching the management at regular intervals and asking them, sir, why you have not taken up the action on my recommendation so far, which I have given to you? Why you are delaying to mitigate your risk? इसे बोलते हैं फॉलो अप एडेगा. रेगुलर इंटरवल पे इंटीमेटिंग द मैनेजमेंट की एक्शंस आर स्टिल पेंडिंग, व्हाई यू आर नॉट टेकिंग. एक्सटर्नल ऑडिटर डज नॉट बॉदर. He simply reported the findings, gave the modifications, recommendation, letter of weaknesses, his work ends. But internal auditor does the follow-up as well. Right or not? And basically this follow-up is done by CIA, Chief Internal Auditor. Right or not? CIA of the entity. That is SIA 390. So what was SIS 5? It was on sampling. 6 was on analytical procedures. Am I correct? 5 was on sampling. 6 was on analytical procedures. 330 was on internal audit documentation. 350 was on internal audit evidences. 350 was on review and supervision of the internal audit assignment. 370 was on reporting findings. 380 is on what? SIA 380 is on proper report, assurance report. 390 is on follow-up. Now see follow-up, monitoring and reporting of prior audit issues. Chief internal auditor is expected to let the management know at regular intervals to take the necessary action. वो follow-up करता है management के साथ. Why you are not taking necessary action? On the basis of the recommendation given, which is also known as follow-up report, including a paragraph ATR, action taken report. One paragraph you have to include in your report कि on your recommendations, what actions have been taken by the entity. Are you getting the point or not? Now, there are some few additional topics which you need to understand. Remember one thing. There are two types of report. One is called assignment-based report and one is called comprehensive complete report. Comprehensive complete report is basically given by CIA, Chief Internal Auditor. Assignment-based, a particular area-based report is given by your internal auditor who is working under CIA. Let me tell you one thing. SIA 370 has so far categorized only the particular assignment based report. Comprehensive internal audit report has not been notified yet. But let me tell you the differentiation between the two. Now see, internal audit report covering a particular assignment, first of all, covers a specific area, whereas it covers the overall all internal audit assignments at one place. So the version of the comprehensive internal audit report is bigger as compared to particular assignment. This is signed and prepared by the internal auditor. This is signed and prepared by the chief internal auditor. That is the difference number 2. So it covers the specific area and it covers the full internal audit assignments which have taken place in the full year. It is prepared and signed by the internal auditor. This one is prepared and signed by the chief internal auditor. Right or not? Here, including the key observations, findings, procedures undertaken, issued to the auditee as well as to the local and executive management. Here, it is directly being issued to the highest level of authority in the entity, that is called audit committee. And it reports on quarterly basis. So SIA 370 has so far given the recognition to this one. So far, this report has not been recognized, but in the bigger entities, in the listed entities, this report is already in implementation. Lawfully, it is not been notified yet. Lawfully, only the assignment based report has been notified. But yes, in the bigger entities, this report is also going on. Are you getting the point or not? So far, SA 370 covers only the assignment based internal audit report. So far, so this audit report has not been taken care of. Now, ensure that internal audit report shall cover the following. अब मैंने आपको पहले ही बताया था कि there is one format, like you should, it's not a proper format, but it is something which is expected from you. Right or not? So if you're preparing the internal audit report, it should have one paragraph dedicated to the scope, audit period, executive summary, summary of your critical findings, impact of such finding and its root cause, then rating the risk on the basis of high risk, moderate and lower risk, then audit recommendations, what are your recommendations, then target timelines for your actions which you are telling to the management ki please take care of my remedial actions on time. Target timelines you have to give it to the management. Response received from the management, that is called action taken report, ki whether the management has taken your recommendation seriously or not. Documentation, IA shall also ensure to retain the following documentation. I already told you 330 talks about SIA, talks about what internal audit documentation. What he should document, draft copy of the audit report and its final report. उसके बाद दोनों की copy होनी चाहिए, draft and final, so that he can understand कि what necessary changes has been made between the draft copy and final copy. Last में a copy containing counter signature by the management on actions taken by them. You also have to understand the fact that ki make sure that as an internal auditor, the recommendations you are giving, so much of hard work you have done, so many reviews you have done. Finally, if you are giving a report with the suggestions, do you expect that entity to follow up your suggestions or not? Yes. तो उसे बोलते take the signature, take the counter signature by the management कि how many actions they have taken so far on the recommendations and the suggestions and advices given by you for the improvement and betterment of their internal control system or operations, policies, utilization of resources on whatever you have given the recommendations. And finally, I told you follow-up. Follow-up is nothing but SIA 390, where the CIA, Chief Internal Auditor, shall monitor on timely basis whether the past audit issues have been resolved or not. Basically, what is the first job under the SIA 390? He will check to the management कि boss last year के जो modifications थे, reservations थे, qualifications थे, are they still unresolved or are they being resolved? Past year के problems have been resolved so far or not. He shall bring it to the notice of the management and TCWG those cases and action plans which have not been taken care of and are still open and what pending. वो timely pinch करता रहेगा. As I told you कि boss, so far I have given you 20 suggestions. You have taken only the action on 2. Remaining 18 are still open and are still pending. Please do the needful. Otherwise, there is no point of conducting this much of deep internal audit on the entity. Next one, he must include one paragraph called ATR. What is ATR? Action taken report in his report. And same responsibilities are required to fulfill by the internal auditor with the management. So they are saying if you are making a comprehensive audit report, so definitely CIA will be doing the same thing. And if you are making a assignment wise or internal audit report, so definitely internal auditor will take care of these things. So same responsibilities which the CA is carrying towards a comprehensive internal audit report, the same responsibilities are required to be carried out by the internal auditor if it is a specific assignment based internal audit report. So this is what brings an end to your topic called internal audit, except one very small topic called, I will make you understand, audit trial is also given. That I'll make you understand what do you mean by audit trial topic here. Are you getting the point or not? So first we'll understand the audit trial topic and then we'll start with the remaining standards, right? Let's take a break for some time and I'll see you guys in the 600 series. So total 600, SA 600, 610, 620, but only after understanding little bit about the audit trial, right? See you guys. Okay, so let us understand everyone the concept relating to audit trial. As I already told you that key internal audit may we have covered what are the various standards which are associated with internal audit, what are the various
management functions which are associated with internal audit, and what are the major like standards which are going to be applicable in internal audit, the steps of doing the internal audit, follow-up audit, reporting the findings, all that has been done. But now, and the qualities of the internal auditor, now we are going to understand a new topic which has been recently added, that is called what? Audit trial. Are you getting the point? The name of the topic is known as audit trial. Basically, what do you mean by the term called audit trial, everyone? Audit trial is basically it's a feature in your accounting software by which auditor will come to know that ki, are there any changes made in the books of accounts or not? Are there any new entries have been added in the books of accounts or not? Any new or any existing entries or transactions has been deleted? Are there any changes made? Now the question is, sir, how auditor will come to know, how a chartered accountant in practice will come to know, how an internal auditor will come to know with the help of this feature called audit trial. Audit trial is basically tracing right from the end to the source. Now, whenever we log on to this particular accounting software, whenever he or she will make any necessary changes, edit logs will be created for that. Who made the changes, when, which particular area was changed, at what time it was changed, everything will be recorded. So when the auditor will have an access over their accounting software, we will automatically come to know that who has made the changes in which manner. That is what the basic reason or basic idea behind the audit trial, everyone. So audit trial basically is tracing the digital footprints. Like say for example, a hacker has hacked or someone has made an unauthorized access. So it will tell me that how many unauthorized access was tried by the unrestricted person. Like say for example, someone who is not having the access rights according to their rank, but he is trying to access the particular feature, he's trying to manipulate the master file. So automatically all those edit log files will be created, and I will come to know that how many times this particular item has been changed, inserted or deleted. So this is what the benefit of what? Audit trial, right? So this is what is the meaning of the term called audit trial. You will all come to know, right? Now in the audit trial, what we have to see, now read this. Audit trial is also known as edit logs, and also which by which the visible trial of the evidence will be available, with the help of which an auditor will be able to trace original input source from where such reports or the statements have been what? Generated, right? Next point, it also refers to the sequential record of the changes that have been made to the data. So we will automatically understand in a chronological manner who has made it, when it was made. All those details also will be available in case of what? Audit trial. If there are any changes made like inserting a new data or deleting it or modifying or updating it, it all will be recorded in the form of log files. Basically, the invisibility of making the changes, making the unauthorized changes will be made visible to the auditor. So the records of the audit trial will fetch the following information to the auditor. What is the information? Number one, who made those changes along with the user ID. Someone who has made a changes, then his user ID will be available. Timestamps, when the changes were made. Are you getting the point? And what data was changed, whether it was a success or it was a failure, whether he was successful in making the changes or he was a failure in making the changes. All that will become visible to the auditor with the help of the feature called what? Audit trial, everyone. Now, audit trial must be enabled in the accounting software when its all features are and shall be made available to the auditor. And to ensure that it is enabled, company must install a specific IT control for the same. Make sure that when the auditor is coming for the audit, be it an internal auditor or be it an external auditor, your feature of audit trial in your accounting software must be enabled. For that, company has to install some IT controls for the same. Such IT controls will be evaluated by the auditor whether it is appropriate or not. Now, following are the illustrations of the IT control which are required to be implemented. IT control number one, controls informing when such audit trial features were disabled or deactivated. So, if someone has deactivated or disabled the audit trial feature, that also we will come to know that who has done it, with the user ID, why they have, who has done it and when they have done it, right, or not, with the timestamps. Controls that every individual shall be assigned a
separate user ID, so that it will be easy for us to track. Because if all the users will be using a common user ID, then it will not be easy for us, or it will be difficult for us to understand who has done it. So every user will be given a separate user ID, so we will automatically come to know that who has made the necessary changes. Then controls that any changes made to the configuration of the audit trail feature must maintain log files for the same, and if audit trail was disabled or restricted in any authorized way, maintaining log files for also the same. So either the audit trail feature has been deactivated or disabled, either unauthorized way or authorized way, uska log file should be maintained, so that auditor will come to know that whether it was done in a justified manner or unjustified manner, authorized manner or unauthorized manner. Controls that periodical backups be taken and secured. So this is what all about you should have known about a very small topic called audit trail. Let me tell you one thing, this topic of audit trail may be a possibility that this topic may appear in your examination. So you have to be very, very careful with this particular topic, as it is a brand new topic. So chances of coming into the examination becomes quite high, right? Now, let us understand the 600 series, everyone. Let us wind up the 600 series. As I told you, 600 series also we are going to do it along with the what? This particular chapter. Now, let's understand that. Okay, let me just take out that particular file. Yeah. So let's understand the 600 series. So I think we are done with the steps to be undertaken to do a internal audit also, right? Okay, so let's understand the 600 series. The very first standard which we are going to take up is known as SA 610, using the work of internal auditor. See, already you have understood and you have done that standard at your intermediate level, so we'll do it in a faster manner. See, in this standard, we will cover that the external auditor may make the use of the work of the which auditor? Internal auditor, as well as he also can make the use of the direct assistance of which auditor? Internal auditor. So there are two things. Either you may make the use of the work of internal auditor, or you may make the use of the work of a direct assistance of the internal auditor. The major thing here is you need to evaluate you need to evaluate whether internal audit function is suitably installed in the entity or not, right or not. Once you have evaluated the internal audit function is suitably installed in the entity or not, then you have to decide on which area you need his direct assistance and which work you would like to use it. Once you have decided which area where you would like to take direct assistance, or which area where you would like to use his work, then the third thing you have to decide to what extent you are going to place the trust and confidence on the same. So see, this standard deals with two things: using the work of internal auditor and using the direct assistance of internal auditor. So these are the two things you need to do when you're taking care of internal audit. EA shall first evaluate the IA function. EA stands for external auditor, IA stands for internal auditor. External auditor first evaluate the internal audit function, whether internal auditor is competent and capable enough so that I can use his work or direct assistance or not. Second thing, determine which work and in which area you need his work or direct assistance. And the third thing, once he made up his mind, he should determine the extent to which he is going to use the work or the direct assistance. Next thing, using the work of internal auditor. Whenever we think of using the work of internal auditor, always understand we have to first test some following factors on the internal auditor. Factor number one, his level of competence. Is he capable and competent enough in his QCPPs or not? Second thing, his degree of independence and scope of work. We have to see that how far he is independent as an external auditor. We have to check that is he going to be independent, and what is his scope of work? Is it wider or very limited or narrow scope? IA's objective thinking. Is he carrying any impartial and unbiased attitude or not? His reporting responsibility. Is he allowed to report only to the restricted authority, or he can report it to the audit committee also, because if he is allowed to report it to the audit committee, it means his reporting responsibilities are quite wider, and that will be a good indication that external auditor can use the work of what internal auditor. His abilities and capabilities means whether he is having a good team, good equipment, good tools, techniques, and having a requisite experience or not. QCPPs of internal auditor, quality control in policies and procedure, whether his team is good, whether he maintains a good quality control in his policies and procedure, does he regularly update and revise it or not, that will come to know by doing a market research or not, right? Now his systematic and disciplined approach we have to check. All these things, how we are going to check? We are nothing but going to send a questionnaire to the internal auditor by which we will come to know about his approach. Well, what is his organizational status? Does he enjoy a good reputation in the entity or not? Proficiency in audit, will he be able to have a same approach what the external auditor is thinking or not? All these above factors will help me in deciding whether to use the work of internal auditor or not, and whether to use the direct assistance of internal auditor or not. One extra consideration at the time of direct assistance you have to take it, remember, not in case of work of an internal auditor. If you are thinking of using the direct assistance of which auditor, internal auditor, you have to check that direct assistance should not have been prohibited by the law or regulation. If it is prohibited by the law or regulation under a particular framework, then in that case you should not use the direct assistance of internal auditor. Now, following are the areas and circumstances where internal auditor's work shall not be used. Obviously, internal auditor work will not be used if all those factors which I have tested above came to be negative. Suppose he is lacking in competence, he is lacking in QCPPs, he is lacking in organizational status, he is lacking in systematic approach, his areas are the areas already completed and where the compliance of the SS are required. Because remember one thing, those areas which are already completed and those areas where the specific compliance of standards on auditing are required, there we should not use the work of internal auditor, because internal auditor works as per SIAs and we work as per SAs. So our approach, our objective, our thought process, everything differs. So remember one thing, those areas which are already covered, and because otherwise it will be a repetitive work na? If the areas are already covered and we are still asking the internal auditor to give me his work, so already areas are covered, why you want to do the duplication? Second thing, where the standards on auditing are required to be applied, there also you should not use the work of which auditor? Internal auditor. Now where his work is less to be used, his work is less to be recused where the significant management estimates and judgments are involved. Remember one thing, whenever the management makes the significant estimates and judgment, internal auditor might have helped the management in doing the same. See, internal auditor was with the management throughout the year. When the management was making those significant estimates and judgments, he must have been the part of that team which helped the management in making those estimates and judgments or not. So it will be a self-review thread. So you should also try to avoid his work or to use his less work in case the management estimates and judgments are involved, where his relevance of the work is very less, where you think that his work is very much relevance of his work is very less, so make sure that you should not use his work. Where his objectivity may get what? Compromise. If you think that in this area his objectivity may get compromised, say for example the department where I need his assistance or where I need to use his work, he has already worked in that department for a longer period of time, so he will not be able to maintain the objectivity in such cases. So in such cases you have to make sure that you should either avoid his work or use less of his work. Where the ROMUM is already high, see, when the ROMUMs are already high, then in that case better to avoid the work of internal auditor, even though he is an independent appraisal function, even though he has done his work properly, but ultimately his loyalties are towards the management. So where the ROMUM is very high, where the standards on auditing are required to be used, where the areas are already covered, where management estimates and judgments are involved, in these particular areas internal auditor work either should be avoided or it should be reduced. Either his work or what do you say, direct assistance, both should be avoided or it should not be used at all. Now communication with TCWG in IAS work or ISDA, whenever you are going to use the work of internal auditor, the very first thing you need to understand is you need to communicate with the TCWG that in writing. First of all, you need to communicate in TCWG in writing to what extent you are going to use the work of internal auditor, when do you need the direct assistance of internal auditor, so that they can make their internal auditor available for you. You need not wait for extra time to get your information or to get your what assistance. So basically what they are trying to tell that if you will intimate with the TCWG well in advance, to what extent, all those things, they will make it available for you. So we shall communicate. Who shall communicate? By the external auditor to the TCWG in writing, defining the extent of his work or extent of his direct assistance, and shall not be excessive in nature. Make sure that you should not tell them ki, no, 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 I'm going to use him throughout the audit and this and that. No, it should not be that much excessive. Otherwise, you are taking or you are increasing your audit risk. And it shall be documented that you have already communicated it to the TCWG. Miscellaneous considerations: his objectivity, independence, confidentiality, the qualities of internal auditor shall be tested by external auditor at regular interval to reduce the risk of what? Threats. So it's not that you have just started using his work or you have made him as a part of your direct assistance. You are not going to reevaluate it again. Wherever you think that it is looking necessary, you can reevaluate his independence, objectivity, confidentiality at the regular intervals. Next thing, be it the internal auditor's work or be it his direct assistance. See, EA stands for external auditor, IA stands for internal auditor, EA stands for external auditor, IA stands for internal auditor, DA stands for direct assistant. Be it IA's work or be it his direct assistance, external auditor shall try to reperform. See, try to understand. When the internal auditor is giving you his work, he might have done so many calculations, he might have done so many computations, he might have done so many analysis, reperform them, recalculate them, recompute them to get the better quality and to get the better trust and confidence on his work. If your calculated work and his calculated work are matching, it means definitely he has done a good job. That's what they're saying. So check him at the regular intervals and recalculate or reperform the work or direct assistance which you have taken from him. Ensure not to compromise on QCPPs of internal auditor. Make sure that at every point of time, his quality control in policies and procedures should be at the acme position, should be at the pinnacle position, should be at the top position. So make sure that if you think that his quality control in the policies and procedures is going down, that is the time you should immediately stop taking his use of work and stop taking his direct assistance, right? Next one. As per the requirement of 505, very, very important point, which I'm going to tell you, whenever the internal auditor, whenever you are making the use of the work of what? Internal auditor, especially in the areas of 505, external confirmation, never allow him to receive the external confirmations, never allow him to do the analysis and assessment of external confirmation, because remember one thing, his loyalties are still towards home management. So make sure that you should only give him and only clerical work. Basically, so you should try to take his direct assistance in case of external confirmation area, and you should also try to not take his use of his work when it comes to the external confirmation area. That is what they are saying. Basically, I'm talking about the PCRs and NCRs, positive confirmation request and negative confirmation request. Do not allow him to handle it. If it is a assembling kind of work or routine work, just separating between PCRs and NCR, that kind of work you can give him, but do not allow him to assess them, do not allow him to handle them. Only the routine kind work of assembling you can give him. Are you getting the point? Then in case external auditor wants to use the direct assistance of what? Internal auditor. Now remember one thing, this is the extra point. In case external auditor wants to use the direct assistance of internal auditor, so basically there are total 8 tests you have to do. Now, these 8 tests are broadly classified into 2 major tests. One is called objectivity test, where we would like to test his impartial and unbiased attitude, and one is called competence test, where I would like to know his knowledge and skill. Let's first understand what 4 tests we are going to do in objectivity test. Point number 1, make sure that check his organizational status. Is he enjoying a good organizational status in the entity or not? Second thing, he should not have any financial relationship with the client. If you think that he has developed any self-interest threat or financial relationship with the client, do not use his work. No family relationship with the client. If you think that he has some family relationship with the client, then also do not use his direct assistance. And make sure that he should not be involved in that department where you are looking to use his direct assistance, because that will be a self-review threat. So no organizational good organizational status, no family relationship with the client, no financial relationship with the client, and no connection with that department where you are going to use his what? Direct assistance. Am I correct or not? On the other side, you have to check his competency test. Now, in the competency test, may check his proficiency in audit, check his adequate knowledge in AFRF, applicable financial reporting framework, check whether he carries the necessary skills and competence or not. Now, check his QC, PPs, quality control in policies and procedure. How we are going to check all those things? By sending him a questionnaire. Are you getting the point? You cannot simply just directly PI him or means personal interview him. You just simply send him the questionnaire. Let him answer those questions, evaluate those answers. You will automatically come to know that how competent and skillful he is, how proficient he is in audit, and how much knowledge he is carrying relating to the applicable financial reporting framework. But most important of all, check his hiring and recruitment policy. Now, what do you mean by hiring and recruitment policy? Check whether he was a reserved candidate or he was a deserved candidate. So, what do you mean by that? Now, see, understand his CV, understand his resume. From there, you will automatically come to know that whether he was a reserve candidate or deserved candidate. Suppose if he's a backdoor entry, he's just a BCom qualified but became internal auditor, then definitely he has got some people's back who are allowing him to work in that entity. Are you getting the point or not? But if you think that that person is nothing but going to be, you checked his CV and you came to know that he's a rank holder, he's a gold medalist, he's a 15 years of experience in chartered accountancy. So all these things matter before making the use of the which direct assistance of an internal auditor. So basically, these are the two tests you have to do. One is called objectivity test and one is called competence test. Objectivity test, may again repeating, good organizational status we want, no family relationship with the client, no what to say financial relationship with the client, and no relationship with that department where he is going to be used as a direct assistant. And more important point, in case of competence test, check his proficiency in audit, adequate necessary skills and competence, and adequate knowledge he is carrying relating to applicable financial reporting framework and his hiring and recruitment policy. With this, you will be rest assured that yes, objectivity wise he is good and competence wise he is good. And moreover, ICI has said that when you are thinking of using his direct assistance of a which auditor, internal auditor, make sure that enter two written agreements. One with the authorized representative of the company, which means with the company, and one with the internal auditor himself. Now, the one agreement which we are entering with the company, in that agreement, you have to ask the company to give you the two declaration. Declaration number one. What is the declaration number one? Point number one, they will not interfere in the, they will not give any work to the internal auditor till the time his direct assistance is not getting completed. Am I correct? And they will not interfere with the internal auditor. Internal auditor will be only and only listening to which auditor? External auditor. So read this one, declaring that they shall allow internal auditor to follow the instructions of only what? External auditor during the direct assistance, and they shall not interfere internal auditor in providing direct assistance to external auditor. No company work will be given to you. Right or not? These are the two declarations we need to be mentioned in the written agreement which we are entering with the authorized representative of the company. Now, the same written agreement we have to enter with whom? Internal auditor. Now, internal auditor will say that till the time I'm giving the direct assistance, I will maintain integrity, objectivity, independence, and most importantly, confidentiality. And what is the second declaration we want? In case he will come across any kind of threat, like his independence or his objectivity, integrity, or confidentiality is getting threatened due to any particular reason or any particular situation, he will immediately inform it to the external auditor, and external auditor immediately will stop taking direct assistance of internal auditor. These are the various two declarations we need from whose side? Internal auditor side, and those were the two declarations we need from whose side? Company side. So these are the two written agreements which you need to enter, one with the company and one with the internal auditor, right? So that brings an end to making the use of which auditor? Internal auditor's work. Are you getting the point or not? So this is what you need to understand about the everything essay 610. Because essay 610, why we are able to do it very quickly? Why? Because essay 610 is very much connected with internal audit. Everything which I needed to tell you about internal auditor, that is already being covered in the chapter earlier. So that's the reason major points which I thought that you should know, which may come in the examination relating to this particular area. That is what I thought of asking you in the particular question, right? Now, let's understand using the work of the another auditor that is called SA 600. Then after that, we'll see if we can ask you, I will ask you some 1 or 2 questions for which answers I'll give you at the end. Now, what do you mean by SA 600 using the work of another auditor? First of all, to try to understand one thing very clearly, SA 600 does not cover if the joint auditor is using the work of another joint auditor, because that is covered in 299. SA 600 does not cover when the user entity auditor is using the work of the service auditor, because that is covered in SA 402. SA 600 does not cover when the external auditor is using the work of internal auditor, because that is covered in 610. And SA 600 does not cover a current year auditor using the work of the preceding year auditor's work, because that is covered in 510 and 710. First of all, to remember these 4 things. SA 600 does not cover joint auditor using the work of another joint auditor. It does not cover external using the work of internal. It does not cover user entity auditor using the work of service organization, service auditor. It does not cover a current year auditor using the work of what? Previous year auditor. Are you getting the point? That is what is not covered in SA 600. That is the point number 1. Point number 2, this standard deals with when the principal auditor wants to use the work of component auditor. Now, suppose you are a holding company auditor, you are a parent company auditor, you want to use the work of a subsidiary company auditor, you want to use the work of a joint venture company auditor, you want to use the work of a associate company auditor, departmental auditor, unit auditor, locational auditor. So this is what. So remember, the flow of this standard is not from subsidiary auditor wants to use the work of principal auditor. This is not the flow. Flow is vice versa. Principal auditor, holding company auditor, parent company auditor, head office auditor wants to use the work of the component auditor or the branch auditor. Are you getting the point? So we will denote the principal auditor as a PA and the component auditor as a CA. Now, what are the requirements of SA 600? Principal auditor needs to decide whether his own participation is enough or not. पहले तो प्रिंसिपल ऑडिटर को ये डिसाइड करना पड़ेगा कि बॉस, कैन आई डू द वर्क ऑन माय ओन और नॉट. इफ यू थिंक दैट यू कैन डू द वर्क ऑन योर ओन and you can do the all the compilation on your own, all the consolidation adjustments you can check on your own, there's no point of using the work of the component auditor. If you think that ki yes, you really need the help of what? Component auditor, then only you should go for the extension of using the work of component auditor. What are the factors you need to keep it in mind? If such area is already covered by the principal auditor, if you think that such area is already covered by the principal auditor, then in that case, you need not that much use the work of the component auditor. Only materiality matching concept is going to be there. If such area is not covered by the principal auditor, then in that case, you need to use the work of the component auditor and may consider, because you are now using the work of component auditor, then you may consider that level of Romam may could be higher in this case, because his materiality consideration and your materiality consideration, his professional judgment and your professional judgment could be different, right or not? Next one, whether additional procedures are required or not, that also the principal auditor has to check. Now, principal auditor's audit procedures. Now, what are the audit procedures I have to do? Now, generally, he shall use the work of the component auditor by putting a reliance and trust on the CA's work, unless there is any unusual or fraudulent transaction event has come to his notice. He's saying that generally the work of the component auditor should be taken as it is, until unless you see any unusual transaction or any fraudulent transaction, or unless you have any suspicion on the work performed by the component auditor, because component auditor is also a statutory auditor and the principal auditor is also a statutory auditor. So there is a horizontal communication taking place, right or not? Horizontal usage of the work is taking place. So being a principal auditor, see, it was not there in case of 610. 610 में external auditor was using the work of internal auditor, so vertical communication was taking place. What was taking place? Vertical communication. But here, the horizontal communication is taking place. What do you mean by horizontal communication? Here, you are basically understanding whether this particular a person is a CA or not. If that component auditor is a CA, and there is no question of doubting the integrity of his work, unless you will find any unusual or fraudulent transaction. And if this is the case, suppose you found any unusual or fraudulent transaction, he shall examine the books and records and may visit the component auditor as well as the component. Obviously, that is your right to visit the component, na? You have every right to visit the branch offices. And in case the need arises, you can visit and go and verify the books on your own. ensure that he shall not challenge the qualification and competence. See, ICA is very clear in this part. ICA says that if the other auditor, if the component auditor is a member of the ICA, then the principal auditor shall not challenge his qualification and competence. Then if he is not a member of the ICA, then principal auditor has every right to challenge the qualification and competence of the component auditor. That is what the second procedure is expected from you. Third, he must collect SAE that work of the component auditor is adequate and can be relied upon. Now, he has to assess that whether the work of the component auditor can be relied or not. He also should collect the SAE on the same, whether the component auditor's work is reliable, trustworthy, and can he place the confidence on his work or not. PA is supposed to inform following to the CA before issuing his work. Now, there should be a good coordination, communication, and what do you say? Coordination, communication, and cooperation between the principal auditor and component auditor. Now, principal auditor first inform the component auditor what area he is going to use and in which format of the findings he wants the component auditor to report him. So, what work and what report he is planning to rely upon. And there should be a necessary arrangement of cooperation between the two. At the very beginning stage only, they should decide at what level, at what time intervals they are going to communicate with each other, so that at the later stage the things should not go in a misunderstanding manner. Next point, in case any special considerations are there, let's say for example the principal auditor wants the component auditor to do some additional procedures, he should tell them what additional procedures he is expecting the component auditor to do on the behalf of principal auditor along with the time frame. Sir, what do you mean by time frame? Within what time I'm expecting that component auditor to deliver me the results of that additional procedures? Remember one thing, communicate the additional procedures along with the time frame to complete it. Next one, principal auditor must obtain a representation from component auditor. Now see, as you're a component auditor, you're also going to be called as a statutory auditor of that subsidiary. So if that subsidiary is covered under tax audit, if the subsidiary is covered under LODR, if the subsidiary is covered under, what do you say, CARO requirement. What do you mean by LODR? Listing obligation disclosure requirements. So same thing which is applicable to the, what do you say, parent or parent company is equally applicable to the component company. If the component is also a listed company, if the component is also having the tax audit, if the component is also having the CARO requirement, so you simply obtain the WRL from the component auditor ki boss, I am expecting ki you must have done your obligation towards CARO, LODR, tax audit properly, because these are the areas which every chartered accountant in practice or member in practice should be efficient in doing so, right or not? So you just simply need to obtain a WRL from that particular component auditor saying that I expect that you have done your CARO properly, you have done your tax audit properly, and you have done your LODR provisions properly. In case additional procedures have been carried out by the component auditor on PA's instruction, then following needs to be done. Now see, discuss the procedures applied by the component auditor. Now once the additional procedures have been completed by the component auditor, go and discuss what kind of additional procedures you have done. Either they were done as per the directions given by the principal auditor or not. Review component auditor's written summary of his audit procedures and findings. Now discuss with the component auditor and review, before using his work, review his audit procedures, what he has applied while carrying out your additional procedures, and review his findings before making the use of it. Analyze the questionnaires and findings submitted by the component auditor. All those questionnaires which you have already sent to him to understand his competency and qualification, analyze those things. And in case the need arises, principal auditor can also visit the component auditor. There is no limitation or no harm in the same. Next, the above four considerations are based upon the professional competence of the CA and may not be applied if the principal auditor has an evidence that QCPP of the component auditor are appropriate. Now see, try to understand these four things, why component auditor is doing, why he is going and reviewing his finding, why he is going and reviewing his procedure, why he is going and reviewing and visiting the component auditor. Only in case he has a little bit doubt on the QCPPs of a component auditor. If the component auditor's quality control in policies and procedures are already good and you have an adequate evidence for the same, and you already know that he is in the market since last 20 years, he is a very rich person in experience and specialization, then I don't think so that there is any need to do any of these four things by visiting the component auditor. No requirement of any review. So you can simply place a trust and confidence, but not blindly. As I told you, in case any suspicion transaction comes to your notice, or in case any unusual thing or abnormal thing comes to your notice, or in case you think that there is an unusual transaction has happened, fraudulent transaction has happened, you have every right to do that. But if you already have an evidence relating to his QCPPs, there is no point of doing this all these four things in that case, right or not? Next point. In case of significant findings, let's say for example, once the component auditor has given the work to the principal auditor, the principal auditor found out that there are significant findings. Then in that case, what you should do, principal auditor must consider the significant findings brought to his notice by the component auditor. We must consider it. If the need arises, he can hold the discussions with the management of the component. He can go and visit the component and can discuss the things with the management and TCWG of the component, and in case the need arises, with the component auditor as well. Or in case the need is too much arisen, then in that case he can tell the component auditor to do some additional FABs, or he can do the additional FABs on that component to get the better level of assurance. If it is circumstantial in nature, PA must do the supplementary TOCs on supplementary TOCs on component either by himself or by the component auditor. या तो आप खुद कर लो या आप component auditor से करवा लो. Right? The above point number 6 and 7 becomes highly significant and must be done by the PA if the component auditor is a qualified professional in case of foreign branches. देखो 6 and 7, what they're trying to tell is that when you have to review his work and when you have to go and visit the component, try to understand one thing now very clearly. What about the foreign branches? Foreign branches may obviously they're located outside India. Their gaps will be different. Their auditing practices will be different. And their professional judgment of the foreign qualified professional accountant will be definitely different from the one who is located in India. So, especially in case of foreign branches, they are saying that you should do that. Because remember one thing, their GAS are different. What do you mean by GAS? Generally accepted auditing standards and auditing practices are going to be different from India. So in such cases, it is better that you can go and review their work before accepting it. You better that go and have a word with their component. It's better that you go and do do the supplementary procedures either by you or tell him, the person, to do those supplementary procedures. Are you getting the point? This is what is expected from you, especially when in case your component auditor is about foreign national, right or not? Now, डॉक्यूमेंटेशन एज पर 230. व्हाट डू मीन बाय डॉक्यूमेंटेशन? अगर आप एक प्रिंसिपल ऑडिटर हो एंड यू आर मेकिंग द यूज ऑफ द वर्क ऑफ द विच ऑडिटर, component auditor, the boss आपको डॉक्यूमेंट तो करना ही पड़ेगा. सर व्हाट डॉक्यूमेंट्स वी हैव टू डू? डॉक्यूमेंटेशन लाइक योर ऑडिट प्रोसीजर्स यू हैव परफॉर्म, व्हाट इज द नेम ऑफ द component, for whose component auditor work you have used, what is the name of the component auditor, what audit procedures he has done, did he bring any modifications to you, and how you handled that modifications which is brought to you by the component auditor. Each and every communication, correspondence, audit procedures, communication, anything which has taken between principal auditor and component auditor is required to be what? Documented as per SA 230. Now see, list of components and who are the component auditors of those components. Second thing, significance and contribution. Yes, very much important. Group audits में हम लोग पढ़ते हैं कि significance of each and every component's contribution to the consolidated financial statement in terms of amount and in terms of percentage, especially when it comes to the profits, when it comes to the turnover, when it comes to the cash flow, and when it comes to the assets. Are you getting the point? How much each and every component has contributed in percentage wise and amount wise in the group turnover, group profit, group revenue, group assets, and group cash flows. Then conclusions and nature of the reports received from the component auditor. Audit procedures applied by the principal auditor before using the work of what? Component auditor's work. If the component auditor has issued any modified opinion, how PA has dealt with that modified opinion. Everything you had a communication or correspondence with the component auditor should be the part of your what? Should be the part of your documentation, right? That is what is expected from you. Next point. Coordination and communication between the component auditor and principal auditor. As I already told you, there should be a good amount of coordination, cooperation, and communication between the principal auditor and the triple C we call it, between principal auditor and component auditor. Communication from the PA to CA is like this. Now, if you want any additional procedures to be performed by the component auditor, it should be told specifically to the component auditor along with the time frame that we already told, and it should be a written communication. And one more thing, what is a communication the component auditor can do to the PA? If he has any feedbacks to give, if he has any results to give, if he had any about any compliances or about any work he has performed on the directions. And remember, very important point I'm going to tell you now. Remember, if you think that component auditor is facing some critical issues relating to completion of the audit procedures within the time frame that is being told by the principal auditor, there is no harm. Component auditor on the face can go to the home principal auditor and can say that, hey principal auditor, I'm unable to complete your audit procedures within the time frame which you are giving me. According to me, it looks unrealistic. It doesn't mean that ki you are a component auditor, so you do not have any right to say no to the principal auditor. That is nowhere it is written. If you think that ki something is looking impracticable, something is looking unrealistic, you need to have a word with the home principal auditor. You can also communicate. You can also bring it to the notice of principal auditor if any difficulties he is facing, example, unable to complete the work on the time frame basis. Now let's understand what are the reporting responsibilities of the principal auditor. Let's say, for example, if the principal auditor finds out that ki components auditor work is not at all reliable, he is not happy with the findings, he is not happy with the work done by the which auditor? Component auditor. Then in that case, what he can do, after satisfying the requirements of 600, if the PA still concludes that CA's work cannot be used or his work is looking inappropriate, then PA shall what? Modify his opinion. Simple सी बात है. I gave him the directions to perform some audit procedures. He did it, but I didn't like his work. I didn't use his work. I didn't like his work reliably. I cannot place the confidence on his work. So in that case, what you should do? Tell me what you should do. So did you use the work or not? No, I did not use the work. I rather refused the work. Then in that case, so did you get any evidence on his work? No. So you are only left with the option of either qualifying your opinion or disclaiming your opinion. Qualifying when? Qualifying when you think that ki his work was material but not pervasive. Disqualifying, disclaimer when you think that ki without his work the opinion could not have been drawn. So his work was material as well as what? Pervasive. In that case, you can give the disclaimer opinion. Are you getting the point? In case you are not using the work of the component auditor, or if you think that the component auditor's work is looking unreliable. But in case you think that the work of the component auditor is reliable, but he has given modified opinion on his component. He has given a which opinion? Modified opinion on his component. Now, principal auditor, it is not necessary that if the modified opinion is given on the component, then the principal auditor shall also modify. No. He should understand the significance of the modifications given by the component auditor on his overall CFS audit. If he thinks that, now see, on the basis, see, PA must consider the matters of the modification kept by the CA with respect to nature and significance of modification. On the basis of above, PA shall decide whether his report also required to be modified or not. Obviously, if you think that the component auditor's modification is less significant or insignificant, and it does not impact at all whom? Principal auditor. Then in that case, at least do one thing, don't modify your opinion, but at least give a EMP or OMP paragraph as per SA 706. And if you think that his modifications are too much significant, it was a major contributor, one of the major component in the group, and his modification is also leading you to modify your opinion as a principal auditor, component auditor's modification is pushing you to also give a what? Modified opinion. So boss, in that case, you modify it as per SA 705. Now, in this case, it won't be a qualified or disclaimer. In this case, it will be a qualified or adverse because you have a sufficient and appropriate audit evidence. And if you think that his modifications are material but not pervasive on relation to that component, then give a qualified. If you think that it was material as well as pervasive, you can give what? Adverse. So if you are not using his work, you can give qualified or disclaimer. If you are using his work, but he has given a modified opinion, least significant, make the use of 706 by giving EMP or OMP. Highly significant, then make the use of 705, either qualified or adverse. Did you all understand? So this is what you mean by this point. And next, What is a divided responsibility? Always remember that ki in your audit report, you should always show that ki there is a divided responsibility between the principal auditor and component auditor. Generally, you are not responsible. Generally, you are not responsible for the work of which auditor? Component auditor. But if the component auditor work was significant and you did not place the trust on that, or you grossly and negligently ignored his work, where you think that ki you should have done something additional procedures before using his work, but you negligently directly use the work of component auditor, or you ignored his work, whereas his work was too much significant for you. In that case, you will be held responsible as a principal auditor. What they're saying, principal auditor is not responsible for the component auditor's work, but while using the component auditor's work, any suspicion arise or something came to the picture and PA ignored it negligently without doing any further additional procedures, then the PA shall be held responsible for the same. And PA must clearly specify in his report two declarations. Point number one, first, those components which have not been audited by him, so that he can make sure that the magnitude of the components audited by component auditor and what he has audited shall be very much clear in the eyes of intended users. So those components which are not audited by you should be clearly mentioned. Second, indicating their balances and contributions. I already told you in four terms: revenue wise, cash flow wise, asset wise, profit wise, percentage and amount, both cases. So that brings an end to your another standard called SA 600, everyone. Very simple standards. 610 we are done, 600 we are done. Now let's do some questions before moving to the 620, right? Okay, now let us understand one or two questions relating to 600 and 610. Now see, what is this question, everyone? Answer for this question, I'll give it at the end. Once we are done with our essay 620, just remind me once, okay? Now, let's understand the question very carefully. Everyone look at the board. CA Saurabh is engaged partner conducting the statutory audit of BBI Bank for SBT and Associates. The bank has 1034 branches spread all over the country which are audited by the branch auditors. In the respect of one large branch audited by the branch auditor, there were errors in the NPA classification of many advances which were not pointed out by the branch auditor in his report through memorandum of changes, and nil memorandum of changes was reported electronically. So he found out that some classification of the NPA was not done properly, but the but the branch auditor has not reported any such kind of what problem, and there was a nil memorandum of changes reporting was also given as per the electronic basis. During the overall review of financial statement of the bank by the statutory auditor, the above said errors did not come to the light. Statutory auditor also called up the soft copies of internal inspection report. उसने internal inspection report भी मंगाई and the concurrent audit reports of the above branch as a part of overall review procedure. However, these reports also did not point anything towards the irregularities in amount of such accounts. Now, remember one thing: internal auditor has not reported anything. He also now went a little bit beyond. He called inspection report. He called internal auditors report. There also he did not find anything evidential. Now in this case, you have to understand one thing very carefully. Ki as a principal auditor, when you are using the work of a branch auditor, until and unless any fraudulent thing comes to your picture, until and unless any suspicious thing comes to your picture, you are not allowed to carry out the additional procedure. So according to the question, so far he has not got any kind of additional kind of thing. He has not come across any kind of suspicion or fraudulent activity. So he is not responsible for the work done by the internal auditor. But yes, just now we have understood that when you are responsible, suppose there is a suspicion transaction or extra additional procedures you should have done, but you ignored the situation. In such situation, the principal auditor shall be held liable if he is not doing the thing according to his FAPs. Are you getting the point? If the need arises. Now, we will understand this question at the end, but I hope you understood that the internal auditor has given the zero problem in the NPA classification. Internal inspection report also has given. Concurrent auditor report also has said that there are no irregularities. Now, what is the question? Would statutory auditor of the bank be liable for the above lapses? What precautions has to be taken by him while expressing the opinion? I think the only one precaution which he has to take while expressing the opinion that ki boss, these 1034 branches have not been audited by him. Just now, sir, just now we have done this point. Read this point. PA must clearly specify in his report these two declarations. What are the declarations? These two components which have not been audited by the PA, indicating their balances and contributions in the monetary terms. But I still want an answer from your side, and make sure that I will give you the proper answer, icai based answer at the end. Now, let's understand the second question. What is the second question, everyone? Let's understand it from 610. Okay, okay, okay. Not this one. 600 and 610 was over using the work of internal auditor. Let's understand one question from 600. Mm. 600 was over 610. Yes. Now see this point. CA Keshwaraj is conducting the statutory audit of a listed company, Live with Nature Limited. The company is engaged in producing environmental friendly niche product for the newborn babies. There is also a well-functioning internal audit department in the company. Okay, so they do have the internal audit department. On pursuit of internal audit reports, he finds that not only the verification of inventory was attended by the internal auditor at regular intervals, working was also made. So internal auditor was supposed to do something, he is doing it very diligently. Next one. He has also attended the inventory count at the end of the financial year, and no prima facie adverse inferences were drawn by him. However, on going through an inventory report, he gathers that inventories are being held considerable long period before being sold. The internal audit reports have not taken this aspect into the consideration. Should he choose to rely upon the inventory valuation work performed by the internal auditor or not? The answer for this question also will be given at the end, so that you should understand what kind of answer you should have written in your examination, right? So let's proceed with the last standard, SS 620, using the work of auditors expert, and then we'll be wound up with our 600 series as well as a chapter called internal audit as well. Now, SS 620, everyone, using the work of which auditor? Auditors expert. Now, first of all, though, we need to understand, sir, whom do we call expert? See, expert is a person from a field other than auditing and accounting. Definitely, he is from a field other than auditing and accounting. Second thing you need to understand about the expert is that point number 2, there could be two types of expert: management expert and auditor expert. Now, let's say, for example, we were checking the provision for gratuity, right? And management has hired actuarial scientists as actuaries as an expert. So I asked them ki why this provision for gratuity is 50 crore rupees. So they said that, sir, we hired an expert. Look at his report. According to his report only, we have created a provision. Is it clear now? Now that expert is not employed by me. It's not engaged by me. So try to understand that this is not my auditor's expert. This is the management's expert. This is whose expert? Management's expert. So when you're using that work of an expert, you are not making use of 620. 620 never talked about using the work of an expert. 620 says that using the work of an auditor's expert. Whose expert? Auditor's expert. But when the actuary's work you are using in calculating the provision for gratuity, which was hired and engaged by the management, so that was a management's expert. It was not the auditor's expert. Now, let's say, for example, I did not like the work of that expert. Now, I brought my own expert from outside. I brought my own expert from outside, and that expert I'm going to use the work. That is known as auditor's expert, which is employed by me, which is remunerated by me, which is engaged by me. So this chapter is not, or this topic is not on using the work of an expert. This topic is on using the work of an auditor's expert. Repeat, everyone. Yes, using the work of an expert, auditor's expert. Now, once we understood who is called auditor's expert can be of two types: auditor's internal expert, auditor's external expert. Don't write it wrongly. Internal auditor's expert, external auditor's expert. Don't write it. Write auditor's internal expert and auditor's external expert. Right or not? Otherwise, the meaning will change. Now, see, if we'll write internal auditor's expert, so it means an expert who is hired by the internal auditor. You should write auditor's internal expert and auditor's external expert. Now question is, sir, what do you mean by auditor's internal expert? If the expert has been hired within my own firm and within my own network. So I hired an expert from my own firm. Suppose I needed a legal expert advice, and in my firm only there was an LLB. He is also into practice authorized by the Bar Council of India. So I took his opinion. So that is called auditor's internal expert. Suppose I hired an expert from an outside external sources, like someone who was not a part of my network or from another network or from another firm. Then in that case, that is called auditor's external expert. But in both the cases, it is engaged, employed, remunerated, and they provided the services to you. So that's why he is an auditor's expert, not the management's expert. Is it clear to all of you? Right now, next thing. Now, what are the requirements of SA 620? First of all, you need to understand do you actually need the work of an expert or not. For that, there are various factors you have to understand. Significance of experts' work. If you think that without experts' work, your audit cannot be completed, your audit cannot be carried out, so then definitely you have to go for an expert's work. Second thing, auditor's knowledge and experience with the expert. Now obviously the person with whom you have worked earlier and the person with whom you are going to work for the first time, definitely this is also the second factor you need to keep it in mind, how much experience you are holding in working with that particular expert. Second thing, third thing, nature of services of an expert. If you think that the nature of services of an expert are manageable, you can also manage on your own, then try to avoid using the work of an expert. But if you think that the nature of services to be rendered by an expert as completely of different field other than the field of auditing and accounting, and you really can't handle that particular thing, then in that case, you need to have a use the work of an expert. Third thing, risk of material misstatement in financial statement. If you think that without using the expert's work, ROMUM and material misstatement in the financial statement would go very high, then in that case, you should definitely use the work of an expert. Next one, QCPPs of an auditor's expert. Definitely before hiring an expert, like we check the QCPPs of another auditor, we check the QCPPs of internal auditor. You also have to check the quality control in policies and procedures of the auditor's expert, क्योंकि auditor expert का license भी होगा, उसका practicing certificate of practice you can check. You can also check whether he is using his professional, ethical, and technical standards given by his own industry or not. So that is why, like we maintain our QCPPs, he should also maintain his QCPP. That is one of the factor. Then factor number 6, using the management expert. If you think that okay, management's work is reliable. Now question is, sir, how we understand whether the management expert's work is reliable or not? See, try to understand. I will give you a very simple formula how to understand whether the management expert's work is reliable or not. If he is employed expert, if the management expert is employed means on salary basis, then in that case you should avoid using his work. But if the management expert is engaged means on fees basis, then in that case the more fairer chances are there he will be an independent expert, he will be an objective expert. So make sure that in such cases you may think of using the work of management expert. So you have to see, is he a employed one or is he the engaged one? Next most important thing, availability of alternatives. If you think that there is no other alternative available in the market, you have to use and work of an expert, and there is no alternative procedures you can do, so definitely you should go for the using the work of an expert. So these are the following factors you have to keep it in mind first hand to before deciding whether you can use the work of an, do you need the work of an expert or not. Next, let's say for example under what circumstances, what factors we have to keep it in mind if we are making the use of the management's expert, not auditor's expert, management's expert. Point number 1, check his competency and capabilities. Point number 2, whether he is engaged or employed. Just now I gave you the meaning. Next one, whether the management's control over the management experts work is too high. अगर आपको लग रहा है कि management is controlling management experts work in too much manner, so definitely he is a puppet of the management, his loyalties are towards the management, don't use his work. But if you think that management's control over the management experts work is very less, in that case you can take a call and take a call of using his work. Next one, nature, scope and objective of management experts work. If you think that his work his purpose, his objective is relevant for you, then in that case you may think of using his work. Whether the management or experts follow his QCPPs, PET standards, like professional, ethical and technical standards and industry requirements or not, that is also one of the factor you can keep it in mind. So right, so these are the various things you need to understand before using the management experts work. Now next thing, now let's understand ki when we are using the auditor's expert, what factors you have to keep it in mind. Obviously, we have to check the C of the auditor. What is C of the auditor? Competence of the auditor's expert. So we will check his knowledge, we will check his qualification, training and expertise. Sir, can we check his certificate? Can we check his license? Can we check his certificate of practice? Answer is yes, because he is not a member of ICA. He is not a member of ICA. Any person other than the member of ICMA, you can check the what do you say, qualification. Second thing, capabilities. How you will check the capabilities? Is he having his own team or not? Is he having the time availability? Okay, during that time when I'm needing his services, will he be available or not? And then will he be having the good amount of or adequate equipments and tools to carry out his work properly or not? That is how we check the capabilities, right? Then we'll check his objectivity. Objectivity means what? Is he independent person or not? How do we check the objectivity? To understand ki whether he will be remaining unbiased during the audit. What if he has already done the work with the management earlier, or if he's a relative of the management? Then in that case, though, you should completely not use his work. And if you think that ki few years back he has already worked in that entity where we are using his work, then to definitely self-review threat will be there. And in such cases of self-review threat, the ICA recommends that you should simply ignore using the work of a management expert. And see, there's one more thing you have to understand. If you think that ki auditor's expert, if you think that auditor's expert has worked with the home management, and you think that ki there are some threats like self-interest threats or familiarity threats, then it's not necessary that directly you should ignore it by telling him that ki boss, I will not use your work. Then in that case, you may end up taking some WRL from the him, asking him ki did you take any adequate safeguards to reduce your threats to the lowest acceptable level, or did you take any safeguards to eliminate your threats or not? If we can show you that yes, he has taken some safeguards to eliminate the threats and he has taken some safeguards to reduce the threats to the lowest acceptable level, then there is no harm in proceeding with using the work of an expert. That is what I believe that you should do. But especially in case of self-review threat, though, in what do you say, our management or our what do you say, institute is of the opinion that ki best bus in this case, so definitely you should not use the work of an expert any longer. Next one, his compliances with the legal and regulatory framework, license, affiliations, and compliance with the PET standards. You have to check his, like you can check his license, you can check his affiliations, you can check his certificate of practice. And when the expert's competence becomes irrelevant, suppose the purpose for which I hired is no longer available. Are you getting the point? Line of activity of the client has been changed. The purpose for which you wanted to hire him, that purpose is no longer in existence. Client ने अपना पूरा धंधा ही change कर दिया, right or not? Or second thing, when his work becomes irrelevant when the expert does not produce the result as promised. अब उसने आपको promise किया था, no sir, I'll give you the best result, this and that. But when I evaluated his work is completely looking irrelevant to me. Not even a single expectation has been met. So in that case, also expert's work will look what irrelevant to you. Or third case में auditor obtained an evidence which is in contradictory with the word of an expert. So in these three cases में expert's work will look irrelevant to you. So case number one, expert has not delivered his promises. Second, the purpose for which you hired is no longer in existence. Client has changed the line of activity. And the next one is known as nothing but auditor obtained an evidence which is looking very much contradictory with respect to the evidences obtained from the auditor's expert's work. Circumstances where the auditor himself or herself can manage without obtaining the expert's help. Now see, try to understand. If you think that you have anybody in your circle who has an experience in handling those areas, you can take the help of that person. That is how you can avoid the expert's work. If you think that your own partner having an experience, past experience in doing such things, then you can take the help of your own partner. Or if you think that by doing some little bit of course or diploma case, you can enhance your skills. Let me give you one very simple example. Suppose cost audit. So for the cost audit, we generally hire the practicing CMA. Am I correct or not? Suppose cost optimization is the area. So 1, 2, 3, 4 times you might have hired the practicing CMA, but slowly, you will start learning the work, how the expert does, what are the assumptions experts take, what are the basis of their assumptions, what are the sources, what are their methodologies they adopt. So if you think that by doing a particular course, like insolvency professional is a course, a registered valuer is the course, loss and surveyor assessment is the course, right or not? IFRS is the course, right or not? Business responsibility and sustainability standard is a course. All these courses are available, given by the icai. So if you think that by doing such diplomas or certification courses, you can be an expert of that particular field, then in that case, these are the areas by which you can avoid using the work of an expert. Next one, written agreement between the auditor and expert. Remember one thing, you have to have a very good written agreement between both of you, expert as well as auditors expert. Written agreement में क्या क्या लिखा होगा? Point number one, objective of the work. Now, objective of expert's work. Make sure that he should be too much clear, and you should also be too much clear for what purpose you are hiring his services. Second thing, nature of work, what type of services you are going to avail from him. Next, scope of work, within what boundaries he has to work. Can he get the access over the work, or he has to get the access only through the auditor only. Next one, roles and responsibility of experts work. His role and responsibility should be clearly defined. Ki boss, tools and equipment I will not bring, you will bring, that will be your team, separate team. I will not provide you any human resource. आपको ही पूरा टीम लेके आना है, आपको ही पूरे टूल्स लेके आने हैं, आपको ही पूरे इक्विपमेंट्स लेके आने हैं. So that is what his roles and responsibility of the expert should be clearly defined. Roles and responsibility of the auditor will be defined ki I will be the one who will be the bridge between you and the management. You will not have a direct access to the management. You need any information, you need any record, you need any data, you please let me. I will request the management to provide you. So objective should be clear, scope should be clear, nature of services should be clear, role responsibility of the expert should be clear, role and responsibility of the auditor should be clear, communication and reporting should be clear, how we are going to communicate, who is going to be the dialogue officer or liaison officer between you and me, whether I'll be in touch with you, weekly we'll be meeting, what intervals we have to communicate, in which way we have to communicate, what is the mode of communication, is it going to be oral or in the written form? Everything has to be jotted down in that written agreement. Next one, factors leading to the detailed agreement. Agar in case these factors arise, then other than above factors, yes, very much important, you also have to maintain the clause of confidentiality with the expert. Okay, boss, keep one thing in mind. Once the expert's work will be over, he is no longer your agent. You are no longer his principal. So you have to make sure that he should not, spit it out in the outside world, right or not? For that, you need to ensure that he should have entered with you a written agreement relating to confidentiality. And what factors lead to the detailed agreement? If you think that he previously not worked with the same expert, if you're working with him for the first time, you can go for a more detailed agreement with the expert. Second thing, different roles and responsibilities are there in this time as compared to the last year or as compared to the normal agreement. Next one, nature of the expert's work is more significant this time as compared to the last year. Expert is going to get access on a very highly sensitive and confidential information. In that case also, you can go for a additional detailed agreement. And if the expert is from the multi-jurisdictional requirement arises, so if you think that any of these 5 factors will arise, you may go for a additional detailed agreement between you and expert. Next point, evaluation of the expert's work adequacy. अब अपने को देखो, remember one thing, expert is nothing but we have hired to make sure that he should bring me out the input or bring me out the output of how management estimates are looking good or not. So see, like we test the management's assumptions, we test the management's significant estimates made by them, we test their assumptions, we test their sources, we test their basis. Same thing we have to test. We have to test his source. In the source, what we are going to test? Completeness of source, accuracy, relevance, by matching his source with the industry, by checking that whether his source is looking complete and consistent or not, verifying the origin of the source, testing his internal control system if required. So we have to test his source. We also have to test his assumptions and methods adopted by the expert. Methods and assumption में basically we'll check RR, reasonability and reliability, of the and relevance of their method, how is he taken any generally accepted assumptions or not, requirements of AFRA, comparing it with the management assumptions, is it suitable for this specific particular model or not. We are testing his source, we are testing his assumption, we also have to test his findings and conclusion. See, findings and conclusions, again you have to test his reasonability of the findings, relevance of the findings, reliability of the finding, consistency of the findings, and make sure that in case you are not satisfied with his findings, you can hire the another expert to get it tested. Again, I'm repeating, in case you are not okay with the findings done by the expert, you can get it reviewed by the another expert. But before hiring the another expert, better to discuss it with the TCWG. The work with the another expert can be done. Discuss with the TCWG about the expert's work. Are you getting the point? And one more thing, if you think that ki auditor finds that ki expert's work is looking what? Inadequate. Suppose he did his work, everything is did, but it looks inadequate. Then in that case, you try to do the additional FAPs so that the inadequate work should look like a adequate work. But if after doing additional facts also the matter is still unresolved, then the auditor must modify his opinion. Right or not? Now performing the FAPs on your own act accordingly. What they are saying that कि अब ध्यान से सुनना, बहुत important point है. Suppose expert's work has been given to you, but you think that कि expert's work is not looking good, right? And you think that expert's work is required to be more tested. Then in that case, additionally you want to do some FAPs, do it. But after doing additional FAPs also, if you think that your matter is still unresolved, then in that case, see, not getting the required information makes you what? Makes you either qualify your opinion or disclaim your opinion. That's what they're trying to tell. Then modify your opinion, either qualified or disclaim. Now, the major important thing you have to understand that if you are using the expert's work, if you are using the expert's work, when to refer his work and when not to refer his work. Remember one thing, if you are using the expert's work and you are leading to unmodified opinion, which opinion? Unmodified opinion. So boss, there is no requirement of referring the expert's name and expert's work in your audit report. You get no requirement. Reason being very simple, no requirement. क्योंकि ICI क्या बोलता है कि until and unless the law and regulation does not require his work to be referred in your report, do not refer the expert's work unnecessarily. But in case his work has led you to give a modified opinion, either qualified, adverse, or disclaimer, the boss, in that case, you must refer the expert's work in your auditor's report because he will be the best person to make the user understand what type of modification he has kept. So that ultimately brings an end to your experts standard called SA620. And remember, one common line which is applicable for 600, 610 and 620. Understand one thing very, very carefully. Very, very carefully. Either it is 600 or it is 610 or it is 620, using the work of internal auditor, using the work of another auditor, using the work of auditor's expert. In all the three cases, you cannot escape from expressing your opinion. It does not reduce your responsibility of expression of opinion. Because all these three standards are recommendatory standards, my friend. Which standards? Recommendatory standard. Nobody forced you. You made the choice of using their works. Are you getting the point? So that you have to keep it in mind. So that brings an end to your internal audit. 600, 610, 620. Basically, these three standards are not covered in this chapter. These three standards are covered in your audit planning chapter. So your audit planning chapter almost half done as well. Right or not? 600, 610, 620 are covered in audit planning strategy and execution chapter. Now, let's come back to those two questions, which I promised that we will be going through that. Right or not? Now, let's understand the answers to those questions. And let's get away with that. And let's start with the next chapter, audit of PSUs, right? Okay. Now it was yes, first question was relating to 600. Yes. Now see, 600 states that principal auditor would not be reasonable in respect of the work entrusted to the other auditors except in a circumstances. I already told you in that case, see, when the other auditor was giving you the work, you asked the concurrent auditors. From the bank wala case, it is a bank wala 1034 branches were audited by the other auditors. So you check that ki branch auditors work is also not saying any indicating any kind of negative. You ask the inspection report also, you ask the concurrent auditor report also. So there was no suspicion at all from your end. So in that case, if you're not doing additional FABs, you are not guilty. But if it could have been concurrent auditor's report is saying something, and what do you say, a branch auditor report is saying something, and say for example, what is his name, inspection report is saying something, and then you are ignoring those particular areas, then in that case you would have been guilty of professional misconduct. Are you getting the point? So in this case, no need to do any additional FABs. You are not guilty at all. But remember, while expressing your opinion in your audit report, simply write that these 1034 branches have not been audited by you. Now see this, in the given situation, nothing has come to the light of the statutory auditor which would arise his suspicion about the reliability of the work performed by the branch auditor. Therefore, he would not be responsible for the work performed by the branch auditor. Further, it should be clearly stated that 1034 branches of the bank have been audited by the branch auditor. I already told you, you have to go for a, what do you say, you have to go for a, what do you say, a separate responsibility for the same. You have to go for a divided responsibility for the same, right or not? Next question में अपना क्या था, internal auditor was using the work of external auditor was using the work of internal auditor, but he came to know that inventory was being held for a longer period of time. उसमें क्या था, for a particular account balance, class of transaction disclosure, the higher an assessment of ROMA will be there, the more judgment is involved in planning and performing the audit. The external auditor will need to do more procedure directly and accordingly make less use of the work of internal audit function in order to obtain sufficient and appropriate audit evidence. Furthermore, as explained in Essay 200, the higher the assessed risk of material misstatement, the more persuasive the audit evidence will be. अब देखो, there was no indication of any fraud and error in that particular question, but there was one small line written over there कि they are keeping this inventory for longer period of time. They're keeping this inventory for a longer period of time. On the basis of that, we have come to the conclusion that, boss, the more persuasive the audit evidence required by the external auditor will need to be, and therefore external auditor will need to perform more work directly. तो अब आपको क्या करना चाहिए? Because remember one thing, it was written in the question that they were into the manufacturing of a baby products niche product. Niche product means it is completely based upon the likes and dislikes of the socio-cultural environment. It was completely based on the customer preferences. And if they will keep their inventory for long and the customer preferences will be changed, then their fast moving stock will immediately turn into a what? Dead moving stock or dead stock. And dead stock ka NRV kya hota hai? Zero. So otherwise it will be this will push the entity to go into any kind of material misstatement. That's why you need to do more pervasive things in this case. Now see, in the given situation, inventories are being held for the considerably long period before being sold. As companies dealing in niche products for the newborn babies, there is a risk of inventory obsolescence due to the change in customer preferences. It carries a significant risk of material misstatement and requires more judgment on the part of statutory auditor in planning and performing his procedures. In such circumstances, statutory auditor needs to perform procedures directly, like comparing the net realizable value of the products with the cost to verify the completeness of provision and recomputing of the various provision for the obsolete stock. Therefore, in the given situation, he should perform procedures directly in accordance with Essay 610. So he should use the work of internal auditor, there's no problem, but he should be more precautionary. He should be less dependent on internal auditor's work, more he should be doing on his own. So these are the various areas which you needed to understand, and that brings finally an end to our internal audit chapter as well as the 3 standards on auditing more, right? Thank you so much. Okay, everyone. So let us start with the next chapter, that is called Audit of PSUs. Now, in the Audit of PSUs, basically this chapter has been derived from your intermediate level. At your intermediate level, if you remember, you had one chapter called Audit of Different Entities. And in the Audit of Different Entities, you had one small topic of the audit called what? Audit of government, right? On a government audit. So in the government audit, we have done audit of expenditure, audit of revenue, audit of sanctions, audit of stores and spares, audit of commercial undertaking and accounts. So in this particular chapter here in final level, the level of or the content of this chapter is going to be different. Basically, we are going to understand 5 different types of audit here. Point number 1, we will understand what do you mean by financial audit in the PSUs. Point number 2, we will also understand what do you mean by comprehensive audit. Point number 3, we will also understand what do you mean by compliance audit. Point number 4, we will also understand what do you mean by performance audit. And point number 5, we will also understand what do you mean by propriety audit. So these are the 5 types of audits which generally takes place in the public sector undertakings that we are going to understand. Along with that, we will also understand what is the role of CAG in the public sector entity, what are the roles of the various public committees of state legislature and parliament, like PAC committees, that Public Accounts Committee, Estimates Committee, we have the Committee on Public Sector Undertakings, and then we are also going to understand ki, what are the different objectives and scope of this audit, who are the responsible parties to whom the CAG reports, all those things we are going to understand. So let us understand this particular topic. Very easy chapter, but yes, probably you will find at least one question from this chapter. So I would say that ki, yes, this is something, a chapter which you need to consider as a B category chapter, not A category, but B category chapter definitely as well, right? So let's understand this particular topic and let's wind up this particular topic. Now, let's understand this. Now, see, what do you mean by public sector undertakings? Being basically public sector undertakings are those undertakings which are owned and controlled either by the central government or state government or combinedly by the both, and which provides us the socio-economic benefits, and which also helps in contribution of socio-economic development of the country. Now, in India, public sector undertakings are of 3 types. What are the 3 types? Government companies, government departments, and government corporations. Now, what is the difference between the government company, government corporation, and government department? Government companies are those companies in which at least 51% of its paid up share capital. Section number 2, subsection 45. Do you remember that? At your intermediate level, we have done. A government company is the one in which at least 51% of its paid up share capital is either held by central government or held by state government or combinedly by both. Correct? That thing. Second thing, government department. Now, what do you mean by government department, everyone? Now, government department may you have to understand that government departments are nothing but those departments which are taking care of our decision making relating to various ministerial departments like Indian Railways. We have departments like we have Ministry of Railways, Ministry of Finance, Ministry of Company Affairs, Ministry of Corporate Affairs, Ministry of Defense, Ministry of Agriculture. All these are known as what? Government departments. And then we have the like currency printing press. Then we have our what do you say? Ministry of Broadcasting, Ministry of Health. All these are nothing else were called as what? Government department. For government corporations are those corporations which are either made up under state legislative act or made under the act of parliament, like our ICA. If you carefully see the the material which is issued by the ICI, you will find it over there. It is written that set up under the Act of what? Parliament. That is also known as a government entity. Right or not? Then we also understand like LIC, RBI, UTI. All these are nothing but called a government. What do you say? Corporations. So basically, PSUs are of 3 types: government entity, government companies, government corporations, and government department. Now, what is the role of CAG in PSU audit? First of all, though, we need to understand a lot about the CAG. Remember one thing, CAG has not been talked about anywhere in, in company sector or anywhere else. It is being talked about in a Constitution of India, article number 148 to article number 151 talks about this person called what? CAG. Now, what is article number 148 to 151 talks about? First, they talk about the qualification of the CAG. For becoming a CAG of India, CAG stands for Comptroller and Auditor General of India. For becoming the CAG of India, there is no specific qualification you need to have. If you are a person of high integrity and high ability, having a requisite knowledge in law, finance, management, administration, financing, taxation, then in that case you are eligible candidate and you have worked in the revenue departments of the India, or if you have a requisite experience in working in the government, already holding a so much of consistent track record of working in the big revenue departments of the government, the boss, you will be treated as a, or you will be qualified to become as a CAG. Second thing, appointment and nomination of CAG. Prime Minister of India nominates a CAG, whereas the President of India appoints the CAG. Remember one thing, nomination of the CAG is done by the Prime Minister of India, whereas the what do you say his what do you say appointment is done by the President of India. Next thing, tenure. His tenure is basically the 6 years or attaining the age of 65 years, whichever is earlier. Either of these two is going to be his tenure, right, everyone? Right. Now, next point what we have to understand is the remuneration, right or not? Now, what about the remuneration of the CAG? Remuneration of the CAG and allowances of the CAG, salary of the CAG is very much equivalent to the salary of the Chief Justice of India. So, same allowances, same perks, same perquisites which are given to the Chief Justice of India, same allowance, same salary, same benefits will be given to the CAG. Next point is the resignation. Yes, he is allowed to give a resignation on his own, but only subject to the approval made by the President of India. Next thing is what? Removal. He can be removed only if there is a proven misconduct, proven misbehavior, or there is a misuse of his abuse of his dominant position, of his looking if he is looking like incompetent or incapacitated to enter to hold the position. So either there should be an incapacity, or there should be a abuse of his dominant position, there should be a proven misbehavior or misconduct. After that, session of both houses of parliament will be conducted, Lok Sabha and Rajya Sabha, in which 2/3 of the voting is required just to eliminate or just to remove this person from the designation of the CAG. Finally, his removal will be assented by the President of India. The next thing, his roles we have to understand. His role is very simple. He has to appoint the first auditor of the government company. He has to appoint the subsequent auditors of the government company. He also has to take care of the casual vacancy in case of the government entities. What is his powers and duties? His powers and duties are very much very much bigger in sense. Like, he can investigate any public entity. He can ask any information from any person, from any public entity. He can ask any public servant to produce the information and documentation in front of him. And first of all, his major duty is what? His major duty is compilation. Let's say, for example, in India, more than 7,000 public entities are there, government entities are there. So what does he do? He does not do the audit. He get the audit of these entities done by a statutory auditors like us. We send our report to the CAG. So CAG का काम क्या है? Only doing the compilation. So after doing the compilation, what the CAG will do? CAG will make the compilation in three manner: central government or union government compilation, he will make the state government compilation, and he will make the union territory based compilation. So if it is a central government and union government entities related compilation, he will bring it to the notice of President of India, right or not? And if it is a compilation relating to state government entities, he will bring it to the notice of the state governor. If it is a compilation relating to what union territories, he will bring it to the notice of chief administrator of the union territory. That is what is majorly three powers, right or not? Now, what are the statutory audit of commercial undertaking is? Now, CAG ke under there is one department called IAAD, Indian Accounts and Audit Department. वो क्या करता है? CAG basically empanels first the statutory auditors of practicing CAs in India, and then he allots the PSU audits to them, right? On CA-CMA forms are being first empaneled. He allots the audit to them and gives them the directions to do the audit under section 143 subsection 5, which is known as statutory audit. Now, once the statutory audit will be done, if there are any modifications and reservations kept by the statutory auditor and CAG wants some more clarity, right? CAG wants some more clarity on such modification and reserved areas, then CAG may ask within 60 days the same statutory auditor or another practicing CA to conduct a supplementary audit under section 143 subsection 6. Now, if the CAG wants to conduct a test on regularity, test on propriety, test on government entities performance, then in that case, he may also ask the chartered accountants to carry out a section number 143 subsection 7 ka test audit. So basically, there are three types of audits which the CAG can tell us to conduct on a commercial accounts undertaking. One is called section number 143 subsection 5, which is a statutory audit. For 143 subsection 6, which is a supplementary audit. But remember, for supplementary audit, it is required to be audited within 60 days. And one very important thing, test audit, that is called section number 143 subsection 7, right? Now, अब CAG कैसे ऑडिट कैसे करवाता है? तो CAG has one department called IAAD, Indian Audit and Accounts Department. What is the name? IAAD, Indian Audit and Accounts Department. Under the Indian Audit and Accounts Department, there are so many audit boards and expert people which will be doing the comprehensive review of the public entities. Are you getting the point? And if they will come across, if the findings of the audit boards and expert shall be first, and if they will come across any modified areas or reservations in the PSU entities operations, they will bring it to the notice of the particular ministerial head, and they will first discuss it with the management, like we discuss first with the management and TCWG. And after the final resolutions are being given by the management and TCWG, finally, after their point of view, they will be drafting the report, and that report will be sent to the CAG. So we will do the audit, statutory auditors, along with audit boards and along with the experts which are chosen by the CAG. So we are not alone while doing the audit of PSU undertakings. We are also being accompanied by the various audit boards and various experts of the regulatory industry. Now, there are so many committees of parliament and state legislative assemblies in PSU audit. One is called PAC committee, Public Accounts Committee, and one is called Estimates Committee, and one is called COPU, Committee of Public Undertakings. So first of all, let me tell you one thing. Okay, what is the difference between PAC and ESG and the difference between them with COPU? Remember one thing, if any schemes or any projects are undertaken by government departments or government corporations, again I am saying, if any schemes and projects are undertaken by the government department or government corporations, the matters relating to their expenditures, authorizations, estimations, whether the expenditure is being incurred in the proper manner or not, that will be taken care of by the Public Accounts Committee and Estimates Committee. But if any projects or any schemes are undertaken by the government companies, not corporation, government companies, for that same function what the Public Accounts Committee and Estimates Committee doing it in case of government departments and government corporations, same functions will be performed by the COPU. COPU stands for Committee on Public Undertakings. So again repeating, if it is the schemes and projects undertaken by the government corporations and government departments, then in that case PAC committee plus estimates committee will take care of everything, like giving them the suggestions, disbursement of the expenditure, checking the accuracy of the expenditure and all. And if the schemes and projects are undertaken by the government companies, then in that case the same function will be done by the COPU. And in case sometimes the PAC committee is dissolved or estimates committee is dissolved on the request of state legislative assembly and on the request of parliament, sometimes the functions of PAC and EC can also be given to the COPU. But COPU, Committee of Public Undertakings, the major function is to take care of the PSUs related projects and schemes. Are you getting the point or not? And when it comes to the government corporations and government departments, who take care everyone? PAC committee, and one is PAC committee and one is what? Estimates committee. So let's understand what do you mean by PAC committee. PAC committee का full form क्या है? Public Accounts Committee. What this company does, what this particular committee does to ensure that the monies are disbursed legally. Like say for example, they have to check that ki money disbursed for a particular project or scheme shall not be against the constitutional rules and regulations. Second one, to ensure that expenditures are incurred under the proper authorization, means expenditures have been sanctioned by the competent authority. Make sure that the person who is sanctioning the expenditure should know that why it is sanctioning, for what purpose it is sanctioning. So basically the sanctioning authority is expected to be a competent sanctioning authority to check that monies have been utilized for the purpose for which it was sanctioned. Suppose the money was issued for the dam, money was issued for the national highways. So this committee will also check that you have taken the money for national highways. Are you making the use of that money for that particular purpose only or not? Basically, end use of the money is going to be checked by the PAC committee, to ensure that reappropriation, if any, must have been made within the rules and regulations of the constitution. Suppose extra money is required or extra provisions are there, escalation costs have taken place, it's a long gestation project, so it may take care of so many of increase in the raw material cost or so much of increase in the labor cost. So in that case, if any reappropriations are required, if any additional expenditures are required to be taken care of, that also will be covered under the eyes of the PAC committee. So basically PAC committee are going to perform these functions. Next one is Estimates Committee. What does the Estimates Committee check? Estimate Committee check the triple E of your completed projects and schemes. So basically Estimates Committee check करता है कि economy has been achieved or not, efficiency has been achieved or not, effectiveness has been achieved or not of those approved projects given by the parliament or not, suggest the alternative policies. So in case some particular policy, particular project or scheme is not getting approved in one way, so it's also having a function to suggest you the alternative policies. If this is not the way to carry out a particular project, let's go for the alternative course of action also. That is also the work of which committee? Estimates committee, to ensure that the money spent is well within the limits, to make sure that whatever the expenditure you have told, whatever the budgets you have told, make sure that the money spent should be within those budgets only, and to suggest the form in which the estimate shall be presented to the parliament, to the CAG. So suppose CAG has to take a proposal to the parliament कि sir, for this project and this particular scheme के लिए we need this much of money. So at that point of time, estimate committee also helps the CAG in which form and in which manner the project or the scheme ka expenditure proposal shall be kept in front of the parliament. That is also the work of estimates committee. But again repeating, PAC committee and estimates committee are for the government corporations and are for the government departments. But when it comes to the government companies, it is the committee known as what? COPU. What do you mean by COPU? Committee of Public Sector Undertakings. Now see, what is COPU? It takes care of the functions of PAC and EC with respect to PSU, Public Sector Undertakings, means government companies, instead of government department projects and scheme. क्योंकि गवर्नमेंट डिपार्टमेंट्स के और गवर्नमेंट कॉर्पोरेशन के प्रोजेक्ट्स एंड स्कीम्स आर अंडरटेकन बाय द पैक एंड estimates, it only takes care of those schemes and those expenditures which are incurred by the government companies. But on the request of the parliament and state legislative assembly speakers, it can handle the functions of PAC and EC as well. So say for example, PAC is not being constituted, session has not taken place, or EC's, the estimate committee session has not taken place, but COPU is in session. So parliament may request the COPU, or state legislative assembly speakers may request the COPU ki boss, you please take care of this particular functions to be taken care of when it comes to the PAC and EC. Then its main functions are examining the reports and accounts of what? Public sector undertakings. What are its main functions? Examining the reports and accounts of public sector undertakings, examining the reports of CAG on PSUs. It also examines the CAG's report on public sector undertakings, examining the triple E, whether it is achieved by the government entities in undertaking their projects and schemes or not, and whether the money spent was as per the wisdom, as per the customs and standards of principles or not. Now, the objective of these committees is to focus not only on individual irregularities. देखो, ये committees का incorporation क्यों हुआ? Why do we need these committees? The purpose of these committees is not to let you know that there is a particular irregularity. The purpose of these committees is to bring you the broader picture. There is a deficiencies in systems, not in a particular thing. There's a deficiency in AOA, administration, operations, and attitude of the government entities, not relating to a particular area, right or not? This is what you need to understand. Now, what is the CAG's role in the PSU audit? CAG behaves like a philosopher and guide to these committees. If these committees are also looking for any help relating to PSU audits, then in that case, CAG also act as a philosopher and guide to these committees. His report forms a base for the financial committees without reducing the workings of the committees. तो क्या कहते हैं? His reports are basically a base on the basis of which estimates committee and PAC committee goes to the parliament and says that on the basis of the CAG's report, we found out that expenditures have been overly incurred or underly incurred. He also helps in analyzing the facts and figures submitted to the committees by the ministries. Suppose Ministry of Defense has submitted any facts and figures, Ministry of Corporate Affairs has submitted any facts and figures, and these PAC committee and estimate committee are unable to understand and analyze those facts and figures. So they can also take the help of what? CAG in understanding those facts and figures. So he also helps as a friend and philosopher in such cases. He also helps the committees in presenting their report to the parliaments and state legislative assembly. Now, what are the scope and objective of the PSU audit? See, scope and objective of the PSU audit is very simple. We have to make sure that public entities must understand their goals and objective, and they must try to achieve their goals and objective. Biggest problem in the public sector undertaking is what, sir? The biggest problem in the public sector undertaking is they do not utilize their men, machine, money, market, everything. They use it inefficiently. The biggest reason behind the sickness of the public sector undertaking, I'm not talking about today. Today, though, so many of the public sector undertakings are doing well more than the this private sector. But I'm talking about there was a time when public sector undertakings used to be the biggest sick units of India. None of the public sector undertaking used to be profitable venture. So that's the reason there was a need of this particular audit or particular role of CAG was required to be there, ensuring that the decisions are taken by the which authorities? Competent authorities. Now, let's say, for example, you have to take a decision relating to a metro project. So relating to a metro project, obviously civil engineer who is taking the decision relating to consumption of raw material, relating to consumption of labor, relating to consumption of cement, iron and steel. All the decisions should be taken by the competent authority. Don't just give away these decisions to be taken by any ABC person. So he should be qualified and competent authority, helping government entities in achieving the triple E in their operations. So helping the government entity in taking economical decisions, maximum utilization of their resources, and making sure that the projects and schemes should be completed on time, helping the government entities in analyzing the causes of what inconsistencies. So if there are any deficiencies, if there are any significant weaknesses in carrying out the schemes and projects, what are the reasons behind those inconsistencies and fluctuations and deviations, that also CAG helps the entity in analyzing that, highlighting the issues in the what operations. So obviously CAG also helps in highlighting the issues in the operations, ensuring the physical and managerial accountability. So in case the public entities and public sector undertakings are going somewhere wrong, it is a CAG's responsibility to bring it to their notice, the various problems relating to their triple E or various problems relating to their sanctions and their funds overutilization. All that CAG has to take care of when it comes to the public sector undertakings. Now, what are the elements of the PSU audit? Remember one thing, PSU audit में तीन parties होती है, एक होता है auditor, एक होता है responsible party, एक होता है intended user. Intended user अपना पता ही है कि Parliament and State Legislative Assembly and is our intended user. President of India, Governor of the state, and the Chief Administrator of UT is our intended user. Who is the auditor? The person who is doing the audit, like we statutory auditor. Who is the responsible party? Management. So there are three parties involved in the PSU audit. One is called auditor, one is called responsible party, and one is called intended user. अब auditor के case में obviously we will not call ourselves as an auditor because we work under the IAAD department. IAAD department is under the SAI, Supreme Audit Institute, right or not? Supreme Audit Institute करके होता है, उसके अंदर CAG होता है, Comptroller and Auditor General of India. Under the CAG we have the IAAD. Under the IAAD we have the various audit boards. So they all put together are known as what? Auditor. Who is the responsible party? The public entities are responsible party. The management and TCWG of public entities are the responsible party. Intended users, authorities to whom the auditor is going to address is what? CAG's audit report. Now, the biggest thing which you need to understand in CAG audit is that making the use of some selected words and phrases, like they never use a word called budget. They always use the word called criteria. Criteria means what? Constitution में already some benchmarks have been established. If the public sector undertaking is not performing as per that benchmarks, so we will call it as a underperformance. If they are performing or overly performing, we will call it accordingly. तो benchmarks को हम लोग क्या बोलते हैं? Criteria. So criteria is the first word which you have to understand, that you have to start writing in the answers relating to PSU audit. Criteria. फिर हम लोग बोलते हैं सब्जेक्ट मैटर. सब्जेक्ट मैटर का मतलब होता है एक्चुअल आउटपुट. क्राइटेरिया इज अ बेंचमार्क, subject matter is a actual output, but when this subject matter is measured against the criteria, हम लोग उसे बोलते हैं subject matter information. Are you getting the point? So there are three words you need to remember: criteria, subject matter, and subject matter information. Criteria refers to the benchmarks. Subject matter is the actual results which will be measured against the benchmarks, and the difference between the two is known as subject matter information. Now see, what do you mean by such matter? Subject matter means any activity which is measured against criteria. What do you mean by criteria? Benchmarks which are used to evaluate the subject matter. And what do you mean by subject matter? Output of the evaluation and measurement of subject matter with what? Criteria. So remember one thing, जैसे हम लोग करते हैं budgets minus actuals is equal to variance. यहाँ पे we will do criteria minus subject matter is equal to subject matter. What do we say? Information. Are you getting the point or not? So subject matter information is something, an output which you get when the subject matter is measured against the criteria and benchmarks set by the public sector undertakings. Now, there are two types of engagements you can have in PSU audit. One are known as attestation based engagement, one are known as direct reporting engagement. Attestation based engagements में क्या होता है? The responsible party, management will carry out the necessary test, management will carry out every comparison between the criteria and subject matter information will be provided to the auditor by the management. You simply as an auditor have to express a reasonable assurance and your job ends. उसे हम लोग बोलते हैं अटेस्टेशन बेस. अटेस्टेशन बेस में योर जॉब इज डन बाय द मैनेजमेंट, दैट इज अ रिस्पॉन्सिबल पार्टी. मैनेजमेंट विल make sure that they will measure the subject matter against the criteria and they will provide you the subject matter information. Your job as an auditor is only to express a reasonable assurance. That is called attestation based engagements. One are known as direct reporting based engagement. Direct reporting based engagement में क्या होता है कि auditor takes the responsibility to examine the subject matter information by comparing the subject matter with the criteria, and reporting also is yours. So 100% total responsibility when the auditor takes place, we call it as direct reporting engagement. When the management or the responsible party takes care of your half of the responsibility, we call it as what? Attestation based engagement. Right everyone? तो तीन parties होती है, auditor, responsible party and intended users. Second point, there is the criteria that is called benchmarks. There is a subject matter which is measured against the criteria, and there is a subject matter information which is the output when the criteria is measured again, when the subject matter is measured against the criteria. There are two types of engagement. One is known as attestation based engagement, where the responsible party will make sure that the subject matter will be measured against the criteria and they will provide you the subject matter information. And second one is known as what? Direct reporting engagement, where the auditor will do the same thing. Now, next thing, what are the principles of PSU audit? The principles of PSU audit are not different from yours. In the principle of PSU audit, same independence and ethical requirements you have to follow, same professional judgment you have to follow, same audit documentation you have to do, same audit judgments you have to make, same audit materiality you have to take care, same audit risk you have to take care, same communication, same documentation. Everything which we used to do in the normal audit is equally applicable in case of what? PSU audit. Now, PSU audit को हम लोग what is the process of doing the PSU audit? That is also same. Like, what do we start our audit with? We start our audit with acquiring the knowledge of client's business. Here also planning stage will be there. Understanding the terms of engagement, 210. We will send the audit engagement letter. Then acquiring the knowledge of client's business. Who is our client? PSU is our client now. We will perform our RAPs to understand the level of the ROMM. Either they are at ABCD level, assertion level or FS level. Then fraud identification will understand. Developing an audit plan. Right on our execution plan में we are going to perform the developed plan which we did it in the step number 1. We'll start obtaining sufficient and appropriate audit evidences, or when you already got the evidences, the only thing left is drawing the conclusions. On the basis of the conclusions, we'll start expressing our opinion, and the third process is nothing but called reporting. But seriously, see, do you see any additional word? Yes. You don't only have to report in case of PSU audit, you have to do the follow. Same thing which we have understood in internal audit, everyone. SIA 390 में हमने पढ़ा था ना कि CIA चीफ इंटरनल ऑडिटर क्या करता है? चीफ इंटरनल ऑडिटर जस्ट रन्स बिहाइंड द एंटिटी एंड आस्क देम कि व्हाई द हेल यू हैव नॉट टेकन द एक्शंस ऑन द रिकमेंडेशंस और रेमेडियल मेजर्स व्हिच आर प्रोवाइडेड बाय अस. सेम थिंग हु हैज टू डू इट? द ऑडिटर हैज टू डू इट हियर. तो ओनली नॉट ओनली यू हैव टू प्रिपेयर योर रिपोर्ट एंड गिव योर फाइंडिंग, you also have to do the follow up with the PSU audit. What is the reason you have not done the audit yet? 143, 5, 6 and 7, I already told you. What is 143.5? It's a statutory audit which you do on the directions of CAG. And if you have given any modified or reserved areas and the CAG wants more better true picture, so within 60 days of your statutory audit, CAG may order you under section 143 subsection 6, which audit? Supplementary audit. And if the CAG wants to test the integrity of the management, in case they want to test the propriety of expenditures, in case they want to test the performance, they can also ask you to do the test audit under section 143 subsection 7. Right? So this is what do you mean by the CAG audit ka introduction. Now let's understand the main. There are total 5 CAG audits which takes place. One is called financial audit, one is called compliance audit, one is called comprehensive audit, one is called performance audit, and one is called propriety audit. Let's understand one by one. Let's understand the first audit. One is known as financial audit. Financial audit is very similar like a normal audit, where we will check that whether the PSU ka financial statements are being prepared as per the AFRF or not, and where the responsible party called management will take the full responsibility for preparation and presentation of their financial statement. Our work is only to express an opinion in the form of reasonable assurance whether their financial statements are looking true and fair or not. And that brings an end to your first audit called what? Financial audit. Literally speaking, this much is only given in your IC material also. Financial audit itna hi hai. Now see what is financial audit. It is conducted to express an opinion on financial statement as to enhance the degree of confidence of intended users. CAG shall express what? Whether the financial statements are prepared as per applicable financial reporting framework or not, whether the financial statements are giving true and fair view or not. So there comes the end of your which audit? Financial audit. Which audit, everyone? Financial audit. Now let's understand what do you mean by compliance audit. अब compliance audit basically क्या होता है? In the compliance audit, there are two topics which you have to take care of. कि is the company regular in compliance of laws and regulations or not, and whether the financial decisions taken by the entity are looking propriety in nature or not. So we need to see regularity in its processes and propriety in its purpose. Again repeating, regularity in its processes and propriety in its purpose and decisions. So point number one, the focus of this audit is to check whether the activities, financial transactions and information, तीन चीजें अपने को टेस्ट करनी है. Activities done by the PSUs, financial decisions taken by the PSUs, and informations which are generated by the PSUs must comply with the applicable laws and regulations, rules and regulations of the Constitution. Basically, we have to check that regularity in the processes. What do you mean by regularity in the process? How we will check the regularity in the processes? Same. We will check that their subject matter, we will compare it with the criteria, and when the subject matter will be compared against the criteria, we will understand the subject matter information. So we will check whether the reportable framework and whether the actually applied framework of this particular PSU entity is same or not. So if there is a difference between their, by matching their, now see this, checking whether the actual compliance is done by this entity with the applicable compliances just to ensure the regularity in what? Compliances. So we will check as per the constitution you should have followed A. But as per the actually you are also following A. So A minus A is equal to 0 na? So it means there is no material misstatement. But let's say, for example, your applicable financial reporting framework relating to compliances is something different, but you are using something different. So it means you are going against your laws and regulations. So it's like budget minus actual is equal to variation. That's how we check the regularity in your processes, by comparing your actual compliances with the required compliances. If the difference is there, it means you are irregular in your processes. Now, second thing is propriety in the purpose. What do you mean by propriety in the purpose? We have to check that financial decisions which are taken by the TCW or management, are they looking ethical? Are they looking viable? Are they looking regular? Are they being taken favorable or not? Now, see, observing whether the decision taken by the entities were as per the sound financial management and were taken as per the ethical conduct of the public officials or not. Like say for example, whatever the decisions they have taken relating to spending of the money or spending of expenditure, it should fall within the purview of what? Regularity. It should be fall within the purview of what? Propriety. It should look ethical. It should look sound decision taken. And remember one thing, compliance audit, there are two things you can do. Either you can do compliance audit separately, or you can merge it with the financial audit, or you can also merge it with the performance audit. That is your completely call as a CAG, how CAG wants to conduct a compliance audit on the PSUs. So basically compliance audit के major two objectives are what? Regularity in processes and propriety in purposes. Your actual compliances will be compared with your required compliances. If any difference is there, it means you are irregular in your processes, and your financial decisions ka integrity will be checked, ethics will be checked, and propriety will be checked. Are they looking sound decisions or not? Now see what they are saying. It brings to the notice the cases of needless expenditures, wasteful expenditures, and avoidable expenditures and mismanagement practices of the public entity. It can be conducted separately. It can be merged either with the financial audit or with the performance audit. So two audits are over. One is called financial audit is over, and one is called compliance audit is over. And now let's understand with the comprehensive audit. Okay. Now let's understand what do you mean by comprehensive audit. Now in the comprehensive audit is also known as efficiency cum performance audit. Basically, let me tell you one thing. Comprehensive audit is very similar like a performance audit. Performance audit is basically conducted on a scheme or a project. Again repeating, performance audit is conducted on a scheme or a project undertaken by the central government or the state government. It could be anything. But when it comes to comprehensive audit may basically we are going to conduct performance audit only. We are conducting the performance audit only, but on a PSU at a shorter scale. So when the performance audit is being conducted at a larger scale, that is called performance audit on schemes and project. But when the performance audit is being conducted on a PSU, understanding whether their controls are effective or not, are they making the full use of their what do you say, are they making the full use of their economy, efficiency, and what do you say, economy, efficiency, and what do you say, effectiveness or not. So when we do this particular audit on a smaller scale, that is called what? That is nothing but called what? Uh, Comprehensive come efficiency come performance audit. That's what is the meaning. Now this differs from entity to entity, covers such areas other than which are covered by the internal auditors. Next, concentration is on checking the triple E of operations of PSU. Now that's what I was telling you. If it is being conducted on a particular project or a scheme, then it will be considered as what? Performance audit. But if it is conducted on the operations of the PSU, it is considered as what? Comprehensive audit. It assesses the legislature reviewing the performance of PSUs. It is carried out by comparing the performance of the PSU operation with the predetermined criteria. Same, आपके PSU की performance best in the industry से compare की जाएगी, and accordingly the decision will be taken कि is your performance of this particular PSU is matching the criteria or not, and criteria are already predefined. Are you getting the point? So basically होता क्या है? We basically ask you some set of questions. On the basis of the answers given by the PSU's management, that is called responsible party, will be able to analyze ki whether they are performing or whether they are able to achieve triple E or not. Now let's see. Question number 1. Do you have the R&D programs in existence or not? Do you have your own research and development department existing or not? Do you have any project planning, project formulation, and project implementation? Do you have any policies relating to project planning, project formulation, project like implementation? And if they are in existence, you have some systems, you have some policies, are they looking sound or not? You should do the proper planning of the project, project formulation, project implementation के लिए proper policy होनी चाहिए, proper system and procedures should be there. And if you have planted the system, policies and procedures, are they looking sound or not? The first one was on R&D, second one is on project planning, formulation and implementation. Third, comparing your overall capital cost with the approved planned cost to get the variances. So how much you asked, how much was your budgeted cost, which is approved cost, and checking your actual incurred cost with that and finding out the variances. What are the reasons of these inconsistencies? Then evaluating the capacity utilizations in terms of underutilization or shortages. We have to check that suppose you have this much of capacity, but still you are not able to produce the units which you should have. It means you are definitely going for underutilization. Overutilization is also a problem because that will break down your machinery at the regular intervals. So neither you should go for underutilization nor you should go for overutilization. Capacity utilization should be done at least as a normal and practical capacity should be achieved or not. Yes, that's what we are asking. Whether the control measures are adequate or not. Do you have control measures or not? Whether there are double approvals, double authorizations in your PSU, or anybody else is allowed to take care of the decision. That is clear-cut indication of the poor ICS. Then identifying the areas of abnormal wastages and unproductive time. Now, what do you mean by abnormal wastages? Normal wastages are something which we can't avoid. That's why we pass on it to the customer. Like in the costing, we have a concept in normal loss we pass on to the customer, adding it to the cost of the production. But abnormal wastages are purely the management's mismanagement practices due to that. Right or not? Unproductive time means what? Lunch timings are 45 minutes, but you are going 15 minutes early, coming 15 minutes late. So obviously you are nothing but taking 1 hour 15 minutes. So half an hour तो unproductive हो गया ना. Are you getting the point? So identifying those cases, checking whether procurement of the resources are economical and used or not. Now, let's say, for example, you needed a finance, you needed a loan, and the bank was ready to give you at 6.5%, but you went to a player or you take it from another company which is charging 8%. So you should have gone for that bank which is charging only 6.5% interest instead of going for a company which is charging 8%. So was it an economical decision? No, it was an uneconomical decision. That's what shows your performance. And okay, chalo, theek hai, you have taken the loan at the high rate. Okay, you have taken the uneconomical decision. At least use it. Why you keep it idle? Why your monies are being left idle? Why they are being kept idle? Why you are not utilizing it properly? That is what our area of concern is. Next one, checking whether the systems of repairs and maintenance to avoid the breakdowns or not. What do you mean by that? Ki say for example, I just not told you, if the machine, plant and machineries will be overly used, what is the biggest disadvantage of that? They will break down oftenly. Do you have the systems of repairs and maintenance? And whether you check that ki whether regular intervals pe do you do the greasing, oiling of the machinery or not? Because if you will not do the repairs and maintenance at regular intervals, ultimately they will result into breakdown. This is the biggest reason why PSUs are not able to achieve economy, efficiency and effectiveness in their operations. And last but not the least, whether the planned rate of returns have been achieved or not. This is basically is known as what? Comprehensive audit. So again repeating, comprehensive audit and performance audit both are very similar. Both are very, very similar. It's just that the performance audit takes place at the larger scale, whereas the comprehensive audit takes place at a smaller place. So comprehensive audit is very much restricted to the PSUK operation, whereas the what to say performance audit is relating to the larger piece, right or not? Now let's understand the fourth audit. So we are done with financial audit, compliance audit, comprehensive audit. Now let's understand the propriety. Propriety basically hota kya hai? Propriety word came from the word called proper. Ki whether the expenditures incurred by the government entities and government departments, are they looking proper within the constitutional rules and regulations or not? We are basically here in the propriety audit to identify the cases of needless expenditures, wasteful expenditures, avoidable expenditures. Ki why did you incur those expenditures whose there is no use at all? Like making the big statues, right or not? Opening the big secretariats, whereas the access to the people or access to that particular building is not allowed to anyone. Unnecessary spending the money on renovations and all, creating public schools, but actually you created the public school, government school, but the schools are not running at all. Education system is not planted in those schools, and buildings have been established, cost of establishment has been incurred, but no one is occupying that building. No schools are running, no colleges are running, no universities are running, but you keep on making it. So when you could have avoided these expenditures, why you have not avoided? So basically that is what the purpose behind looking at the propriety element. The difference between the propriety element and financial audit is what? What is the difference between propriety audit and financial? Financial audit, say for example, you are doing an audit of a company. You saw that there is a huge expenditure that draws your attention. You went to the management, said that, okay, I would like to know the evidences of this expenditure. Say for example, traveling expenditure. 6 crores were there. So you saw the tickets, you saw the rail tickets, airplane tickets, you saw the expenditure voucher and everything. You summed up the amount was coming 6 crores. Beyond that, you can't ask them, okay, why did you spend? Your job ends there itself as a financial auditor. But being a propriety auditor in the government sector, in the government entities, I can ask, okay, why did you spend when you could have saved this money? Let's say, for example, for a 45 minutes of the journey from Hyderabad to Bengaluru, a flight will cost you 3,500. Even though I can afford the 35,000 rupees of business class ticket, but I still would like to prefer to go by 3,500 rupees. Reason? For a 45 minutes of flight, I don't find any need to spend 35,000 rupees for taking that flight. Then the same thing can be done in 3,500. But giving the reimbursement to the ministers, giving the reimbursement to the government servants at the business class ticket where only 3,500 would be sufficient, but you are giving the reimbursement at the rate of 35,000. This is nothing but called needless expenditure, wasteful expenditure, avoidable expenditure. That is what is the purpose behind conducting the which audit? Propriety audit. So propriety audit ensures that key expenditures have been incurred as per the commonly accepted customs and standards of conduct. They were incurred for the public interest to provide them the real benefit at large. If you are spending the expenditure by using the public funds, you should at least give the benefit. Ultimate benefit should go to the public, na? What's the point of spending that money where the benefit is again coming back to the government servants only? You're already having a lot of salaries, DAs are there, pensions are there, gratuities are there, PFs are there, and you are again and again increasing DAs and DAs. What's the point of these particular announcements when the ultimate benefit is coming back to the government only? The benefit of the public expenditure should go to the public. That's why it is called public expenditure. That is where the propriety audit is required. To ensure that financial prudence have been what? Achieved. What do you mean by financial prudence? Okay, at least you should see that the purpose has been achieved or not. Let's say, for example, we are buying a branded shoe. Now, if I'm spending a 10,000 rupees on a branded shoe, I know that it will be durable, it will be a long lasting, it will be more comfortable. At least I'm getting a value out of it. But by spending 10,000, if you are still getting the same discomfort, so I think it is the wasteful expenditure in that case. That is what the cases which we need to identify in the which audit? Propriety audit. It's very different from financial audit, because financial audit means you can't understand or you can't ask why behind the transaction, whereas in the propriety audit you can ask the why behind the transaction. That is what the propriety audit makes it different from the other audits. Now, principles of propriety audit क्या है कि expenditure shall not be more than the occasion demands. Right or not? If the occasion demanded a 2 crores of expenditure, why did you spend 20 crores? Second thing, expenditure shall not be spent for a particular section of society. Before spending the expenditure, think like an ordinary person, like we think. Like if you are going to earn the money on your own, do you think that you will be not thinking twice before spending your own hard-earned money? You will think. The government should also think now, because it is not the government's money, it is a public funds. So they should think twice before spending the money. And not making those declarations whose benefit is coming back to the government only. Not giving unnecessary emoluments and benefits to the government servants who are already getting the agreed remuneration. These all are the various 5 principles just now I spoken to you are nothing but called the principles of what? Propriety audit. See, expenditure shall not be more than occasion demand. Think like an ordinary person before spending a money. Money shall not be incurred for a particular section or a society or community. Sanctioning of expenditure by the authorities shall not result into direct or indirect benefit to themselves only. Apart from the agreed remuneration to the public servant, no other benefits or privileges shall be kept open for them. These are nothing but called the principles of propriety audit. Right or not? But cases of propriety audit to also being told in our Companies Act. Companies Act का अगर आप देखो section number 143 subsection 11 CARO company audit report. Do you remember that in the CARO what I told you? Okay, the major issues in the CARO are what? Major issues in the CARO are that okay, how CARO is different from a normal statutory audit. There are 21 clauses. Out of 21 clauses, if you go to the clause number 3, related party loans, clause number 4, compliance of section number 185, 186, clause number 8, nothing but called unrecorded income. Clause number 9, which is repayment of the borrowings. Clause number 10, application of the funds, fraud reporting, related party transactions. 15, non-cash transactions. 18, resignation of the statutory auditor. Everywhere we went to the management's neck and asked them the reason. What is the reason behind all these unethical practices? CARO 2020 is a clear-cut example of propriety audit. It is nowadays becoming very popular in the listed entities also. LODR में so many propriety elements have been added. Now, अगर आप section number 143(1) देखो, duty to inquire on 6 matters we have done. Section number 143(6) अगर आप देखो, 143(6) talks about the supplementary audit. 143(7) talks about the test audit. 143(12) relating to fraud reporting. All these things, nothing but talking about the propriety only. So, propriety audit is highly important in case of what? Public sector entities, PSUs के case में. I hope you are understanding the meaning of that. Now let's understand what is the next topic. The next topic is problems in propriety. अब अपने को propriety में problem क्या आते हैं? Propriety का कोई scale नहीं है. There is no precise measurement to call something as a propriety. Sometimes the expenditures are incurred within the constitutional rules and regulation. Let me give you a very simple example. Now today, every government servant and every minister gets the 3,000 rupees per month as a telephone allowance. Frankly, please tell me, how much is our monthly expenditure for the telephone? Maximum 300 rupees per month. But they are still getting 3,000 rupees per month. And I'm not saying that they are getting it illegally. It is written in the constitutional rules and regulation that this much of telephone allowance should be given. And why it was mentioned? Because back in the 1991, when the LPG liberalization, privatization and globalization policy came, Dr. Manmohan Singh proposed in that industrial policy of those 5 years, saying that now we are opening up to the liberalized economies of the world. We need to make so many international calls and all. That's why we needed a telephone allowances of 3,000 at that point of time, because at that point of time 7 rupees per minute was an incoming call and 8 rupees per minute was an outgoing call. At that point of time, giving the 3,000 rupees per month looked appropriate. But today, within 300 rupees per month, your whole month can be spent with unlimited internet, unlimited calling. Why do you not stop this 3,000 rupees per month? And why do you not, okay, you want to give it, give 300, reduce it. 2,700 rupees per public servant they will be able to save per month. Problem is that ki expenditure incurred is very much legal, looks very much ethical within the rules and regulations, but propriety element, substance over the form is not able to be generated. Are you getting the point? And it is a subjective measurement. It's a very professional judgment case. Now, if I'll say that ki you are doing impropriety expenditure, government will say that no, we are doing it within rules and regulations. So there is no predetermined criteria available to justify the substance of what? Transaction. And being a moral concept, it is very much difficult to prove and justify that ki particular thing is propriety or not. It is purely a matter of subjectivity and completely a circumstance based issue. अच्छा, एक 75-year-old बंदा अगर 35,000 की what do you say business class ticket लेता for a even a 1 hour what do you say 1 hour of flight also, that looks justified क्योंकि he's 75 years old, he needs to be comfortable during the travel. But if the same 25-year-old person is taking, that looks unjustified. It's a pure matter of subjectivity. At one place it looks justified, at another place it looks unjustified. Therefore, CAG has to develop some norms to deal with this. तो सीएजी ने क्या बोला, अब कैसे डिसाइड करेंगे? इफ द ऑडिटर कम्स एंड प्रूव्स दैट कि बॉस सर, अकॉर्डिंग टू माय जस्टिफिकेशन, अकॉर्डिंग टू माय प्रोफेशनल जजमेंट, this expenditure is looking needless and he can explain the logic behind that, then CAG is saying that I will treat it as a propriety element. Yes, this is what do you mean by propriety audit, right or not? I hope you are able to understand that. Okay, so let's understand and wind up with the last topic, that is called what? Performance audit. अब देखो performance audit basically होता क्या है? Performance audit में we basically check कि whether the public entity which has acquired the resources, are they making the optimum utilization of the resources with respect to the schemes and the projects which have been undertaken by them. Let's say for example a metro project has been started in the particular city called Hyderabad. तो मेट्रो प्रोजेक्ट के लिए यू नीड अ ह्यूमन रिसोर्स, यू नीड अ फिजिकल रिसोर्स, यू नीड अ फाइनेंशियल रिसोर्सेज. आर दे बीइंग एक्वायर्ड एट इकोनॉमिकल रेट और नॉट? आर दे मेकिंग इफेक्टिव यूज ऑफ दोज रिसोर्सेज और नॉट? विल दे बी आर दे मेकिंग एफिशिएंट यूज ऑफ दोज रिसोर्सेज और नॉट? Will they be effectively utilizing the resources in such a manner? Will they be able to complete the projects within the budgeted time and budgeted cost or not? This is what the idea behind what? Doing the performance audit. And if we'll come across that there are some deployment of the resources are not looking optimum, it is our responsibility to give them the remedial actions. Now see, what is the meaning of performance audit? It is an independent, systematic and objective. Objective means impartial examination of resources deployed by the public entities, so as to provide them the assessment of performance of the public entities, schemes and programs with an objective to suggest them the improvements and remedial measures, helping them in taking the corrective actions. So basically, performance audit is carried out by the CAG via its department called IAAD, Indian Audit and Accounts Department. Right now, in the performance audit, basically there are 3 areas to be audited. Area number 1 is economy. Economy में हम लोग क्या check करते हैं कि boss, whatever the resources you have acquired must have been acquired at the economical cost. You should, if you have a option of acquiring the physical resources, human resources, and what do you say, financial resources at the lower cost, then why you did not apply? Why you did not acquire them at the lower cost? So minimizing the cost of resources is our objective in economy audit. But not only that, just because you are going to get it at the lower cost, don't compromise on quality and quantity. See, there are other than cost, there are so many other aspects also you have to check in the economy audit. Ki one should not compromise on quality, one should not compromise on quantity, one should not compromise on delivery. If you think that ki you have acquired the resources at higher rate, which is little bit beyond unreasonable or little bit looking unreasonable, but if they're providing you the quality, quantity and delivery on time, then it's okay. क्योंकि just because we wanted the resources at the lower cost doesn't mean that we'll compromise on these three areas: quantity, quality, and delivery. That is the first audit called economy audit. Second audit is efficiency audit. Efficiency audit में अपन क्या देखेंगे कि the acquired resources must be efficiently used. You have to identify the cases of idleness of the resources, wastages of the resources, spoilages of the resources. Why are you keeping the machines idle? Why are you not running it on time? Why you have hired the employees more than what is required? That is called disguised employment. When the resources are available to you in the market, when you should have, suppose if you are hiring someone for 12 hours, why are you not utilizing that person for 12 hours? If you are paying someone as a resources, you are paying the interest on the loan, why you are not using the loan then? What is the point of acquiring the over resources, keeping them idle? Because if we'll identify the cases of their idleness, spoilages, what do you say, wastages and all, we'll be able to at least reduce our overall cost. Acquired resources must be kept and protected and maintained securely. अगर आपने बहुत ज्यादा क्वांटिटी एक्वायर कर लिया तो भैया उसको मेंटेन करने के लिए देयर हैज टू बी अ गुड वेयर हाउस एज वेल. You have a warehouse, but there is no roof, and the rain takes place, and your raw material is iron and steel. Obviously, rusting will take place. Instead of being used as a normal raw material, it will be sold in the form of scrap. This is what is generally actually being seen in the PSU audits. Overstocking कर लेते हैं, overly human resource आ जाता है, overly manpower होती है. Machines can work for 16 hours a day, but you are only using it for 10 hours a day. Why? Underutilization. Why are you keeping your machines idle? Why are you keeping your manpower idle? Why can't you reduce your overall cost? And efficient management, that is prompt execution, should be taken. Na? If you think that something is required to be taken as a decision in a very urgent manner, take it. Like chain of command ka pura wait karenge. By that time, what will happen? Gestation period of the project will be prolonged. This is what the problem in the second audit called what? Efficiency. तो first में economy check हो रही है, second में efficiency, third में effectiveness. Effectiveness में क्या सबसे बड़ा rule? Comparing your actual performance with your benchmark performance so that we can find the variances if any. But remember one thing, in the efficiency effectiveness audit, you have to first carry out the feasibility study on your own. Understand their particular project and scheme first. What kind of barriers this scheme faces, right? Or now, what kind of policy documents, what kind of approvals this scheme needs. You can't simply just say that why there is a delay. As an auditor, you have to first carry out your own feasibility study. First, understand the project and scheme. Does that scheme really needs that many approvals? And approval takes time. Maybe the extra time what they're taking is because the approvals were delayed. You have to check out the barriers. Strikes and lockouts have taken place. Procurement of the raw material has been stopped by the supplier. Some natural calamity or disaster has come. That's why there is like pandemic situation. Who knew that construction of the metro will be halted for 3 months? But it was completely halted. Now this is beyond your control. So remember, whenever you check the effectiveness, first understand and evaluate the objectives of the project. How? By studying applicable laws and regulations, by checking whether objectives are proper and consistent, by understanding the barriers such as insufficiency of the fund, low wage rates, and fake job cards. Then first you understand yourself. First you do the feasibility study as an auditor on the project and scheme. Then you have every right to check their analysis of the result. Now check that if there were no barriers, if there were no, everything was good, approvals came on time, what is the reason your results are not matching with your expectations? Now see, checking whether the management controls monitoring the project and schemes or not. आपको check करना पड़ेगा. You have to give the education to your staff. You have to provide seminars. You have to train them. क्योंकि जो लंबे लंबे प्रोजेक्ट्स होते हैं, schemes and projects which takes 10 to 15 years, it definitely needs upskilling. It is a responsibility that you have to monitor your project and scheme at the regular intervals. Do you need any upgrades and do you need any updates? क्या plant and machinery में updates आए हैं by which you can complete the project more and rather early on time? Are you getting a little bit early before the completion of the benchmark time? तो आपको देखना पड़ेगा, मॉनिटरिंग करनी पड़ेगी. You have to check the socio-economic impact also. Maybe your project is got delayed. Why? Because the one project which you started is now require the deforestation, and due to the deforestation, so many gaon wala people and village people came and they did the strike. Farmer strike has happened because that project is going to be taking care of so much of land. So for that, they have to do the deforestation. You have to analyze the results. Yeah, how to make, and sometimes kya hota hai, due to one project, the other projects also will be delayed. Suppose the dam will not be constructed or dam will not be constructed on time. What will happen? The irrigation projects will suffer because they are interconnected. All that you have to see, you have to upskill your labor, whether the enhancement of the skills were given to the laborers or not, upskilling was done or not. All that is nothing but comes under analysis of results. And finally, once you understood the scheme, once you analyze the result, now you have every right to give the suggestions. Boss, these are the alternatives to execute the same program more efficiently and effectively. Identifying the ways of making it more possible in time and identifying the cases of duplication overlapping. Then you have the every right to give the remedial actions. So whenever you do the performance audit, this is how you have to do the performance audit. First of all, though, you have to identify the project or scheme. कैसे करेंगे? How you will obtain the understanding of the project and scheme? Policy document पढ़ो, statutory documents पढ़ो, legal documents पढ़ो, MOA, AOA of the scheme you should read first. That is how you understand the entity's project. Then defining your scope and objective. You should know that okay, what are your boundaries, within what you have to do the work, what CAG's directions have been given to you, what is the purpose behind, what is the objective behind doing this audit. You should be very much clear relating to your scope and objective. So define your scope and objective is step number 2. Step number 3, determining audit criteria, against which benchmarks you have to compare their results of the schemes and projects. So you should have your own set of criterias against which you are going to analyze their results and compare their results. Then deciding auditing approach. What do you mean by deciding auditing approach? Take care of the case studies, take care of the various surveys, to conduct the surveys, like why these particular types of schemes and projects get further delayed. What is the reason about natural delay of these particular schemes and projects? Is there any case study in the past where this kind of same incident has happened? Developing the audit questionnaire, the questions on which the auditor is looking for the answers. Prepare a total questionnaire which you would like to ask to the people of that project and scheme. So point number 1, understand the scheme. Point number 2, define your scope and objective. Point number 3, point number 3, defining your criteria. Point number 4, deciding your audit approach. Point number 5, you are nothing but developing audit questionnaire, assessing the audit team skills and requirement. Check your C&C first. Is your team is competent and capable enough to deliver this project or not? To deliver this assignment or not? Right or not? Now what they are saying, ensure that audit engagement team shall be competent and capable enough to meet the requirements. Also ensure that in case expert requirement is there, go for the outside consultation, but make sure that you should have made this thing available or made this thing communicated to the central government well in advance so that they can arrange those experts for you. Preparing the audit design metrics. 5 column का एक matrix बनाओ. Metric column number 1, what is your ROI objective, what you are looking for. Audit questions relating to that particular objective. Auditing criteria against which you will compare their actual results. Evidences which you have obtained and methods of data collection and analysis. उसे हम लोग बोलते हैं audit design metrics. Then establishing the timetable and resources, how much time you need to complete this particular audit. Always remember to give a buffer time, because being a public project and being a government project, definitely it will take some time to get some approvals and authorizations. So always make sure that your time frame should be well planned, but keep the buffer time also in between that, because there could be possible delays and approvals. Then intimation of audit program to your audit entity. Now see, until unless you will not discuss your plan and program with the auditing entity, then in that case the auditee will never be able to provide you the information on time. So little bit of your planning and everything you have to discuss with the auditee entity. Next, how does the CAG report talks about? CAG report में क्या होता है? Simply 3-4 paragraphs होते हैं. तो CAG report में first element is introduction paragraph containing the general review of performance. Second one, now we are talking about the CAG audit report. Your all 5 audits are over: financial audit, compliance audit, comprehensive audit, propriety audit and performance audit. CAG audit report में क्या होता है? Elements. First one is introduction paragraph containing general review of what? Performance. Second one, results of comprehensive approvals done by the audit boards. Do you remember CAG? Under that CAG there is a IAAD. Under that IAAD there is a audit board, and summary of those companies auditors report as per the CAG's instruction, and results of those government entities which have not been audited by the audit boards, and audit boards audit has not taken place. Now format of the CAG is, if it is a small entity related CAG reports, then you can attach it with the independent auditors report separately as a CAG audit report as an annexure. But if it is a large state-based CAG report, then make sure that your CAG report should be separate, should not be attached with the what do you say, internal audit, should not be attached with the statutory audit report. Have a separate CAG report and have a separate statutory audit report. And CAG का भी objective क्या होता है? Objective of the CAG includes the cases of financial irregularities to bring it to the notice of state legislative assembly and parliament where we are lacking and wasteful expenditures and system deficiencies along with what performance appraisals. This is how we do the audit of PSU. बहुत simple audit है यार, बहुत simple chapter है. Let me tell you one thing, अगर आप broadly speaking ना, your auditing is very very simple. If you understand the catch of that particular chapter, you can guarantee, I can guarantee you can get the maximum amount of marks in auditing also. Gone were the days when we used to say that कि auditing में marks नहीं आते. Now it happened during the early stages of transition. When people suddenly saw कि auditing का paper का level इतना सारा मतलब वो हो रहा है, change हो रहा है. It's a lot of difficulty level has been raised. But now students are becoming clever, faculties are becoming clever. They are already from the day one insisting you that ki boss, ICI language is required, boss, this is required, this is the requirement in this particular audit. So you have to make sure that you should go as per the requirement of your faculty, go as per the technicals which are given in the ICI material. Nothing is more important. बहुत simple सा तरीका है. ICI has made a subject. ICI has every right to ask anything from their ICI material. So until unless you will not go through the ICI material, you cannot call yourself as an expert in this particular subject, and there may be still a chances that you may get failed. So moral of the story is go and read ICI material thoroughly, and you will find each and every topic in the ICI material included in these notes. Everything. ये 400-500 pages के notes कर जाओ sir, 1.5 day before examination. I can guarantee you will get the superb marks. That much of efforts have been put out by us and the institute in developing and making this marathon for you people, right? Chalo, see you guys for the next chapter, right? Okay, let's understand with the new topic, everyone. The name of the topic is known as quality control. Now, let me tell you about this topic first so that we can understand what we are going to do. In this particular topic, basically, we are going to do two topics. One is called SQC1 and one is SA 220. Now, both the standards are going to talk about the quality control only. Both the standards are talking about the QA, quality control in our auditing and assurance services. But what is the major difference? You will find it in SQC1 and SA 220. SQC1 says that ki boss, as a chartered accountant in practice, you have to maintain quality control. Either you are giving auditing services, review services, assurance services, or related services. SQC1 says that as a chartered accountant in practice, you have to give the assurance, you have to give the quality control in every type of services. Either you are giving the auditing services, review services, assurance services, or related services. Whereas the SA 220 concentrates on quality control or quality in your auditing services only. Quality in your auditing, because that is SA now, standard on auditing. So when you are being engaged for the auditing of HFI, historical financial information का audit जब आप करते हो, तो then you have to maintain the quality. That is what SA 220 is talking about. Whereas SQC1 is a very broader version. It says that be it a auditing or be it a review, be it a assurance or be it a related services, everywhere you have to follow the quality. See, first of all, though, we have to understand why do we need a quality? Because quality in our profession, quality in our services enhances the confidence, enhances the reliability and the credibility of the work what we do. Users will get more enhancement of the confidence and the trust on the work we do. That's the reason this complete chapter is dedicated on quality control, right or not? And let me tell you one thing, SQC1 is far broader as compared to what? SA 220. Let me tell you the second difference also. SQC1 talks about your QCPP, quality control in policies and procedures of a firm. Not you, of a firm. Are you getting the point? Whereas SA 220 talks about the quality control in policies and procedure of an engagement partner and only his team members who are engaged for the auditing services. So that makes SQC1 far broader than SA 220. Right or not? Now, SQC1, meaning of audit quality. What do you mean by audit quality? Means creating and maintaining the trust and confidence of the users, government, industry, public at large. Now, I think you all will agree with me that let it be users of financial statement, let it be government, let it be stakeholders, let it be lenders, creditors. Everyone's trust and confidence is based upon what level of quality we provide to them. Are you getting the point? Now, it involves application of quality control procedures. Obviously, we have to apply some quality control procedure, and moreover, we have to follow our professional, ethical, and technical standards. What do we call it as? Professional, ethical, and technical standard. PET standards we have to follow. Okay, remember one thing. There's a concept called peer review and quality review which takes place on you. Now, what is the meaning of peer review and quality review? This is called audit of auditors. Are you getting the point? There is one board in the icai called peer review board, which at random place or at randomly will select your practicing unit and will conduct a peer review on you. And what is the purpose of conducting the peer review by the icai? icai would like to know that are you providing quality in your assurance services or not? Are you providing quality in your assurance services or not? This is the reason, be it assurance, be it auditing, be it attestation, be it accounting, be it review, be it related services, everywhere what is expected by the user is to maintain the quality control, is to have a good audit quality. Right? Now, SQC1 and SA 220 deal with the audit quality, but following other differences. Difference number one, SQC1 ensures quality control on every type of services. I told you all the four types of services where quality assurance or quality control is expected. That is what the objective behind SQC1. Whereas SA 220 deals with the quality control only with respect to the audit of what? Financial services. So which makes one very narrow in nature and one very broader in nature. So SQC1 is broader than SA 220. SQC1 deals with the quality control in policy and procedure for the firms, whereas the SA 220 deals with the quality control of the member of the firms, right or not? One is talking about the firm, one is talking about the people who are there in the firm. So SA 220 is talking about QCBPs of the engagement partner and his team members who are the part of that firm. Whereas we are talking, when we talk about the firm as a whole, identity of the firm as a whole, then SQC1 talks about, right? Other than above two standards, there are other places also where the quality control has been talked about. So we have a little bit of summary of peer review, quality review, and NFRA at the end of our discussion of this chapter. Are you getting the point? So these are the various areas we are going to cover. So let's understand the first one, SQC1, quality control for the firms. What is the first word used? Quality control for the firms, performing audits, performing reviews on HFIs. You know that audit and review takes place on HFI. Other assurance and related service engagement. The above standard deals with the 6 elements. यहाँ पे अपने को 6 चीजें पता करनी है. What is the first one? Leadership responsibility. Now, what do you mean by leadership responsibility? First of all, we need to learn what is the difference between being a leader and being a manager. Now, a chartered accountant in practice who is running his firm is expected to be a leader, not a manager. Leader is a credit giver and a blame taker, whereas a manager is a credit taker and a blame giver. So you have to show the leadership skill. The one who is a CEO of your firm, the one who is the managing partner of your firm has to ensure that he should always depict the which skills? Leadership skills. Because until and unless you will not be a leader in your organization, no one will follow you. We follow whom? We follow the leaders. So it is expected from the engagement partner, the CEO, the managing partner, and the CEO of the firm to show the leadership skills. They are the one who shall encourage the culture of high quality in their audit work. Right or not? Ensure that CEO and MP have a sufficient and appropriate experience to take up that responsibility. The one who is, the experienced one, the one who is more professional one should be the CEO and MP, managing partner of that firm, and they should take the full responsibility. They should have the requisite experience of maintaining the quality in their whole firm. Leadership responsibility means not to compromise in the quality, because remember one thing, quality is not negotiable. Suppose the client sits in front of you and says that कि sir आप थोड़ा पैसे कम ले लो and please take the money little bit less, but I don't want you to go that much of detail. Boss, you are not going to tell me what quality control I have to maintain. It's not about the money, because quality is not something like a vegetable which can be bargained or negotiated. So quality is not negotiable. That is what the first thing the MP, managing partner, and the CEO of your firm should always develop. Second, ensure that commercial consideration shall not override your quality. Money is not something which you are looking for. You are looking for the quality control. Boss, आज आप एक थोड़ा एक्स्ट्रा पैसे ले लोगे, थोड़ा क्वालिटी को कॉम्प्रोमाइज कर दोगे. What about future? Future में people will know you only if you will provide the quality. Next one, firm should have the policies and procedures in relation to compensation and promotion of their staff. Do not allow their staff also to get overridden by the monetary compensation. Instead of your staff getting bribed and corrupted by your client, it's better that you reward and recognize their efforts. Now, you give them the adequate compensation so that they will not think about the financial considerations which is being offered by the clients. That is how you maintain the quality. And most important thing, firm must have a sufficient resources. आपके पास sufficient resources होने चाहिए, and document your QCPPs so that it will be shown to the people who are working in your firm कि बस this is how the quality is required to be maintained. That is the first requirement of SQC1. Second requirement of SQC1 is what? Ethical requirement. Following the principles of integrity, confidentiality, objectivity, independence, professional due care, professional skepticism, professional judgment, professional behavior, professional skill, and competence. Not only you have to maintain as an MP and CEO, your whole firm has to maintain. Not only you should be competent, your whole firm should be competent to ensure that it should be followed by everyone. Now, that can only be possible if your MPs and CEOs will show the leadership ethics. And the moment you will find anyone is compromising on your ethical requirements, suppose you saw some staff of your team, you saw some article assistant of your team not following or not complying with the ethical requirement, punish them immediately so that it will set an example for the others to follow. You should take the appropriate action in case you find any non-compliances, monitoring the compliances and dealing seriously if you'll find any kind of what? Non-compliances. Such fundamental principles can only be ensured if it will be communicated to everyone in the firm. Aapko, obviously, it is the responsibility of the engagement partner, managing partner, or the CEO of the firm to communicate to everyone in their head so that they should know कि boss, running a firm में quality is the major important thing. It is your responsibility to deliver that thing to the heads of those people. Next one, educate everyone in the firm how to beat the threats, either by eliminating them or reducing them to the lowest level. उनको threats के बारे में बताओ. Self-interest threats, self-review threats, advocacy, familiarity, intimidating. How do we eliminate them? How do we reduce them? How to address those threats? Every education is required to be given by these people. Take annual written confirmation that yes, they have complied with the ethical requirements. Special focus should be on the familiarity threats. If you think that any of your team member is having a familiarity threat at the particular engagement, don't make him a part of your team, so that you should let them know that boss, this is a reason why I'm not asking you to be the part of my team. Right? In case of rotations where the necessary terms are to be served, try to do the internal rotation also. See, it's not about showing to the outside world that you are maintaining the control, quality control. It's about understanding from your inner self also that are you able to deliver this or not. Right? Next word. In case of rotations where the necessary teams has to be served, in such cases, internal rotation among the partners is required. So first one is what? Leadership. Second one is what? Ethical requirement. Third one, acceptance and continuance of client relationship. हमेशा याद रखो. Whenever you want to accept a particular engagement and whenever you want to take a decision, should I continue or not, these are the three things you should always test. Integrity of their management. So कैसे test करेंगे? Have initial meetings with them, understand their commerce, industry, operation knowledge, check whether they are cooperative or not, check whether they will be helpful or not. And if you find any indication that they are going to not be helping or coordinating or cooperating with you, there's no point of accepting it. Second thing, check whether you and your team can follow the ethical requirements or not. Will you be able, if you think that you will not be able to hold any ethical requirements, you may compromise your ethical environments, don't accept the assignment. Third, check your CNC, competency and capabilities of your team. Will you be able to deliver or not? Do you have do you have sufficient tools? Do you have sufficient equipment while delivering this particular thing or not? तो तीन चीजें आपको हमेशा चेक करनी है. Integrity of the management with whom you are going to accept, and then you have to check what? Your own competencies and competencies and capabilities. Third, will your team and everyone will be able to follow the ethical requirements or not? Now, see, integrity check करना है, competency, capability check करना है, compliance with ethical requirements. इंटीग्रिटी कैसे चेक करेंगे? हैविंग एन अंडरस्टैंडिंग ऑफ द क्लाइंट्स ऑपरेशन एंड बिजनेस प्रैक्टिसेस, टॉकिंग टू द प्रिंसिपल ओनर्स, KMPs एंड TCWGs एंड अंडरस्टैंडिंग देयर एटीट्यूड, वेरीफाई वेदर द क्लाइंट इज टू मच एम्फसाइजिंग ऑन लोअरिंग द ऑडिट फीस. इट मींस अगर वो लोअरिंग द ऑडिट फीस दे रहा है, इट मींस ही इज नॉट अंडरस्टैंडिंग दैट व्हाट क्वालिटी वी आर गोइंग टू प्रोवाइड. Check the indicators of any inappropriate limitations which are being imposed on you. Verify the indications of money laundering. नौकलार मिल रहा है तो immediately remove and make sure that boss ki if you have come in replacement of somebody else, you have to communicate in writing to the previous auditor. Otherwise, you will be guilty of professional misconduct under 811. ये सारी चेक करते हैं इंटीग्रिटी ऑफ मैनेजमेंट कि भैया प्रीवियस ऑडिटर व्हाई ही लेफ्ट, व्हाई ही रिजाइन, व्हाई ही गॉट रिमूव्ड. यू शुड नो ना. Right? That is what you mean by quality control. Next one, how to understand firm's capacities, competencies and capabilities. Must have the adequate knowledge of the relevant industry. आप check करो कि do you have the knowledge of the relevant industry or not. Must possess the required skills and competence. Right? Or must have an experience with the regulatory requirements. Must have a sufficient number of team members. Will you be able to deliver it? Suppose the bigger entity needs a bigger team to deliver such engagement. Whether the ethical requirements are followed by all or not. Take the compliance, take the serious action if you'll find somebody not able to follow the ethical compliances. Whether the firm will be able to complete the engagement within the time frame or not, deadlines or not. ये आपकी CNC check होती है. Like how to decide whether to withdraw or continue the engagement. In case the threats are going to come to continue the relationship, it's better to withdraw from the engagement. अगर आपको लग रहा है कि you are unable to eliminate the threat or you are unable to reduce the threat to the lowest acceptable level, it's better to discontinue. Ensure to be ready with the reason of withdrawal. क्योंकि आपको जब आप withdrawal करते हो तो आपको reason देने पड़ेंगे in form number ADT3. You know that when you give a resignation, else you will be penalized. Check whether the withdrawal is allowed as per the regulatory and legal requirements or not. आपको ये भी check करना पड़ेगा कि whether the law and regulation allows you to withdraw or do they prohibit you to withdraw. If they prohibit you to withdraw, continue, but you can give a disclaimer opinion or adverse opinion in case the need arises. Document everything, those significant issues, consultation, conclusion and basis, so that will help you out in understanding that next time आपको क्या precautions लेके चलने. This is what do you mean by the third area called acceptance and continuance of client relationship. फोर्थ एरिया ह्यूमन रिसोर्स. बॉस, ये आपके MP, मैनेजिंग पार्टनर और CEO का रिस्पॉन्सिबिलिटी है टू मैनेज योर स्टाफ, टू मैनेज योर रिसोर्सेज, टू रिवॉर्ड देम एंड रिकॉग्नाइज देम एट द रेगुलर इंटरवल. उनका परफॉर्मेंस इवेल्युएशन करना, मॉनिटरिंग रखना, defining their role and responsibility, communicating the quality control. Must possess appropriate capabilities, उनको educate करना, train करना, right or not. Make sure that they should possess the adequate skills and competence. Must groom and polish their skills, keeping QCPPs always in mind. This is all the human resource based things what the CEO and the managing partner of the entity should do. Remember one thing, आपके commitments, capabilities, competencies are only the three things, three pillars of maintaining your quality control in your policies and procedure. This is what you mean by human resource. Fourth element. तो first one में leadership qualities, second one में ethical requirements, third one में acceptance and continuance of client relationship, and the fourth one में human resource. Fifth one engagement performance, वो अपन SA 220 में पढ़ेंगे. And the sixth one is talking about monitoring. Monitoring means what? अपनी firm को review करो, उसकी policies and procedures को revise करो. Do you need any updation or upgradation? Check the incidences of lacking. Where you are lacking, why you are lacking, do you need any upgrade or update? That is what you mean by monitoring. आपकी firm के अंदर digital what do you say, upskilling of your staff is required or not? Do you need to hire the IT experts and professional? Do you need to increase the firm size? Why? Because the so many assignments are coming. ये तभी possible होगा, but at the regular intervals, if you will monitor your quality control in policies and procedure, it includes necessary reviews and revisions in your QCPPs. If you are effective, if you want to operate effectively in the practice, it means periodic evaluation of your QCPPs and monitoring of the same by the following. कैसे? Deciding your quality control systems appropriately designed and implemented or not. Whether recent developments in the professional, ethical, technical standards, you know that or not. What new things are coming? LODR के साथ update रहना. What new requirements are coming? Forensic audit is coming. New areas are coming. Insolvency professional, registered valuation. ये recent जो developments हो रही हैं अपने area में, अभी हमने पढ़ा forensic accounting में 20 new standards have come. Learn them. You never know when you will be able to do such kind of assignment. If it will come onto your way, you will not say, "Na, let me prepare first." You should be proactive rather than what? Reactive. Whether the complaints and allegations of the firm and any employee have been considered or not. Suppose some auditee is not happy with your services. Do take it seriously and improvise on yourself. Whether appropriate action against those who did the non-compliances have been taken or not. If you'll find any staff member, you yourself or any team member not following the ethical requirement, take it seriously and take the appropriate actions. This is how you keep your QCPPs ready to deliver the best in the industry. Whether the deficiencies in the designs and operations of your quality control system have been properly taken care of, identified or not. All that comes under what? Monitoring. This is what do you mean by SQC1, everyone. What do you mean by SQC1? अब इसका छोटा भाई SA 220 quality control for the audit of financial statement. अब देखो how it is different from SQC1. SQC1 was talking about the firm's QCPP. It is talking about the team members QCPP, engagement partner का QCPP, your team members who are the part of that team, उनका QCPP. This is how it makes different from the what do you say SQC1. So let's understand now 220, everyone. Now 220 mein, as I told you, how it is different from SQC1. 220 talks about quality control in policies and procedure relating to the members of the team. So it is to ensure that QCPPs are implemented and PETs are being followed at engagement level, ensure that auditor's report is appropriate in compliance with the quality control system, and this standard falls on the footsteps of what? SQC1. But remember the narrowness of this standard. That standard completely is dedicated towards a whole firm. This standard is completely dedicated about you, right? As a at the engagement level. Now first, engagement teams have responsibility to comply with SQC1. See, SQC1 teaches us so many things. SQC1 अपने को ये भी बताता है कि we need to preserve our documentation for 7 years. SQC1 अपने को ये भी बताता है we need to assemble our documentations within 60 days from the date of signing the audit report. SQC1 is a very broader thing. It not only talks about audit, it talks about audit, review, assurance, related services, accounting, attestation, any kind of function. Right or not? But this is completely dedicated. SA 220 is completely dedicated to the auditing function. Now, what is the engagement partner's role in that? Now, same role which we have understood over there relating to your MP and what? CEO. Here also he has to show the leadership skills. He has to make sure that he should identify the threats of his firm. He should try to, reduce those threats to the lowest acceptable level or try to eliminate them. He is the one who is primarily responsible for the QCPPs in the firm. Because engagement partner is a one person who has to take the prime responsibility of the whole firm. He is the one who has to be a leader in the team and take the full responsibility of or full accountability for any wrong actions done. Suppose if any credit has to be given, he should give the credit to the team, or if any blame has to be taken, he should take the full blame on himself. That is what do you mean by his work. Am I correct or not? Then next point, he is the one to ensure that ethical requirements are being followed by everyone in the team, especially what? Independence. He is the one who shall always be skeptical towards finding any evidences of non-compliances. And if someone will be found doing the non-compliances, taking the necessary actions on such non-compliances. To ensure the independence, what he can do, he can obtain the relevant information from the firm and network firm to find out what? Threats. He can also evaluate the identified breaches and violations to understand impact on independence and act accordingly. The focus of this standard is to ensure that the performance of the engagement by the team members should be in compliance with the PET standards and legal requirements and appropriate in circumstances. Now, acceptance and continuance of the client engagement depends same thing which you have done in SQC1. You know that how do we decide whether should we accept or rely or continue with the client relationship or not? By checking the integrity of the client, by checking the ethical requirements, and by checking whether you will be able to capable and competent enough to deliver that thing or not. That we can copy paste directly from SQC1. Now the major thing which you need to understand in SA 220 is 7 areas. Direction, right? Direction, and then we have to do supervision. Then we have to do review, right or not? Then we have to do outside consultation. Then we have to do engagement partner ka participation. Then we have to do EQCR ka review. And then we have to check the monitoring. These are the 7 areas we have to check. What do you mean by direction? Now see, it is a responsibility of the engagement partner to inform everyone in the entity, everyone in the firm who is responsible for doing what. Even dividing the responsibility among the partner is also the responsibility of engagement partner.
letting them know who will do what thing at what point of time. So basically, direction is a stage which takes place before starting the audit. Now, see, informing member about their responsibility to be divided among the respective partner, informing the risk-related issues, what errors and frauds you may come across, how you should deal with that, giving clarity on the objectives, why you should be clear in your objective and scope. That is also comes under the direction, making them understand the client entity, internal control system, and environment. You know it, but you are not the one who is going to do the full audit now. So your team member is going to do the audit, team people are going to do the audit, whole firm is going to do the audit. So not only you should have the knowledge of entity, its environment and ICS, you should give the knowledge also to the every team member. That all comes under what? Direction. So direction is a stage which comes when? Before starting the audit. Now audit is going on. So it is the responsibility of the EP partner to go and supervise their audit. How they are doing the audit, how they are choosing the procedures, how they are using the methodologies, how they are collecting the evidences, are the evidences looking appropriate or not. This all comes under supervision. Tracking the progress of the audit. अब ये at the audit हो रहा है, that is before the audit, this is at the audit, considering capabilities and competencies of the staff member. If you think that कि particular staff member is unable to deliver the expected result, it's better to replace that staff member with another one by making necessary changes in your engagement team, checking whether audit is carried out as per the plan or not, addressing significant matters which are brought to his notice, and identifying matters where the consultation may be required. So this is happening by doing a surprise check on your people who are doing the audit at the client's place. So first stage क्या होगी? Direction. Second stage क्या होगी? Supervision. अब review. Review means what? Once your team members are giving their work done to you, make sure that you should not take it blindly. You should review their work before accepting it. Checking the QCBPs have been followed or not. If you think that your staff has followed the QCBPs, take up their work. Checking, examining SACs has been adequately and appropriately and sufficiently obtained or not. Ensuring works are performed as per the PET standards or not. Reviewing significant matters raised and how, whether the outside consultations were taken and whether actually being utilized or not. Checking whether the revisions in NTE of your work performed were required or not. Review का basically मतलब क्या होता है कि be careful before taking up their work. देखो डायरेक्शन में वी वर गिविंग देम द डायरेक्शन की व्हाट टू डू इन द ऑडिट. सुपरविजन में वी आर कीपिंग एन आई ऑन देम कि आर दे डूइंग देयर वर्क प्रॉपर्ली और नॉट, आर देयर एनी कंसल्टेशंस रिक्वायर्ड, सिग्निफिकेंट मैटर्स, राइट. चेकिंग ट्रैकिंग द प्रोग्रेस ऑफ द ऑडिट. रिव्यू में क्या हो रहा है? वी आर यूजिंग देयर वर्क बट यू हैव टू बी वेरी केयरफुल. You use their work only when the QCBPs have been followed, when the evidence looks sufficient and appropriate. So this is what you mean by DRS. Direction, supervision and review. And what is the fourth stage? Direct participation by the engagement partner. There are some areas where the engagement partner should participate on his own. Suppose the risky areas पे, high ROMM areas पे, significant matters पे, management estimates, judgment के, these areas में you should not be dependent upon your work performed by your team members. I'm not saying they are incompetent, but you should directly participate in those areas, like areas where the critical judgments are involved, areas which are significantly risky, any other matter which he considers important. That is the fourth point. So direction हो गया, review हो गया, supervision हो गया, and you are also doing the direct participation. Then consultation thing, see if you need any consultation, you have to check whether the consultation is available within the firm or outside the firm. Was there any actual requirement of the consultation? Can you get away with that consultation by doing the things on your own, by doing some certification course or extra diploma in that? क्योंकि जब आउटसाइड कंसल्टेशन आती है तो ऑब्वियसली बॉस 620 विल बी मेड एप्लीकेबल. आपको रिटन एग्रीमेंट एंटर करना पड़ेगा क्योंकि यू हैव टू मेक श्योर दैट कि यू हैव टू चेक हिज QCBPs आल्सो, his integrity also, his objectivity also, his competence also, his skill also. All those things comes under when you take the consultation, whether that taken within the firm or outside the firm. EP is primarily responsible for selecting the consultant, whether the consultation was appropriately required, whether the compliance of written agreement with that expert as per the requirement of 620, ensure the implementation of consultation. You have taken the consultation, but whether you are using the implementing their consultation or not, that is also one of the thing you have to understand here. तो क्या 5 एरियाज हो गए? डायरेक्शन हो गया, रिव्यू हो गया, सुपरविजन हो गया, डायरेक्ट पार्टिसिपेशन हो गया, कंसल्टेशन हो गया. अब नाउ मोस्ट इंपॉर्टेंट पॉइंट, get yourself evaluated by the EQCR, engagement quality control reviewer. You are nobody to tell yourself कि yes, I have done the best audit. No,
until unless a third party judgment is not being passed on you. So hire a EQCR to get reviewed your audit procedures, whether you have followed the PET standards or not. Let him check your documentation. Let him check your procedures. Let him check your professional judgments. Let him check your decisions taken. Let him check your audit evidences collected. On the basis of that, EQCR will be able to tell you whether you have done your work properly or not. Basically, you are getting reviewed by the person who is reasonably informed and reasonably skillful. That is what you mean by EQCR. Now see, EQCR engagement quality control reviewer mandatory for the listed entities and recommendatory for all. अगर आप listed company के auditor हो तो भैया ऐसे 220 बोलता है कि आपको EQCR mandatorily hire करना है, but other cases में recommended है. EP shall ensure that EQCR shall be appointed, discuss the significant matters with the, क्योंकि you have to tell him the full picture, and obviously expect that कि EQCR will also maintain the confidentiality because he is checking your everything what you have done. So he will also maintain the confidentiality. Significant matters with the EQCR, but shall not discuss the date. Now, remember these things. ये दो चीजें आपको कभी भी EQCR के साथ डिस्कस नहीं करनी है. These are the two things you should never ever discuss with the EQCR. The date of your audit report, the date of your completion of audit, point number one. Otherwise, he will behave judgmental. Second thing, very important second thing, you should not discuss the unresolved matters with the EQCR. Otherwise, again, he will pass judgment. So neither discuss your unresolved matters nor discuss your date of your audit report with the EQCR. Other than these two things, rest everything you can discuss. EQCR shall perform objective evaluation. What do you mean by objective evaluation? He should be unbiased while listening to you. He should not be judgmental. That's the reason these two things we have removed out of the scope of EQCR. Because if you'll tell him the date of audit report, if you'll tell him the unresolved matters, he will become judgmental. We don't want him to be judgmental. We want him to perform objective evaluation on your work, unbiased and impartial way. You should discuss your significant matters. You should discuss your review of financial statement. You should discuss your proposed draft audit report. You should discuss your documentation. You should discuss your analytical procedure. You do discuss your RAPs and FAPs which you have done along, so that he can give you the objective judgment. Impartial judgment he can give you. He can give you the objective evaluation ki boss, yes, I think that you have done your work properly or not. Because sometimes it is very much highly recommended that ki EP should get it reviewed by the third party who is reasonably informed and reasonably skillful and competent. Next one, for the listed entities, mein above things so you have to do, but there are some additional matters you have to discuss in case of listed entity. Checking the independence of the firm. EQCR आपकी independence भी check करेगा. EQCR will identify how you responded to those risks. How you identified and responded to those risks. EQCR will check that also. How you made the judgments and considered materiality. EQCR will do that also. How have you obtained any outside consultations or not? EQCR ये भी check करेगा. How EP and his team evaluated the material misstatement 450 कैसे apply किया. How they communicated the matters to TCWG 260, 265, whether the proper working papers are maintained or not. That also EQCR will check. Whether the appropriateness of the report, did you do the reporting as per 700 series or not. These are the additional 8 matters which the EQCR will check in addition to above 4 your significant judgments, audit procedures, conclusions drawn and all. But remember one thing. In case you think that ki EQCR ka judgment and your judgment is not matching, again repeating, in case you think that ki EQCR ka judgment, his decision making and your decision making is not matching, give priority to your QCPPs. Maybe his professional judgment might be different from yours. You don't have to degrade yourself ki arey yaar, EQCR is saying my work done is not proper. No, your work done is proper. It differs from person to person. Na? Judgment can be different. There is no problem in that. It can be different. There's no harm in that. Are you getting the point or not? So there's no problem if your judgment and his judgment is not matching. Try to understand that properly. Second thing, one very important thing you have to understand that in case you think that this EQCR is not matching, you can get it reviewed by the second EQCR. Go for the third EQCR until unless your matter is not getting resolved. Are you getting the point or no? But remember, in case you think that EP and EQCR ka things are not matching, QCPPs of the EP shall be take over the EQCR and get it resolved by hiring the another EQCR. That's what. And last but not the least, you have to do monitoring and documentation. What do you mean by monitoring and documentation? आपको आपकी फर्म की QCPPs को रिवाइज एंड रिव्यू करते रहना है. You have to make sure that you should document everything you have seen, whether your team members have followed the ethical requirements or not, whether the conclusions drawn and independence was maintained throughout the audit or not, whether your whole team was professionally skeptical throughout the audit or not, conclusions with respect to your acceptance and continuance of the engagement. सारी चीजों को document करके रख लो. Nature and scope of the consultations obtained by you, so that it will be helpful to you. क्यों सब चीजें डॉक्यूमेंट करनी है? क्योंकि इट विल बी हेल्पफुल टू यू इन द फ्यूचर ऑडिट्स. नेक्स्ट ईयर भी तो यू हैव टू डू द ऑडिट अगेन. At that point of time, it will be helpful or not? Yes, sir. Now, SQC1 is over, SA220 is over. Other than that, what three things are talking about? You have only and only introduction of that. Let me tell you one thing. Peer review used to be the chapter up to November 23. Quality review used to be the chapter up to November 23. 132 used to be in your chapter called maintenance of accounts up to November 23. So there are three people who are also talking in addition to SQC1 and in addition to SA220. There are three more people who are talking about your quality control. One is called peer review board, one is called quality review board, and one is called NFRA. Let's understand what is peer review board. Peer review board is a board which is constituted by ICI. उसके अंदर members of ICAs होते हैं. They come and they ensure that कि members are complying with the PET standards or not. They will randomly pick a particular practicing unit and they will do the quality control analysis on them, and they will come to know that ki, did you follow your QCPPs or not, did you follow your professional ethical technical standards or not, did you follow standards on auditing while delivering your services or not. They will also come and check your documentation to understand ki, whether your documentations are demonstrating your performance or not of your auditing and assurance services. And not only that, they will also try to enhance your quality control by giving the recommendations, right or not, by giving the suggestions how you can improvise. Right? Peer review means examination and review of the quality control system installed by the practicing unit, so the quality with respect to their assurance services can be determined by compliance with PET standards. Now question arises, sir, who does the peer review? Peer review is conducted under the head of peer review board. Peer review board is under the ICA. It was constituted in the year 2002. And the peer reviewers who are going to come at your entity, they are also the practicing chartered accountant, because they also know that a practicing chartered accountant can only understand how the other practicing chartered accountant behaves. That is why the reason they have to conduct the what? Peer review. Now peer review में क्या होता है? Once it is reviewed, a peer review certificate will be given to you. अगर आपको peer review का certificate आता है, that means you are good in your QCPPs and that means you are good in your PET standards. If you do not get the certificate, that is a point of worry. If you do not get the peer review certificate, that means it is a modified QCPPs and it is modified PET standards. It means they want you to improvise. Getting the certificate is a good news, but if they have the modified opinion on your QCPPs and PET standards after doing the peer review on your practicing unit, they will not issue you the certificate. Not getting the certificate is a negative news. And remember, they will definitely conduct the follow-up review within 6 months to 1 year again. Are you getting the point? To understand why they are giving you 6 months to 1 year, so that you can improvise on your QCPPs and you can improvise on your quality of auditing and assurance services. So within the 1 year, again, follow-up review will take place. That is what the peer review board does for you. They are also talking about your quality. And then we have the quality review board. Remember, peer review board is under the constitution of ICA. Quality review board is under the constitution of central government. And quality review mein, we don't call them as peer reviewers. We call them as technical reviewers. What do we call them? Technical reviewers. And we do, in the peer review, we call you the practicing unit. Here we call you AFUR. What do we call you? AFUR. AFUR का मतलब क्या होता है? Audit firm under the review. AFUR, audit firm under the review. So technical reviewer, which are appointed by the quality review board, which is constituted by the central government. This technical reviewer will come to your audit firm, which is selected for review, AFUR, and they will check your quality. तो बेसिकली इनके सिर्फ 3 ही फंक्शन है, टू गिव यू द रिकमेंडेशंस टू द काउंसिल. ये सीधा जाके इंस्टीट्यूट को रिकमेंडेशंस देते हैं. दिस इज हाउ यू कैन इंप्रूवाइज द क्वालिटी ऑफ योर मेंबर सर्विसेज. To review the quality of your services provided by the members. And let me tell you one thing, Quality review and peer review में major difference. Peer review is far broader as compared to quality review. Quality review only and only concentrates on your statutory audit so far. I'm not saying that they can't check anything else, but 99.99% of the cases में quality reviewer, the technical reviewer who comes to your firm and checks is only your services which you have provided in the statutory audit. They review your statutory audit services, and finally they will guide the members of the institute how they can improvise their services. And remember, quality review services, peer review may they may check your auditing services, assurance, review services, right, on a related service, anything, documentation. But here the concentration is only and only on statutory audit. QRB is restricted to statutory audits only in respect of those companies which are identified as risk-based approach. अगर आप statutory auditor हो, if you were the statutory auditor of a listed entities or the entities on which some little bit of suspicious fraud is there, or on some litigations are pending, having a inconsistent track record, risk approach based entities which are listed as risk approach based entities, and you are the statutory auditor of those entities, so definitely your audit firm will be under the review. That is how they select you for the quality control. पीयर रिव्यू तो रैंडमली इंस्टीट्यूट है, वो आपको किसी को भी सिलेक्ट कर लेगा. देयर इज वन क्राइटेरिया, लेवल 1, लेवल 2, लेवल 3, लेवल 4 entities. Are you getting the point or not? But here in the quality review, they will only select you if you are a statutory auditor of those entities which are under the risk-based approach. And finally, this review will be carried out by the technical reviewers. I told you हम लोग उन्हें TR बोलते हैं, वहाँ पे PR बोलते हैं, वहाँ पे practicing unit बोलते हैं. Here you are called AFUR, audit firm under the review, and panel by the quality review board across the country. So technical reviews are not the people of ICI, they are the people which are appointed by the quality review board, because quality review board is constituted by central government, not by the ICI. Peer review board is constituted by the ICI. And the third area तो आपको पता ही है, NFRA, नेशनल फाइनेंशियल रिपोर्टिंग अथॉरिटी. अब NFRA आपके लिए क्या करता है? NFRA में 16 मेंबर्स हैं, एक है चेयरपर्सन एंड 15 पार्ट टाइम है, फुल टाइम मेंबर्स. ये सेक्शन नंबर 132 आपने बुक्स ऑफ अकाउंट्स में, मेंटेनेंस ऑफ अकाउंट्स में पढ़ा हुआ है. ड्यूटीज ऑफ एनएफआरए क्या है? मॉनिटर एंड वन मोर थिंग, एनएफआरए not only monitors the auditors, it also monitors and enforces the entities. So entities को it forces that कि you should follow AS and Ind AS, and to the chartered accountants, to the auditors, it forces that कि boss you should follow SS. So it takes care of both accounting standards as well as the standards on auditing. Standards on auditing, it monitors and enforces on professionals, and accounting standards, it monitors and enforces on body corporate. It oversees the quality of your services and suggesting the measures for improvement. And in case after doing the investigation, if the NFRA feels that ki boss, your level of incompetencies, your level of unskilledness, and your level of poor QCPPs cannot be investigated by NFRA, तो NFRA has a right to pass forward your case to the QRB, क्योंकि ये दोनों ही गवर्नमेंट की अथॉरिटीज हैं. If the NFRA feels that they can't do the necessary investigation, this is something a technical expertise people should do, so NFRA can refer the case to the QRB for maintenance of your quality services. This is what do you mean by the chapter called quality control, everyone. I hope you understood the chapter very well.